as people get more and more confident.
Because of the state of our cities, we have no option but to build smart and resilient cities.
Digital India is more for the poor, underprivileged, and deprived.
दुनिया को भीड़ में जो नहीं दिखते वो चेहरे हमें नजर आते हैं। कल को रोशन करने वाली चिंगारी पत्थर में छिपे हीरे नजर आते हैं। हमें अन्ना कॉफी वाले के हुनर में अन्ना कॉफी हाउस नजर आता है। किराने वाले गुप्ता जी के अपनेपन में हमें गुप्ता सुपरमार्केट नजर आता है। और सोनिया ब्यूटी पार्लर की कस्टमर सर्विस में सोनिया सैलून दिखता है। 6x6 की दुकान में सलीम के सपनों का साइज नजर आता है। सोनू ऑटो वर्ल्ड में सोनू की बड़ी सोच दिखती है। दुनिया को जो छोटी छोटी दुकानें दिखती हैं हमें उनमें छिपे बड़े बड़े अरमान दिखते हैं, क्योंकि हमें है यकीन इनके हुनर पे, इनके हौसलों पे, इनके जुनून पे और इनकी न्यू एज सोच पे। हमें है यकीन इन सब पे। है यकीन भारत पे।
Fostering the Digital India drive further, RBI has envisioned a platform to help citizens digitally unlock and share their financial asset information that lie in silos across multiple financial institutions. Account Aggregator Platform. The Account Aggregator Platform is a highly secure, consent-based, real-time framework to aggregate and provide consolidated financial asset information. Account Aggregator works on a mechanism through which a user's financial asset information is collated from multiple financial information providers or FIPs, and with the consent of the customer, It is encrypted and securely sent in near real time without storing to the authorized financial information user or FIU. The customer has complete control on where he will seek the data from and who he will share it with. CAMS FinServe, a subsidiary of CAMS, a regulated intermediary with experience of over 2 decades of serving financial institutions and customers. CAMS FinServe will facilitate encrypted and machine-readable data from the source to the recipient, a foundational change to the way in which financial asset-related information is shared among financial institutions, lenders, and fintechs, removing all the bottlenecks associated with physical exchange of paper-based information. Banks and NBFCs can be less wary of lending since they have access to an updated and authentic data of the borrower. Wealth management platforms can get a holistic view of the customer's financial asset information, which will facilitate financial planning in a unique way. CAMS FinServe will empower individuals and help shape their financial well-being with their own financial asset information. Unlock the power of financial asset information. CAMS FinServe. Financial institutions can join the account aggregator ecosystem with ready-to-use integrations. Customers can register to derive full potential of their financial asset information. Visit camsfinserve.com today.
Over the last few years, the financial landscape across the country has undergone a dramatic transformation marked by rapid and path-breaking developments. In such an ever-evolving domain of payments, CAMSPay brilliantly shines as an unmatched beacon of reliability in the BFSI sector across India. With security being the foundation, CAMSPay employs advanced encryption and multi-tiered safeguards for ironclad transactions. Elevating the everyday into the exceptional, CAMSPay amplifies the journey by collaborating with top banks and leveraging the platform of NPCI while ensuring compliance with RBI and PCI DSS standards. At the forefront of innovation and convenience, CAMSPay reigns as the market titan in the realms of recurring payments, digital payment services, authentication, BBPS, and payout services. Success is the new normal. CAMSPay systems achieve faster payment transactions while providing users a smart link for smarter payment collection and high transaction success rates. Swift and seamless. Facilitating rapid payment settlements, CAMSPay's meticulous services empower businesses with expedited financial transactions. Umbrella of services, single provider. CAMSPay's intuitive innovation paves the path for its users with easier onboarding, customizable UI/UX. Easy integration using agile APIs and SDKs, and intuitive one dashboard for easy analysis and intricate reporting. Drawing upon CAM's extensive domain expertise, CAMSPay is redefining the entire payment experience through technological advancements and meeting industry standards in focused categories. Discover the future of payments with CAMSPay, a payment business unit of CAMS.
In today's digital age, managing credit card benefits should be seamless for both banks and end customers. However, it's often costly and challenging for you as a bank, while your customers struggle with navigating benefits across platforms. Introducing Smart Engage by Hyperface, the game-changing tool for program and portfolio management. Envision a unified backend for benefits and campaign management that allows you to automate everything from computation to delivery. Seamlessly integrate with multiple partners, eliminating complexities. Delight customers with real-time calculation and instant delivery of rewards. Design and automate offers to highly targeted customer cohorts. Drive engagement with hyper-personalized offers and intelligent nudges through various channels. Track campaign performance and portfolio metrics with an insightful dashboard. Offer your customers sleek, engaging interface to maximize their card benefits. Drive superior business metrics while optimizing costs and delight your customers. The future of credit card portfolio and campaign management is here. Experience the transformative power of Smart Engage by Hyperphase.
Company in India. Stormy Solutions, an innovative analytics software company in the fintech space. Our service offerings. Bank Statement Analyzer. Analyze prospective borrowers' bank statements to assess the creditworthiness and eligibility for loan. Financial Statement Analyzer. Perform 360-degree analysis of financial statement borrowers. IDR Analyzer gives you the visibility of the borrower's financial know-how. GSER Analyzer. Analysis the raw data on GST server and gives insights on the various sale and purchase transactions to the lender. Digital lending software. Platform originate loans and is powered by Stormy APIs for determining loan eligibility using analysis across financial statements. Credit monitoring. Highly flexible and scalable software enabling a lender to analyze large volumes of data as per requirements.
Well, ladies and gentlemen, with this, it's right about time to say sound, lights, camera, and action. Good morning to one and all present here, and welcome to the 4th edition of Festival of Fintech. It's an early start for most of us. Pleasant morning in the beautiful city of Namma City, Bengaluru. For those who are right here with us on time, can I request you to put your hands together? Hello all, welcome you all to the 4th edition of Festival of Fintech. Come on, clap. A big round of applause. Thank you for all who've joined in with us right here this morning. And this is a legacy that started about 4 years back, probably during the COVID time, the pandemic time, and it was the virtual one. But for the past 3 years, this has seen lights in the brightest form. And third time it's happening in the beautiful city of Bangalore, only because the lovely people, the perspective and the opportunities that unveil and come out and uncover every single time we have it right here. So could we have a huge cheer for that? The 4th edition happening in Namma City, Bengaluru for the 3rd time. This is the 3rd time we're having the Festival of Fintech. Ladies and gentlemen, I take this opportunity to formally welcome you all right here for the 4th edition of BW Businessworld's Festival of Fintech. The one-day annual conclave serves as a platform to celebrate and illuminate the remarkable efforts of fintech brands and leaders. It's larger than ever and focused on the trend shaping India's fintech sector and its ever-growing role in the Indian economy. Throughout the day, we'll have a lot of industry leaders, veterans, pioneers, visionaries, talking to us about the trends of the industry, their impacts, and the way forward through insightful session, and of course, thought-provoking discussion. Holding on to this, our theme for this year is Big Data and Frontier Tech Driving the Future of FinTech. We'll shed light on multiple trends, their impact, and future. Of course, like we are aware, during the day, we'll have knowledge sharing sessions by industry leaders and experts, booth spaces that you can see right here across, which will exhibit our esteemed partners, and exclusive and engaging networking lunch and dinner that we all look forward to be a part of. And following a series of enthralling session and engaging discussions, we will venture into a realm of recognizing industry leaders with the BW Fintech Awards. And now, to officially welcome you all, I request the team to start the day with the event AV. Could we have it, please? Yes, with that, once again, request all of you to put your hands together. This is the 4th edition of Festival of Fintech right here in Bangalore. BW Businessworld, led by the gentleman we all know, Dr. Anurag Batra, Chairman and Editor-in-Chief and founder of Exchange for Media Group, is the fastest growing business media house in India with a network spanning across 24 niche business communities and 9 magazines. BW Businessworld is proud to be entrenched in various verticals in the domestic and global business ecosystems. With changing times, BW now has massive leadership in the digital space as we know it. BW's portfolio includes, as I mentioned, 24 niche B2B communities that organize conferences and forums to facilitate interaction between sectoral business leaders and create a conducive environment for collaboration. Our latest issue on stands lists industry expectations from Modi 3.0 and areas which should be on radar in this term as he signals continuity on policy front, retaining his A-team in the new cabinet. Today's digital broadcast is being streamed live, as we just mentioned right here on the video, AV as well, across all BW Businessworld platforms, including our social media channels and also on www.businessworld.in. As we're all set to flag off today's event, I request and encourage everyone to join in the conversations and share your thoughts, insights, and your learnings from the day by using the hashtag BW Best of FinTech. Before we move forward, of course, this day, the annual conclave would not be possible without the power of partnership. Our esteemed partners for the day, when I take out their names, I request all of you to put your hands together. Our associate partners, BharatPay, Hyperface Technologies, CAMS, PhonePe, FinTech partner, Retroscan, Spend Management partner, Zaggle, Knowledge partner, Scormy Solutions, Lanyard partner, Refin, Real Estate partner, Shobha, Community partner, Indian Financial Forum, and gifting partner, Clinically, and event partners, Joy Travels Private Limited, Fandrum, Beanley Coffee, The Thick Shake Factory, Realty Plus, Exchange for Media, IWM Buzz, Impact, and Pitch. Could we have a round of applause to our partners, please? And now moving forward, as it's going to be a full day of insights and learnings, the fantastic delivery of fintech in India ensured democratization of access and financial inclusion, driving prosperity for the financial services industry despite economic headwinds. And to talk about this, to welcome us all, I would like to have this gentleman to kick off this exciting day right here in Number City, Bengaluru. I would take this opportunity and have this pleasure and privilege in inviting Dr. Anurag Batra, Editor-in-Chief and Chairman, BW Businessworld and Founder Exchange for Media, to deliver the opening address. And he absolutely loves the sound of applause. So put your hands together, and we need that. Here we go, the man, Anurag Batra. Good morning and all yours, sir.
Morning. It's my honor and privilege to be at the 4th edition of the Festival of Fintech. First of all, kudos to Devika for putting this together. Please give a big round of applause to Devika. She does this IP, another 4 IPs with total passion, and she's all in. She puts her heart, sweat, knowledge, and sometimes drives all of us crazy also a little bit. But that's what builds. Only crazy people build something valuable. I'm primarily here because Ms. Praveena Rai, who's the Chief Operating Officer of NPCI, is here. The theme for this year's conference is the power of big data in fintech. And I was requesting Ms. Rai, I'm sure she already had it in her plan and her presentation, to give us what has changed since she last presented in the same room last year. But I just want to contextualize what's happening in the fintech space. I'm not a fintech founder. I'm not a fintech domain expert. I am a student of fintech and I'm a consumer. So I'm talking from that standpoint. Just to contextualize, data is the founding layer for any transaction. Somebody said, whatever you can measure, you can improve. These days, whatever you can capture, measure, and improve leads to better customer service. So how is big data, with the help of AI and machine learning, building personalized solutions for consumers? Financial services is one-to-many, but how does it become one-to-one? Very important is the issue of financial fraud. I mean, there are immense number of financial frauds happening. A mentee of mine, her mother, last year got scammed of 38 lakhs, almost all her earnings from her government job. So how is big data using machine learning tools to improve fraud detection and bring down frauds? How is the machine learning tools using big data to look at unusual patterns to be able to stop fraud? Most importantly is predicting big market trends. Big data is also helping what is the market changes and customer actions, which give you a peek into the future to build better products and services, guiding better decisions. Also, from an operational standpoint, AI and big data are automating tasks, making financial processes faster and cheaper. How do you also build new financial products? In the last 6 years, in the fintech domain, we've seen there are products like early salary. You take any part of the financial services domain, big data and observations in big data are creating new and innovative financial tools and services. Also, sometime during the day, we'll focus on how is the government and what we call the digital public infrastructure and fintech coming together to be able to harness the power of big data and really creating social impact. NPCI, Ms. Praveena Rai, and she's worked in Hong Kong, Japan. She lives in Mumbai. The last few years she's built, and her team has built the NPCI. And NPCI is a tool for social impact. I'm here primarily to listen to her presentation. And I just want to also say 3 things that have nothing to do with fintech, nothing to do with big data. I arrived from Bombay last night at about 12:30. My flight was 1.5 hours late. I reached the hotel I arrived at 11:30, reached the hotel at 12:30. I had cold and I got the hotel guys to get me a Otrivin Oxy and a levocitrazine so that I could clean my nose and sleep well. And I woke up at 9 grudgingly with the alarm, and I had a 9:30 Zoom and a 9:45 Zoom. I did both. My morning sales call, it started as jury meet. Why am I talking of this? In our quest to build companies, to build social impact, to be able to do our jobs better, sometimes we compromise on our sleep. I do, and I don't like that. So I do want to, in every talk that I do, I want to emphasize on the importance of sleep. We all know what is right, what is wrong. Sleep is the most important tool for health. It is 70%, 80%. I do want to recommend that all of you sleep 8 hours. In the BW Wellbeing World, we do a India sleep study. Indians are sleep deprived. And mobile phones are making sure when we put them away, they rest, our mind doesn't rest, right? So really sleep 8 hours, whoever sleeps less than 8 hours, but definitely not that less than 7 hours. I read this book 10 years back called Why We Sleep by Matthew Walker, and then subsequently watched this video. And once you watch this video, you will never compromise on your sleep. And anyway, I'm much better when I sleep well. Today I'm a little low energy. I kind of booting up. I was telling my friend from MDI, Yashasvi, that, I'm booting up, but I'll be okay in an hour. So I just want to emphasize that I know if you're building fintech companies, you're making social impact, but do sleep 8 hours. Second is when it comes to fintech and AI and machine learning, we're using huge amounts of processing power. We're using huge amounts of energy. We're using huge amounts of computing power. Donald Trump, when I was coming from the airport to the hotel, I was watching Donald Trump's rally, which he was giving just before the presidential debate, which I'll see now because I was fast asleep. I felt very uncomfortable seeing his speech. It was like a bully talking and kind of belittling everything and doing fear mongering. Like he's wrong on a lot of things. He talked about how climate change is a hoax. And climate change is not a hoax. So in whatever you do, raise your climate consciousness. Sustainability and ESG are not buzzwords. With the rising wildfires in every part of the world, shrinking oceans, look at what's happening to our summer temperatures. Look at what's happening to rains. The patterns are disturbed. So really, in whatever you do, raise climate consciousness. And I want to end by saying, the third most important thing is to be able to put other people forward. All of us are me, me, me. Leaders are becoming like that. But I want to end by an example of a young Israeli. His name is Nadav Ben Yehuda. 10 years back, he would have become the youngest Israeli to climb the Mount Everest. He was somewhere between the base camp and the Mount Everest, and he saw one of his friends dying. And he saw another friend who was on the verge of dying. So he had two choices, either to go to the Mount Everest and become the youngest Israeli to climb the Mount Everest, or to save his friend's life. What did he do? He saved his friend's life. That's why I'm talking about. So he forego an opportunity to be the first Israeli. We do a lot of awards. We do it to the right process. We have the editorial platform. It's a serious endeavor for us. We do it with high integrity. We do not sell awards. Okay. And recognition is okay through the right, if you deserve it, through the right process. But it's become a me too, very me world. We're too much focused on our own goals. I know you're making social impact, and there are leaders today, the digital public infrastructure that India has built and taking to the world, people who come from the private sector and really contributed to building this have really led to a silent revolution. We talk about it, not enough. So in whatever you do, put other people first. I'm sure you do. I'm not patronizing you. I'm not talking. I'm just telling this to myself. And in that way, I'm telling it to you. You know all these things. I know all these things with my age, but I'm bringing them, reiterating to myself, sleep 8 hours, increase your climate consciousness, bring down the use of plastics. And there are two companies that are really messing with our sleep and solid waste. One is these OTT platforms where you can binge in the night. You can start watching at 10 p.m. You can watch till 4 a.m. And I've done it 3-4 times, 5-6 years back, and then once, twice in COVID. Second is this food delivery company. Nothing against them. They serve a purpose. They're very valuable. But you can order food at 2 a.m. in the night. and eat, and look at the packaging that comes with them, layers and layers. So really, I was thinking life was simpler and minimalistic a couple of years back. It's becoming good, but it's also becoming complex. And maybe I'm getting older. I think about these things, think about my children. So I don't want to stand between you and Ms. Praveena Rai's address. She has a flight to take. I just want to say that in the evening, we'll be giving awards to 57 winners. In some time after Ms. Praveena Rai's address, we have fireside chat with Mr. Saurabh Bhattacharya, and I'll talk to him about the role of fintechs in harnessing big data. God bless you. Have a good day of learnings, connectivity, and some inspiration, and engage with each other. The purpose of conference is to also collaborate and get to know each other. Thank you. God bless you.
Thank you, sir. Could we have a gentleman, please, for kicking off the day, for sharing all those anecdotes right here, the welcome address, and with that social message of, how sleep is very important for the social well-being of every individual. Thank you so much for that start, sir. And now, ladies and gentlemen, as we segue into the day, we have a fantastic person to deliver the keynote address right here. Join me in welcoming the Chief Operating Officer, NPCI. We have Praveena Rai in the house. A huge round of applause where she's going to be talking to you about unleashing the potential, how digital public infrastructure shapes the future of finance. And clapping is absolutely free, and it's a fantastic way of getting rid of the morning boredom. Let's segue to the day. Good morning and all yours.
Hi, good morning, everybody. So I think Dr. Batra asked a question. What's happened between, last time and now? What's the big deal in fintech? So a little bit of a put-up question for all of you. So I'm going to ask this to the audience. What's the one big thing that's happened between same time last year and now? And in my head, there's only one answer. That's happening. In the world of technology, in the world of fintech. Yeah? Yeah, exactly. That's it. Right? ChatGPT came and every school child now knows what AI is. Gen AI is all over the place. Of course, we've been talking UI, using AI for a long time. But suddenly this is now common language, right? It's part of, I don't know, it must already be in the dictionary and stuff like that. But it's now part of a day-to-day. It's what everybody knows. Millions of people, even in India, have downloaded ChatGPT, used it. We make our speeches from it. I don't. But, school kids use it to write their essays and whatever have you, make art, write music, scripts, everything, right? So AI and Gen AI, specifically on the back of ChatGPT, is the biggest thing that's happened between then and now. But today's session is less about AI, and I see the theme, which is data. And actually, the link between data and AI is very simple, because AI is just taking data, taking analytics, using advanced data to create models, and then for the model to do the work, right? So that's very simplistically what AI is. So primarily, these two are very linked. So I think the theme for the day is very interesting. But I took a shot with a slightly different lens at this theme. So data is the enabler, technology is the enabler, but what does it do when we're looking at predictive possibilities, when we're looking at the ability to use data and AI for segmentation and personalization and all the cool heavy-duty things that it can do, for whom and for what are, I thought, important questions to answer. And we'll focus a little bit with that lens in the next few minutes here. And that's really with the role that digital public infrastructure plays for all of us. And while I work in the land of payments, and payments has done its bit with 14+ billion transactions on UPI, I think it's today a given. So we'll just talk about what's really happening in this broader landscape of public infrastructure, and then what this can do to open up the potential in the broader space of finance. Can I have like a hand mic? It just lets me move around a little bit. Thank you. Okay. So I don't have to really run these numbers through because, we know internet users and smartphone users and so on and so forth. But, I thought these numbers, which are emerging in the last couple of years, right? And I see a lot of partners here from the AA space, for example. 70 million AA users. This was like a very decent space just as of even 2 to 3 years back. DigiLocker users, 292 million. When I saw that number, I thought it was quite astounding, but such a simple service, right? Today you go and you can get your mark sheet and you can open up your Aadhaar and open up your driving license. And those of you who haven't tried the Digi Yatra, it's a must do. I just end up traveling and catching my flights thanks to Digi Yatra now. And that's the power of what we have with UDI and, the whole identity infrastructure that we've created. And needless to say, with digital payments, while UPI is the poster child and everyone knows about it, I thought I'll also bring to highlight the Aadhaar payment system, because the Aadhaar payment system also takes access to bank accounts for various kind of transactions to remote parts of the country. So if we say that there are about 350 million users on UPI, there's an equivalent number on Aadhaar payment systems as well. Now, there is an intersection between the two, but these are very large numbers here we're talking about. And the number of active users utilizing UPI leads to the kind of numbers here. And the digital payment index is actually a number that RBI publishes, which takes into consideration supply side infrastructure, demand side infrastructure, the actual availability, the quality of payments, and so on and so forth. A number of parameters are taken given certain weightage, and even this index has grown by a 4x quotient. Now, all of this leads to an environment where basically the story here is that from the possibility and potential and the scale of impact that digital infrastructure can make has been proven. So the country is ready, users are ready, and it is offering and adding value at a very significant level. So taking it from here, when we look at finance, we can look at this in sort of 3 buckets. So 3 buckets, one is the bucket of the whole banking system. And banking system is, of course, payments, but the very significant role that banking system plays is to be a source of saving money and actually borrowing money. So really the whole piece around access to credit. Now, when we look at our numbers on Aadhaar payment systems, data tells us that over the years, more users are keeping money in their account as opposed to the time when they used to come and cash out. So sometime back, even if there was a benefit transfer, people would come, walk to their business correspondent point, and they would basically cash out. And money goes back under the mattress, gets used, so on and so forth. Now there is a confidence that this money is then retained in a bank account. So because the user can access this bank account and use that money, have access to this whenever they need to access it. And then what does it create from there? At a very simplistic level, when we say financial inclusion, it's not just that I have a bank account, right? Financial inclusion means that I should have the full power of what that bank account can give me. And what can it give me now? It should be able to give me some return, right? Some savings account return that I get. Because I'm now making my payments there, it should ideally giving me access to some credit when I need it. It should then give me the ability that I can actually take some insurance so that when I'm in need, when there is a circumstance, an emergency, a medical situation, or somebody loses an earning member loses their life in the family, or there's an accident, etc., there is actually financial security there. And the third element comes to investments. So now that there is money in the account, when all of us have money in the account, we do something with it, right? We put it in an FD, we might put it in some sort of a mutual fund, we put it in some liquidity instrument, some small part we keep away for as a saving. And that saving is not just a saving, it's a saving that gives us some returns. So we are working and, some of us are salaried and some of us may be running our own businesses, but, we are putting our time to productive use and we are also able to put our money to productive use. But that's not true for a large section of the population. So this entire cycle of financial empowerment, of the ability to save money, ability to access credit, ability to insure, and ability to actually make some returns out of any saving is not available to most of our population. And that's really the crux of this, right? And there are some numbers here. So when we say access to funds, our retail bank credit outstanding is about 53 lakhs. However, our actual penetration, if you look at people with a credit card, about 35, 40 million, And then if you look at people with a full access to loan, we're talking about maybe 90, 100 million. There could be some numbers added up by NBFC, some numbers added up by microfinance, but not very significant. And the underserved and unserved population tends to be extremely high. So while in developed markets, this number will be about 10%, developing markets also, are in the range of maybe 20, 25%. In India, this goes more than 60% plus of unserved and underserved when it comes to credit. And then you have access to security, and security is financial security, right? Which means any form of insurance, life insurance, general insurance. General insurance includes all your vehicle and medical and all that stuff. We're talking of premiums in the range of about 10 lakh crores. Of course, growing. All of these are growing phenomenally. And Dr. Batra said growth, right? So we are in the midst of growth, no doubt about it. But still, our premium penetration, and this is defined by IRDA as premium value by GDP, is only 4%. 4%. I mean, this is usually a very, very high double-digit number in most markets. Developed markets, of course, at 100. But even developing markets, tend to have a much higher percentage than what we see in the country. And then we have access to returns. So returns, of course, right from your, simple deposits, bank deposits. But I think if we look at a space which gives that right balance of risk and return, then really we are a good indicator, data indicator for us is the mutual fund industry. So where we look at that, we're looking at about an AUMs of, 50 lakh crores. And even there, the number of investors in the country today is in the range of 40 million, 40, 42 million. So if you really look at the whole lay of the land, a population of about 1 billion, right? Billion plus, of course, but I'm leaving babies and like older people out. So if you look at an active population, a productive population of 1 billion people, you break it down and say, okay, households and so on and so forth, we're still talking 200, 250 million. But there's no number here that crosses 100. And that's both the opportunity and that's also the problem to solve. And when we say data on one side, this is what we can do. This is the potential we can unleash. And this is the possibility when it comes to the financial service sector of the growth that is available. So when we look at credit, for example, we spoke about the numbers here, the unserved and underserved numbers. And if we look at the life cycle of a credit product, right? Because somebody has to know credit is available. How contextual can the credit be? Can it be available at the point of need? So there is a home upgradation that is needed. There is a medical emergency. There is a travel plan. There is wedding. There is festive season for which some expenditure is needed, right? Can it be targeted, made digitally available, using data? Can this data be used in a manner that is additional to people with a credit score? Because people with a proper credit score are limited in nature. And the moment you don't have a starting point of a credit score, then, after that, the journey just stops there. So how can all these additional data points along with a very contextual credit offering, have a mechanism where credit is actually available and accessible to all. Now, I think I had a conversation in the morning, and one of the partners here is also involved in collections. So when we speak to bankers, I think one thing I hear is, hey, but I can't really offer lower value of credit because how do I collect? And that's an important question to answer. Perhaps it's not just the traditional collection mechanisms, because there is a cost to collection, right? If it's very heavy duty, on the ground, physical. Microfinance sector, of course, informs us that actually speaking, even when we go up to the bottom of the pyramid, the collections are very good, but they are very engagement intensive. So people are required to actually meet them every month, create the subgroups that come together to create the liquidity pool. And that's really how that confidence in collection comes up. So using technology, using AI, using data to solve this problem, both sides of the cycle. How do we solve for additional mechanisms by which people's creditworthiness is provided? And then how to really look at how can we use data to be predictive, use data to proactively manage a collection cycle and bring down the cost on both sides is what can really open up this entire opportunity. And of course, needless to say, each one of these is going to have a multiplier impact when it comes to GDP. So second thing is insurance. I think the playbook is the same, right? Just open up the value cycle and look at what the challenges are there. What is it that platformatization can provide? So I think both the National Health Authority, the insurance regulator, they're all in the midst of various initiatives to say how to make this whole process more accessible, simpler, and transparent. I think these three principles hold good in any platformization mechanism, which then opens up this whole public infrastructure that we're talking about. So insurance at the point of purpose. And you're seeing it today, right? So you're booking a travel ticket and you're offered an insurance, right? Add 20 rupees more and add on your insurance top up for your flight ticket, for example. So we're seeing the early signs of how this point of truth can be taken advantage of. So being able to target, being able to create that kind of awareness, being able to sachetize this as well in a way that insurance premiums don't have to be these large amounts that happen once a year, but can actually be paid up when somebody has the money to pay. It can be paid up at a frequency that is more in tune with somebody's earning cycle, right? All of these mechanisms are available now. We just have to put the business model together and pull the infrastructure pieces in place. And similarly, when we are talking about having access to policies, managing these policies, making the whole claim process really simple, really transparent, having a common platform where it doesn't matter, who's the TPA, who's the insurer, which is the hospital, making this process completely seamless by bringing everybody on a same platform. These are all opportunities for common infrastructure to come in and kick in. Digital infrastructure powered by data, powered by access, simple APIs, but that do the job. And a lot of it is in play. I think some of it is in process, some of it is in play. I'm not going to touch upon so much of that. But again, this really is something that should bring many more people into the fray, into the gamut of security, financial security, but also create growth opportunities for the industry and the economy at large. And then we have, investments. Here again, I think it is about information more than anything else. Information for people to know how to plan their financial management. I would say even many of us learn this much later in life, right? If at all. And you can just imagine folks who don't have access to this kind of literacy. It seems logical. You're earning, 100 rupees, you put 10 rupees in the bank, and over time you take 2 rupees of that and you put it in, different kind of an instrument. And over time you take 1 rupee from that and you put it maybe in a little riskier investment because it'll give you some extra returns. But it's not at all as logical for someone who hasn't gone through that cycle. And if somebody is not teaching you to do it. And that's that literacy, that awareness, that being able to try. And, even in UPI, the biggest learning is people try because of word of mouth. Somebody has tried it, it's worked for them. It's very simple. And because it's very simple, very simple and transparent. Transparent creates trust. So I know what's happening. It's very visible to me. And because of that, I'm then also referring it to somebody else. So I think this entire cycle, this virtuous cycle has to be created. And again, platformatization has a big role that can be played here. It's already happening. I think we see that a number of the apps, for example, that are UPI apps have actually expanded their space, right? You see them in insurance, you see them in investments, you see the likes of, in fact, if you look at the securities brokers, the top 3 are no longer, the traditional companies. They are actually new age organizations. You have the likes of Zerodha, Grow, and so on and so forth. So the space is changing very dramatically as we see it, as we speak in the last few years itself. But there is still so much more opportunity and play there. I also believe that there will be strong vertical players who will emerge, who will create these business models and really take advantage of the opening up of this common infrastructure space. Yeah, so I think those are the 3 elements, the digital infrastructure we have today, over and above UPI and Aadhaar. So there's identity, there's payments, there is DigiLocker. I mean, all these pieces exist. There is, of course, now the AA infrastructure, there is ONDC. There is in parallel to this, there is the whole health stack, the education stack. These are all getting created in process. But also, I will certainly say that there is a lot of work going on across the financial sector to really open up this power and possibility for the financial future that can look very different. So I'll wrap up with that and open to any questions. We can take this off.
Various digital identities or, UID with your health insurance. How are the different platforms in the DPI? So ONDC is growing, it's in initial years. How is there an interface at the back end between all the platforms that broadly fall under DPI?
I think, that's like saying, will we link every bridge in the country or link every river in the country? I think if we sort of start with that very ambitious objective, it gets very complicated to execute. I feel the way it's happening is really, it's happening in its own pockets, but learning significantly from each other in a way that the success models, the operating models can get replicated, learning models evolve. So the UPI model, for example, is quite different from the AA model, even though there are so many commonalities there. Likewise, the ONDC model. Now, subsequently, will there be a need to tie in these pieces, create these cross connections, etc.? I think will evolve. Ultimately, there has to be a problem to be solved, and this has to be the solution to that problem, rather than looking at it the other way around. And of course, we have Aadhaar, I think, which every single person in the country has, uses. So if there's one sort of connecting thread, it's probably that one. Yes, please.
Thanks. I think something related to that only, but maybe again in CPI, with the data protection and confidentiality, I know we have moved a little bit, but anything extra happening from your side? Because to assess the credit worthiness, yeah, that's required. But somewhere, where do you strike the balance of data not getting?
Yeah, I think the Data Privacy Act is now, very much in play. The rules are being written up. So that's going to be the foundation framework for everything that we do. And whatever is the opportunity space that we're talking about will happen on the bedrock of privacy. And the A infrastructure, actually, it's great that we already have it, right? Because that creates the consent architecture that for anything that the user really wants to deploy and they want to actually give consent for the use of some data for some purpose, then the architecture is available now. So that's how these pieces will all start coming together.
Anything more on that? Well, I know because data protection will be there because we are data rich. India is data rich. That's a very good thing. But somewhere, I will say more on the education part, because that is where I see the something may happen, and then we may realize.
No, you're right. So while consent architecture is there, everyone is going to give consent. That's what you're saying, right?
That is, and this is a normal.
So everyone will give consent. So anyway, it doesn't matter. Everyone has access to data to do whatever they wish with it. So yes, I think creating awareness about the importance of your data, creating awareness about actually literacy, just awareness does not suffice. Teaching people about how to give consent. What does consent mean? Where should it be given? Where you don't need to give it? What are the watch outs? That's going to be a space in itself. Yes, and it will evolve. And the same thing to do also with creating that credit score. We spoke about that. You asked the question, but that awareness for people to actually create that credit score and why it is going to be important for them, also sits in that space.
Because just to it's very easy, and you go with whether it's a hotel or everywhere, they'll just say, sign it, take it. I'm like, boss, I'm not going to sign. What data you are, why I should sign? So it's like very normal practice, sir. Just sign it and send the document. We'll take care.
So no, we are in the minority. I also refuse to give any access, so I don't use most of the apps available.
And I get scared, boss. What you signing means you just cannot take, and it's a very simple thing, sir. Don't worry.
But if you talk to a typical Gen X or talk to people and say, hey, look, I value that convenience more than I value my data, and that's okay. We can't be sort of school teachers to people. They take their own decision, but we have to make people aware what trade-offs they're making.
All right, we'll take the last question.
Hi, ma'am. So as per the data, what you have shown, there is only 11% of credit penetration in the market. Okay. So in the last GFF also, we have launched the credit line on UPI as well. So how do you scale up that penetration in the market, and what kind of, as a from regulatory point of view, what kind of leverages are going to be given to the bank and the customers as well?
This is this is called a market making opportunity, right? So the product exists, but what can be done with the product will need all these other parameters to kick in. So you can create a product like the credit line on UPI, which is very easy to issue and easy to use and, solves for the context that we spoke about. But you do need that ability to verify the creditworthiness of an individual. And you do need the ability to collect at low cost. So I think all of these elements will come together, and usually lenders have an approach that they perform trials, right? So they perform trials just like a user performs trials, institutions perform trials. And I think many of those are currently in play. So they take a certain cohort, work with it, provide some sort of lines, give it some linking, look at the results and how the entire life cycle play works, and then keep expanding it. So I think we will see this significantly scale up in the next 2 to 3 years. The early phase, will be the experiments and the kind of cohorts that play out, and we'll know over time, which are the pieces that really deliver those results. But having said that, I think the services like predictive collections and, looking at being able to identify any sort of red signals in a portfolio ahead of time, being able to digitally collect. And we do have those tools as well, with tools like AutoPay and so on and so forth. But pulling all those pieces together is what is currently in play. So thank you very much. Thank you for inviting me here, Dr. Batra, Devika. Wonderful. Look forward to connecting with some of you later on. Bye-bye.
Thank you so much. It was an absolute pleasure. We request you to stay back with us, ma'am, and for your presence and time. We would like to give you a small gratification. And to do that, could we have the gentleman, Dr. Anurag Batra, to please join me right here and put your hands together, ladies and gentlemen, for that keynote session that we happen to have right here one more time. And this one's from our gifting partner, Clinically. And clapping is absolutely the best sound that we can make right here this morning. Thank you once again. And now as we move on, we have the first panel discussion that's about to take place. And of course, it's going to be a very thought-provoking and powerful panel discussion. And it's got a duration of its own. And before we segue into that, we just thought we'll set the course right here for this morning. Before we start, thank you so much for all those who joined in with us right about now. It looks like a full house. Could we have everybody put your hands together? Once again, welcome you all to the 4th edition of Festival of Fintech. Clapping is absolutely free, so come on, everybody put your hands together. So Fintech, of course, everybody right here, your leaders, you're from the industry, pioneers, visionaries, you've been a part and parcel of this. You know what is Fintech all about. A couple of decades back, it was 2 different genres, finance and technology. But when we collaborated together, when we got them together, we got a new era, new tech that opened a completely new set of Pandora's boxes, which completely gave a different ecosystem for automation and financial users as we know it. So it was all about the collaboration, right? It was getting technology and finance together. Yes or no? This is where you say yes, no, or a maybe. Yes? All right. So it's all about collaboration and getting 2 things together, which gave us the new perspective, new era. So before we have the first panel discussion, I thought on a lighter note, we'll have a fun bit of collaboration game. So I'm going to show you a couple of slides. Can we have my slides from 17, please? Console, get the 17th slide ready. And we have some gratifications to give away. So I want everybody to warm up, get it ready for the day right here at the 4th edition of Festival of Fintech. So this is collaboration. When you collaborate 2 words together, you get the 3rd one. A new perspective, new opportunity, and that's what we are here to unveil and uncover. So example is, year plus ring gives you, and write down there is actually bean and bag, it's hidden, gives you bean bag. That's pretty much what this activity is all about. So you will see something that's going to come up on your screen and you have to give me the answer. Next slide, please. Collaborate the 2 things that you're going to see and tell me what brand are we talking about. Wow, superb. That's Harley, David Warner and Son. That's Harley Davidson. High five. Superb. That was a demo. No gift for that one, though. The next one, you get a gift. And what is that gift? I'll let you know later. Could we have the next slide, please? The answer, yes, Harley Davidson. Could you have a round of applause to the gentleman who gave it so quick? Next one. Let's collaborate these 2 words or pictures and tell me what's the 3rd perspective that you see. Credit be. Who said that? Wow. I love how you're sticking to your genre. But that's not the right one. Read the question. Guess the sport. See, we miss the question at times. It's a sport. Yeah, there we go. 3, 2, 1. Let's reveal. Yes, it is. A round of applause to the gentleman right here. He got the wrong and the right answer. That's nice. So he's at 0 there. Next question, please. Guess this brand. When you put this together, you get a brand. Okay, for those who do not know what letter is that is what a fly is called in Tamil. That's a Tamil letter. Somebody got that at the back? eBay, right answer. Round of applause. The lovely and the lady's so happy. Nice to see you smile, ma'am. Yes, next question, please. Okay, this should be a thinker. The thinker. Front bencher always, huh? Always the smart ones, the friend bunches. Yes, Bombay and all the dying hey scenes of Shah Rukh Khan. Bombay dying indeed is the right answer. Come on, put your hands together. And ladies and gentlemen, with this, it's just a way to talk about power of partnership, collaboration. You always have the third perspective. You always have an opportunity that uncovers. And to put that into segue right here, the panel discussion that we've been waiting for, titled Leveraging Data for Financial Innovation. This panel will emphasize data-driven decision-making, predictive analytics, and machine learning applications in finance. Join me in welcoming the moderator, who will be the session chair of this, Dr. Vaibhav Joshi, co-founder and managing partner, Tableturn Tech. A round of applause. And now let's welcome the panelists. We have the Senior Vice President, Financial Services, ONDC, Mr. Rishikesh Mehta. And joining him, we have the Director from SCOME Solutions, Mr. Shashank Sharma. And also joining the Managing Director from Stocksbox, we've got Yuvraj A. Thakur. Joining the league of this fantastic panel, we have Mr. Giridhar Krishnamurthy, Business Head, EMS Raggle. And also joining with us, Mr. Jayakrishnan Rajagopalan, Enterprise Architect and Solutions Advisor, Digital Data AI at Kyndryl. Come on, put your hands together. Ladies and gentlemen, let's welcome them right here. We're all set for the first panel discussion, and also completing the league, we have Jaya Janardhanan, co-founder and CEO, FinTech Solutions. A huge round of applause. Good morning to one and all. Take it away, please.
Good morning, everyone. It's a beautiful morning in Bangalore today. So quickly, it's interesting to take the first panel because, we set the context for the entire day. And there were a couple of moderators, who were messaging saying that, you guys don't cover everything because we need some points to talk. So we tried to, we are going to stick to a theme that we have created. But before that, what I'm going to do is I'm going to spend some time to introduce and let them introduce themselves. So I'm Vaibhav Joshi. I've been a banker for a long part of my life, and I've been a startup guy as well, doing startups, fintechs. And now what I do is I work with banks, NBFCs, and startups to help them in growth journey, partnership journey, and the investment journey. And I would request, all panel members to one by one introduce themselves, and then we can start the panel.
Hey, hi. This is Giridhar. I head the business for Zaggle, which is a spend management company. We do consult a lot of corporates on both on corporate spends and employee spends. Been in this industry for more than 17 years, consulting corporates and a lot of policy making and spend management practices.
Hi, I'm Rushi. I actually run the financial services at ONDC. I think Praveena talked about the big gap in credit, insurance, mutual funds. I think my job is to try to bridge some of that. It's a tall task. And especially in the wake of what Aadhaar, NPCI, and now what the account aggregators are doing, I think we have big shoes to fill for people who have done things in DPI before us.
Morning, everyone. I'm Jaya Janardhan. Been a banker for 27 years, exited my banking career in 21. And I thought that one of the challenges that we all faced on the other side of the job when we held senior position was execution challenges. We had everyone to consult to us, but when it comes to execution, it became a huge challenge. And with that in mind, I set up Crayon Tech Solutions, an organization that focuses purely on execution. So we work with BFSI segments currently and help in executing projects, process re-engineering, or setting up the entire business for the organizations as required. So that's about me.
Hi, good morning. My name is Yuvraj Ashok Thakkar. I am a stockbroker and a fintech enthusiast. Third generation managing director of a predominantly proprietary driven organization. Sold a couple of fintech startups to PhonePe. Nice to see their name on the sponsorship board. Essentially, Stocksbox is our attempt at bridging the gap between the Uber Ultra HNIs who have all the information and the research in the world and the rest of us who are making investment decisions based on what our mothers, fathers, uncles, kakas, mamas tell us to do. Thank you.
Hi, good morning, everyone. I'm Shashank Sharma. I'm a co-founder with ScoreMe. Well, at ScoreMe, we work in two parallel aspects. One is on the data aggregation side, where we try to build, analyzers around different documents which today are being consumed for any kind of credit decisioning, stuff like bank statements, CSD, and a lot of information which is available from the borrower's end. And we also work parallelly in the digital lending platform space, where we create end-to-end digital lending journeys on different products, primarily linked to the retail, agri, and the MSME space in the country. So we've been working with roughly around 100 institutions now, and good to see your presence here. And I think we'll have a good discussion here. Thanks.
Good morning to you all. My name is Jay Krishnan Rajgopalan. I'm an enterprise architect with Kyndryl, about 30 plus years in the industry. Half of it is in my own company's healthy mix of ERP, design to delivery, fintech, and data as the value of it I learned by co-founding the first study e-commerce in India, M.V. Kirsha, which was very specifically focused on enablement of a marketplace for rural markets for the urban brands. In Kyndryl, part of the applications data and AI practice, focusing specifically on the BFSI space, two key objectives that I'm working on. What's the value to monetize data and how to actually link the API economy, which every banking sector clients have. How do they bring that to bear is the key focus I'm working on.
Thank you, everyone. It's a pleasure to be on the panel with all of you. So when we talk about data, and our topic is leveraging data for financial innovations, when we talk about data, has been there all the time. And, for the past couple of decades, we have been finding out methods to, use that data. For the past decade or 2011, 2012 onwards, we got an entity like NPCI, which, where a lot of this sorting out kind of started happening. And then, now data, leveraging data from a payments perspective, from a lending assets perspective, from a retail liability perspective, from a wealth perspective, from an insurance perspective, or from any other perspective when it comes to BFSI, it's right there. We have seen the AA framework coming in. We have the enabler fintechs, we have the infra fintechs, we have product fintechs, and finally everything boils down to data. So what is it that we say when we talk about leveraging data? I'm just trying to set the context for the panel in another 2 minutes. So if we look at previously, the underwriters still used to use data. Okay, when underwriting was done, even in maybe 5 decades back, there was data, but the data was in a very different form. Okay, that data was what I know, what I see, what I have in front of me, and based on that, I'm going to underwrite. And today, that underwriting still happens in probably a city like Bombay, where there is no data-driven decisioning, but there is legacy data, traditional data-driven, offline data-driven decisioning. Okay. What has happened is now with all the data coming into a structured format, with the bureaus coming in, there came a way where, you could actually take a CIBIL or a CRISIL report of somebody and then, take a scorecard and then underwrite. And I'm trying to limit myself to lending to set the context, and then we can dwell into others. And then eventually, a lot started happening on the alternate data in the past decade. Okay, alternate data in terms of GST, business data, how much Dhanda is doing. In between, SMS scrubbing came in, and then, with the privacy and everything coming in, that was stopped. So a lot of that lat long social media data, there was so much social media data that's available. There are APIs for that. That tells you actually, this guy has been on FB for last 10 years. He stays in this locality, this pin code. Okay, he stays in an influencer locality. He has, 10 loans going on. He has 2 children, one is at the age of marriage. And, the lender says, okay, this is my right customer for PL. So data availability, accessibility, now we are right at the peak, and, we are just going to keep on innovating. So on that, we have tried to divide the panel into some topics. So one is data-driven decision-making. Second is predictive analytics in finance. Third is machine learning. Fourth is the challenges. And fifth is the innovations to do with that. So Jay, I'm going to start with you and Shashank for my first question, which is, why is data crucial for financial innovations?
Hi. So, just before I start responding to your point, Piper, so when I started my life as a banker and I was working in operations and I was sitting for a review. And, they had the business and the ops have constant arguments with each other saying that, this is our business. This is, the ops has not done it. So the question that my boss asked with a straight face to the person who was presenting the issues was, all these complaints that you're seeing is fair enough. Do you have data? Do you have something to justify this? And he said, no, it's all what my team is telling me. And then he asked the next question saying that, are you God? So he says, no, I'm not God. So my boss that day had made a statement which is still ingrained into me so much, and which is the reason why this particular subject is also very close to my heart. He said, I believe only two things. One is I believe data, and if you don't have data, then you have to be God. Then I believe God. That's been such a strong statement to us all at that point of time. And today, after 30 years of being in the industry and working, data continues to be ruling everything in the industry. And if you look at, we were from the era where you started off with a physical banking, then became a Y2K, then became a digital banking, core banking, then a digital banking, and now you're into an era of AI and machine learning and multiple other technologies that have come into place. Data still is the king. So it's basically data that drives every decision in everybody's day's life. That be it's an e-com or you be in your financial services, whether you want to give a loan, whether you want to onboard. See, at one point of time, as bankers, we were open to everybody coming on board as customers. But today, the bankers can take a conscious decision whether you want to let someone come into your bank and be a customer, which is called as a keyhole theory, right? They actually decide who they want to be your customer because they have data to say that this person will not be a right customer for the organization. You go to a website, you go to an e-com website and you just show your interest to buy something and generally start Googling all those brands, and suddenly you have this SMS which comes to you or a WhatsApp which comes to you saying that, oh, we see that you have been seeing this. Are you interested? Do you need? What's all this? It's all about data playing around with you. It actually is in your life, an integral part of your life. So every decision today, whether it's finance, whether it is any other industry in today's world, is taken based on data. Financial services, all the more reason is because it's a question of lending and receiving money, right? As a savings, as a bank, you also lend, you also take money. While you actually manage money, are you doing the right thing? Are you lending to the right person? Are you actually knowing what exactly that customer is up to before you lend your money at the cost of the interest or the money that you get? So typically, it's also taking you a step forward to make sure that you know what you are getting into, you know where your money is, and you know that the decision that you've taken to make someone as your customer is the right decision, and not tomorrow repent saying that and people are conscious about the growing NPAs and the customers and fraud that exists in the system. Without information, without doing analytics, without understanding who does what, it's very, very, very difficult to actually own a customer. And with regulators and everybody coming up the sleeve saying that KYC, know your customer, know whom you're talking to, know if there's a flesh and blood behind that particular name it's all data that actually validates it. So in financial services, while it is all about money and therefore data plays a very critical part, any other industry today has used data extensively to actually make sure that the decisions are right. Going forward, it's not like, as they call in the technology world, the dark web, that you don't know who is there. Here, you actually take a decision based on someone who is there, and therefore you know what you're doing, and therefore you actually are conscious about what you're doing in the financial services space. So data is very, very critical as far as the financial services space is concerned.
Thank you, Jaya. So this reminds me, of my younger days. Okay, just a quick story, and before we move to you, Shashank. I used to go to this grocery store. Sometimes my mom would send me, so I would go there and that guy would, I'll tell him the list, de do, or he will give it to me, and I never paid money to him. Okay, it was a monthly khata that he used to maintain. Okay, now know your customer, KYC, he knew the customer. He knew those 100 families, 200 families that he was servicing. He maintained a khata of everything. And then I was like, I was intrigued that something is there. And I was really a kid, like it would be in my, I don't know, second, third, fourth standard. And one day I asked him when mere ko ye chocolate dena, he was like, he gave me the chocolate. I did not have to pay for it. Okay. I was like, interesting. Again, so Shashank, over to you.
Yeah. So I think how we can look at this is primarily, I think, two aspects of this. One, what I feel is that it has a lot to do with the end users' expectations today. I mean, the ecosystem in which the country is evolving now, like you mentioned that, the expectations in the old days were you were curious to know that, how this particular event is happening. I think nowadays the end user is more educated than the lender himself. And he knows that there is a layer of digital footprint data which is available. And if that is not exercised, then till the time, he reaches out to the lender, he expects a decision. Now, it is all going with regards to the timeline that, for example, today, if we are trying to take a line of credit on, let's say, a personal loan, our expectation is not that we will reach out to the lender and they will ask us for certain data points and documentation, and then we will get to know a decision. Today, I want to be educated, I want to be informed. And, it is, I take this as my right that I should know that basis my profiling and my credit, history, where am I standing at? So I think as end users, we have also evolved a lot with regards to understanding of the data. And I think once the end users started understanding the data, it automatically became a part of the ecosystem that, it has to reach to that scale so that it becomes available at a mass level. And I think secondly, it has also to do with the, evolution of the ecosystem on the other side. See, today, if you look at the regulators in the country, we are all pushing towards digitization as one of the major aspects. We're looking at account aggregator framework, GST got introduced. It's pretty matured in the country now. We are looking at payment space, insurance space. If you pick any of the BFSI, regulated entities, there is a push from the regulator to have more and more digitization imparted. Now, again, to have a layer of digitization, what you had mentioned in your opening remarks is that we today are sitting at a layer of structured data. Now, when we have structured data in hand, it becomes very, I would say, important to include it in terms of any financial innovation. Because one part where we were lacking behind before the entire digitization got imparted, there was a mass end user audience which was available. Data was not structured. It was segregated into bits and pieces. Today, we are at a stage where we have consolidated all of that. We have, data-driven pipes enabled by the government. Today, we talk about KYCs as one of the very critical aspects, for example. So I don't think that, anybody in this room or maybe, if you interact nowadays with anybody, they talk about a physical KYC anywhere. We have, stacks like API Setu, which are open stacks available by the government side. You have not just for KYCs, which are your OBDs, KYCs beyond that. I mean, how to analyze that, I have been a consumer of electricity at a particular location for the last maybe 3-4 years. We have that digital data available. And I think now we are even going into a next layer of that, which is actually leading us to financial innovation, is that we're trying to build embedded finance solutions in terms of that. So in order to take, the decisions from an orthodox lending towards a digital lending and then to include, I would say embedded solutions in that lending, it became very inevitable for the data to be, analyzed on that note. And so I think both sides have been fairly important in India. So we as end users and the lenders as the other side, they have exercised this data very pretty well. And we are sitting at a fairly decent position globally. If I talk about, I have, seen audience from the external countries who observe India as how the lending in India happens and how the payments interface, for example, in India is happening. I mean, now we are governing and we are guiding other countries on that part. So I think it was very inevitable that the data has to be used there.
When we talk about data-driven decisioning, I cannot but wonder, and couple of points that Pravina was mentioning earlier, we talk about data privacy, we talk about data security, consent being the most important part of it, okay? And initially, I used to, be wary of, what apps I'm installing, because you keep on scrolling, and at the end of the day, at the end of that page, you click on I agree and just continue. And we barely read it. I'm sure not a single one of us would have probably gone through the terms and conditions of, even one of the apps that's been there. And we don't know what kind of consent they take. Being a ex-founder myself of a, MSME neobank, I have seen and I know for a fact the type of consents that we used to take. Practically anything and everything on your phone is not unreachable for us. Okay. So if you have certain apps in your phone, then those somewhere, on their servers, everything is getting tracked, even when your probably phone is on flight mode, where you're traveling, your lat long, everything, what apps you have installed, who you are chatting with. There are so many things. And that is why, this data privacy bill is so extremely important. And probably, in a society like India, the seriousness of it, we as citizens need to take up. I was just recently chatting up, I was doing a session for, a batch, college batch. And I was telling them, guys, you are on Bumble, you are on Tinder, but, there are so many apps that know that you are there. Okay. So be wary of everything that you use, because there are so many apps, there are so many servers that know what you're doing. Leading on to this, let me come to Jay Krishnan. Jack, leading on to this, what are your views on the data privacy, data security, and the consent architecture when we talk about, as we move from an institution-based decisioning to a database decision?
Absolutely. I think as Pravina said, part of the minority community of knowing what you're going to give consent to the usage of your data, the education is or awareness has to be on both sides. Not only the consumer whose data actually is being given by the consumer with or without their knowledge, but also the application architects or designers or solutionists who are designing applications to consume the data. The shift left the entire approach of what is the data that you're asking for? Why is it required for the purpose of your use case? This typical approach, as we said, every app now just harvests all data and then keeps it some storage, hoping somewhere in the future they can utilize data genuinely for the purpose of their use case, or just decrypt it for the purpose of any other spurious activities, right? This being the case, data comes under three segments in my mind. One is data privacy, and hence the categorization of whose data, who's using it, and what purpose of it, and who's to provide the consent. And within that, the architecture, which is very well defined with our DPDP and account aggregator, has been a tremendous implementation of that. How much of that will get implemented going forward across all the stakeholders? That's going to be the key, first aspect of it. Second important part is the data protection. When you talk about data protection, we're talking about data in transit and data at rest. And there are various technologies that is currently being utilized, data at rest, protecting it from the outside-in attacks, but also the data in transit, wherein which a lot of the transportation algorithms now are trying to become quantum safe to say, even if you can harvest now without knowing how to decrypt it, hello? Yeah. So the fact is that harvest now, decrypt later approach on the data in transit is going to be key, right? Consent, data privacy, hence the consent management, data protection at design and as well as at the point of where the data is being utilized across the entire value chain. Could be somebody who is asking for data from an API economy point of view. What are you asking for and why? It should be designed when you're creating the API design. That's one of the key focus areas in my mind. And that's something which we have seen recently. One of the banks that I'm consulting with as a mentor for their API economy, they have 340 plus APIs, out of which only 15% of the APIs actually are being utilized by the ecosystem. And the best part is those 15 APIs have data which is equal to the 300 APIs. It's been like started off with one API requesting data segment 1, then second API data segment 2, the third API data segment 3, and then the fourth API was too many APIs for me. So just give me one mother of all API. That's how they're building it, and now nobody has control as to what is the API for what purpose, who asked it. It's just lying there in the middleware, and then people are just consuming it. So right sizing the data is key from a design perspective. Being architects and also the consumers and the guardrails of the industry, privacy starts at design, not at the implementation stage of it, where the awareness and education comes. That's the key consideration from my point of view.
You made some very interesting observation on the APIs, okay, and I'm going to make a point over there, because there are so many APIs available in the market, and a lot of those APIs are so cumbersome to work with sometimes that on that front now I feel is where the next innovation is going to happen. So probably on the API bit, there are a lot of probably enable startups which should come up and make it less cumbersome. Where there is 4 API calls required, probably one can do the job. And yeah, and that's where also what happens is the tech rails or the tech infrastructure that our country has already built, the public infrastructure, which actually is, like we are one of the best in the country. So right from JAM, Trinity to now ONDC, Open, and so on and so forth, AA and everything. Somewhere at some point in time, even those tech rails will need to, become agile, and those APIs, instead of consuming, 35 APIs for something, probably a 2 API would do. Go ahead, Jack.
Just to add one more point to the fact that you said optimization of the API for design and optimizing it for the consumption. So 2 different things altogether. Optimization by design can be done by you as the product owner, that you will know what is the purpose you are giving it for. Optimization for the consumption would be basis who's your customer, who's consuming it. You could be a middleman. I was very fortunate to be part of the architecture team of the public tech platform for frictionless credit, which is RBH's as per our Prime Minister's GK. It's a UPI moment for credit per se to start with. That had a very different thinking. It's not about just plumbing all the gaps in the current STP process. The whole idea was to say, let's reinvent it by making everything digital first. It has to be digital native for every lending journey per se. And this approach of, if a bank or an entity wants to ensure that lending origination completes in the approval process, what are the steps required? And today, how many of the APIs that they're consuming for what purpose of the process steps was completely broken down, and API structure was created so that the right participant, and then the multiplication of that. Why multiplication of that? Because the entity could decide to say, I would want to work not only with a person or a organization, but multiple for their BRE purposes. So that's something which is very important, to optimize it by design, optimize it for the consumption also.
Fantastic. Let's move on to the second part of our panel, which is essentially predictive analytics in finance. And I'm going to move on the right side of my panel now. So Rishikesh, let me come to you, because, when we talk about predictive analytics, a lot of that has been basis, all the data structures, data forms that have been there, the libraries that are there, the sources that are there, and we pick and choose the data. So, and let me go back 2 years, when I was building EasyPay, which is one of the first ESPs to be live on ONDC now. When we were, when we were onboarding an MSME on our platform, we used to pick into so many data sources, and then we would have a credit AI run its own, algorithm, and then we would create a scorecard A, scorecard B. We would do a financial profiling, do a lot of bureau data, alternate data, so on and so forth. ONDC as a platform, okay, it is very interesting for me to understand, and we all are very inquisitive to understand, how would ONDC look at predictive analytics? Because ONDC today we are looking at as a platform where, it is probably, going to replace at some point in time, what RuPay did to MasterCard, Visa, ONDC is going to do to e-commerce. Okay, I'm hoping. Yeah, thank you. Go ahead.
So let me strongly refute that. I'll try to clarify what ONDC does, what our role is. And I appreciate the optimism on the left side of the panel about the standardization adoption. I'll give you some of our experience as we are pushing lenders and manufacturers over the line into digitizing. Even our experience with the regulator and policy, we sit on MSME lending, working groups with the ministry, and none of it is easy. And what Praveena was referring to, it's a market making job, but we'll come to that. First, what does ONDC do? We are not a platform. We are just APIs. And what is our role? See, the issue is to standardize. See, regulations are standard. Unfortunately, RBI is not always terribly clear about what the regulation should do. So there's some interpretation. And what has happened in the market has evolved into some interpretation and versions of what the regulations should be. And that is the truth, whether we want to agree, and that is the experience we've had, whether it's an NBFC, small one, large one, and a bank interprets the same regulation differently, right? So the first issue is, but the regulations are the same, black and white. The first issue was, can we standardize the process? Because everyone needs data to underwrite. Someone does some modeling, risk appetites might be different. You throw back an offer, then you have to do KYC if they're not already a customer. You have to take a disbursal account. You have to send up a repayment mandate, and you have to sign an agreement before any disbursal happens. It cannot be digitized beyond 60,000 because after 60, you have VKYC, which completion rates are, debatable how good they are the more into the hinterland you go. So there is some solving that needs to happen. But the point is, that is the process by and large. Larger organizations, departments add value, so more data fields, which are probably not used. And I quote experiences with lenders. You say, why is that data field there? Pata nahi tha pehle se, to rakha hai. So he said, go ask your underwriter and remove it if you're not. And that's what we've done. We've standardized the rails. So the first step is standardizing the rail. Now, even after you've done that, it takes massive effort to get the larger organizations to adopt. I won't quote the names, but there are some banks who didn't have the ability to send a payment URL in this day and age, right? So if you had to do something digitally and collect payment, they were still on PDCs. So they had to push that over the line, had to develop the capability to do it. So what have we done? We've developed the standardized rails. We've not talked about it much. I think last week there was some article in the Eco Times which they strong-armed us into responding to. So we are live with credit. We have 5 LSPs, we have 2 lenders, we have a 6-minute journey, standardized using data. So our role is to connect the manufacturer to the where the digital native customer lives, right? And we build under the assumption that in the next 4 or 5 years, most of our, the Indian population will become digital natives. And it should become very easy for what an LSP or a buyer app to be able to embed credit, embed insurance, embed mutual funds. So technically, we live in a world today now that if you become a payment app with UPI, you can offer credit of ONDC, you can offer insurance of ONDC, you can offer mutual funds of ONDC, obviously if you're licensed by the regulator. You could actually create a quasi-bank without actually needing a license. Now, that is the role we play. And the idea is, can I digitize these, connect the manufacturer to the digital native, borrower, investor, insured, and then can I do it very simply? So for example, startups struggle to get the attention of large manufacturers. Small manufacturers struggle to get the attention of large big tech players like Google Pay. If we have, or Google Pay, Amazon, whoever, they're not going to waste their time with someone they think is too small or won't generate enough business. We take away that. We don't prioritize. If you are 2-man IIT grads who want to start a buyer app, you're welcome to come to ONDC. If you're Google Pay, you're welcome to come to ONDC. And we will not prioritize your attention basis size, but on basis your intent to build and move forward. So first, that is the role that ONDC plays. Now, the other issue is data. So look, data resides everywhere, and actually when you scroll on Instagram, you're giving them data, but you do it happily. They're also listening to you. So I don't know if you use Flipboard or Instagram, but when you are using it, and even if it's there and you're having a conversation, realize that the next thing you start getting served what you were talking about. So you don't even know your voice is data, but there you give it. For people like us, and this is the other thing, we solved for the 100 million. Even I would be very reluctant when I tested. We are live on Paisa Bazaar. I was testing. I was like, should I give my A consent? But I said, I have to test my own flow, so I gave it, right? But we don't want to give it for that. But for anyone who's hungry for a loan, they'll give you whatever data they want, right? So it's an issue. it's really an issue of need. When you don't need it, like I'm sure everyone in this room gets 2 calls a day minimum from some telecaller saying, "Yaar, loan chahiye, main ye finance se hu, ye finance se hu." So hopefully that will go away now, right? But what we've done, so now you've got the basic rails. The next evolution is there's all this data sitting, on platforms that run other businesses. And I'll give you 2 or 3 examples, which we are going to try. The hard examples to solve for, and we're going to actually try to solve for them as reference use cases. One is, there's this company called Stellabs, right? They collect milk pouring data from dairy farmers. Dairy farmers today have to go to 4 sources of financing because before they can, and this is going to sound funny, but buy a cow for 80,000 rupees. We want to create a use case where can I get this milk pouring data packaged for a lender? The farmer can actually choose to consent to share that data. It'll be like, how much milk have I poured in the last 3 months, 6 months, aggregated, not every transaction. Can they also use the account aggregated data? So even if they're not on the credit bureaus, and what I failed to mention is I helped set up CIBIL and spent many, many years there. So I'm like very familiar with doing this. And share that with the lenders. And then the lenders can, within that 6-7 minute journey, give that 80,000, pre-approved, confirmed offer and subject to KYC and all. In the next 10 minutes, disburse it. And I'm not saying this will happen. It's already happening at a small scale. We are live on ONDC with this. And you're free to test it. It's on the homepage of Paisa Bazaar. Don't sign the agreement if you don't want the loan, but you can go through the whole thing in 6 minutes and they won't call you. That's the big difference, right? So that's one of the use cases. We're also working with another company called Absolute. We've packaged their crop yield data for farmers. So how much does the land yield? And then if they want to take a loan to buy seed or whatever, they need to buy. And the third one we're trying to do is with Bizom. So they're a SaaS company with data of transactions from kiranas to distributors to OEMs. So they have actually created 1 by 1 kilometer square areas of data, and they can benchmark how one kirana guy does, in his general area or her general area. So it's diversity of product, size of order, frequency of order, and they've actually scored it. So it created a score for that data. So, these are hard cases. These are cases that lenders don't finance today. They're 5,000 bucks, 10,000 bucks, 80,000 bucks, small ticket. So we are going to try to do the most extreme example, because if we are able to solve for that, we'll solve for everything else. So that's how we'll propose to use data. Everyone asks, how will you use ONDC data? ONDC has no data. We don't store any of it, but we will help unlock data that sits on other platforms to be able to underwrite. The last thing I'll say in terms of market making that we need to do, it's not enough to do all this. So the other things we're working on, so you'll hear, hopefully in the next couple of months, we've worked on a new to credit guarantee for MSMEs, so that lenders feel comfortable giving. It's called the Nirman scheme. Hopefully it'll get announced. We've been at it for 2 years. We should see the light of day now in the 100-day plan. Also an interest subvention to make it cheap. So a 2% discount to borrowers, first-time borrowers. Otherwise, they're always provided a much higher rate of interest when they're first-time borrowers. So imagine if you have a credit guarantee that gives lenders comfort. The borrower is given a slightly discounted rate so that they can create track. And then subsequently, as they take multiple small loans, they can get larger and longer working, longer term revolving working capital line. So while data is good, and the other thing is driving the lenders to do all this, they don't have the muscle to consume, to interpret. There's, I was talking with Jaya earlier. I think there's this massive opportunity for TSPs. Not a single lender in like the 2.5 years that I was I should say not a single lender, one lender built their own tech. All the rest was built by TSPs for the lenders. So I'll stop there.
Thanks, Rishikesh, for that perspective. And, the way ONDC has grown from when I used to know it and to what it is now, we used to think that it's a platform and it's going to end out to APIs. Amazing. So let me bring you in over here. Okay. Yuvraj, and then I'll come to you, Giridhar. Do you want to add something to what, Rishikesh was mentioning?
I mean, it's essentially the use of data, right? Primarily we're alpha hunters, right? Being in the markets, high frequency trading, data-driven trading. It's what Rishikesh mentioned about crop yield, right? Way back in the day, 8-9 years ago, 10 years ago, when we started getting access to satellite data, we started predicting crop yields in a very for lack of a better way, raddi fashion, in a very dirty fashion, simply looking at the amount of green we can see on the ground, tracking the amount of shipment trucks leaving the auto manufacturers and the auto ancillaries. Another interesting point of data is, did you guys know that real estate follows an N curve to the sale of elevators, right? When elevators first start getting sold in an area, real estate prices rise. And then after there are too many elevators being sold in an area, the real estate prices fall. I mean, obviously now looking back at it, it's because of oversupply, but all of these are very, very exciting ways to use data when we're looking at it from an alpha generation perspective. And that's all we do, right? All we do is look at how to generate, or rather massage, interesting, actionable insights into mundane, unorganized, previously, now very, very organized data.
So I just wanted to comment on one thing. Sorry to jump in, but I didn't cover that ONDC is not here to kill anybody. So here's the thing. And I'll use NPCI as example. When UPI first came about, it was supposed to be a card killer, right? The MasterCard, Visa are going to die, blah, blah. Sure, it might have affected them a little bit. But by and large, I think UPI created a market for more credit cards by digitizing a lot of cash transactions, which then made it easier for the issuing banks to underwrite. Now, okay, for ONDC, it's going to be a little more complex. We're not here to kill anybody. Like, at least in my mind, our measure of success is when a dominant incumbent participates with us, because then we're giving them something they couldn't do themselves. And Paisa Bazaar is a case in point, because if you say a dominant market, a loan aggregator chooses to participate on ONDC, we've given them, we're going to be bringing them public sector inventory and a 6-minute journey, which they don't have today. So don't look at ONDC as here to kill Swiggy or Zomato. The question to ask is, what would make Swiggy or Zomato or Amazon or whoever participate with us? Our job is to deepen and expand the market, not compete with the private players. So I just wanted to clarify that, which I didn't when I gave the earlier.
Sure. Thanks for that, Rishikesh. And, that's a good example also, because I remember the days when, the switching fees for MasterCard, Visa used to 4.5 rupees, and then NPCI Rupee came in and it came down to 60 paisa. So what it does is, when something like this we do on our own within the country, we really, benchmark a lot of things in terms of quality, in terms of price control, in terms of a lot of things. Giridhar, let me come to you. And let me now skip the ML part of it in the interest of time and directly move to the challenges. What are some of the challenges you feel when we talk about, leveraging data for financial innovations? And probably what are some of the innovative use cases as well?
Got it. I'd like to slightly digress, because I've been dealing with the B2B market when it comes to the financial innovations that I have seen when it comes to the business spend process. The data currently in the corporate world sit in a lot of silos. So just an example, in the morning when I was collecting everyone's visiting card, that's how the data pockets currently are. It's in different size. It doesn't fit in a single pocket. The source, where the data is coming from, it's never in a standard format. So that's where most of the integrations also fail when it comes to the corporate world. Though people talk of a lot of APIs, a lot of integrations, there are very less use cases of a successful integration where everything is working very smooth. Because the initial source where the data is coming. So we also deal with historical data. When it comes to historical data, there are certain dimensions which are not available at that point of time, which is never factored, which is never being captured in the first place at all. Now I have that information. I can go back and change the data over there, but I've already taken particular decision. That generally where the biasness comes from. There are a lot of decisions already taken basis of data which was there, which didn't throw a new dimension onto it, which I currently have. How am I going to deal with it? It's a major challenge, but this is very subject. What generally happens, like we do this Harrison test. So same set of questions asked to the same person, the answer is going to be different at any given point of time. So that's how the data interpretation is going to be. And when I talk about AI/ML, how am I going to consume that analysis? The data probably is the same. Data is going to be the same, but how it's going to interpret is a point. What is that I'm going to pick out of it is a question. Probably a finance person of a corporate A might be interpreting it in a different way, but having access to data is prima facie the fact. But how am I going to take the AI/ML learning over there is a question mark. That's going to be a fundamental challenge at any corporate. And the source, I'll come back to the source of data. as many as these tools have access to data, like when we do a spend analysis, being a spend management company, the transaction information is what prima facie is the truth, where the actual transaction is happening, which coming into a system, the corporate is unaware of it. Now it's being second-hand fed into the system, where there's a process of workflows inside the corporate, where I'm analyzing whether a person needs to spend or not, which is happening post facto. Now, what if this is happening at source? Can I do it at source? Where I have the basic information, most of the card transaction currently gives you most of the information, what I need. I don't even need a proof of expenditure coming my way. The card transaction gives me all the source that I need. How am I able to take a decision basis these information? Currently, am I moving in that direction? The intent is always there. But probably the challenge is going to be the current. I also keep taking this reference of changing the tire of a moving car. There is already a work happening from the past data, and there is this new thing coming all over, and everyone are like gung-ho about all the new innovations happening. There's a API war, there is a data AI ML learning, but there is already a work in business as usual happening. How am I going to change that? I can't stop it. There is this period of transition, and how am I going to manage that is going to be a major concern. That's the major challenge I feel with the current thing, what's happening in the market.
Thank you, Giridhar. I'm going to sum up the panel now and actually open for Q&A. And before we dwell into innovations, I can see the timer. We are just under 2 minutes. So we'll just open for Q&A, guys. So any questions you have on this subject to any of the panelists, please feel free to raise your hands and ask the questions. Okay, no questions. That's great. So let me then, come to the panel and maybe, spend 30 seconds each on, some of the innovations that we see while, leveraging data in today's times, specifically in the financial industry. Let's start from you.
Yeah. So I'll go back to the corporate world that I deal with, probably with the travel coming in. So there are a lot of elements into the travel currently, which is not factored. Like probably a business leader is wanting to travel on business and currently is not aware the impact of it. So as of now, even today, there are a lot of travel requests which goes to approval without the cost being factored. Now, going back, I don't even know if what is the market dealing with it. If for a business travel, if I'm booking a ticket 3 days prior to the travel, what's the cost difference versus if I'm doing the overnight flight travel? So this information being on table.
Let's keep it under 30 seconds. The timer is up. So,
yeah, this is one thing.
To everyone is let's keep it under 30 seconds now.
So this putting the information on the table before actually someone takes a call is probably one layer what we are looking at.
What I think will happen is we're weaponizing the ability to share consented data. I think what you'll see, and we are actually working on it, is confidential computing, where you can stick data in a black box, someone can send a model to it, get the same outcome, but they can't see the data till they becomes your customer. So I think that will be the next big thing in the next 2-3 years, as we hopefully become more successful over time and more data is sent out. This will become really necessary to prevent misuse.
See, one of the best innovations that I've seen that data has happened is the way financial inclusion has taken place in the world today. Reaching out to large masses in terms of lending is because of data. Unless and until you had data of that last level mile of people, you couldn't have enabled the financial inclusion lending process. So I feel that's one of the biggest innovations that has happened.
Risk management and alpha generation. I think given the way the financial systems run, the markets run, with this huge amount of data and the big ability to process, understand, store, and massage insights out of it, primarily risk management is changing and alpha gen is changing.
I think it's the lending domain where we predominantly are. What I see is that public sector is taking the innovations forward and coming up with pre-approved solutions for even the B2B space now. We have seen pre-approved personal loan products, being enrolled, but with the advent of cash flow based lending, which is being promoted, a lot of pre-approved offers for businesses who are existing customers to public sector banks. That has really led to a lot of penetration in terms of, getting customers onboarded in terms of a new credit layer.
Being the last, it's just time, but still I'll take a chance of the 30 seconds I have. Interestingly, currently I'm working as a data architect for one of the innovation hubs, part of the regulatory, which is doing the bridging the gap as to what was the policymakers' objective as to given the gender, what should be the policies and the benefits the gender should get in India per se. And it's easy said than done, where the private sector lending should reach a person of a household, certain capabilities or requirements. We're trying to bridge that back as to see what is the actual hotspots, what are the opportunities. We have now ended up collating close to about 36 data sources. First-hand data source from the banking financial sector is one part of it. Second part is the secondary data sources from RBI, from World Bank, from ADB, NSSO, Census. Just the plethora of data, by looking at it, the categorization of data at source and categorization of data where you want to compile it for understanding the benefits. It's a nightmare on the flip side, but it's a great opportunity to understand how data is available everywhere, how you can actually harness it back and bring it to the policymaker to say, hey, you are right here in this district for this lending product, but in that district, you are wrong. That's where we are.
So I think, the last question, everyone has summed up the discussion points of the panel. So I'm not going to sum it up for you. Thank you, everyone. And that's all from us.
Thank you so much. Absolute pleasure. And request the panelists in the session chair to please stay back with us right here. And also take this opportunity inviting our Chief Executive Officer from CAMSPay to please join me, Mr. Vasant Jaipal. Could we have Mr. Vasant to please join us as we take this opportunity to give a small gift from our end for your time, presence, and all the insights that were shared. And a big shout out to our gifting partner one more time. This is from Clinically. And everybody join hands for the panelists and for the session chair right here. We had Mr. Rishikesh Mehta, Shashank Sharma, Mr. Yuvraj Thakur, Mr. Giridhar Krishnamurthy, Jai Krishnan Rajagopalan, and Ms. Jaya Janardhanan, and of course the session chair, Dr. Vaibhav Joshi. And this one's a request for all the speakers and panelists. We request you to stay back right here with us in the hall. And the team will take you out for a quick video bite. But once again, thank you so much for all those insights and thought-provoking panel discussion. One more time. Come on, everybody. Put your hands together. All right, next up, we're going to have a very interesting fireside chat, probably the spotlight moment of the day. And before I call the two fantastic people who are going to be a part of this fireside chat, let's face it, it's a beautiful afternoon right now. And Dr. Anurag Batra sir started this morning with his welcome address, and he mentioned about how important sleep is. And we really need to embrace at least 7 or 8 hours of sleep. And I see quite a few of us practicing right here, right now. This later part of the evening or night. But just to get us up and awake, of course, it's a very insightful day. I have an interesting bit that's coming up on the screen right now. Usually I start because this is a way to set the context and to kickstart the day. But I'm going to do it right now as we segue into the fireside chat. Can we have my slide, please? Slide number 1. So I call this as look, don't overlook. And of course, we have some giveaways for this as well, and it keeps us up and awake. What we're going to do is we'll show you a slide right now. Console, can we have the slide, please? Very simple. You will see something. Pretty much we are all aware and we are used to addressing the elephant in the room, and that's what you're going to see. But there are a lot of things that's going to be embedded inside. All you have to do is find out how many can you see and make a note of it using the notepad that you have. And the one who gives me the maximum will get to walk away with a gift hamper right here, right now. So while the stage is being set for the fireside chat, Control, are we going to have it now? Yes, please. 5, 4, 3, 2, 1. Okay, -1, -2. If not, that's all right. Okay, thank you so much. Let's have the question side, please. Quick. So you have about 15 seconds. I'll try and move the chair so that you can see the entire picture. You have about 15 seconds. All you need to do is try to figure out how many can we get out of the picture that you see right here. 15 seconds, and after that, we go back to the question slide. The one with the maximum wins a gift. And of course, in a fun way, I will reveal your IQ level as well. It's a day. 10 seconds more. 9. You still have time. You still have time. 7, 6, 5, 4, 3, 2, 1. Go back to the previous slide. Backslide. Okay, how many do we have in the house? Somebody got 10, all right. You got 10, 11, someone got 11. More than that? Somebody got 20? We should have a chat. Okay, how many of you got 10? How many of you got 11? Anybody? So 11 is the highest. Anybody higher than that? No, no one's got 12? Superb. So let me reveal the actual answers. And also in a fun way, let me reveal the IQ level. There are actually 13 animals hidden into this. Animals or like insect and everything put together. We've got 13. Probably you would have missed out the snake in the tail or the turtle with the trunk. Which one did we miss? Which is the most popular one that you missed? Snake. All right. Can we go back to the previous slide, please? The question. So ladies and gentlemen, the reason why I do this is when we happen to see this particular picture right up in the front, just like how I said, like, you know, addressing the elephant in the room, there were probably about 3 or 4 animals we saw right away when this was put up. Yes or no? We could easily identify the elephant, the donkey, probably the dog and the cat. But when I told you, there's a lot more hidden in this, we saw deep inside, we were able to delve deeper and we came out with more. A date that is right here celebrating the Festival of Fintech is dedicated to such opportunity. When we look deep inside, there are a lot more opportunities that meets the eye. There's always more things that we can uncover. There's always more things that we can unveil together. And that's why we are right here at the 4th edition of Festival of Fintech. For that, put your hands together and let's celebrate this day to uncover all that hidden opportunities in the business world that we call it as there's always more money on the table. And let's get to unveil it together. And I promise you in a fun way, I'll reveal your IQ level. Let's have the answers quickly, please. How many of you got between 10 to 13? I'm sure most of us will raise their hands up. Excellent. Well done. Clap for yourself. Come on, clap, clap, clap if you got somewhere between 10, 13. But if you got somewhere between 7 and 9, very good. When I tried for the first time, I got 9. If you've got lesser than that, 5 to 6, still good. Just like how we used to get 35 average pass in school and college, and we're very happy. That one. But the problem is if you've got lesser than 5. Anybody got lesser than 5? I'm sure you will not raise your hands up, but it's all right. The problem is it's not that you're poor. It just means, yes, according to an analysis, you cannot get lesser than 5. If you do get it, that means we are distracted or we are elsewhere. Request all of you to please keep your mobiles aside or put it on ringer mode and not to have it on loud mode as we segue into the most amazing spotlight moment of the day right here at the 4th edition of Festival of Fintech, the Fireside Chat. Join me as it's my pleasure and privilege in inviting the gentlemen. We have Saurabh Bhattacharya, Additional Executive Director from Center for Smart Governance, Government of Karnataka right here, who's going to be in conversation with Dr. Anurag Batra on revolutionizing government, the role of fintechs in harnessing big data and frontier technologies. For the fireside chat that's about to begin, put your hands together. Let's welcome the 2 gentlemen right here on stage. Everybody. A little more louder. Come on, everybody. Round. A huge round of applause. Good afternoon, gentlemen. All yours.
Good afternoon. Thank you for adding that exercise. Clearly, I saw less than 5. And I think my IQ is okay, so it's about the phone. And my lack of sleep, possibly. And one tip, I give it to every anchor. How long have you known Mr. Bhattacharya? How long have you known Mr. Bhattacharya? So always call him Mr. Saurabh Bhattacharya. If you've known him for 25 years, then you can call him whatever you want. Okay? Small tip, but, you know, maybe I'm old, I talk like this. You know? But let me formally introduce Mr. Saurabh Bhattacharya. He's the Additional Executive Director at Center for Smart Governance, Government of Karnataka. He's based in Bangalore. He's currently, as I said, working in the government, but he's had previous roles in the private sector as PricewaterhouseCoopers India, Grant Thornton India, and PricewaterhouseCoopers. He holds an executive management degree in general management from the Indian Institute of Management, Bangalore. His skill sets include IT strategy, integration, requirement analysis, business process consulting, and many more. And really, he can add a lot to our topic of how, you know, fintech is revolutionizing governments and the role of fintech in harnessing big data and frontier technologies. So, Mr. Bhattacharya, thank you for making time.
Thank you.
You know, I have seen this, a lot of bright young professionals 15 years, 10 years, 20 years, are joining this movement of working with the government and building social impact, if I may say. And I see it, my friends who've been in the industry 25 years have been, some of them requested me, can I introduce them to these roles? How did the switch happen for a moment?
So I agree with you that there is always a pull towards doing something socially meaningful in your life. My case is slightly different that while I was in the corporate, I was dealing with government. My major clients were always with government and I used to work with government. So a lot of major projects which we see in, at least in Karnataka, I would be part of, I would have been part of it in some way or the other. So having worked and dealt with government somewhere, I thought that why not be part of government to see whether I can make a better impact than what I was trying to do. So that's a switch which I took, which maybe it's a pull sometimes people get in their career that they need to do something meaningful, something different than what they have been doing. That's it. The monotonity I wanted to break.
Thank you so much. I'm sure there's many more with the government bringing in professionals like you to be able to create the impact that private sector creates, and the government is a certain position with all the resources and all the command it has. I'm sure what you're seeing with DPI is just a start of the impact government can make. Now, let me come on to the topic, which is about what is the role of fintech in harnessing big data and leading technologies. Give us examples from Karnataka. How are fintech companies using big data to improve government services and the experiences of the citizen and improve the life of a citizen?
See, I'll break this answer into two parts. The first thing is what is happening in the ecosystems. If you today see the set of business correspondents which we have, which is trying to reach out to the unbanked sector, the micro insurance, micro credit organizations which are forming, these are nothing but social impact, which, or I would say social entrepreneurship, which is happening, which is impacting the ecosystem. And somewhere that is where a lot of harnessing of information, big data about public is happening. And I think that is the biggest impact I can say. But coming back to a more focused one is what I would say, what some examples I would like to draw from what, as an organization, Center for Smart Governance, the organization which I represent is doing. Now, if you see that we have almost around 5 lakh employees in government today, 5+ lakhs, and then there are pensioners and there are other people. So if you can say that the biggest employer in Karnataka today or anywhere in this country would be government, and subsequently we'll have other agencies. Now, there is a lot of benefits which government gives to them, like insurance, they give to them. They give them some medical coverages. Now, these are certain things which till date, before we came into being and we got formed, was actually managed in a very manual manner. For example, in Karnataka, we have a body called Karnataka Government Insurance Department. In short form, we call it as KGID. Now, this body is like an LIC for the government, which is meant to provide insurance cover only to the people, the employees of the government. But how do you provide that? What is the support you provide for claim management? How fast, how better it is? And you will be surprised to know that till 2022 or 2021, maybe 2021, the entire claim management to insurance issuance, everything was paper-based. So if you join government, if you are eligible for insurance, it will take months together to get an insurance. And if you submit your claim, it will take months together to get your claim processed. What we did is that as an organization, we built systems today because of which this insurance is issued to you the day you join, and the claims are settled within 3 to 4 days because everything is now happening electronically. So that is something which we would say that how we have harnessed that, the power of government and information with government to provide a solution to them. Second use case which I would pick up is funds, benefit funds. There is a concept of teachers benefit fund. Now, what happens is that every time you join government as a teacher, you have to put some money in your corpus. And then whenever a new student joins, the corpus is added, beefed up with some more funds which is added. Now, this corpus is used to help any teacher in case of any exigency, medical exigency, in loan for advances for your kids' studies, marriage, or whatever. Now, these all things used to happen, everything manually. Now, we have developed digital cards. These digital cards would help them to not only get a detail of what loans they can avail, but instantly avail that loan or advances, whatever is applicable to them, and enjoy the benefits of it for their future. So that is something is what has happened in government. These are two use cases which we have worked on. And obviously, there are so many use cases like the set of banking correspondence, which I'm talking of for micro insurance, microcredit, which is impacting government and social sector, which is again something which you're doing for the government. So I would say these are the cases which I've.
Fantastic example. Of course, when it comes to healthcare and insurance, the three words are personalized, predictive, and preventive. You know, the healthcare, if you can, and that applies to services also, applies to fintech. Now, fraud are happening in the financial services domain. People are giving away their data. I talked about a mentee's mother who lost 38 lakhs because she got a certain call and she ended up sharing a password, bank details. What are you doing to be able to bring down frauds? What are you doing to do fraud detection early, or to educate the fintech users on the do's and don'ts to be able to prevent fraud? Give us examples.
That's a very interesting question, and it touches us a little personally also because recently when we went through such scam, what happened is that the information which we had published in the public space was skimmed by fraudsters. They used that information, specifically Aadhaar type of information, which was in a naive manner got published in the public space, and they used that data belonging to people from Bangalore or the places in Karnataka was used fraudulently in places in near Nepal border, Gorakhpur and all those places, to actually use the Aadhaar-enabled payment services to fraudulently withdraw money from accounts of innocent individuals. So that is the type of scams which happens regularly. There are cases which we have to fight every day, these type of instances. And every step we take, we find that the fraudster also is able to anticipate and create a new step.
Yeah, they are a little one step ahead.
Ahead of
They're
that.
very innovative.
Very innovative. Means that actually got published in a lot of media spaces also. And if you see the type of technology they used to actually create a imprint of your thumb impression was amazing. And that was happening in somewhere in Kalimpong and all those places, Gorakhpur, and the data belonged to people from Karnataka. So that type of fraud is which we have to deal, or the attempts of fraud is what we have to deal with on a day-to-day manner. So what we have, and that also, creates, we are all part of the same ecosystem where we are also facing a lot of regulatory constraints. So now what we have been doing is that we have been creating our own infrastructure Like, for example, we have our own vault, a data vault where we store all the critical information in an encrypted manner, so that at any point of time, that information cannot get compromised. One of the biggest challenge for us is that any information which we maintain, at certain point, we have to also give it out to the public, because we are governed by RTIs, the Transparency Acts, where information has to be provided. Now, how do you bridge that gap? How do you walk that thin balance is a big challenge, where we have to give information to the public. And also what we have to do is that we have to also ensure that the information is kept so secured that it is not misused, like the incidents I was talking of. Now, we have used technologies like AI. We are using artificial intelligence. We are using predictive analysis to ensure that any information which can lead to any type of attack on the system or manipulation or fraud, we put it into a secured process. In a secured manner, we retain it with us. And we only give out that much information which at any point of time will not compromise neither your personal data, nor it will compromise your financial information or financial accounts. So that type of systems we are building in or we maintain to handle such type of frauds.
Brilliant. Now you talked about your first example of how you automated or made it paperless. What has been the cost reduction and the efficiency you brought in the government processes, and have the cost of transactions for the government, has it led to a reduction in the number of people who are in administering these things pre the fintech implementation?
The reduction in number of people is a very wrong word to use in government, because in a sense, we are not supposed to remove people. We are supposed to give more employment. And that is the way, if you see the current political...
redeployment.
Redeployment is a rather better word. There's no hard and fast number to say that, yes, we would have brought in some sort of an efficiency. There's no such parameter. But what I can say is that when it comes to ease of residency, there's a couple of parameters like ease of doing business or ease of residency or citizenship. You can say that there has been a lot of ease which has happened now. For example, recently, when it comes to registration of property, we went live with a system which is a little akin with what you will see when it comes to getting a passport. Before you went for, when you had to register your property in the state of Karnataka, you had to be physically present, spend your full day there, stand there and do the transaction with them, with the government. Now, there was an opportunity cost. There was so much of cost which was involved from both the sides. Now, what we have been able to do is that we have translated that into a more of a self-mode process, where sitting at home, you can apply for your registration, you can make your payment using a payment gateway which is exclusively created for the government, and then transact with the government. Now, that obviously has led to a lot of reduction in the type of time which it takes for one person to do transaction. Our estimate is that from the public point of view, a person who used to spend at least 2 to 3 days to get his property registered in Karnataka today would be spending half an hour or 1 hour at least at the max to get his property registered. That is the type of efficiency is what we have been able to bring it at certain levels. Now, if you look at financial systems, now this happened some time back around 2018, 2019, we automated our government finances also. What used to happen prior to that is that every transaction which we would do would require you to travel all the way to one particular spot and make payment to government. Means there are 2 types of payment with government. Either you pay to the government or you get, if you're a contractor or employee, get money from the government. Now you had to travel to pay taxes, to pay anything. You had to travel all the way to one specific point, which would be around 30 to 40 kilometers. And the type of reconciliation which was involved was humongous. You won't believe that there were government accounts were not getting reconciled for 6 to 7 months. There was no reconciliation which was happening. You were not aware whether the account can be settled. Now, the automation which we have brought in has reduced from 6-7 days to 3 to 4 days. 6-7 months to 3 to 4 days. Now we are settling funds in 3 to 4 days. So that type of reforms and efficiency which we have brought Probably it's difficult to quantify in absolute terms, but in terms of opportunity, in terms of the days, you can easily see the efficiency which is brought in.
Now, the beauty about data is that you can do predictive analysis. While you're addressing one issue, you may see there are other problems to be solved, or there is a more innovative way of doing something. So while looking at data, what are the new ideas you've got? Give us an example. What should we expect in the future?
Yeah, I think that's a very interesting, and that's, I think, was maybe I thought is something which I can share with the public here also. There are 2-3 things which we have to see now. And I will take 2 specific examples. One which will be very specific to Center for Smart Governance, the body, and the government of Karnataka. But before that, I'll talk of a little more generic eco-space. Now we see there is an era which is coming where we see there's a lot of competitive populist policies which are coming up from political parties, which includes cash transfers. Now, whether we agree or disagree with whatever the economic impact, but this is here to stay. And every political spectrum of any shades would certainly in some form or the other will be following that. Now, it also means a huge amount of opportunity for fintech sector. If a cash is coming to my pocket, I have 2 ways of utilizing it. Either I use it for expending for my needs.
Or put it in a bank.
Put into my bank for my providence. Now, how do you help the unbanked sector or the sector which is now banked, but doesn't have that fintech literacy or financial literacy to actually use that money in a more productive manner, probably for their providence, for their future, for their investments? I can see a lot of, in fact, thanks to the fact that I was part of your jury, I could see so many startups in insurance, credit, and lending space. But what I see today is missing is pension space, the public pension. How do we create a micro pension sort of a scheme which can help bring in the rickshawalas, the laborers, the blue collar workers into the ambit of the safety net, the financial safety net, so that when they retire or when they age, they have sufficient financial backing to take care of their old ages. Now, coming back to a specific case. Now, in Karnataka, partly because of Center for Smart Governance and partly because of the other ecosystem players, we have actually digitized the entire data of students starting from class 1 to the doctorate. Not at any point of time, you will be able to know what will be the yield of a particular skill sets coming at this point of time in the year, in the future. Maybe 2026, this will be the number of doctorates of philosophies we will be having in certain subjects, or this type of engineering graduates we will have, these number of science graduates you will have. Now, how that information can be used to create a system like Naukri.com or 2.2 or something like the next generation of such systems, which does not source information from experienced individuals, but they utilize this information to identify the skill requirements and skill sourcing and help organizations direct their requirements to those areas. I think that is the second most important use case I would like to speak about, specific to Karnataka.
Cool. In fact, I'm in Lucknow tomorrow morning talking about the skills needed, especially from a social impact. These are 1,000 girls from a not necessarily the upper strata, but it's a mix, and mostly from a strata that needs more help, so to say. Now, my last question. You have set very high expectations. When I say you, the government of India, the government of Karnataka, what's happening with UPI, what's happening with ONDC, what's happening with Ayushman Bharat or the Ayushman Bharat cards, the healthcare insurance. What should we expect from you in the future? What should we be looking at coming from either your center or the government of Karnataka or the government of India? Where are we headed?
I think this is a very difficult question to answer because every government has its own policies and own vision, and the vision also keeps on changing. But one thing which you will see, which will happen for sure across every state, every government, is more practical adoption of new technologies. Government is slow government doesn't adopt anything immediately. It obviously, unlike the corporate or the private sector, which has financial well-being as one of its key impetus around which it starts investing on certain new things, innovating. Government's role is to play cautious because dealing with public money and public welfare. But yes, governments will adopt. And some of the things which I today see happening is on data analytics. Government is aggressively adopting and analyzing its data. There's a huge amount of data which we create. UPI has thrown out so many number of almost around 8,000 of 9,000 crore transactions happens every year now on UPI. That itself is giving you so much of insights about what is the spending patterns, how people are spending, what is their daily needs, what is their financial needs, how they are handling that thing. That is itself is throwing up so much of information. On the same lines now, EdTech is coming up, the educational technology sector, which is also coming up, which is also creating so much of information about what is happening, how the skills are getting generated, how the next layer of talents are coming up. So everything is coming up now. Now, analyzing that data and creating right policies is, I think, going to be the most important area where government is going to invest. So analytics is going to be the most important thing. And when you talk about analytics, another aspect which comes is artificial intelligence and machine learning. Now, that is going to have a lot of impact. The reason why I would say that, unlike the corporate sector, which primarily deals with well-educated, well-literate individuals who understand the system, who understands how to operate a system, and they can be very suave in their interactions. When government interacts, it interacts with everyone. You may have digitally illiterate, you may have financially illiterate, and somebody may be really illiterate in every form. So now you have to interact with them. Now, what we see is that AI has the potential to bridge that gap. Now, it's actually replacing that human interaction where you required a human being to come up and assist you in understanding how I should avail a government program or how I should take a benefit from the government. Now, that is getting transformed. People to government interactions are more and more will be getting managed using AI. That will be a big change which you will be seeing in due course. And
you'll be able to blame everything on AI.
At least I can tell you
my WhatsApp was blocked for no, and because of what I do, I know the bosses. They tell me it's AI. So anything you can blame it on AI. So not natural stupidity on artificial intelligence.
Other way of looking at it is that if you end up paying bribe, then you can also blame it on AI. So that is.
I hope you're not talking about me.
Not about you, but about the ecosystem telling me that. So in a serious note, that AI, whenever there's a human interaction, there are human emotions involved. And then when human emotions are involved, there's always a chance of bribery, corruption, everything is going to happen there. When you replace it with an unemotional systems like AI, you are actually able to cut out that middleman layer, which will simplify your interaction.
Like you gave the example of property paper registration. Correct. In Delhi, I can tell you there are middlemen who procure the stamp paper early or to pay them. Yes. They will get. So, clearly. Absolutely. It democratizes it for everyone. Absolutely. Gives everyone a fair chance, saves the time rather than the whole day. So there are advantages. Correct. There are less disadvantages and more advantages.
So information gap is what people leverage. Middleman leverages that information gap, which you don't have, that person has. And he leverages it for his financial benefit. That is where AI will help you to bridge that gap.
Brilliant. We have Mr. Bhattacharya with us. We can get one or two questions. Any questions for Mr. Bhattacharya? Anybody has a question? The gentleman here, can we get him a mic? Tell us your name, ask a short question, share your Swiss bank account number with us, privately with me.
Hello, sir. This is Akshat Logar. I work for VFin. One of the very important initiatives that you touched upon was the prediction of how many students or what is the skill set that you are going to get on a futurely basis. So is this feedback from initiatives of this sort going to the industry also? Let's say we hear India is taking huge strides in terms of investment into semiconductor industry, and we see it on a daily basis that there is a skill shortage from the corresponding skill set required for us to grow. So is that feedback loop going back into industry and then maybe getting on right initiatives to actually encourage people to take up such pieces where we would require the skill set in future?
By the way, he said, because there is such information available, we are creating a bridge or intend to create a bridge. That's what he said.
Yeah, that is also one part. But yes, we have an open data policy now. Like when we learned from the players in the system, we realized that creating data and providing it free of cost to public can actually help in innovation. So we have an open data policy in Karnataka, and other states and the national government anyway has it. State of Karnataka has it. We have a portal called Mahiti Khanaja, where what we are trying to do is that we are allowing people to come and use such information. Not every information, because some of the information is still sensitive. And it also depends upon how we decide to reveal that information through open portals. But there is a mechanism through which you can access the information and utilize it for developing your solutions around it. But yes, if you say that whether government has played a proactive role, no, I would say we haven't. We have to take those steps. That's a very positive, that's a good point which is coming out of this discussion, and thanks to your suggestion. That yes, we have to take that step. We have to go forward and invite industry and the players and the startups to come and start utilizing this data to create newer services.
Thank you so much. We're out of time. We'd like to keep it to time. So please give Mr. Saurabh Bhattacharya a big round of applause and for being specific and giving us used cases for whatever he's doing and for being candid about what happens in real life. And I must say you're a very good anchor. Except I can say that because I do go to 20, 30 events in a month. So please give our anchor a big round of applause. He's overall very good. And it was a small point I made, like PR people call me, some very young, the youngest was 19 years old, called me one day and said, Anurag, will you come for the press conference? So when I was younger, I used to get very upset, right? I'm still very young. So I told him, I will. If you pay me $5 million, I'll show up, right? And then I sent him a long test. I asked him how much his age was. He said 19, going on 20. So I said, if you don't know people and they're older, please seek. So, it's a small advice. And can I tell you, people who talk to me like, they don't know me and they call me Anurag, I either don't respond or it's a very cold response. So how you address someone, whatever energy you send. If you know me well, you can call me anything, right?
Absolutely, sir.
You call me Hal also, but Mr. Bhattacharya, okay? Please give Mr. Bhattacharya a big round of applause. And our anchor is overall doing. And yesterday, the anchor at we had a facility management. She was calling people by first name, very senior people, and I had to request her to call them formally. Yeah?
No, sir, I actually did this on purpose. I was just checking if you're concentrating and if you can give me some.
Thank you. I am. Now, I eat almonds in the morning and even on the Indigo flight. Thank you.
Absolutely. Could we have a huge round of applause for the both gentlemen right here? Come on, everybody. For Mr. Saurabh Bhattacharya and Dr. Anurag Batra. And sir, we request you to stay back as we have a small gratification. Again, our gifting partner clinically has a gift hamper, and we request Dr. Anurag Batra to please do the honors. Come on, we can put our hands together. And now, ladies and gentlemen, I take this opportunity to introduce the second panel discussion that we have right here. It's about credit evolution, leveraging big data for smarter lending decisions. And this is going to be moderated by Dr. Jasmine Gupta, Chief Digital Officer, Pehal Finance, and founder, Me It Money. Could we have a round of applause? Let's welcome Dr. Jasmine Gupta, Chief Digital Officer, once again, the session chair and moderator. And the panelists, first up, Mr. Prithvish Ray, Chief Business Officer, Hyperface. Mr. Arindam Das Gupta, Interim Chief Program Officer and Director, Innovation and Digital Finance, Grameen Foundation for Social Impact. This is where we put our hands together. Come on, everybody, let's welcome our panelists. This one is the second bit. And also joining, Mr. Nitin Sharma, Chief Operating Officer from PayMe, who could not make it on time right here. And also moving forward, we have Ms. Kalpana Ajayan, Regional Head, South Asia Women's World Banking, and Mr. Gaurav Goel, National Head, Startup Fintech and New Economy Business, Yes Bank. And also we have with us Mr. Suhail Khan, Senior Director of Business from Bharat Pay. Come on, everybody, put your hands together for the panelists right here. This is panel discussion number 2. And over to the session chair.
Hi, very good afternoon to all of you. I'm sure we had some fantastic sessions since morning. And again, this session is a deep dive session wherein we've been talking about data since morning, leveraging data for financial innovation. We've been talking about data for governance. And now we are going deeper into a discussion where we will be talking about leveraging data specifically for lending solutions. Yeah. So to set the context, while the global fintech industry is 155 billion crores dollars and growing, while the Indian fintech industry, we see that it has the highest level of adoption at 87%. When it comes to data, I think a lot of organizations, when we talk of the entire ecosystem, 80% of the data is unstructured data. 12% of the data is what is analyzed and used. So which means 88% of the data is wasted. Now, while this is a scenario for traditional organizations, banks and NBFCs, we have fintechs on the other side, which tell us a story which is completely the opposite of it. And when we want to bring the entire ecosystem and we want to talk about the entire financial ecosystem, I think it's very important for us to understand how all the players can leverage data for the best of the industry. So while we will discuss a lot in detail, I think we will start with a short introduction from all our esteemed panelists who come with a variety of backgrounds. We have a banker, we have from credit cards, we have people representing MSME, we have women World Banking representing women, and also from Grameen Foundation representing the rural segment. So I think it's a great panel, and we'll start with some short introductions. So we start with you, Arindam.
Hi, a very good afternoon to all of you. This is Arindam Dasgupta. I'm the Interim Chief Program Officer for Grameen Foundation. As we all know, Grameen Dr. Mohammad Yunus started this movement of microfinance, microcredit, and which has become a revolution and spread across the globe. We represent the India chapter of it. Specifically focusing on digital financial inclusion and creating data trail for credit evaluation.
Yeah, hi, this is Gaurav Goel. I lead the coverage for startup, fintech, and all the technology business for Yes Bank. So what bankers do with startups, we provide the technology solutions to them, all the technology rails. We do lending to the startups. And yes, we provide the normal banking solutions also as well. Blessed to work with working in this ecosystem from last 9-10 years, seen this growth journey, and part of this growth journey of around 1,000 startups as of now is a part of our portfolio in Yes Bank.
Hi, good afternoon. My name is Prithvi Shray. I'm the Chief Business Officer at Hyperface. Hyperface is, we are like a credit cards innovation platform. We work with banks, consumer finance, NBFCs, and brands. So Yes Bank, for example, is one of our esteemed clients. In short, cards and other payment form factors, how you can make it simpler, faster, and better by leveraging technology and APIs is what we do. Thanks.
Hi, good afternoon, everyone. My name is Kalpana Ajayan. I head South Asia for this organization called Women's World Banking. We are a New York-based organization which is focused on women and financial inclusion. We predominantly work with large and small financial service providers. It could be a public sector bank, it could be a fintech company, it could be an insurance company. We are completely product agnostic, but what we do is to work with them to develop products, process, capacity building inputs. And we also have a small investment asset management company which invests in women-led and women-focused institutions around the world. In the fintech space, we've been doing a lot of work, especially on the algorithmic bias, and I'm going to be touching that later on when we have the conversation. But it's an exciting space for us, and we've been working with many fintechs in this country and around the world to just kind of bring in the gender focus, to the business, because we understand that it makes actually business sense to invest in women, but how to actually go about doing it, something that we work with our various partners. And it's good to be here. Thank you.
Good afternoon, everyone. My name is Sohail Khan. I lead partnerships at BharatPay. BharatPay is one of the leading digital payments and lending service providers, one of the leading fintechs in the country.
Thank you. Thank you so much. So I remember when I launched NeoX, which is the fastest growing neobank in the country. The first issue that we wanted to resolve was how to get the right customer in. And I think that's the problem that we all want to solve for. We want to know who is the right customer. We want to get the right, no, that's okay. We want to get the right borrower in. And unlocking the right borrower is something that we want to discuss the first part of our session today. So we've talked about data. There's so much of unstructured data lying within the organizations. There's so much of data in the market related to geographies, related to demographics. There is so much of individual level data. For example, every individual that we talk of has a digital footprint. So how do we come out? So coming back to the NeoX story, how do we come out with alternate credit evaluation model, which takes into consideration all the aspects of whether a customer is using Skype or Instagram or Facebook, what is he doing, what are his activities, how old is his email ID with which he's trying to log in? Is it a 10-year-old email ID or is it an email ID which has been opened just 2 days back? Is it an email ID which says jasminebgupta@gmail.com, or maybe is it an email ID which says abcd@1234.com? So these are the checks and controls which can tell us the scores based on which can tell us whether we really want that customer in or not. And I'm sure there are other many such credit scoring models that many players in the industry have come out with. So starting the story with those models, Arindam, would you like to share some of the credit scoring models that you've been using, especially on the financial inclusion front, where we don't have digital data in a digital form necessarily in the rural or the last segment of the pyramid? So how do you use data for credit decisioning and loan evaluation? And how do you ensure that the right customers coming for yourself, for your company, and for your partner companies as well?
So first, to start off with, Grameen in India is not directly doing lending. So in Grameen, what we work at, or how we work at, is we put in a framework. We call it a DEEP framework, DEEP, which means digitization, enablement, focus on ecosystem building, and designing new products which suits this segment of customer, because the traditional way of credit appraisal, getting their KYC and getting sometimes even KIC is not possible. So before doing that, when we used to go in a traditional model, the JLG played a very important role for us. The joint liability group and the peer pressure, and everybody is individually and jointly liable. In absence of that data and all, we used to have this JLG model. But as we see more and more evolution in this space with transaction taking a digital route, and also post-COVID, there has been a phenomena where even people are not very keen to form a JLG. Right? It's more of an individual approach. Maybe the lockdown has taken a longer effect. We have learned to live as an individual instead of a group model. So there we are using, or we are proposing to use to our partners various alternative data sources. So first of all, when we say of deep, we started off with a couple of private sector banks and convinced them to do QR-based merchant acquiring in the rural market. Everybody is fighting for the top layer. Today you see this fruit seller accepting GPay. Tomorrow it will be Amazon Pay stuck on that GPay sticker, or maybe Paytm. Nobody is going to the bottom of the pyramid. And we could manage to convince a couple of financial institutions, couple of private sector banks to get into the rural market through the BC channel and do a merchant acquiring transaction, QR-based merchant acquiring. And to our surprise, it took off. Initially, they were also skeptic that people would not be interested. There is no penetration of smartphone, but no, there is a penetration of smartphone. Every family at least have one smartphone. So when we do a digitization of the process, of the business process, we have a transaction trail of the merchant, and also the customer that is transacting, for them also there is a transaction trail created. So we can do a business loan, we can do an individual loan as well, because we are getting that data from that network, or rather the partner is getting the data and do a credit decisioning on it. Basically, in many cases, if I tell you the real experience that we have faced in the rural market, the average interest paid by these street vendors and fruit sellers and all is 10% per day. And it's per day. It's crazy. Why? Because they are not tapped by the traditional market. And why they are not tapped? Because they do not have the data to, they do not have the documents. But now documents can be replaced with the data, right? Another thing is that traditionally we work on EMI models, or the NBFCs, the microfinance specifically brought it down to 14 days model. What if we go to daily model, EDI? That is also something that we are working with one of the partners. We are discussing with one of the partners. You see, every day this person is selling goods worth 1,500. You give him loan for 1,000 rupees, you take back 1,010 rupees. It has got a cost attached to it, of course. But that way we are trying to use these kind of mechanisms to replace the lack of documents with data and alternative data. Like if I get the location of this person, I see that every day, 10 to 5, this person is putting up his cart in this particular area. I have a traceability. Why do I need a KYC for? For that matter, my Aadhaar has the address of my native place and nobody stays there. But you are satisfied, I have my Aadhaar, I have my PAN. But we have a different way of looking at the data that we are having, not only the financial data, the alternative data source. And that's what we are trying to build in with our partners to do a credit evaluation and bring down the cost of interest and for the bottom of the pyramid people, because our objective is to have a less cost credit for the bottom of the pyramid so that they grow, and as they grow, entire economy thrives. That's it.
Thank you, Arindam. And I think for the some of the audience who may not know, the GLG model is a very successful model running in India. It's a joint liability group, and predominantly the customers are women. 90 to 95% of the joint lending model customers are women, and it is built on a social collateral, which I think now needs to move on to an information and a digital collateral.
Exactly, bang on, Jasmine. And actually, yeah, this joint liability model initially started by Dr. Mohammad Yunus was 100% women. In India, we have not achieved that yet. In Bangladesh, he started with 100% women. Grameen Bank was entirely for women bank. And I mean, he got the Nobel Prize for inventing this model altogether. And now I think we can take one step forward, like social collateral can be from the group, can be from the social media association as well.
Thank you. And now when we are on the topic of women, now we come to you to understand your perspectives on, what is the work that you do for women. And when it comes to lending to women, I'm sure you are also connected with a lot of organizations who are lending to women. While MFI is one segment, I'm sure there are other fintechs, MFIs, and even NBFCs who are lending to women. So want to know your perspective on what are the new age technologies that you are partnering and using along with these companies.
No, thanks. The fact remains that, I'm just going to focus on just credit as a product and women, nano, micro entrepreneurs as a segment. Globally, if you were to look at it, there was a study done by IFC, which showed actually that financial institutions were missing a $1.7 trillion opportunity by not looking at women. If you were to look at actually the percentage of women entrepreneurs globally, it's actually 1/3. So it's not a number to be sneezed at. So we do have a lot of women entrepreneurs. However, where is the problem? The opportunity size is 1.7 trillion. That's established as well. But clearly at the ground level, when it actually comes to lending, just building off of what Arindam was saying, it's a thin file customer. She doesn't have the financial footprint. So on what basis do I lend, etc. So the work that we actually do is, you'd be very surprised. A lot of the fintechs that we work with actually don't actually look at the gender as an element when it comes to decisioning. Is it a good thing? It actually is a good thing because you're not making a decision based on whether she's a woman or whether the borrower is a woman or a man. This is the work that we've done with multiple geographies. We've done this in Mexico. We did it in Colombia. We did it in India as well. It was a data.org project, which was based on actually algorithmic bias. If 92% of your portfolio consists of men borrowers, then you'd argue that the AI and ML would just build off of it. Therefore, is there an automatic bias against women simply because you don't have enough women data? So we started actually working with several organizations, and we came to the conclusion actually that they may not actually be a bias when it comes to algorithmic bias, but however, there is a bias in every stage of lending. Starting from the application, where do you go? What is the language do you use? Whom are you targeting? To, the process where, it's intimidating for the woman because it's entirely digital. Though in India, you are seeing phygital models, but she's anxious. She doesn't want to engage, and so it's not designed really for women to take on. To the disbursal process, to the collection, at every stage, there are biases. Which is why there are very few women actually accessing credit in this country through formal financial means, through formal financial institutions. So how do we actually bring in this gender sensitization to the fintechs? Because it's a phenomenal opportunity. The other way to argue also is that there are fabulous business risk, right? We know women have much lower, as women as a portfolio, much lower NPA compared to men. This is proven again and again and again. But despite that, the common answer is that she doesn't have a file. How do I go about it? So we work with large institutions. We work with small institutions. We are currently doing a project, a very exciting project with SIDBI, for the Prayas program, which is entirely meant for women borrowers. And the whole premise there is that, contrary to what Arindam is saying, we actually believe that there aren't enough individual entrepreneurs coming off of the JLGs. They're more comfortable just being in the JLG, but there is a huge opportunity for individual entrepreneurs to emerge from there, but there aren't because of various reasons. Access to affordable credit being one of them, but equally the digital financial capability, because all of it is happening through. So our work with SIDBI and its partners has been in terms of enabling the digital financial capability, but at the same time designing products that are relevant for women. So this is one of the ways in which we actually ensure that affordable capital reaches women and more importantly, in her context, understanding her context and providing it where she wants it, because she's completely time starved as well. So how do we ensure that we reach it to her where she wants it, how she wants it? And that could be product, that could be process, that could be a whole lot of innovations happening. But that's the kind of work that we try to do.
No, that's fantastic. In fact, to add to that, we've also come out with our own version of women-specific only lending app, which is called Pearl Sangini, where the data that sits of 500,000 women customers is 95% women specific. And so the algorithms throw out data, which is also very, very women specific. So the pre-approved offers or the top-up loan offers or the consumer durable loan offers that we make to the women are very, very specific. And I think, as he also mentioned, that every household in India now has a smartphone, and that gives us a lot of opportunity. While women are the last customers, even in the house itself, to get access to that smartphone, I think things are changing. So great initiatives, and happy to know your views. Moving on to Suhail. Suhail, since you head partnerships business, and specifically on the MSME side, can you share your perspectives on lending, MSME lending, and the use of artificial intelligence and machine learning in the MSME lending space going forward?
Yeah, sure. So there are about 63 million MSMEs in India. About less than 20% of them have access to formal credit. And this is one of the key drivers of growth for the country and the GDP as well. I think what we've done, as part of Bharat Pay is first, they getting access to digital payments, right? And as Arindam also touched upon, right, the QR enablement, even at tier 2, tier 3, tier 4 towns, right, is something which actually give them access to accept payments digitally. Second is, as majority of them have not been in the formal credit sector, so far. And this is something which has been changing right now, right? So, recently there was also a report said that there is almost a $600 billion credit gap for MSMEs, right? And about 20% of that is also towards relatively lower ticket sizes, which is less than 10 lakhs, right? So this is something which we realized as an opportunity quite a while back. So first is having access to digital payments to these MSMEs through the wide distribution, through QR deployment, through swipe machines, etc. that we did. And then of course partnered with NBFCs to give credit to these MSMEs, and that's where a lot of information and data also helped underwrite these people. So one is the transaction pattern, transaction data that they have using the QR, and also the ease through which they can do the repayment. Right? One of the things that we have seen over a period of time is that the understanding of the how credit works, what, for example, their bureau scores, have an implications, something that was missing, quite a while back, but that has changed drastically, and that has, worked well. Second is, how do we also help them understand, how make them, take the credit easily and the repayment part. And another point which, Arindam mentioned, that in fact, we were the ones who pioneered the whole EDI model, right? So we do lending to these small merchants on a daily installment, right? And that is something that has been a game changer because it is very convenient for them. They are able to, through their cash flows, through the money that they collect on the QR, they're able to do it on a daily basis rather than wait for that amount to get accumulated over a month, right? So that is something which works. And with this information, access to data, etc., also helped us create the underwriting, models using machine learning, all the elements of data points that we collect to improve these whole processes, because that is something which becomes critical, right? It's not about that you just, give them loans. It's about how do you underwrite them, much better, assess the credit profile, in a deeper manner. And the beauty of this whole ML thing is that the more data that we collect, the model trains itself, right? And that's where it's able to, improve over a period of time. So I think this is something which has worked, and this is something which is gonna be the future as well, because as again I mentioned, the credit gap is still huge. There is a lot of requirement, and there is a lot of now information availability which is there with these small medium merchants as well, right? So This is what we are focusing on. And I think this is something which has really worked for us.
Fantastic. And I think while we heard your views on the MSME sector, I think the most important thing when it comes to lending, whether it is consumers or rural or women or MSMEs, is collections. And of course, fraud management, right? So Prithvish, want to know your views on what technologies are being used in the industry, specifically for underwriting, fraud management, and even for collections. And specifically from you, want to know your perspectives also, how it is being handled from a credit card perspective as well.
No, sure, thanks. I just touch upon 2 points, and almost all of us, I guess, in this room are owners of data, and to what extent I'm okay with the data being used. But just think about it, who you're carding or who you're offering credit to and how, right? If you just think about the stats, and credit card is just a form factor, but if you just think about the stats, India's broadly had around 103 million credit cards, but around 40, 45, 48 million customers. So there's a huge concentration, 2 to 3 cards, perhaps people sitting here, but it's the tier 2, tier 3, which actually needs that access to credit. And cards is just a form factor. Pravina today morning was mentioning the credit line on UPI being a market-making moment, right? Because how you want to give access to. Now here, obviously, formal established data points like bureau data, like income estimation is not going to be that easily available. But the sheer availability of alternate data, big data, the choice of word is yours, is there. And I'm not going to get into, I've run credit risk portfolios across a couple of markets, but just to let you know what we do, for example, is you don't need to necessarily know my income. If you know that I'm purchasing a particular kind of apparel thrice a year, and that's a surrogate. And to your point again on collections, lending is easy, collections is tougher, right? So if you know I'm staying at a particular residence because I've ordered products from that residence for the last 2 years, you don't need to go and send someone to do what we call, in the erstwhile days, resi verification. So these are the things that are now enabling, because if you think about the client continuum, there is at one end of the spectrum, people who have all kinds of data, you don't need anything more. They are in tier 1 metros. And the other end of the spectrum, there are people who need the credit. I think point made by most of the esteemed panel members. How do you actually enable that? The second part is, what is ethical? How are you ensuring that I know my data is being used? And the third is on the experience part. Now, that's where I think technology plays a huge role. Because if you're able to get real-time access, so if it's just again, keeping names aside, if it's a co-brand credit card, for example, with a large retailer, and I apply and I stay in tier 3, you don't necessarily need to hold back the application. You just need to ping through an API and find out if I am at that residence for the last 1 year. And there you tick the resistability. You just need to find out if my purchase value, is X or is it X minus alpha, and you get an estimation of my affluence or my ability to pay. So those are the ways in which through, credit access, and now of course with line on UPI, it just opens up the whole spectrum, because we all know the stats. And again, it's going to actually enable more credit, perhaps where it needs to go and is much desired. That's the way I look at it.
Fantastic. And to add to that, I think, Gaurav, you can add to what Prithvish just mentioned. As a banker, you've been dealing with most of the fintechs and startups. So what are the innovations that you see around? What do you think is the future of credit on UPI, and your perspectives on financial inclusion?
Thanks, Jasmine. Thank you. And very interesting what Sohail and our other panelists have shared. So I'll say that is basically transforming the banks. Actually, banks are the biggest generator of data. Every second, huge amount of data is getting generated with the banks. So it is completely transforming banks from, simple brick and mortar institutions to a data-driven financial institutions. And again, this data is expanding the scope of banking. Banks were not able to reach to various segments like a gig economy worker, or say the micro credit requirements of bottom of the pyramid, or maybe the MSMEs. Say when we par Bharat Pay, the daily EMI, so that's banks never thought about it. Or maybe when we work with Hyperphase and see how credit collection data is generated by them. So this is how it is data is expanding the scope of banking. Now, earlier there was a very templated solutions we had, but now it's a very, hyper customized solutions we give to maybe a teenager. There's a specific solution provided by the banks or the financial institutions or a gig economy worker. They were never part of the credit scoring earlier, but now with the various data points through the alternate scoring mechanisms, we can provide credit to those segments. Even teenagers we can do, even housewives like Kalpana is sharing, because data is gender agnostic. It's all about the information and then the credit scoring. So it has tremendously enhanced the scope of banking and then the credit, which banks were not able to deliver to the lower segments of the pyramid. But now with the getting that data, you can understand the needs of those segments. Then you tailor the products according to their requirement. You can deliver in a very, very cost-effective manner. Otherwise, the delivery was very costly earlier. And the last part of it, the customer service after the delivery of the product, because of data and the technology, it has become cost-effective and can be delivered in a commercially viable manner. So that's how I would say it has completely transforming the banking and making us deliver our objective of reaching to the masses in a more efficient way. I'll pause.
Yeah, of course. And I think data and the new technology that we see is not just, has impacted all the aspects of the lending function, starting from onboarding to underwriting to fraud management to collections, disbursements. I think everything, a lot of players have played a part of course, the digital public infrastructure, which got us the JAM network, which has, of course, played an important role and supported the digital KYC and the digital disbursements. I think this is one time after COVID where we see 100% digital disbursements. So I think the entire journey, the entire lending journey has gone digitalized. And I think, of course, there are more newer innovations that we expect as we move forward. I'm sure any one of you would want to share any closing lines. Otherwise, we would open the room for questions.
I just
by
have
the
one point to
audience.
add. I mean, data existed perhaps even earlier. It's how you can leverage technology to use that data in a ethical and meaningful manner is what is actually the, the driving force. Because a lot of this data, of course, the JAM, you alluded to that, has enabled, right? I mean, there are enough and more country level or macro level stuff which has happened. It's how you can now use technology and deliver the ethical way, make it simpler, faster, and better is perhaps what is the driving mantra.
Yeah, perfectly. And I think how you use the technology, you rightly mentioned. So, for example, chatbots earlier used to be considered only as service and engagement tools. You can service the customer well, you can ask him what is going wrong and all. But now that we also see use cases emerging wherein chatbots are used for underwriting itself. Yeah, because if a field person is going to the customer and asking X number of questions, why can't your chatbot do it and analyze the data and do the same thing? So there are, I think, newer use cases emerging. Yes, Arindam, you want to add to that?
Yeah, exactly. So basically what data usage is doing is democratizing the credit overall. So the left outs are being included in the fold. We are becoming more inclusive. And data has the power to include all of them. And we need to ensure that nobody is left out or left behind because of documentation. And at the same time, from the other side, the lenders would also probably love to see that they're broad basing and hedging the risk. Data is used as a risk hedging tool. As you go on increasing your customer base, you're actually potentially perhaps cutting down on double credit, triple credit, and all those stuff, over leveraging the income. Because so far we have been within a very narrow mind space where we are lending to one person, maybe like Prithvi said, that maybe we have everybody in this room has 3 or 4 credit cards. So it's actually over leveraging.
Absolutely. Gaurav's point was equally valid. People say low and grow is a strategy. You give a 5,000 rupees line, to Kalpana's point, gender aside, I've personally seen in markets, including India and a couple of other ASEAN markets, women portfolio, everything aside, rank order is better in terms of performance. But even if I leave the gender aside, if you give me a 5,000 rupees line and I've never had credit access, you observe me for 6 months and then you give me a credit card or whatever for 20,000. So that's the way, you grow, but you grow in the segment where you've tested.
Just one point that, we all agree that data is all out there, right? But I think the one piece probably that we're missing, and we're just seeing this beginning, to play out in large institutions which deal with data. Are we looking at, everybody's looking at approved data. Are we looking at the reject data? And there's that's a story in itself. And so you don't need to, the cost of acquisition of data and customers, as we know, is phenomenal, right? But we are very easy to reject the data. Could we therefore just go back and just look at the reject data? And we've done some work on this, on the reject inference. And it's very interesting to see, that's a gold mine too. If you understand the reasons why you've rejected, and if you have a better risk appetite, to your points, in terms of, wanting to maybe, test a couple of products, niche products with niche customer segments, I think, the opportunity size there is phenomenal as well.
Perfectly. And I think what we also are doing here is analyzing the data of customers who have been rejected, and also the customers who have very, very poor credit rating scores, and enabling them to improve their credit scores. I think it's an entire business model in itself, getting customers move up on their credit scoring model. And like he mentioned, one customer, Gen Z, using 3 or 4 credit cards, used up all the credit cards, and then of course the credit score was pathetic. Didn't know, was using one credit card for paying up another, and it was a vicious cycle. So helping that individual out to ensure how he can improve his credit score, because it is new learning for him. He's a new credit customer for us. So I think getting that right is, again, a different business model. And I think lots of fintechs are working in that space. With that, our time's up. Thank you, panelists, for sharing your perspectives. I think we had various diversified perspectives on this panel. And in case we have a few questions, we can take them. Thank you so much. Thank you.
All right, once again, a huge round of applause for the panelists right here. And we would like to have the Chief Executive Officer from CAMPS KRA, Mr. Anish, to please join me right here on stage as we take this opportunity to show our gratitude for your presence and time. With a bigger round of applause, ladies and gentlemen, once again, a small gift right here from our gifting partner clinically. Put your hands together, please. Thank you. Thank you so much. Once again, a huge round of applause to the panelists right here and to our session chair. And I have to tell, probably one of those conclaves and festival fintech meets and summits where we are pretty much on time. Even if we had all insightful sessions and power-packed panel discussion, we are on time. And thank you so much for being a part of this. We request everybody to stay back as we segue into the third panel discussion, the one which is standing between us and lunch. The lunch will commence post this. We're heading towards our third panel discussion, wherein it's about revolutionizing digital customer onboarding. But before we kickstart that, and before I introduce the panelists, we have something interesting that's coming up on the screen. And I know everyone is eager to head out for the networking lunch, but that's going to be post this particular session. We have something interesting coming up on your screen. wherein this is a day where we uncover and unveil a lot of opportunities when it comes to fintech. So why not, just for fun, on a lighter note, uncover this. Tell me, who are we? Who do we have right here hidden? Who's the personality? That's okay. That's a good guess. Anybody else? Javed Jafri. Wow, that's pretty good. Anybody else? Who do you think is this? Amitabh Bachchan, is that the popular answer? Let's reveal. 3, 2, 1. Yes, it is. A round of applause to ma'am. She got that right. Come on, you can clap, 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 clap it out loud. Next, let's move on. Pretty easy. Yeah, the answer is also written there. That's right, Rajnikant. Let's reveal it. Okay, next one. Yes. Yeah, that's the trick. That's a trick question. We directly went to answering this, who this personality or who this person is, but read the question. It's got a trick. It's got a small trick question. Guess the ad. So our very own Gabbar Singh, this particular picture, it was an endorsement in a newspaper of a particular product. Could you guess the ad? What do you think Gabbar Singh is endorsing right here? Take a wild guess. It's okay. Anybody? Wild guess. Product, genre, doesn't matter the brand. Okay. Somebody said like tobacco. We're stereotyping Gabbar here. Anybody? Take a wild guess. Toothpaste. Okay. Any more answers? Okay. 5, 4, 3, 2, 1. Let's reveal. It's actually biscuits. Glucose biscuits. All right, next one. Evergreen Rekha, what do you think she's endorsing? This is actually a particular ad. She was the brand ambassador of this particular product. Even if you don't give me the brand name, just tell me what do you think she's endorsing here. Jewelry, okay. Anybody else? Okay, Kajal. Okay, eyeliner, fine. Anybody else? Women, do you want to take some call? What do you think she's endorsing? Soap, okay. Something expensive is what you said? No. Pencil, okay. Oh, Natraj pencil, okay. Anybody else? Final call. 5, 4, 3, 2, 1. Think out of the box, like literally. All right, with that, on the lighter note, ladies and gentlemen, let me introduce the third and the final panel discussion before we break for lunch. And this time, as I mentioned, it's revolutionizing digital customer onboarding from paper to digital. This discussion will be moderated. The session chair, could we have Mr. Siddharth Agarwal, founder and managing director, Mobicule Technologies. A round of applause. Do we have the gentleman right here? A huge round of applause. Let's welcome the session chair, the moderator. And joining us as the panelist, first up, we have Mr. Sumod C, the head, FinTech Partnerships, Federal Bank. A round of applause to him. Let's also put our hands together. Mr. Chandan Khaitan, Chief Executive Officer from Muthoot FinCorp 1. We also have with us Ms. Nalini Venkat, Head of Institutional Business at Digit Insurance. And also join me in welcoming Saparno Bagchi, Chief Operating Officer from Balance Hero India. We also have Mr. Nirmal Badale, Senior VP, Credit Sizon India. And also joining with us is Mr. Akash Naidu, Head of Fintech and Startups, RBI Innovation Hub. And completing the league of this particular panel discussion, we have Mr. Vipul Saini, Assistant Vice President, Startup Product from HDFC Bank. Ladies and gentlemen, come on, put your hands together as we have the third panel discussion about to kick off. Over to you.
For being here. I know it's a difficult one. We are standing between you and lunch. But bear with us. We'll try to keep it interesting. At least the desserts will taste better with what we speak. So we have a very strong panel here, right? People from the industry who have been there, done that, doing it for years together. We are going to focus upon the first opening topic whenever you are lending, which is the digital KYC or the customer onboarding. The way we've structured this panel and the discussion is we will try to dive into what happened in the past, how it has moved and currently what we are doing, and what the future holds for it. So we'll go in that way. We can keep it interactive. If you have questions, we can take it at the end. So starting with, if all of you remember, I think if you take a loan, earlier days, you used to give xeroxes of your PAN card, Aadhaar card, many such things. Then the guy used to tell you, self-attested, you used to sign it. So those were the earlier days of digital KYC. The only digital part in it was somebody was taking a photograph and uploading it into the system. From there to what we have now, right? You put your thumb and you are digitally onboarded onto a platform. I guess COVID changed a lot for us. And to places where you can get onto an app, do a face match with Aadhaar. Technology has moved a long way when it comes to digital KYC. So, question to you, Nirmal. I think you had a credit company, right? So it's a very important thing for you to ensure that the entire experience, customer experience, is good. So if you could throw some light in terms of change from paper to digital, what were your key drivers? Why would you move digital? Obviously, we would all want to get there, but what are the key drivers for you to get into being completely digital on the KYC front?
Thanks. I think he rightly pointed out. I think we all have seen that taking Xerox, attaching it in the file. Then we moved on to probably taking photos because mobiles came in, and then uploading those in the system. And then we also moved on to the OKYC piece, right? And of course, the future coming in on the video KYC part. So I would want to put it in a probably three-dimensional point of view. Take it from an organizational point of view. What are the key drivers? For me, operational efficiency, that is one. Gives me scale, that is the second. Gives me a cost advantage, definitely, yes, that is the fourth. From a access to digital infrastructure, considering how we've grown from a regulator, from platform also, where we get so much of access on the digital data, the ecosystem has evolved. So from an organizational point of view, these are the four key drivers that I feel that why we've evolved and what are the key drivers. Now the second dimension is from a customer point of view. Why would I do a digital KYC? It's easy, it's convenient, right? Why do I go and take Xerox when I can just get into the Aadhaar OTP and do everything on the mobile? That is the second dimension. Third dimension, I would say, from a regulatory compliance point of view. Now, from a regulatory compliance point of view, anything that comes from source and a government source, that's the best advantage that I can get, rather than me having a dependency on a human eye and then probably matching it. That we've seen instances in the past, right? OSVs were done, those were obviously not right. Not all, but there were some instances. So these are the three dimensions that I feel that these are key drivers for us to move to and of course, like I mentioned, the digital ecosystem has evolved so much thanks to the government organizations, thanks to the regulations, thanks to the regulator itself. They are also helping everybody evolve. And these are the key drivers I feel that drive us towards a digital onboarding KYC part of it.
Great. If you could just introduce yourself, I think when I'm throwing the question, a little bit what you do.
You want me to do it now? Or?
Quick one, if you know.
I'm Nirmal Badale. I work with Credit Saison. What I take care at Credit Saison is the embedded finance piece. Embedded finance, when I say embedded finance, is typically the consumer digital business, where we integrate into a lot of partnerships who have customers and who are digital savvy. and then we provide finance through the partners app. That's what we do.
Great. So I think Nirmal mentioned that operational efficiency. He mentioned the cost part of it, and I think it's an obvious choice to move in that direction because it gives you the accuracy and the confirmation that you are actually authenticating the person who has submitted his KYC, right? Now, moving a little bit further, Chandan, maybe you could throw some light. It would be good if you could introduce yourself. How has the adoption been, right? It is all over the place, right? If we remember in the COVID days, पहले तो sign के बगैर काम नहीं होता था, right? You have to sign, otherwise you don't get a loan. In COVID, they took a video KYC and you were disbursed loans on a real-time basis. So how has the adoption been, right? You run a fintech yourself, and it would be good if you can tell exactly what you do. Everybody knows Muthoot as a lending company, so that would help. And what is the proliferation in an fintech like yours that you have been part of?
Sure. Good afternoon, everyone. Thanks, Siddharth. I'm Chandan Khaitan. I four categories, which is lending, savings and investment, insurance, and payments. Now, coming to what Siddharth was actually talking about, and Nirmal alluded to it, it's been an interesting one, and I would actually try and cite 3-4 things here. Being a fintech ourselves, and we have roughly about 2 million users right now on the platform. And user come from two ways. One, we digitally acquire users, and second, the Muthoot customers who have been working with Muthoot primarily on offline side have now been acquired onto the platform. And that is where this journey has been interesting. And whenever we say customer onboarding, we always think of the whole 360 degree of customer onboarding. And that's where we have tried to break this subject into multiple parts of it. I'll give you one example. Imagine a gold loan customers being associated with Muthoot for many years. And now in a COVID and a post-COVID scenario wants to interact only through the bank account that doesn't want to transact less than 20,000 rupees in cash. So what we did actually is we took the only bank account addition as the part of customer onboarding onto the platform that, sir, you are our customer in any case. Now you want to do it. We make it very simple through either penny drop or just put your mobile number. We get the VPA ourselves, and you can add your bank account with ourselves, and then you can transact very freely. So that's one way of doing it. That's how we break it. The second way we broke it actually is because we are a multi-product platform. We have products from loans to Forex to NCDs and everything. The second thing what we did is we actually broke customer onboarding depending upon which product we are talking about. Let me give an example of NCD as a product. So our group actually issues NCD. Earlier, this NCD used to be on a paper, sign karo and all of those. What we have done is we have made it very simple for a customer to do the PAN verification, the UPI mandate creation, and you are done. And Siddharth was talking about the future of it. So as we speak, we are integrating AA on top of it, which takes care of that particular piece as well. We know most of it, the things you have, and it will be a less than a minute journey for you actually on the platform. So that's how the whole past, present, future. The next thing which I'll talk about is, and this is one piece which we do a lot, a term called DOTO, which is discover offline, transact online, or discover online, transact offline. And that is how this whole customer onboarding becomes very, very interesting. Like take example of Forex. We are one of the largest 82 license holders in the country. And Forex is a very unique product all of us have taken where we need those Forex to be delivered at our home, but we don't want to do the paperwork actually. And we have made it very simple through the whole public-private partnership, which Nirmal was talking about, that you come to our platform, do the whole customer onboarding in a very seamless manner. Your order is created and the Forex gets delivered to your home, which is your discover online, transact offline, and you can do vice versa as well. So lastly, I would say if I were to summarize the whole thing, and I would actually borrow from what Nirmal was saying, at the end of the day, technology and this whole phygital mindset, because you need to make sure that you serve the customer whenever, wherever, and however. If you think of that, there are three drivers which I would say. One is the customer experience. Sir, please do things which I want you to do. Don't tell me that this is how you do it, I need to adapt to it. That's not gonna the way world is gonna work. So customer experience absolutely is the prime. Second is the whole cost efficiency part of it, because it all gives you cost efficiency. And lastly, in a market like India, which is gonna continue to be a phygital market, and you have people on the field which are costlier, how do we utilize or make them more productive using the right technology? So these have been actually the driving factor for us. And these are the ways we have been actually doing it.
If you could just, for the benefit of the audience, you mentioned the word AA, right? We learned Noto from you today. So if you could just throw some light, what exactly that is.
So I think this audience is absolutely educated about AA, which is account aggregator. And account aggregator is creating beautiful rails, which is basically a public infrastructure. We can use AA to do multiple stuff. Like, for example, what I talked about NCD. So account aggregator is a public infrastructure which rides on top of the whole banking infrastructure, which also rides on top of multiple other infrastructure, which includes the whole demat account transaction as well. So on NCD, if we actually write the AA rail, many of the UPI ID which we take to do any such transaction, we can actually just take the UPI ID and get most of the details about you and make the journey even more seamless. So that's how the whole world is moving.
Fantastic, fantastic. So just trying to build it further and trying to tie the whole thing together. From paper, we moved to digital, and it was majorly possible. I think the madam from NPCI showed us some amazing numbers in the morning. It was mind-boggling, those numbers that we have. I think the digital infrastructure. So I think Chandan even touched upon the second part in the customer onboarding is that once you take a loan, they need to dip into your account and take the EMI. That's the core of it, which is, authenticating your bank account or for even disbursing the loan. So where he mentioned a penny drop, right? Which means you put your account number or your mobile number, and from that they are getting the VPA. So this entire infrastructure of, the Aadhaar, the PAN verification and everything being available online, as well as the complete process being tied up. I think that is what is driving the adoption, and it is moving at a very frantic pace. I think as we speak, we are already talking about account aggregator, which means a single person will manage multiple of your accounts, right? Which was like a far-fetched idea, right? We were even on a single app to get your FDs was like a big challenge in the earlier days. So that's a far, we've moved much further. As we adopt technology, there will be risk involved. Okay, there will be definitely there are rewards in terms of, we already spoke of cost optimization. We talk about operational efficiency, customer experience, but there are risks involved, right? Anything that goes digital. Okay, Nalini, you represent Digit. We were chatting and she told me I'm a non-techie in the group. So you are the best person to tell us the adoption of technology. What are the risks involved? And, maybe if you could throw some light on exactly what you do at Digit and explain us how you guys are looking at it and trying to mitigate those risks.
Sure, sure. So I think when we're talking about risk management is very important. And there is no choice today that, you have to be digital because the rewards outweigh the risk. So there is rewards to be unlocked for everybody. For the service provider, it is cost efficiency. It is, access to market. We have seen when we started Digit, we thought that since we are a digital company, so most of our customers would be coming from tier 1 cities and, the educated, middle class, upper middle class, this is the segment I would be catering to. But after around 5 years, when we looked at where are our customers coming from, we realized 2/3 of our customers come from tier 2, tier 3, and tier 4 cities. Only 1/3 come from the tier 1 cities. And that's because the agents who were working in, tier 3, tier 4 cities, for every transaction, they had to go to the branch of the insurance company. With Digit, our app was like a super branch. So you can take quotes, you can give policies, you can register a claim. So they felt very empowered. So I think digital is very empowering to the customer. As they say, empowerment comes with responsibilities. Risks there are a lot of risks which this infrastructure, this entire ecosystem throws up. So the most important one is the data protection. So we are accessing data from multiple sources, from Meta to, we are storing some kind of data, customers identification. And RBI interestingly realized that the regulations which they're doing is typically for banks and NBFCs, and the way fintechs are operating is completely different than the financial infrastructure India had. And kudos to them, they have come up with a working team which would be regulating fintech. And we are seeing a lot of regulatory changes which are coming up. So I think the risk is one, the changing regulatory environment, data protection. And what happens is that in digital, you have to build to scale, because when you're talking about brick and mortar, your growth will be in arithmetic progression or geometric progression. But in digital, it is snowballing. Once you get it right, then the numbers are going to be very huge. So if you don't build your systems to scale, then you're set up for failure.
Yes, makes sense. So you mentioned the risks on the side where, the data protection and all that. Probably we'll touch it later in the conversation if somebody wants to pick that. There is the other side of the risk where the frauds happen, digital frauds happen, right? There is identity that is misused, which becomes easier in digital. Physical, at least the person has to walk in, you are verifying the person. Obviously, there are frauds that happen on that side as well. We'll pick up probably later in the conversation. You mentioned a very important point in terms of regulations, right? None of us can survive, right? Everybody in the fintech industry, we have to all fall in line, and we have to ensure we have a responsibility to ensure that the data that is there with us is secure, dealt in the right manner, stored in the right manner, right? So, Vipul, you are with HDFC and you handle startups and people to be onboarded. If you could throw some light in terms of how do we navigate these regulations, right? Quite a few fintech founders are here, and quite a few people from the lending side are here. Day by day, it is becoming difficult, right? Probably because at the speed which lending is happening, it needs to be done in the right way. There are a lot of upgrades in the way RBI has placed some norms. Some of them being as simple as, like, I think everybody somebody mentioned you were taking photo of the Aadhaar. We all forgot to mask the Aadhaar when we were taking the photo, right? That was one of the RBI regulations that were there. So those type of risks, right? So that now the Aadhaar is exposed in the image in your system, right? It may be encrypted, but when it opens up, you have the Aadhaar exposed right there and there. So there is I'm just giving an example. There is a RBI regulation which says that you have to mask the Aadhaar when you are taking it the first step, so that across your system, it is not exposed anywhere. So how do you, like yourself being such a big bank, how do you guys navigate and manage this in terms of the regulations, and if you could throw some light of what's coming up?
Absolutely. First of all, thank you so much for that question. Very relevant. Good afternoon, everyone. My name is Vipul Saini. I basically work on the startup product side for HDFC Bank, looking at all touch points from the startup ecosystem perspective. Also working on developing new products for the gig space and on the cross-border payment side. And before I start, I would also like to, just say hi to Akash here, who's from RBI Innovation Hub. I think very relevant from a regulations point of view. I'll dive into, why that is also important. But it is very heartening to see, a room, where we have fintechs, we have banks, we have NBFCs, we have representatives from RBI Innovation Hub, together talking about this particular space. why I feel this is important and how this shows growth over a couple of years is that about 5 years back, when we were working in this particular space, a lot of work was done in terms of building competencies and relationships with NBNCs, fintechs, startups, where banks were predominantly talking about what can be done for a particular collaboration under the regulatory norms that were prevalent at that point of time. The reason that was important was because way back in 2017, Kotak Bank had actually introduced a payment gateway system on Twitter, but we could not launch it to the market at that point of time because there was no regulations around it. And at that point of time, the team internally realized that it's a collective effort towards building a solution, not just one term approach in terms of building something. And if you want a solution to last, you need to have, all the players involved collaborating and working together to be able to build it at an ecosystem level at a similar playing field. And with that conception in mind, we started talking and, working with fintechs. We obviously had our agenda where we were looking at certain technologies that we wanted to implement. I think in the last 2 to 3 years, the banks have realized that ease of use is one of the biggest factors for our customers. And some of the fintechs have done that fantastically well, right? Banks predominantly, because of the way they're structured, there were legacy issues that were being faced in the old technology. We wanted to get to the newer technology faster, but the only route to be able to do that was, in terms of collaboration. And what we did at the banks were that we created a dedicated document in terms of how do we collaborate with fintechs, what is the role that regulation plays into it, and how do we have a conversation where we can fast track that deployment within the banks. In fact, we have a dedicated documentation process for each vertical in ShoreTech. Then we're looking at documentation, then we're looking at KYC, we're looking at multiple other things. So we've defined steps that as soon as somebody comes in, this is the person or this is the team that they'll be connected to. They will clearly define what are the new regulations, under what sort of regulations can we experiment, do POCs, and probably try something new, and what are the stable ones that we can already look at. So with respect to the example that you shared, in that particular space, we were looking at, if a team wants to do a POC, this is what is available today, and this is what we would probably want to showcase in the next 4 to 5 years. So we are also experimenting with ideas where we can take photographs and identify, what sort of behavior or user pattern does a person show. Now, it seems a little out there, but we know that with people walking into the ATMs, using digital KYC, we need to be able to better map, where they're coming from, what are they doing. Plus, you're also trying to figure out alternative ways of identifying and building a sort of background to a person. Now, predominantly, a bank doesn't do that because we don't have the wherewithal to be able to do it. But we are partnering with fintechs and other organizations that are looking at that, from a solutions perspective. So that's what we are predominantly doing. And what we also very keenly do is that whenever we have, something, a new idea that pushes the envelope, that's where I approach Akash. And I'm like, Akash, we need help with this. This is something new. We want to experiment. What can we do about it? And it's very heartening to see, how the regulatory bodies are now open to those ideas and conversations as well. One of the key areas that we've been talking about recently is that if an organization comes to us and says, we have an AI/ML sort of a solution available, this is our accuracy rate. How do we do that as a POC? We can't share customer database. The customer database that they're using may or may not be validated. Correct. So we showcase that as a concern to RBI Innovation Hub. They're working on creating a sandbox, which I would let Akash elaborate on it. And that's how we're looking at it. So we are becoming a good medium to say, this is a problem that we are facing. This will help get there faster. Let's work together. These are the regulations that we can help you with. Understand them a little better. And then on the other side, and this is the term I love sharing, it is the spirit of compliance. So we work on those grounds. So we say, hey, this is the spirit of compliance. This is probably how much we can push an envelope on. But for everything else, we go back to our dear friends at the regulator.
Right. So that's an interesting one, spirit of compliance. You made it very light for all of us, right? If you have to move from there, right, in terms of, you mentioned about having standardization in terms of the regulations, and if fintechs approach a bank or probably a NBFC, you kind of standardize the onboarding part of it, which is in line with the RBI regulation. An interesting thing that we picked up, probably we'll delve a little bit more later in the conversation with Akarsh, is that now we were saying that the industry and the RBI is collaborating on future problems or current problems and how we can navigate those, right? Which probably was there earlier, but I'm assuming the pace and the interactions have increased. So probably we'll come to that. We'll little bit switch focus and go to the consumer, right? We're all here because the consumers manage to take loans, do their KYCs, pay back their EMIs, take insurance, right? So we're all in that business, right? So the Sumant sir, question to you, in terms of, I'll pass you my mic. It's okay. In terms of consumer centricity, you manage a portfolio. If you could throw some light to the audience at Federal Bank, right? In terms of the consumer centricity, right? Whenever I am onboarding a customer, there is an experience that we need to give to the consumer, right? It can't be very patchy. At the same time, you may want to restrict on how much information you are taking from you will take exactly what is desired to disburse the loan or give the insurance or whatever. So in your experience, how has consumer centricity been taken care of, your experience in the industry as a large?
Yeah, thanks, Siddharth. Good afternoon, everyone. First of all, myself, Sumot. I head the FinTech partnership vertical of Federal Bank. By FinTech partnership, what I meant is that we tie up with major FinTechs in the industry who helps bank to onboard customers through their platform. So basically, we have concentrated three basic verticals: liabilities, credit cards, and PL. So we normally call it as an inorganic type of acquisition for the customers, not through our branches, not through banks' digital channels. We take or we partner with those fintechs. Normally, there is always a conversation whether fintechs are a competition to the banks. So normally, we consider Federal Bank considers fintechs as not as a competitor, but as a collaborator for our customer acquisition and onboarding journeys. So that's a vertical which I heard. Coming to Siddharth's question. So maybe recently I had read an article where it mentioned that for a digital financial product, a prospective customer maybe researches 7 to 10 portals or websites before taking a final decision to which product or which institution I have to bank with, to go for. So there I take what Chandan was telling, Toto. I'm twisting a little bit, not twisting. It's maybe discover online, transact online. So that's the philosophy Federal Bank is always telling. So once a customer comes to Federal Bank's platform, then it's our responsibility to ensure that he completes the journey and takes the product.
Right.
There should not be any drop-off. So there the experience or the onboarding experience comes into the picture. So we have designed certain journeys. Maybe I'll quote 1 or 2 examples where we designed to ensure that the prospective or the customer maybe enters as few data as possible. Whatever data available in the bank system or available with the regulators or with the entities in the ecosystem, we push the data, just get a confirmation that yes, this is the right data, and complete the journey. For example, Federal Bank didn't have its own credit card maybe 5 years back. So we had co-brands with some other larger institutions. So when we decided to introduce our own credit card, the first digital philosophy with bank chooses, we will not have any physical paper application for. Still date, we don't have any paper applications for our credit cards. It's an end-to-end digital journey. If it's a pre-approved customer, the journey ends in 3 clicks. So with the 3 clicks, the customer just confirms his credentials. Of course, as Nalini was telling, authentication, risk mitigation, all those measures are there. Authenticates himself or herself. He gets the digital card in his Fed Mobile. We call our mobile banking platform as Fed Mobile. He gets the digital card instantly in his Fed Mobile and he can transact immediately online. So we ensure that the product immediately customer gets and he transacts also immediately. So that's one thing what we have done. The second one I just quote is that along with the organic channels, what we thought was that rather than waiting for a customer to approach the bank, we should be present where the customer is.
Correct.
So that's a philosophy where we introduce WhatsApp banking channels. So we introduced our pre-approved personal loans and pre-approved credit cards through WhatsApp. So within 3 or 4 chats within the WhatsApp, the product gets delivered to the customer.
Correct.
So
I
thought you were asking something. Yeah, so we ensure that the customer never went out of the particular channel where the customer is. He completes the journey and gets the product, and he gets transacts also online if possible, depends on the product. So we ensure that the customer experience is seamless. That's one side. Because I don't know, I read some article, maybe you have a different view. What do you think the attention span of a Gen Z or a millennial right now in the digital world? Can anybody tell? Yeah, 3 to 5 seconds is the attention span right now the persons are having. So within the 3 to 5 seconds, we have to get the attention.
What will you sell in that much,
At least we should get
you
the
wouldn't be able
attention.
to explain the product itself.
So that's getting the attention and making him stick on to the platform is very important within this 3 to 5 seconds. So that's how the journeys are designed. So that's
You are
one
basically
side.
saying engaging, keep him engaged and give him the convenience that the first 3 to 5 seconds he's convinced that he's going to have a smooth experience. Otherwise, he's out of the
Exactly.
journey.
So that's a challenge we are all having in this hall. So whenever we design a product, that has to be always kept in mind. So along with this product which I explained, we, as I earlier mentioned, we also having partnered with multiple fintech partners who take this customer experience onboarding into a different level through gamifications, through other channels. So there also we partners with those fintechs who help us to get the customers through those onboarding channels, where the customer comes to that particular platform, completes the journey, but we are exposing, Federal Bank say around 300 plus APIs, which we are exposing to the partners, depends on the products. So all the onboarding happens in the bank's platforms, but the front ending will be done by the fintech partners. So that's in short, I just want to.
Fantastic. So, Akarsh sir, we coming to you. I think Vipul gave us some insights. I think they've been in touch with you. So when it comes to customer centricity, if you could add on to what we heard from Sumant sir in terms of compliance and customer experience, both going hand in hand. If you could touch base and if you could throw some light on terms of the industry interactions, what does RBI has, if we could all be enlightened, what's possible, because it's a tough one for us to crack always. So probably it would help.
So thanks for that question. And I've been looking to share more about what we are doing at the Innovation Hub. So quickly, I head the FinTech and Startups vertical for the Reserve Bank Innovation Hub. RBI is a subsidiary of the RBI to accelerate innovation in the financial services sector. Our broad mandate is frictionless finance for 1 billion Indians. In order to achieve this, we believe that there are 2 critical factors. One is customer at the center, because customer centricity is key in order to achieve sort of a digital financial inclusion in a diverse demography. That is something that we look at, and creation of a digital trail is a must for anyone who's new to credit or has a thin file credit to access loans, so to say. With this kind of thesis in mind, the FinTech and Startups vertical was established primarily to bridge the gap between FinTechs, banks, and the regulator.
Correct.
To be able to work together to accelerate some of this innovation and take it to the market. And that is where our role becomes quite interesting, wherein banks again have the wherewithal to accept deposits, lend to the customers, whereas fintechs are high on customer centricity, innovation. So how do we marry the both, and how to also ensure that the experience is regulatorily compliant is something that we are doing through several of our initiatives. We've run several accelerator programs to that extent, where we've had bank fintech matchmaking. POCs are a specific outcome of the programs that we run with a lot of banks. We have conducted several industry roundtables with banks and fintechs, as well as VCs, to understand how we can produce scale. And we have also looked at various initiatives in the pre-incubation, incubation, and acceleration stage, so that at every stage the idea is validated, problem statements are given, the industry is working towards certain areas that are of critical importance. Now, moving on from that into more specific examples of how we are looking at digital onboarding or enabling, accelerating the process. Hyper-personalization is key to digital onboarding because each customer is different, each, their persona is different. They could be a farmer, they could be an MSME, a woman, a person with disability. Each one has a different way of accessing the banking and financial services ecosystem. So we have, come up with several initiatives where there was a close collaboration with FinTechs and the regulator as well. To give an example of digital SHGs. So traditionally, the self-help groups have been, doing the bookkeeping in a physical format for almost since its existence, because of which women were not able to access the traditional credit from the financial services. And therefore, they had to deal with higher interest rates, reaching out to the informal credit ecosystem. So in order to solve this problem, we enabled a digital trail where the onboarding journey of the SHGs was made digital. And as a result, the transactions were getting captured digitally, and now the loans are disbursed in a matter of minutes, to the members, and individual credit history of each member of the SHG is tracked. Similarly, there was the Kisan credit card that was already in existence, but our team went onto the ground and identified that there were almost if not 100, but several pages of paperwork involved for a farmer to access, and at least 5 to 6 bank visits, and minimum 6 to 7 weeks to access a loan of 2 lakh rupees. So we said that this entire process has to be digitalized, and we tried and understand. So they were repetition of several questions of the same kind. We reduced the number of questions, made the entire process digital, and now to cut to the chase, the digital Kisan credit card is able to disperse loans to farmers in a matter of minutes, as opposed to the number of days, weeks it used to take. And just 1 or 2 more examples. We have run an innovation challenge called I Innovate in partnership with HDFC Bank, the Parivartan Grant Scheme. So where we looked at startups solving for financial inclusion for people, people with disabilities or specially able people. How do they access traditional banking apps? As simple as screen magnification, voice input, to even a call center. For people to, people who are unable to speak, to actually reach out and use sign language to interact with customer service, etc. These are, audit for how friendly your banking app is. This is not just a social impact aspect that we're looking at, but a business opportunity for banks and FIs to onboard a new set of customers through this personalization. And finally, in terms of onboarding, we are also looking at vernacular. So there's a startup called Devnagari, part of our cohort. They translate all these apps and banking apps in 22 different Indian languages. You're able to access a new demography, new customers segment. We're also doing a project called Fintech in Northeast, where we're looking to have financial inclusion of people in the Northeast region as well, and also looking at things like bots, voice-based bots. So now you're seeing a lot of the technologies coming together, the natural language processing technologies, voice, AI, ML, as well as the vernacular content, all coming together to deliver a customer onboarding experience. But yeah, I mean, there's a lot that we could get into, but just sort of concluding some thoughts that the opportunity for fintechs and banks lie in 5 C's that I've talking about. One is customer onboarding. The other is credit underwriting. The third C is customer service. The fourth one is customization of financial products, and the fifth C is compliance. So these all present some opportunities for startups to work on, and we are actively accelerating the journey of various stakeholders in the ecosystem. Thanks.
Great. So I think you gave us a very different angle to how we know RBI, right? So you are actually trying to help. What probably we could summarize is a lot of your pointers were towards going to the underserved or unserved segment as well, which has been out of the credit system, majorly due to either the access to it or the way they maintain their records. So you mentioned the SHGs, which maintained it offline, which now is actually I think like a revolution in India, right? The SHGs, and I think the government has mandated some percentage to banks and NBFCs to lend to that group. So you gave us a very interesting angle to RBI. I think we should all thank you for that. Now you want to add something?
I just want to add something because I missed to mention that when we talk about customer experience, customer onboarding, we had to always thank the regulators for, especially on the eKYC guidelines, VKYC guidelines, digital lending guidelines, which help the onboarding guidelines. And plus, since Agarsh is there, I have to tell that even RBI Hub is helping a lot for the financial institution to onboarding through the APIs, which the entire ecosystem. So I thought I just want to add this point.
So it is great. We all here RBI has find X bank, Y bank. Good that we are all appreciating right now the support that is happening over there. Now moving to the center, I think Suparna has been quite probably. If you could, probably just help us understand what you do, and we would want to get to the next step. We discuss regulations. You run a fintech yourself. What do you expect the future of these regulations? So it is maybe the challenges you are facing, or probably what do you expect how it will move? From your perspective, industry perspective, whichever way you can bring it.
Sure. Firstly, thank you. Very good afternoon, everyone. Again, just to give a perspective, I'm Suparno. I'm the Chief Operating Officer for a fintech called Balance Hero. We are both into payments and lending. So what that means is we are a perpetual PPI license holder. So we have our own interoperable wallets, and on the other side, we are into lending. We are primarily into unsecured lending. Now, in the context, I'll share some data points in the context of the agenda and the conversation. So just focusing on, let's say overall, we have around 3.2 million, that's our MAU, monthly active users. And we are totally digital. I mean, we are 100% digital. So as you would appreciate, there is a spectrum, right? You have physical going to automation, then you have a phygital model, and then you have a 100% digital model. So to Chandan's quote, right, we are like discover online, transact online, that part, that side of it. Now, in operating parameters, just to give you a flavor, so on any given day, let's say lending, I talked about MAU on overall basis. On lending, we do more than 10,000 fresh disbursement of fresh loans every day. So as I speak, maybe from morning to now, we would have already disbursed 7,000 loans. What also it means in terms of reachability, the point which Nalini also was mentioning. So let's say till 2 years back on the digital lending side, you would have had approximately the industry operating at somewhere at a 50-50 scale, in the sense tier 1 50, tier 2 and beyond, it's like 50% in terms of customer spread. Fast forward to today, I'm talking about lending at an industry level. The majority, let's say 60-65% is tier 2 and tier 2 plus, and then rest of it is in tier 1. Our data, like the way we are positioned, we are primarily positioned to solve for the Bharat. So 85% of our customers actually come from tier 2 and tier 2 plus, which means not the top 8 cities, which also means in terms of PIN codes, I'm talking about we servicing 97% of the PIN codes in India. Any guesses how many PIN codes are there in the country? Yeah, it's like 19,000 or 19,100. So we are talking about that scale with the spread. And as also was mentioned, right, we are talking about Northeast, we are talking about the far spread of India, which wouldn't have been possible without digital onboarding. So that's the ground with proper data. Now, coming to the question which you had. So we had and we touched upon, right, the journey has been both enabled by technology and as well as also facilitated by the regulations. This has also helped fintechs, hand on heart, to rewire in many ways, because you also have to appreciate, like if you have FS DNA for 20-30 years with a lot of banks being there, I also must accept that many a times the fintech DNA is a lot more indexed towards a technological mindset. Now, what I am calling out, because the rewiring also has happened thanks to collaboration with regulators, thanks to some of the evolution which has happened, the rewiring has happened that regulations are not speed bump, they are guardrails. Now, that's for sure that rewiring has happened. Now, translating that, let's say digital lending guideline, translation of that also had meant that we have to look at the consumer at the center, but also from an ecosystem play. Let's say on an onboarding, what is currently happening. Our consumer, including us, we all know we do go and do I agree. How many of you actually go and read the terms and conditions? I don't. So that's where the regulation has come in, right? Clearly calling it out like what are the do's and don'ts. So that aspect of consumer protection has helped. Then there is also aspects of where you are seeing that the ecosystem has evolved. Now, today we are talking about not only regulated entities. We do primarily from 70% of our business from our own book, own NBFC. So we are taking the loan on our book. But let's also face it, we do 30% of our business collaborating with banks and NBFCs. Now we are talking about KYC. Now we are talking about the data coming in. And therefore, some of the clarification which regulation also has come in post the digital lending guideline has actually clearly called out who is the custodian of the data, how the KYC has to be mandated. Now, fast forward a little more, what's going to be critical, and Nalini touched upon on that point, is the intermediary creation, what we call as SRO, the self-regulatory organization. This is going to be possibly pivotal. Because from here to there, if you think about the regulations, there are certain aspects on the liability side, but more importantly, on the consumer side, we are talking about both prudential risk and conduct risk. Our regulatory framework has evolved a lot on the prudential risk part of it. But when it comes to consumer onboarding, digital onboarding, the conduct risk part of it is of paramount importance. What is that we are doing with the data, how we are actually landing up on the collection side, and more importantly, there is the verification issue. It's not only about impersonification of a consumer's information, it is also about impersonification of the provider information. Today, if you actually, I'll not quote names, but if you actually go to the internet, you will find a lot of ABC. Maybe there is a bank ABC and then there is 10 other portals. So thankfully, we are also working with the regulators on those lines, how to whitelist apps, how to whitelist portals and then act around it. Already with regulations, RBI, regulator RBI and Google, we are on the works of it. But the key point is to be a dialogue-driven process so that the SRO is going to be important. And one other point I would also want to call it out that at times we are looking at fintech as a monolith, which is not the case. Because you have insurtech, you have lending, you have payments, everything put together. And more importantly, when it comes to onboarding, you have business and you have retail. We have come a long way on the retail side of it, but when you think of MSMEs, when you think of the opportunity, I think that's where, again, the regulations also have to be a lot more enabler. So I'll pause there.
Great, great. So we would love to hear more. I think we are short of time. We can't be in Bangalore and not discuss innovation and disruption. So Nalini, I think you could do the honors and tell us where we are. We have a very few minutes left. I think the clock is ticking.
I'll take.
We will have time for
50
questions after
seconds,
that.
40
right?
to 50 seconds.
After this, okay, yeah. Yeah.
Okay,
Quick
so I'll not
yes,
take more
yes,
than
yes, yes.
40 to 50 seconds. So I think my co-panelists have covered most of the things which I had prepared for. So I was constantly updating what I wanted to speak, but most of them have spoken. I'll just summarize what we spoke from an innovation and disruption point of view. The first thing which my co-panelists have already spoken about is one, vernacular. So you will see a lot more communication which is going to come in vernacular. Second one is movement from personal lines of finance to commercial lines of finance, because today, more or less 95% of personal loans are digital. But when you look at MSME loans or, working capital loans, they're still very phygital, I would say, may not be completely physical. We're going to see a lot of action in that space. We were talking about hyper customization. So when we talk about customization, we always think product customization, but I think with the data available, the metadata, the data, the customer's digital footprint, there will be customization on pricing as well. So I may be getting a different rate of interest when compared to, somebody else in this room, though our profiles may be similar, the kind of loan, the tenor is the same, but based on my behavior, I'm going to get a better price. Lastly, as they say, Sangat Chatvam, all of us on this panel, we feel that we are not competitors. So co-creation of product becomes very important because, whether it is Suparno or Chandan, they understand their customers, what is their activity on the app, what are they. And as an industry, if we start coming together and start creating products which cater to those customers, we will see a lot more adaptation. And gamification is another thing which we will see. I was discussing with a few other fintechs, and they were telling people are very interested to see what is their credit score, what is their sleep score, finance security score. This will find gamification of product bring offering hyper customer products and pricing, I think, is the next big innovation space. And we will see an emergence of a super app where, people, whether they're doing investment, they're doing, insurance, buying, lending, all these things will come into one super app. That's
Great. So I think I'll summarize at least. We heard DOTO today, DOTO, I think two different meanings of that. We heard SRO, self-regulated organization. That was, I didn't have time to delve more into it. Unfortunately, we ran out of time. And probably you could repeat, I didn't pick up the term altogether, doing it all together, right? I know Vasudeva Kutam, our dear Prime Minister, has taught me that very well. So, thank you everybody, and thank you for the patience of listening to us. We will have time for a few questions you have. Okay, we've been restricted to one question because we stand between you and lunch. So any questions to the panel generally? Yes, we have one right at the back.
Check. Good afternoon, everybody. I'm Akhilesh. I'm from Federal Bank. So first of all, thank you for all your insights. It's been a very interesting conversation. So my question was regarding something we've ran into recently. So when in customer onboarding and the whole journey, as someone mentioned, it is data that is the most important part. And as we all know, this whole fintech arrangement is this delicate handshake between multiple organizations. So my question to the entire panel is, what is that sweet spot of data ownership? Like, who handles what? And according to your view, what is that sweet spot of where this collaboration happens?
Hello. Thank you for this question. I'll attempt. I think you put a very interesting phrase, right? Data ownership. So the data is owned by the customer, no one else. Rest all is custodian of it. So as a custodian, therefore, how the framework works, and the Privacy Act / bill / act rather now is going to be like very, very important in terms of putting a framework around it. And as custodian of data, if you see, especially in certain subsector areas, I will give the example of lending. There is already a clear call out when it comes to the digital part of it, like what data you can take, where you need to store the data, how you have to have a declaration around the purpose, and then what kind of audit trail also you need to maintain. There is a clear call out. Even if you look at the payments, and as a PPI license holder, I must also say that not just the privacy part of it, but the information security part of it is also put at a very, very high threshold. All these things were quite well under the ambit of a regulated entity. Now, what has happened is when you broadly use the term fintech as well, at least in lending, thanks to digital lending guideline, a taxonomy has been also set up for pure play fintechs. So if you're just a loan service provider, let's say you are not an NBFC or a bank. So that in a way has set up a standardized benchmark in terms of the data which is being taken purpose, perpetuity, and also in some of the rights which are going to come in implementations once you see the entire Data Protection Act translating into rules and implementation of it. One call out, we possibly also have to be a little pragmatic because digital is far better than offline. But then again, we'll also have to give some time for the digital baby to grow. So I'll pause there, but if anyone wants to add.
I hope that answers the question.
As a regulator, I think.
Yeah, so I was trying to steer away from that conversation, but my friend Vipul has, got me back.
We can call timeout. It's
That makes sense, but I'll just quickly comment on a couple of points. Now, I won't get very specific as a regulator would, but what we are trying to see here is in terms of data sharing between fintechs and banks. There's always the tussle. I mean, that's where RBI Innovation Hub becomes very, very interesting because the banks may be willing to give data to us and not to the fintech directly. But for innovation to happen, this has to happen in a safe and secure manner. And there is no misuse of personally identifiable information of any customer. So in that sense, cannot comment more, but there's potentially a digital sandbox likely to be set up, wherein this kind of an access to data, APIs, and in some cases even synthetic data sets could be made available to the fintechs, for specific use cases, for having industry-wide, accuracy rates when it comes to the level of accuracy of AI, how well your algorithm is written or your LLM is, can be tested against the same data set so that we know legitimately what are the solutions one could engage with. And based on the validity received from such exercises, it can be extended to the respective fintechs. Again, of course, RBI has already constituted the regulatory sandbox where some of these issues could potentially get identified. But again, the account aggregator framework, lots to talk about. But I'll pause now and have an offline conversation if needed. Thanks.
Great. Thank you. Thank you.
Thank you. Hope that answers the question. In case if you have a question, when is lunch? It's right about now. But before that, we would like to show our gratification to all the lovely panelists that we have. And to present this, could I have Ms. Devika Kundu Gupta, AGM Conference Production from BW Businessworld, to please join us on stage. And could we have a huge round of applause the panelists and to the session chair right here. And up next is the much awaited session of the day. That's, of course, lunch, and it's going to be a networking lunch. Ladies and gentlemen, we'll meet you outside. Request all of you to please present your badge at the registration counter, where you'll be given a coupon, which you can use it for the lunch. So we'll see you outside, and we'll see you back inside in the next 1 hour. Thank you so much for being a part of the 4th edition of Festival of Fintech. We'll see you on the other side post-lunch. Once again, please head towards the registration counter, showcase your badges, and collect your coupon for lunch. And once again, our gifting partner, Clinically. So we request the panelists to stay back as we would want you for a group picture. But we have all of you right here in the front, please. Once again, thank you for sharing all those insights and being a part of the panel discussion. And for all the participants audience, it's lunchtime. We have 1 hour from now. Request all of you to join us the next 60 minutes. All right, 60 seconds on the clock, and we shall begin, requesting everybody to settle down. An invitation to people outside. All right, 30 seconds, and then we kickstart the post-launch session. Requesting people outside to join us inside right about now. In case if you have your friends or colleagues outside, please do page them. Do let them know that we're about to begin. Requesting all the participants, all the partners, all the attendees, all the speakers, leaders to settle down quick. All right, it's right about time that we continue with the 4th edition, the Festival of Fintech. Ladies and gentlemen, good afternoon. Can I have your attention? Welcome back. Hope you had a nice lunch and we are all set for the second bit of this fantastic 4th edition of the Festival of Fintech. How many of you are feeling sleepy? Be genuine and put your hands up, or you already slept that you don't want to put your hands up. Post-lunch session is the most difficult one. We know it for obvious reasons, but we'll try and make the most of it. Once again, welcome back. Could I request everybody to put your hands together? That's one of the best way to get rid of what happens to us post-lunch. So come on, everybody, put your hands together. Clap it out loud. Clap, 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 clap. Superb. So we're right here at the BW Businessworld 4th edition Festival of Fintech. And of course, it's Businessworld, which covers, media thing, the news, views, reviews across the world. So we thought we'll start the second bit, the post-lunch session, with some fun questions and trivia, or probably a quiz game, questions from all across the world. And you give me the maximum right answers, we'll let you walk away with something really interesting right here. So could we have my slides up, please? So brain teaser, let's wake up. Fun quiz time coming up. Question number 1, please. We've got questions all across the world. So here's a very interesting question that's going to come. And I'll read it out in case if you're not able to see it. What is the most popular tutorial that is searched on YouTube? We've got 4 options. It's how to dance, how to drive, how to make pie, or how to kiss. What do you think is the most searched tutorial on YouTube? I can see some smiles all around. I really like the gentleman's expression, like shy, and he's like, oh. We won't ask you how you know that, but we'll just figure it out. Let's see, is that the popular opinion? Or anybody begs to differ here? Is it A? Okay. How to dance? Okay. Anybody else? 5. C, how to make pie? Okay. 5, 4, 3, 2, 1. Let's reveal. And the right answer is how to kiss. Sir, you got that right. You must have a very happy wife. I'm just like kidding you. Could we have question number 2, please? This one's an easy one. The answer is A, B, or C, or D. It's a very easy one just to get maximum participation, and I got that right. Yes, Kaun Banega Crorepati, KBC is the right answer. Lovely. And now it gets better. Now that I have your attention, let's go. Next question, please. In Germany, every office must have this. No matter however small, they need to have this. What are we talking about? A, view of the sky. B, water cooler. C, timeout cabinet. Or D, ashtray. How many of you said ashtray? Very good. Wrong answer. 3, 2, 1. Somebody got that right. Timeout cabinet? Very good. Still a wrong answer. Now we got 2. Water cooler or view the sky? 3, 2, 1. Let's reveal. View of the sky. Sweet. Next question, please. If you share this in Tennessee, you break the law. You actually get a ticket. A ride, your toothbrush, Netflix password, or local secret gem. Okay. Toothbrush. How many of you say toothbrush? Superb. A ride, anybody? No. You say a ride? Okay. Anybody say a secret gem that you find there locally? No. The answer is, if this was a rule in India, all of us will be behind bars or will get fined. Netflix password is the right answer. The gentleman right there got it. Round of applause to him. Come on, clap for him. Yes, you can put your hands up so that everybody knows you get the right answer. Couple more coming your way. Yes, next question, please. Name the brand that's promoted by the character shown in this logo. Wow, that was a big one. That was loud and clear. Probably we'll get to meet the captain later this evening. That's right, Captain Morgan. Round of applause to the gentleman who gave the right answer. Next one's a very interesting question. So by law, what becomes the property of the Queen? Now the King, if caught in the UK. Enemy ship, whale, Bigfoot, or alien? Enemy ship, whale, alien, whale. All right, 3, 2, 1. Let's reveal. We got that right. It is whale indeed. To the gentleman who gave the right answer. Okay, next one's probably the most interesting question of the lot. In the Californian town of Carmel, a woman can't do this without permission. Needs to get a permit. Sing off-key, wear high heels, have a flatmate, or be a psychic. Be a psychic? Well, women in India, you would be very happy. You don't need a permission because the right answer is wear high heels. I think I got one last. Let's move on quick. Yeah, in Oklahoma, USA, it is illegal to wear your boots to this particular place. To bed, to town square, to church, or to a pool. Where do you think? It's illegal. To church. How many of you say to church? Somebody said to the town square. To a pool. All right. I don't know how they check this. It's quite creepy. Could we reveal the answer, please? Yeah. Glad we're in India. So I'm going to end with one last question. My last question, please. Yes. Guess this movie. Think creative. Guess the movie. Hum tum? Almost right. Very close. Kuch kuch ho jaye? Very, very close. No, not that one. Little far. All right, someone got the answer right. Could we reveal it, please? Could we have a round of applause to the one who guessed it right? Yes, it is Bahubali, the art that you saw previously, and I'm the artist. This is RJ Amar right here. Welcome back to the 4th edition of Festival of Fintech. Ladies and gentlemen, now that we have your attention and energy in the house, could I request everybody to put your hands together? Everybody, round of applause. And once again, welcome you all to the post-launch session. And it's going to be an interesting fireside chat. We're going to have Ms. Sandhya Vasudevan, TIE Bengaluru board member and chair Fintech SIG, and Ms. Reena Daya Yadav, founder, board member, and CEO of QET Council of India. We're going to be in a conversation with Ms. Sneha Walke, founder, The Little Things Co. Could we have a round of applause to all these lovely ladies who are going to join us right here on stage? And we're going to have Ms. Reena Dayal Yadavji joining us virtually on the topic, Future of Big Data and FinTech, exploring emerging technologies such as AI, blockchain, and quantum computing, and their impact on data-driven FinTech solutions. For Ms. Sandhya Vasudevan and to Ms. Reena Daya Yadavji, could we have a huge round of applause in conversation with Ms. Sneha Walke?
Thank you for that lovely introduction and especially for that quiz, Amar. Loved it. So before we start, I want to also share with you this little, nugget that happened. I came here a little in the lunch break and I was just moving across tables. One thing about a finance or a fintech conference is that people, when I told them I've just started on my entrepreneurial journey and my marketing and communications outfit is about a few months old, somebody gave me 2 cards. They introduced, both of them introduced each other and said, if you need funding, this is the person. If you need space, this is the person. I love this conference. Okay. So we have prolific leaders. Ma'am, can you see me? Is sound?
I
Video, all
can
okay?
see I can see you. Can you see me and hear me?
Hear you. We can't hear you. Sorry, we can't hear you. And I've been asked to drop ma'am, so no ma'ams. Reena, can you hear us?
I can hear you very clearly, and
We can't
I'm
hear
just
you. We can't hear you.
okay. Mic seems to be working here. So can you get somebody to check there locally?
Mute herself or do something so that we can hear her.
I can hear you.
Oh, we can hear you now.
Okay, you can hear me. Okay, great.
Got it.
All right.
So welcome, Reena. Welcome, Sandhya. Thank you to all of you for joining us. I know post-lunch hours are pretty taxing. That's an understatement. But we've requested both our prolific panelists to share as many real-life case studies and applications. Another input I was getting while speaking to a lot of you during the lunch break, the real applications of some of the technologies that we are going to be discussing. And both of them have promised us that there's going to be a lot of examples being shared. So I'll straight away get into it. But before I start that, a personal anecdote of how me, an art student, has been the recent kind of, I wouldn't say victim, but I have seen fintech unfold in my life. For, I don't know whether it underperformed or overperformed, but I want to share this example with you. So there's a number in fintech called 45. Does anybody know this number? What is the significance of it? Okay, I'm just kidding. I just want to know how many of you are looking towards the screen. So 45 is how old I turned this year. And, and before I turned 45, one of the targets in my head was to clear my home loan. Now, as a single woman in India, when you go to the banks and you ask them for home loans, there are a lot of processes. And ma'am, sorry, I know both of you are from, hardcore finance, fintech thing, but it's important to share these little, real life instances. So while I was getting the home loan, there was a whole process and that whole jugaad, but it was banks say yes, and some of the banks say no. You go through all of that. The bank that I banked with was nice, everything in order the last 10 years. And when you now want to go and return this and close this home loan, you request the bank that, okay, what are the documents and what do you do? So there's a whole process where you don't know who you're talking to. You just want to close the home loan, and you're put on, you're being sent disconnected emails which have no answers that you're looking for. You're talking to these automated voice recording machines, and you have to wait for 17 minutes till you actually get through to somebody who doesn't understand anything that you're asking. Finally, I just decided I'll walk up to the bank. And well, they gave me the date that I can close the loan. So I went into the bank, and I was so surprised because I was feeling that itna sab abhi ho gaya, abhi drama, and now there's going to be a next phase of drama when I actually land up at the bank. But such an efficient team, in 10 minutes, everything was done. The point that I'm trying to make is that there has to be a good combination of technology and human intervention for whatever we are looking at to make that societal or bigger or small impact in our lives. And I hope that some of the things that we discussed today focus on that impact and how to achieve it. So, ma'am, straight to you, Sandhya ji.
I thought you promised you won't call me Sandhya.
I'm trying. I'm really trying. So, the BFSI sector is largely considered quite opaque. There's a lack of transparency and things like that. So fintech, with its big data, the machine and data points, we are hoping that some of that transparency is heightened, and it's less opaque now. But do you think we are risking making fintech? We are currently viewing fintech also in a silo, in isolation. There was something I saw one of your previous event videos, and you had mentioned a very interesting example of saving the tiger, that project. And I'm connecting that example to this question. You said that the project of saving the tiger is not just about saving the tiger. It's about those 600 odd rivers where the tiger goes to drink water, or those villages that are along that trail, or the villagers whose livelihood is along that trail. Now, if we look at fintech as a tiger, for instance, here in this example, do you think it's solving a bigger purpose for BFSI?
Okay, let me just start with what is fintech. I mean, a lot of people keep it very simple, saying using technology in the financial space. SWIFT has been around for 70 years. Technology has been actively used, and the financial activity has been around for I don't know how many centuries. What fintech is doing is, in the last 10 to 15 years, the speed of change and looking for solutions which where technology is the base, that the agility with which it happens, the kind of combination of speed, volume of data, looking at solutions with a completely different lens. People who don't know finance, the example you gave, are making a huge difference. And as new technology comes, you're going to have more and more of it. So let's take a few examples. If you're looking at agriculture, India's got about 600 million people working in agriculture, some form, shape, or the other. In the US, only 1 or 2% are in farming. If you've got to make a change in the country, and this sector contributes about 14.5%, 15% to GDP. It's illogical to have that kind of a number. for the sheer volume of people associated with it, because the return per individual, therefore, is very low. So the transformation for that kind of a thing, and I'll probably share a little more about the solution there. If you take in the field of mobility, we were just looking at it. In Mumbai, everyday commuting, 12 million people going up and down. And if you have a fintech solution for just the commuting part of it, and then monetize the data that you get from an aggregated perspective, the potential you're likely to unlock is going to be quite interesting, to say the least. And you do that across the country. People going on the railways, monetize it. So all kinds of things are possible. So for me, I think technology will change the way we do things, but I'll give you a segue into it, where Reena can take over the rest of the question. With the quantum computing and the quantum changes that are coming in, and it's very close, it's not far away. Just to give you a sense of, in 2004, the first payment transaction was done on a quantum computer in Austria. 2004. How many of you in this room are even thinking about quantum computing in your world? Hands up. There's one. The Indian banking system is not thinking very much about it. It is an area that we've been discussing with the regulator. So I will leave it at that. There's a lot that we can do.
Thank you. And since you mentioned quantum computing, Reena, you're a champion of the quantum science and technology. And for those who perhaps don't know much about it, could you share a little about the national, quantum mission and QETCI's role in this whole mission?
Absolutely. So I think Sandhya already set the context for why this technology is important, or rather more the fact that, a lot of people in various sectors are completely oblivious about this technology, whereas this is the time where a lot of focus is required. Just to educate everybody, India does have a national quantum mission. So India is one of the countries which has a very strong focus on quantum, and is doing and has kept aside money to not just do projects and startups, but also core research, so that we can advance this technology in a direction where we are set not just for today and the immediate tomorrow, but for the long-term future as well. So the National Quantum Mission, in 2023 April, around 6,000 crore worth of rupees were announced for an 8-year project, 8-year time frame for India. The focus is research, development, and also research to commercialization. So for the first time, if you look at a mission level, it's a mission. So there are a lot of things that happen in India in mission mode. But in this case, the mission mode, one of the things that they've done differently is that they've clearly outlined the deliverables. And the deliverables, while the focus is on research, the deliverables are products. So in this way, there is an attempt to bridge the gap between research and commercialization as well. And the focus is on 4 main sectors: quantum computing, quantum communication, quantum sensing and metrology, and quantum materials and devices, because these are the core technologies that are really important. And especially if you look at materials, we're also talking about the supply chain here. So how do we, build capability that allows
We
us...
lost you.
So how do we build...
We lost you. You'll have to just check your mic.
My mic is working fine. Can you check at that end, please?
We can't hear you still.
Can you hear me?
No.
What about now?
Yes.
So I just muted and unmuted myself. I didn't do anything else. So maybe do it. Okay, I'll go ahead and see if it happens again. So what I was saying was that if you look at these 4 pillars or 4 technology pillars that the National Quantum Mission has focused on, the attempt is to look at an end-to-end perspective of what's important for India, and also look at the supply chain angle, because we're talking about materials as well. Now, apart from this, what is, and then to give a little bit of a context on QETCI.
Yeah, and mute and unmute, yes.
Is it better now?
No.
I don't.
No, can't hear you.
Let me look at the audio settings. Well, they were all right. Let me see.
Can't hear you.
Can you hear me?
Now, yeah, whatever you're doing, I think.
I'm not doing anything. I am just, sort of trying to look at the settings. I didn't do any change. So anyways, I hope we continue like this. So sorry for the disruption. I wanted to talk a little bit about QVTCI. QVTCI is a not-for-profit entity which was set up in 2021 to enable and accelerate the quantum ecosystem in India. And
can't hear you again. The disruptions are helping making, perhaps everybody is up already, but just in everybody's very clued in. So we can't hear you.
Not sure what's happening because the network seems to be okay at my end, and I'm hearing you very clearly. And I'm actually using a mic which is giving me an indication that everything is fine.
We can hear you now. We can hear you now. Please go ahead. You were talking about QVTCI. Can you share a little bit more about that?
Yes, so we were set up as a not-for-profit in 2021. Point to note is that we set up before the quantum mission was announced. And one of the things that we were involved in initially was advocating for this technology, pointing out how important it is for the nation to be working in this space. Since quantum is not just another technology like AI or blockchain, and those have far-reaching impact as well. But quantum is a new computing revolution. So we are essentially at the beginning of if you can compare this, what is happening in quantum right now to the beginning of the computing revolution. And the quantum technologies provide exponential benefit from a computational perspective, and they help you solve problems which are currently not solvable by classical computers, not just because of challenges in in terms of the compute power, but also because of the nature of complexity involved in certain problems and the fact that classical systems are not set up to deal with complexity classes of that kind. So with that, I will stop here. We are very closely working with many of the groups that are, associated with the National Quantum Mission, and we are involved in several international collaborations as well. So we are, trying to shift the game for quantum in India, acting as a catalyst agency, and also working on international collaborations that could be beneficial for India. Over to you. That became a really long discourse because of the challenges, the tech challenges that we had. Sorry about that.
Long but interesting because knowing more about quantum computing and how it is affecting what we are talking about today, and also the new report that you've brought out, the quantum ecosystem value chain report. I think I have something to ask you, but we'll get to that question later. Sandhya, you've been an MD in some of these, very powerful financial institutions, and now you're also working with equally very well-known organizations that help a lot of startups. One of them is TiE Bangalore, where you're the FinTech chair of the special interest group. And how many startups, may I ask, FinTech startups in the hall today? Okay, so perhaps this answer makes a lot of sense to you. Being in this role, do you feel that there is, there's the bigger institutions that have the network, the muscle, and these whole set of innovators, startups who want to cater to the bigger organizations or to the industry in general? How do you, in your role currently, help leverage or bridge this gap between, what the sector needs and from the people who are actually putting out these wonderful solutions?
I think the role of something like TiE, it could be CII, it could be many others, is how to build the ecosystem. You have the startups. They've got really good ideas on how they can take it to scale. You find people who can kick the tires for them, help them get to market, and then obviously the funding. In that context, if I look at it, I started off with the agri-fintech. Last year, I was doing about 2 events per month. The objective was, can we connect people? For example, one of the sessions was on blockchain internationally, and how does that have a play in the financial sector? We had a number of banks which kind of hosted events for the startups, and therefore the linkage into that, potential opportunities for cross-border activity. As we were doing that, we found that a number of the sessions that we did on agri-fintech related topics started getting more and more people coming in. And now we're setting up a center of excellence with the Karnataka government and working with World Bank, NABARD. So NABARD has the muscle power from an Indian financial perspective. World Bank has huge amount of investment and interest in taking it to scale. They're looking at it in terms of livelihood. They're looking at it in terms of climate. They're looking at it in terms of carbon. They're looking at it in terms of trust principles. And the center of excellence, which we're looking at, is a sandbox. What are the rules, regulations that need to be changed? And you're looking at the data exchange, because the quantum of data that we already have is humongous. Today, the field of agri-tech, agri-fintech is thought of as bottom of the pyramid kind of activity. Reality is, it has to be top of the pyramid. We've got to invert the pyramid. And therefore, this decade is supposed to be the digital agriculture decade. And the information that's in there is huge. So the point that Reena made about quantum computing, you have a number of use cases already being built internationally for the agri life sciences side of things. So we need to get our act together around this topic.
Before I move ahead with a question,
I just share one case study of an startup. That startup, it's cross-border. There are buyers in Abu Dhabi for agri-produce. This entity goes to farmers, not necessarily the big guys, the mid-sized guys, for the quality of produce that they want, agri-products. As soon as they get the produce, they get funding from banks, NBFCs, all kinds of, so that's the financial thing. The farmer gets the money as soon as the produce is there. Then it's cross-border activity. It takes about 2 to 6 weeks for the produce to go to the other side. You have the insurance that's there, and then the payment on the other side. So there is cross-border, there is inventory-based payments, or they produce, there is a collateral against which the payments are made. So it is actually one of the more, it's a small company, but very, very successful within a very short while. So what it tells you is when we were doing this session, we had a Cambridge prof who said, let me show you a small place in Spain, Granada, 70,000 hectares under greenhouse, tomatoes grown there. The price of the seeds of some of those tomatoes is the same price as gold.
Wow.
So when you're thinking about agri-produce and the like of it, if you're looking at, again, the large funds associated with bamboo and sustainability, huge amount of money, you're talking billions. So the potential is not just within the Indian landscape of retail activity, but there's a whole range of things which is out there, and India is very well positioned to take advantage of it. We just need to look at the larger global landscape around some of these things.
Thank you. Very lovely examples, to emulate from. Before we move to our next questions, because there were only 2 hands that came up, may I ask both of you gentlemen what your startups are focused on, just to make this a little more interactive. I know I'm breaking protocol here, but since, sir, you, I think, raised your hand there. Okay, okay. And I think you raised your hand. Did you? No? Okay. Okay, thank you. Thank you for the answer. Reena, coming to you now. You can hear me, right? You can hear me.
Yes, I can. Yeah.
Okay. So AI is not new in the financial sector, but there has been this massive explosion of generative AI in the last few months or last few years. What do you think is happening here, and what are these technologies? What are they serving? Can you give us, an example or 2 of generative AI?
No, sure. I think, yeah. So, I mean, generative AI, essentially, basically, a stack has been created, which is an AI stack, which is very good in interpreting natural language processing. And also, once you feed it enough data of a certain kind, you can use it for queries. So queries and response format is very well enabled using NLP, advanced NLP techniques, which means that suppose you take it for a bank and you feed all the procedures and processes into the system, right? And then if you have somebody who's actually talking to a customer, providing support for a certain process, the generative AI system can guide them. So that is a good use case of using it. And it's also a very good use case to talk about the concern that you had about technology versus human intervention, about human interaction. So the interaction can still be human and have the human intuition included in that, but the processes and the related correlation that needs to happen, which can be done very quickly by the AI system, could be done using Gen AI and fed to the people who are actually talking to the customers. So you can get the best of both the worlds. You don't make mistakes on critical process aspects. Could be a simple thing. It could be related to what kind of tax rules are applicable, right? If somebody's sending money outside, and there are so many complications in things like that, and it will also speed up interaction. So that is one place where this could be an example. Content synthesis as well. So for example, a lot of research reporting that is required from a banking perspective for, and also in fraud detection and things, where pattern recognition is very important. Using, advanced AI techniques can be very, very useful. And Gen AI can help you manage the interface better by prompting in a much more human-like conversation manner. So I think there are a lot of these techniques. If you'll allow me, I actually also want to talk about why using these advanced techniques is not just from Gen AI perspective, but even from quantum, it becomes very important as we move forward. Sometimes the choice of technology is not really a choice. And I'll tell you in the context of quantum, for example, when we look at technology, we look at competitive advantage. And that is important to do because, you have to survive in the market and you have to be managing things internationally, even in the banking sector. But then in the case of quantum, we also are aware, very deeply aware of the fact that all encryption technologies that exist today will become obsolete as soon as we have a scalable quantum computer. So the world across is actually preparing this new generation of algorithms and are testing and piloting, especially banks outside are testing and piloting all these technologies in their existing context. That's the conversation myself and Sandhya ji have been having with the regulators, trying to push them and say, this is not day after tomorrow's problem. It is actually yesterday's problem. And let us all get down to start solving it today. Because see, if you look at the Indian economy, we are such a digital economy, especially from a financial perspective. Last year, reports show that we had more than 350 million payment users, and this number is growing asymptotically. It is not reducing, and which is a good thing. It's a good thing for our economy. But then the more digital you are, the more you are subject to all these challenges. So I think evaluating these new technologies early on, especially for the BFSI sector, is extremely, extremely important. You can't say, no, I'll look at it tomorrow. Let me look at AI because that's the general trend right now. Look at AI as well, but you need to look at quantum.
Very nice.
Can I just add to what Reena said? I think one of the papers that we were kind of trying to pull together is we've actually spoken to IFSC, which is in Gift City, Gujarat. And one of the things they have done is both for the AI and the quantum frameworks. It's one of the first regulators to put in place. So when they're talking to all the international frameworks, they're already talking about this because it is absolutely vital. You have a digitalized economy in India. That means somebody who has, they can crack this. RSA security standards, in theory, cannot be easily cracked within the existing frameworks. But if somebody already has a quantum computer, and there are countries which claim that they do have really massive capability already, potential for cracking it is already in place. That's what Reena was saying. It's a risk for today. But as the frameworks start evolving, we need to have it for both the current level of digitalization, type of digitalization, but also for the future. And the financial sector has to be on top of it, because our segment, like the airlines, like the healthcare, is going to be seriously impacted. And we have to think about it at a national level, which most of the Western countries have got very strong frameworks around. They're building that.
Actually, what Reena said and what you said, goes very beautifully into my next question. In the last 2 weeks, we've seen a lot of finance and fintech companies being in the news, and not exactly for the greatest of reasons. There was a mutual fund which is still still in news, and there was another a fintech platform where a customer just his post went viral because he was venting out what he went through. So you spoke about challenges, Reena, and you also spoke about this whole where it's becoming more and more important for this sector to use quantum computing, and also, but all of this leading to how are we in a area where cybersecurity and fraud, prevention of fraud is so important to the sector. How are we using all these technologies? Can you give us a few examples so that it's easier to relate?
Let me just start with the first principles. We have to talk about anti-financial crime.
Okay.
Fraud is only one component of it. And with the level of digitalization, you have an anonymity of who is probably doing it. We were in the think tank that I am in, we're working on a paper on cyber laundering, not money laundering alone, but how do you leverage or understand the implications? You don't know who's coming in and doing it. You don't know it happens so fast.
Yeah.
And by the time you detect it, most of your systems are not geared for that. Right. So your technology in most large institutions, including startups, don't have that kind of capability to understand intrusion and the kind of pen testing that we need to do. So keeping that in mind, fraud is usually in collusion with somebody. But the speed at which it happens, whether it's with the kind of the crypto thing that was there in the German news a couple of days back, to a whole range of things. So I won't just place the fraud part, but the speed at which technology works and the national borders which get breached. So the recent one in Singapore, which was there in the news, where a few people from one country were money laundering drug money from the Americas. And it's fascinating how this whole thing works. And the reason why we need to think about it is there is so much of cross-border activity. And if any of you are interested in doing international activity, it is worthwhile keeping track of this.
Okay. Reena, you can't hear you.
I said, can I just add to that a little bit?
Next time,
can I add?
I have to correct you. No, I can't hear you yet.
So I don't know.
Yes, we can hear you now. Yes.
Okay. So what I was saying was that I think irrespective of the technology that we use, I think technology can definitely help us solve these problems. And sometimes technology becomes an enabler if it is not implemented correctly. But at the same time, there is no substitute for governance, ethics, and processes, right? And regulations. And the second, so this is on one side. On the other side is customer awareness. So as technology advances and we start adapting more and more technology and more complicated technologies, are the customers keeping up? I think that's a big question to ask. If I look from the consumer perspective, one of the frauds that has been happening around is like the DHL or FedEx fraud, right? Which has been in the news largely. I actually got a call from, I got that call as well. And what I was surprised by is the sophistication of that call. Because I'm a tech person, I mean, I'm on the cybersecurity side also, right? And I'm looking at that call and I'm like, the only reason why I understood that the call was fake initially was because he talked about indexing what to my technical mind was indexing on name. And you never index on name, you index on a number, which could be like your phone number and so on. And what he said meant that he was indexing on my name. And I was like, doesn't sound right, right? But what I'm trying to tell you is that crime especially cybercrime has become such a lucrative business that it is no longer happening because two people decide to, do a fraud. It is happening as an organized crime. So it is very sophisticated, and therefore it becomes very important that processes and the right entities are involved in the conversation. Are we educating our normal bank employee about all of this to the level of detail that it should be done? I would question that. Similarly, how much of this is reaching the end consumers? Again, I would question that. There are so many times I have a conversation with a bank employee, and I'm having a more technical conversation with them, and I'm wondering why they don't understand what I'm talking about. And I'm not saying technical is in terms of technical jargons, but in terms of the kind of questions they should be asking me and not asking me. So these kind of things which are bordering around governance and what is needed to be known at each level and each tier of the organization, I think that also requires a very strong, upheaval in my sense, and a lot more focus on training and education has to be brought in.
Thank you. And please don't mute yourself, because there's just about a minute left, and I definitely want to do my rapid fire with both of you. So I'm headed straight into it. There's no Karan Johar voucher or anything, the goodie bag or anything here, but I hope, because your answers are important to us. So one absolutely, and this is for both of you. So Sandhya first, one absolutely digestible fintech newsletter that you cannot miss every day or every week.
The Google Feeds.
Google Feeds?
Yeah.
Okay. You, Reena?
Yeah, I go to Google as well for my news in the morning.
Okay. What is the need of the hour in fintech? Is it the front-ending customer-centric solutions, or is it the more analysis-based back-end tech?
I think there's a lot of opportunity in all of this, but I would like India to look at, the Indian fintechs to look at what can we build like another SWIFT for de-dollarization?
Okay.
What can we build in the context of the carbon markets? Those are spaces of the future, because you're also looking at the sustainability element. So that means you're trying to play to the global market, not just for the India market or the retail market.
Okay. Reena, your answer?
I want them to digitally transform to post-quantum secure algorithms at the earliest. That's my first priority project for all the banking sector.
Super. One area or one function in fintech that can never be lost to machines. What do you think is that?
I'm actually the other way around. I think anything can be done by them.
Is it? Okay. And you, Reena?
The customer interaction part.
One area or one function in fintech that can never be lost to machines.
Customer interaction.
Okay. Two funky job titles, a connected question. Two funky job titles that you see created in the foreseeable future.
Chief Thought Integrator.
Sorry, Chief Thought
Integrator. So I call a thought integrator as a person who has a pretty broad spectrum of expertise across multiple areas with depth in one or two areas. Yeah.
Okay. And you?
I don't like titles.
Okay, fantastic. A book on fintech, Reena, that you loved reading?
So not a book on fintech, but a book related to finance, Psychology of Money by Morgan Housel. So I think that's a pretty interesting book. Everybody should read it.
Yeah.
Actually, the one which I really liked was by Stephen Hopp, which was on the German retail market, threats and opportunities because of the fintech world. I think that appealed to me because it was quite interesting the way they had analyzed it.
Okay. And since both of you are authors, a little more philosophical question, though it's rapid fire, but if you can make it quick, one life lesson that you would want our audience to take away from this session, from all that your rich experiences. Reena?
I'll let Sandhya you go first on that. I'm thinking.
Do whatever you want, and don't be kind of bothered by others telling you not to do it. If you believe in it, just go for it. Nobody will think that I have any knowledge of quantum, but I can learn enough to be an advocate for the quantum field.
Reena?
Be kind always.
Lovely. Thank you to both of you. Devika, all yours. Amar, yes.
Thank you so much. I think they deserve a huge round of applause. Post-launch session, never easy. They made it so insightful, interesting, and thank you so much. for Reena Dayal Yadav ma'am for joining us virtually, and thank you to the fantastic two ladies. I quickly request, gentlemen from CAMS Spencer, we have Mr. Tejinder Singh, the Chief Executive Officer, to join us on stage to present the ladies with a small gratification we have from our gifting partners clinically, and they deserve a big round of applause. Everybody put your hands together one more time. For a session chair as well. All right, ladies and gentlemen, now we segue to the next bit, and this is the second keynote address of the day right here. And to present this and talk to us, we have the Director STPI on empowering fintech innovation. Could we have a huge round of applause? Let's take this opportunity welcoming Shri Subodh Sachin to please join us right here. A huge round of applause to the gentleman. As fintech continues to reshape the financial landscape, the emerging technologies presents unprecedented opportunities for innovation, inclusion, and efficiency. I think we need to put our hands together a little more louder. Come on, everybody. Once again, presenting to you the keynote address number 2 right here by Shri Subodh Sachin. Good afternoon, sir. Pleasure to have you. All yours.
Well, very good afternoon to everyone. Wonderful session. I think I really enjoyed the session earlier by the ladies, and I think great discussion around. Once again, afternoon. I'm honored to be on the this particular event this time. It's of Businessworld's 4th edition Festival of Fintech. And I think on a keynote side, though I'm probably to touch upon the fintech innovation in India. But since I come from the government, I do a lot of work with the digital infrastructure. I do a lot of work with startups and ecosystem. I'll try to share some insight around that. I think we all know, and I think we are sitting in this room for the Festival of Fintech. We all know very well that the past decade, has been the great technological progress has happened. The innovations around the fintech have been happening at the forefront of everything, whatever we are doing, right? It has changed the way we look into things, the way we interact with our ecosystem right now. I think the rapid digitalization, which earlier session talked about, and the focus on the customer, changing customer preferences and solutions around that. I think there is a lot which is, as a government, as a regulator, as the ecosystem we have been able to achieve, right? In the today's modern economy perspective, let's put, in particularly, it's important that, to understand while we have achieved a lot, but these changes have happened because of the foundational journey which happened and which began way back in 2012 and 2013. The foundational journey which I'm talking about is all about the digital public infrastructure, which we call within the government. I think the focus around the digital public infrastructure, the focus around the ensuring that everybody, who's citizen of India has an access to the bandwidth, has an access to be connected with the ecosystem through their smartphones and to the connectivity. But more important is what they can really achieve with that. And I think the game changer has been the advent of what we call as the digital identity, because for any digital transformation to happen, I think that there are 3 key pillars which are very important. The first pillar is being the identity, the second pillar being the data exchange, which was touched upon in the previous session. And the third pillar is all about what you can do in terms of the interactions on those infrastructure. I think as a country, we have achieved a humongous feat in terms of the digital identity platform which we have built. And again, a lot of this was built by somebody who led from this particular city. And I think Nandan Nilekani, we should salute him in terms of his vision, what he actually did in terms of not just creating a platform, which is now seen as the platform of the world, platform of the future, because it has been able to bring in 1.3 billion people on the identity aspect, right? And it's not just the identity part which has been enabled, but the services on top of that. And I think the services which we have seen so far in terms of the the infrastructure, which is in the form of know your customers, for example. It's able to prove my identity with a very easier way of accessing it. And that has resulted in the transformation in which the payment infrastructure has really happened. I think what happened in 2016 with the unified payment interfaces is as a game changer in terms of what we look forward right now, right? It's game changer because we are sitting in the, when we are sitting today, we are witnessing a huge amount of digital transaction in the form of digital payments, right? And I think if I go back with the numbers which happened in May, we've already touched 450 million digital transactions on a daily basis. There's a huge amount of transactions which are happening, and we are not very far that we will probably, the next 2 years will be a 1 billion digital payment transactions will be very easily possible. And it's just about the amount and transactions which are happening, but the value of transaction is also going up. And the reason the value of transaction has already touched almost 66,000 crore on a daily basis. Now, for the 5 seconds which I've just spoken on digital payment, there have been almost 25,000 transactions has already happened. Probably few crores of money has already transferred. And that's the power which we have as a country we have built in. And this power, what we have built has been possible again. But I think what is more important to celebrate is the whole story of the India Stack. India Stack is not just about enabling payments, but India Stack is also now enabling the data exchange, right? I think an Ayushman mission which has happened within the government itself, there is a huge amount of data exchanges happening in terms of the health information, health data, which is exchanging from very easily from a provider of the health services to the person who needs his who needs to access his own advices, for example, right? And just not the health infrastructure, we are already sitting where we have seen the open network for digital commerce, and the ONDC itself is going to be a game changer. It is already operational in so many cities. It has opened up the e-commerce sector like anything, because now it's very easy to participation from each and every player, and that's possible because we are building the ecosystem, building the infrastructure which can serve billions of people. And that's what is happening. And I think sooner or later we have already shown the progress from the account aggregator platform. We have shown the progress from the from the OCEN platform. I think all these are the ones where a lot of the decade has seen the demonstration of what is possible, but the next decade actually will be more focused in terms of what new innovations can really happen. If we specifically talk about, from the fact that, the fintech ecosystem, it's not about just the platforms which in the form of the digital public infrastructure, but also the advent of technology has led to many solutions which were probably hitherto not known earlier. And when I talk about solution, it's important to keep in mind frame that the solutions which are available for masses. For example, right now, I think wealth management was a very, very niche service which were only available to very few. But with the use of technology today, with the use of a lot of startups which have come in the space of robo-advisory, I think wealth management as a service has been enabled to lot many people and the masses of when you talk about, right? But we also need to ensure, I think one of the angles which were touched upon previously, when you talk about so much of data exchange, there is a requirement of trust and efficiency, and how the trust and efficiency can be built in together. And I think within STPI, we also look into, and within the Ministry of Electronics and IT, we also look into how do we support various startup ecosystem which are working across these technology spectrum, for example, right? We have a center of entrepreneurship which is focused on blockchain. And the reason why we are focused on blockchain, because blockchain brings in such transformative power to enable such trust. And it is not around the digital infrastructure or the payment infrastructure or within the fintech ecosystem, but across everywhere. The example which was quoted earlier in terms of what can happen in the agri-finance space, right? But imagine the trust which is, when that particular trust of farm produce, happening somewhere in India, being sold outside somewhere in, a Middle East, right? The trust part of what is actually being produced and what is being sold I think the trust part will be enabled much more and much efficiently with the advent of the blockchain and the use of blockchain, right? I think in terms of very specifically of the innovations which we have seen and why we are seeing this is such a huge amount of transactions which are happening is because of some small, innovations as well. And I would like to talk about one particular innovation which actually happened within India and again built on Aadhaar stack, which was called as Aadhaar enabled payment system, right? The power of AEPS is basically to reach out to the people who are not yet connected through their smartphones or through the banking ecosystem, right? Now, through AEPS, it's so easy right now from a government perspective. For example, if you want to send out the money to people sitting somewhere in far-flung village area who doesn't have an access through smartphones, right? And through APS, he can actually receive the credits and can take out the credits as well, right? So that's something innovation which has happened. And that's when we talk about, the real innovation, because the real innovation is all about, for the innovation which can actually go to the bottom of the pyramid, right? And I think if we talk about from the fact that what can further happen, I think there is, the next decade, for example, right? Next decade, again, a lot of things around the next decade will happen when we look into what we can do together. I think the digital public infrastructure is a real example of what can be built collaboratively. It was not built within an ecosystem within the government. It was built with the financial institutions together. It was built with the customers being the primary focus. It was built on top of the banking ecosystem, which already enabled multiple accounts to millions of accounts to millions of people already, right? So I think when we look into collaboration and we look into the partnerships, that's when we probably will be able to bring in a lot of new changes and a lot of new innovations. One of the things which we need to also think about, I think if this particular trend of the last decade did not happen, right? I think today we are hailing. I think the funding ecosystem is all about talking about the various companies around the quick commerce, the ride-hailing companies, or a pure play delivery of company startups. I think all of these companies have been the beneficiary of what has really happened within the digital payment infrastructure and digitalization in particular, right? But let me also tell you, a lot of digital payment infrastructure on its own is nothing if these startups or these entrepreneurs would not have innovated. The speed in which things have actually happened is because it goes mutually, right? Whatever is being built today, unless that was exploited by the innovators and entrepreneurs, it was not easily possible to see the transformation journey which we have seen in India. Today, India as a country, we are already, in terms of digital transaction, we are world leader. I think in terms of transaction, in terms of value as well as volume, we are the leaders there. I think we are far ahead from, let's say, China or US to any other middle income countries or low income countries, for example, right? And but what we look forward also, I think the next decade, when we look into the last decade, which is primarily being seen as a hyper growth decade, especially in the fintech, right? For the next decade, it's important, and that's what we also tell a lot of startups and entrepreneurs. The next decade is not about just the hyper growth. It's also about the slow and steady growth, but the growth which is built around the sustainability, the growth which is built on the value creation. And I think that is very important for all of us to understand, all of your entrepreneurs to understand. When we look forward the next decade, we look forward the innovations which we build. We are not running behind just the growth parameters. We are not behind just the numbers, but we are also building a sustainable business on its own, because the money, especially the funding money, is not going to be easily coming on your way. What is also important, and again, this we take it from just not the fintech industry, but we look around everywhere. I think we need to understand the decade has been known for innovation, and hence the culture of innovation has to be kept still in mind. The culture of having a team which is flexible enough, because the curve of technology changes very, very fast. And unless you are continuously innovating, continuously on top of the technology hype and technology curve, it's going to be probably difficult at some point of time to keep on to maintain the momentum in which you're already there. Again, I think this is just small examples. Within the fintech space, for example, right? I think it's again, when we compare the fintech industry today with the traditional banking ecosystem, the gap is still very, very huge. But the next couple of years, I think next 5 years, if I'm not wrong, a lot of big four companies are talking about that the fintech industry in particular, right, will grow at least 3 times faster than the traditional banking sector. And when it grows 3 times faster, then you can imagine the opportunity which is still lying ahead. A lot of things have been achieved. but there's still a lot of opportunity which is way ahead for each one of you. I think the tailwinds which we are witnessing right now are tailwinds which are clearly signs of further growth in the fintech ecosystem. I think last but not the least, when we within the government now talk about Viksit Bharat mission, we talk about the vision of being developed country by 2047. It's important that this vision, and especially this vision of developed country or developed nation, is not possible unless we are able to think of solutions which can bring in financial stability to everyone. When I mean everyone, I mean 1.4 billion people altogether. And financial stability actually means the social security element, health, access to health to everyone, probably access to insurance for everyone. I think that's what we're looking forward to. These are the the areas in which we as a country we still need to innovate, and we look forward to the entrepreneurial ecosystem, because this is the ecosystem which has actually has given a lot of solutions in past, and I'm sure this will happen. STPI, and especially the Ministry of Electronics and IT, through its own tech startup ecosystem initiative, we're also an ecosystem player. We heard in the previous session, there are a lot of ecosystem players, and with STPI and MIT being the pan-India STPI ecosystem for the tech startups, we look forward and support 1,000+ startups as I speak today, and I lead that initiatives within STPI. We have built in multiple centers of entrepreneurships, which are focused on bringing excellences out in the space like fintech, in the space like agri-tech, in the space like mobility or e-mobility in particular, right? Or exploiting the solutions around the AI or blockchain or machine learning. I think if any one of you looking forward, then I think STPI will be able to support you. For all, typically we bring in 360-degree support, right from the mentoring to the funding. So we have 1,200 startup portfolio right now. We have invested on 200+ startups as I speak today, and I think this is just the beginning in terms of what together we can achieve. So thank you once again for inviting me here. I know it was a keynote, but the idea was here to meet everyone and learn from the fintech ecosystem. I think the fintech ecosystem is something which we within STPI, within MITI, within the government, we also want to ensure continuously learn and continuously evolve from that. And thank you once again. Thank you for inviting me here.
Thank you so much, sir, and request to stay back with us. It'll be an honor to the gratification from our end for your time and presence. Once again, could I have Ms. Devika Kundu-Sen-Gupta, AGM Conference Production from BW Businessworld, to present this. Again, we have our gifting partner, Clinically, and a round of applause to the gentleman right here, please. And moving forward, ladies and gentlemen, it's time for the fourth panel discussion of the day. And this one's extremely interesting. Insurance for all by 2047. Role of InsurTech's AI, the use of synthetic data in the insurance sector, moderated by Mr. Uday Keth, Vice President of Portfolio Steering Data Science. Could we have the gentleman from Swiss Re Global Business Solutions, Mr. Uday Keth? And the panelists for this fantastic discussion, we have the Chief Business Officer, Insurance, PTM Insurance Broking, Mr. Pranshu Devan, to please join us. And also joining the league, we have Ms. Vaishali Tiwari, Director at Flipkart, to join us right here on stage with a huge round of applause. And also we have the Senior Vice President from Marsh, Mr. Hari Singh, in the house. And also join with me in welcoming Mr. Roshan Jaiswal, CEO and Founder, Insured Mind. And also, let's welcome Associate Partner from IBM. We have Ms. Suranda Paul. And completing the league, we have Ms. Sridhi Sharma Rao, Chief Strategy Officer from Bandhan Life. A big round of applause. Everybody put your hands together as we have one of the most interesting and exciting panel discussion. And it's over to the session chair, Mr. Uday. All right. Check. Ms. could not join us because of the flight delay, but we can put our hands together for the panelists and for the session chair we have right here. Let's kick start. All yours.
Hello. Yeah. Thank you so much for that. And it's been a really great time we've had so far. Very interesting discussions we've had so far. So my name is Uday Keith. I am a data scientist at Swiss Re. And obviously, this topic of synthetic data, AI, generally in the insurance industry is very close to my heart. And I'm very excited to have quite a diverse range of panelists here who occupy different places in the insurance industry. And I'm very excited to talk about what their views are, not just about synthetic data, but about AI in general and its applications in the insurance industry. So, is this better? Yeah, all right, thank you. So I think no secret here, AI has been the buzzword for the past few years, ever since ChatGPT and before that. And as AI's importance has grown, its applications has grown, I think a term that has come up in the last 2 or 3 years has been that of synthetic data. So according to Gartner in 2021, only 1% of all AI models were using synthetic data. According to Gartner, again, that number is expected to go up by 60% in the next few years. IDC had a similar report for the insurance industry, where they claim that 40% of all the data used in AI models in insurance is going to be about synthetic data. So I think the hypothesis is this, is that on one side, we have AI models that are growing at such a pace that real data cannot keep up with them, right? And we have a need for this other data. At the same side, there's also this concern for privacy, because we want to make sure that our data or our customers' data is not used to train these models and some of these secrets are not disclosed and overall their privacy is maintained. So I think first, I mean, as we go on, the first thing I would like to ask is, what is your conception of synthetic data and AI more generally in the insurance industry? And if you can start by just introducing yourself and what your role is, and starting with that, and then have some more interesting questions to follow up.
Hi, I'm Pranshu. I lead insurance at Paytm Insurance Broking. So synthetic data is obviously artificially created data that is used to train models. 2 ways of training: you get real world samples or you get artificially created samples. It makes it easier to train models, and honestly, synthetic data has been a part and parcel of any model that you train, especially when you don't have access to real world data. It is also used for something called transfer learning. So I have a fraud investigator who knows this is a fraud and this is not a fraud. So you create artificial data sets to train a model so that you don't need to wait for that. So any pre-trained model would use that, and so on.
Hi, everyone. This is Vaishali. I'm head of the business InsurTech at Flipkart. My POV on the synthetic data or the AI/ML model is the dependency as a distributor that I have in terms of differently creating the pricing barriers or the pricing discounts, rewarding the good risk and loading the other risk appropriately. That's number one. And number two is that there is an extent to which a real data can be modeled, and there is also price to this particular data. So synthetic makes all these use cases possible for us, and that's where it is. Thank you.
Good afternoon, everyone. My name is Hari Singh. I work with a company called Marsh India, which is an insurance broking firm, which is also into risk management, and we support any large multinational or Indian corporates for that. For me, synthetic data is a form of curated data, which take help of, say, AI or any algorithm, computer algorithm, and use this data for various scenario analysis. And yeah, the synthetic data has the characteristic of all the characteristic of the real data. One good thing or one advantage we have is this: it has a data privacy factor, right? So we can mask those personal identifiable information and then use it for various scenario analysis.
Good afternoon, everyone. This is Roshan Jaiswal, CEO and co-founder of Insured Mind. unlike most of the guys, I am very new to this space in India. I just moved back to India after being in US for 18 years, but running the insurance startup for last 6 years in US. So, it's very interesting to learn and understand the contrast of US space with the Indian market. And in terms of synthetic data, as we were just talking near the pool out there, and I present mostly around the broker side of the business. So, the data becomes way more personal, and it's the privacy is a lot more prominent over there rather than at a carrier level where it's at a much more higher scale. So privacy becomes a much bigger issue, and so if we are leveraging a lot of clients' data, it creates a bias and it creates undue advantage for other players who have not created. So that hypothesis of what Uday was talking about is so relevant. And I think that this, it is just the tip of the iceberg of this conversation, which is starting to, so such a relevant topic right now, which will become a flavor, and, more and more conversation will start to tip off from here. So here we go.
Hello, everyone. Good afternoon. I'm Sunanda Pal. I'm from IBM, and I lead the IBM insurance consulting team from India. Okay. So I think by now, all of us know what synthetic data is, right? We have heard about 4 or 5 definitions. Let me put it this way, that, synthetic data has been in existence for many years, right? If I give you 2 examples, maybe you would be able to relate. Like, say, musical synthesizers, right? And flight simulations, right? That has been existing from many, many years, and those are nothing but synthetic data. So why are we talking about it now? Because, generative AI has changed the entire paradigm of how we look at synthetic data, right? So if I have to define synthetic data, it would go like, it's artificially annotated data, which is generated by the computer, right, through some simulation or through some algorithm. And with the help of the Gen AI models, that has opened up a lot of opportunities. And we will specifically be talking about the fintech market and the insurance space, right? But we'll wait for Uday to ask us the interesting questions before we proceed further.
Thank you so much. So there's a lot to dig about synthetic data. And maybe I would like to start with you, Hari. I think as a broker, Marsh sits at a very interesting point where a lot of use cases are observed. So can you provide some examples of synthetic data and insurance, and what are some of the opportunities and risks that you see?
Okay. So it will be difficult for me to name certain tools which my organization uses, but in my experience, I have seen there are a couple of areas where synthetic data or AI is being used. One is risk modeling, right? I'll give you an example of, say, a climate risk model or supply chain risk. So these are emerging risks. Very rarely you will find data available with insurance companies or reinsurance companies and all, or as well as a broker like us. So obviously the use of synthetic data is there to create a lot of simulations about different scenarios in terms of what is the impact or severity or a frequency of a particular loss happening because of climate risk. Similarly with the supply chain. Second, I feel is most of the consulting firms, they use a tool like benchmarking, right? So advisor, when I go and meet a client, obviously I have to suggest something, right? Now I use the tool, right, to advise my client, what kind of limit they should buy, what kind of deductible they should have in an insurance policy. Now, behind all these tools, right, obviously you will find a lot of data analysis, which are generated either through AI tool or predictive modeling and things like that. The other area which I see is obviously product development in insurance firms, as well as pricing a product, right? Imagine you are developing a product for a SME client or SME segment, right? What kind of buying behavior they have, what kind of losses they are incurring, right? What kind of pricing they should, they are ready to pay, right? All these things, right? It's very important that we should do some scenario analysis using some data points in those sectors. Obviously, insurance company will have some data, but then augment the data, make it bigger, and create different scenarios, and then develop those product and price, which is really acceptable to. And last but not least is claim handling and or claim assessment, I would say, and fraud control, right? This is where I think with these various scenarios using synthetic data, you can set up a process which can identify the fraud, right? So I think these are few of the points which I feel where there's a huge use of synthetic data.
I definitely resonate with that a lot. At Swiss Re, we are thinking along similar thoughts. How can we safely generate synthetic data? Where can we use it? But a big topic in synthetic data or AI generally is what are the risks? What are the challenges? We've all seen horror stories about ChatGPT hallucinating, doing this and that. So if I could put you on the spot, what do you think are some of the challenges we can expect with this synthetic data?
Challenges, if I see, one is obviously the reliability. I can sense that when we say that it is synthetic, right? So obviously, it comes into mind that it is artificially created. So how reliable is, how it is connected with the real world scenario is one of the biggest challenge which we see that. Second, I can relate is, again, see, in insurance, we always say that, human element is very important, right? We say that it's a relationship-driven business, right? So if I come to you and if I know you, you will buy the insurance policy. But when we see or take a cue of in synthetic data, this element is missing, right? I have come across a lot of scenarios where we go out of the policy terms condition and insurance companies have settled claim. So we call it as a business call, right? Now it is purely out of business relationship, right? Second, non-standard claim settlements, right? So some information you have not provided, but insurer is ready to pay the claim. Now these elements, the nuances of the real world, I feel will miss in the synthetic data. I don't know how these elements can be clubbed there, but even though all the characteristic of the real data gets captured in synthetic data, but yeah, few nuances like this will always have a challenge. Yeah.
So I think it's important to keep in mind that synthetic data is only there to support AI. So the main story here is AI, right? And the analytics space. So I think with that in mind, maybe I would like to ask Pranshu, how does AI and ML help an aggregator, a broker like Paytm, who's a relatively new entrant in this space here? What has the AI journey been like there?
Right. So insurance fundamentally has two sides, right? So you have the demand side, wherein you create a product, you figure out how to market to people and how do you distribute it. And the other side is the risk side, right? How do you figure out what pricing, how do you underwrite people, how do you adjudicate claims, and then get back people into the renewal loop and essentially get a lot of people in the pool. And especially when you want to expand insurance by 2047 to all of India, you need a lot more of things that work at scale, right? So the risk side applications are obviously far more evolved, starting from dynamic pricing. So I could have different pricing for different risk cohorts of customers through models that are trained on synthetic data and not on real world, but so that there is no discrimination or bias, but it still solves the problem of being able to distribute different form factors of policies, constructing products that otherwise wouldn't have been available at those low costs, using other alternative data sources and ML models that train it. Claim adjudication at scale, again, is a very, very strong application of AI/ML. Wherein by reading hospital record, understanding what is there, figuring out what rule engine what to adjudicate, whether to give a claim, not give a claim, how much to deduct, and so on and so forth. All of that can be trained on ML models, which are essentially learning from humans that are now doing the adjudication, eventually allows it to happen at scale. And on the demand side, which is where obviously as a distributor, far more relevant for us, in essentially understanding response propensity to certain products, in tailoring our marketing communication depending on the cohort of the customer. So a young customer and an old customer and someone with a chronic disease might all get health insurance, but the targeting and what is relevant for me as a customer might change. And that is what AI, ML, generative AI more importantly can do at scale. A lot of the renewals in understanding who's going to churn, who's not going to churn, getting people who are more likely to churn to have, say, a telecall or an even more advanced system, and others just a push notification might do. And therefore, again, bringing down the cost of essentially operating insurance, thereby bringing down the premium. I think these are the two sides of how AI/ML could help a distributor like us to essentially reach out to all of India.
Thanks for that. I think it's really cool to hear how even a company that has such a digital pedigree like Paytm is expanding that pedigree into areas of insurance and new initiatives it has. So since I'm a data scientist and a geek, technical details are my favorite thing. So with that, I would like to go to Sananda, who works at IBM. Sananda, could you shed some light on, coming back to synthetic data, what are some of the key methods and technologies that we can use to try and generate high quality synthetic data?
How about now? Yeah. So since I mentioned about synthetic data existed long before, right? So let me start off with the methods which used to exist earlier. So data masking and things like that, like most of us are aware of it. So anonymous data and pseudonymous data. So they were encoders, decoders. Those were, the means to use different kind of synthetic data, right? It was still very near to the real data, but we use data masking techniques so that we could mask the personal identifiable PIIs and PHIs and all of that, right? But that was not foolproof because these methods use certain tokens which could still be kind of, if you wanted to, you could decode and get back to the original data. That was one of the flaws that existed with certain kind of encoders, right? Now, with the current synthetic data generation that we are talking about, using generative AI models, like the models that most of us are aware of, GPT-like models, which are generative pre-trained transformers, right? Or even the GAN models, right? Which I see Uday nodding his head like this because he being a data scientist, he would know these models very well. And these are actually creating that foolproof, data, which will help us secure the data, secure the personal information, and also at the same time, remove some of the biases that can be there in the data, right? So there are different forms of encoder, decoder models, GAN models, variational, auto encoder models. There are instruct, reward kind of models. So all of these are different types of model, but essentially what it will do is, help you build a more secure data, which can be used and exchanged between multiple entities within an ecosystem, right? So the charm of this entire synthetic data generation lies in the fact that it mimics the real data, but it is not the real data. So it still encapsulates, it is encapsulated within some, unidentifiable masking so that it is pretty much secure. And in the days of, GDPR and all of the acts that are in place, the regulatory acts, this is extremely important in the place of fintech for payments, for insurance carriers. So definitely that's what it is, right?
I think you made a very good point about it's not data, it's a proxy. And I think Hari was mentioning about some of the risks we have. So just a follow-up question for you. So do we need to validate these models along different lines? Is it just the accuracy that is important to us when we use synthetic data, or are there more dimensions we need to look at?
Yeah, of course, we would need validation, right? Because ultimately it is built on the real data, right? And if I can take some examples, see, if I talk about health insurance in the context of US markets, right? BMI used to be measured as one of the factors for providing health insurance, and the premiums used to be taken up based on your BMI, right? Now there was a a base error into it, that data, because when we looked at the BMI data, it was primarily a biased data of male, white. So, that kind of a population, it was not a diverse population, right? So obviously that kind of a data will give you, different kind of premiums when you are looking at the diverse population, right? So that's a bias, that's an inbuilt bias. Now, coming back to your point about how does it help using the Gen AI related data? So the insurers need to be conscious about what kind of real data is actually being input in the model to generate the synthetic data, right? If there are biases within that real data, that might get amplified when we generate the synthetic data, right? So the insurers need to be very much cautious about this. There are ways and means like the models that I was talking about, which will help us to fine tune the models and remove those biases, right? So, and at the end of all of this, once the models are ready, definitely you need to, the insurers need to plot the models with the synthetic data, as well as compare it with some real data. That's the validation and the verification that will finally help us, to ensure that it is accurate, it's not hallucinating, or it doesn't have biases, right?
I think that was a really good point, and I think BMI is something we all want to keep private, right? So let's continue to do that. I think taking our head out of the technical aspects, I think now looking at broader opportunities that might become available. I think Roshan, as a CEO, where you have to wear many hats, I think you're quite well placed to answer this question. So how do you think synthetic data or AI in general, since I think we're on the topic of AI, how that can contribute to enhancing customer experience, providing personalized products, and just overall improving the insurance process for a client?
Yeah, but before I answer that, let me just piggyback on what Hari and Sunanda was saying on the nuance and the bias aspect, because I think it's a very interesting aspect. And I have a very relevant example that just happens in the last month. We were working on our AI model and on the deal predictability. And again, just to build some contour around. So in US, as we talk about personal lines and the commercial lines, personal lines are more commoditized. It's a fast moving commodity on home and auto and things like that. So on the deal predictability, or which is new business or renewal, both, it's moving fast. So we are trying to predict what is the win, and can we predict that win? So when we started building the model, fantastic inputs were coming in, and the outcome was fantastic. So again, we did not even think about it. Okay, we are seeing some 80% plus accuracy on those models. We tested it with our current data or even the historic data to see if there is a false positive and things like that. But fantastic outcome. What was the blind spot out of that, the nuance, as we say, is we then tested that data with the loss. There was bias in it, that the bias was on the win side and not on the loss side. And we saw there was a huge spike in the false positive on the loss, which means the model was designed great, but to give you a bias on the win. And, it took us a long time. So, we could have gone, if we would not have thought comprehensive, we would have gone ahead with that model because the model was predicting what we were looking for. And so it's very important that when you are doing things like this, look for those blind spots or think about the things that you're not thinking. And it's very important, and it will expose, as we all being risk managers, is to think about those black swan moment, as we all say. So yeah, that was an interesting scenario that just
Great point.
happened.
Yeah, thank you.
Now coming back to that customer experience, so as my company, which is a CRM on insurance broker side, which means the agencies which is selling insurance in US, that's a huge community again out there. So for them, this is something very new. As we always say, fintech is 10 to 15 years ahead of the curve in terms of technology adoption or everything they have done compared to insurtech. So the guys you're talking about, the common people who are selling insurance, we say our biggest competition is filing cabinets. It's not another technology. So when you are dealing with that kind of an audience, you have to think about, okay, hey, before I take AI to them, I take technology to them. But now you have to leapfrog that and say, okay, how do I package all of this and get them to that point of where that experience? So one of the core of all of that is consolidating that entire experience and communication in one channel, where you are building those sentiment scores, which is coming out of all the communication, email, text, phone calls. You are using NLP to craft all of that into one communication, using generative AI to send those communication and build that entire thing around, okay, hey, what does it take for a customer in any part of the spectrum of being completely non-interested to somebody who is super excited? How do we communicate with each of them with that variability, which is you are trying to customize things at scale? And all that communication through a CRM that you're trying to build so that that experience is built. Because what is one of the biggest challenge in any market is not technology, it is people. Finding the right resource to help is a challenging aspect. So you would not, and so you are trying to replace that. Where you needed 10 resources to manage that customer support team or customer success team, you are trying to reduce that to, you are dividing that by high value, low volume, and then high volume, low value work. And that's what you are trying to, so that's where that whole experience is pushed into AI side with that. In the previous, somebody said, right, what you cannot replace by technology is that human experience. That interaction cannot be changed. So we are trying to build that. Okay, where it cannot be replaced, leave it there. But I think the hypothesis is 80 to 90% can be replaced. So how do we expedite that with this whole AI communication, taking it all in one go and then building around it? It's a journey.
Yeah, maybe just a follow-up question on that. What aspects of the insurance process are we trying to automate or infuse with AI, which you think pose the biggest risk?
So again, I will answer it from the broker side of the business rather than on the carrier or the insurance company. So on the broker side, as we call it, it's a 7-stage process. Any insurance company, end of the day, is humming with this 7 process: lead creation, lead capture, sales funnel, then closing a business, onboarding that client, renewal, and win back. These are the 7 process, end of the day, every agency is following in some form or shape. Now, what you are trying to do is go deeper into each of these verticals and try to build what can be done. So whether it's in lead creation, what we can use in generative AI, how can I find similar to, like in Amazon, right? You buy, or a McDonald's, you buy burger, they're selling you French fries. So what is that basket thinking that you are able to generate? You find like in Marsh, if you guys are selling, you are saying, okay, if you sold this to this, let's say, aeroplane industry, you are selling, hey, what next can you buy to that? Okay. So we are trying to build that. Okay, which is your next customer? How can I feed you that? Same thing as we talked about in a previous piece was in the deal funnel. How are you able to use all the communication aspect and then build that, use that generative AI, predictive analytics, customer sentiments, NLP, all of that, to build that experience around it. And then same thing with the renewals. So each of these segments, whether it's deal creation, whether it's you're closing a deal, whether it's during servicing or renewal, all these aspects are leveraging AI in some form or shape. It's at a variable degrees right now, but I think the journey is very clear where it is heading.
Thank you for that. Yeah, Sunanda, please.
Hello. Yeah. Since Roshan spoke about it from the broker side, I thought from the insurer's standpoint, what we experience with our clients, I just wanted to share that. So one of the areas which is really taking a lot of help of GenAI and also on synthetic data is the claims processing. Right? That's a huge, huge potential where, earlier a lot of time used to be taken to process the data because it consists of processing huge amount of data, and that gets done very easily with GenAI. So definitely that's one of the areas where GenAI is being used by like almost all clients.
Definitely can see the value there. So I think now I would like to kind of ask a question to you, Vaishali. I think working for Flipkart, an e-commerce player, again, very interesting perspective on insurance, interesting perspectives on fraud and risk assessment. So I think what I would want to hear from your point of view is, and not specific to Flipkart, this can be in industry perspective. What ways can synthetic data improve risk assessment and also help with fraud assessment?
Very interesting question, Uday. And I think the entire of synthetic data AI ML model, this is the core of all these models, that how do you rightfully assess the risk, how do you price it, what do you do with the claims processing, and are you on an ongoing basis able to identify the fraudulent claims and are able to flag it out and maybe put it in a different line of process, the way you look at the regular claims versus the ones that are flagged. So let me take a step back and first of all, to the audience, I'm not sure if at all everybody understands in a very simple language that what does synthetic data does in underwriting process. Synthetic data practically breaks down or adds much more details, right? And it makes the entire model much more accurate in terms of risk prediction. And this is majorly done of a business and scale, which means that underwriting is more efficient, and it's a win-win of a situation for the seller of insurance and also for the buyer of insurance, and to a certain extent even to the distributor, because now they are able to rightfully price it and propose that proposition to the customer. Having said that, in an industry like ours, which is like multi-century old, right? Why are we at this junctures, so much intensely discussing about the synthetic data, and specifically in the underwriting context? Many of us from the industry are aware that in the last few years, we've seen a lot of trends on the claims, which are very unprecedented. The way COVID happened and it impacted the industry, the way there is a surge of cyber, I would say, adoption also on multifacets, and also the incidents that are rising, right? The way the natural calamities, or as we call it in India, act of gods, incidents are happening in terms of frequency, and also the kind of impact they are generating. These are the external factors. Now on the behavioral pattern, right? The kind of conversion we've had in terms of behaviors, dependency on the internet. In a very simpler language, I would say 20 years back, we were leading a very offline life. Now we are highly dependent upon technology, and we are kind of leading a hybrid lifestyle, right? Wherein a good part of our everyday routine work and our decision making happens on the internet and the digital devices. So when all these things are happening, the underwriter and the insurance companies, they also are now mandated to think that somewhere they need to move beyond their actuarial real data models, and they need to kind of enrich these data models with many more layers of information, which can give them a wider cohort for the decision making, and maybe price it in a much more crisper manner. So that is what synthetic data in the underwriting is doing, and I'll give you some examples. In India, we know that for a motor product, a vehicle insurance, right, there are two sets of data that are primarily required. One is your make, model, variant, and second is whether you've had a claim in the past or not. Basis these two data points, for anybody who had these data points common would get a predictable premium, right? That this is the XYZ premium that you'll get. Now, as an underwriter or as a distributor, I would want to create some differentiation because I know there are good customers in this cohort and there are not that much, I would say, preferred and non-preferred risk, right? How do I identify that? Can I pull in some additional information? For example, what does my fuel utilization in a month say about my driving risk or vehicle risk? If at all I'm having a higher recharge or a higher utilization of FASTag, does it imply something on my risk rating? And so on and so forth. And, it's all these data points, they need to kind of come together and they're being, considered by the underwriters, and a differentiated, crisper, I would say, discounts or loadings are created, which are much more fair, and it makes sense to the generation now, which is buying all these things online. So that's on the underwriting side. And this is on the price table or the pricing aspect of it. There also comes a part of the underwriting, which means that how flexible are you in onboarding the customers, right? So if at all I have the intelligence to identify that this particular cohort of customer is a good risk for me or for the insurance company, can I dilute my 30-pager proposal form into limited questions, and can I do away with the medical underwriting? Partially, yes. Theoretically, yes. All of us are working in that direction. So all those things are possible with the synthetic data, AI, ML models into the underwriting space, and it'll have a ripple effect. I somehow see this kind of chairman has a vision by 2047, insurance for all. If at all we are able to make the customer onboarding easier for the normal public, which considers insurance as a very complicated buying decision, if at all we're able to give them the right pricing for the products that they're buying, why would the more and more people not get onboarded and the insurance will not become more prevalent? So that's part one. I think I've taken a lot of time. Should I go to the fraudulent? So on the fraud aspect also, I think we need to also understand that who's doing this fraud. To a layman, when we say insurance fraud, what comes to the mind is the customer initiated fraud. But that's not the reality of the insurance fraud. There are wherein the frauds can happen. Frauds can happen. The brokers. Fraud can happen to the people who lead or the TPAs for that matter, right? So all these people become your use case or the data centers from which we need to kind of draw the intelligence from. Second thing is, when does the fraud happen? Fraud can happen during any time of the transaction of the insurance life cycle. It could be at the buying stage, it could be at the service stage, it could be at the claim stage. Now, AI ML model, they employ a lot of analytical intelligence such that they're able to highlight certain trends faster than what we would have done without them. On an ongoing process, on an ongoing basis, kind of, insurance company, the distributors, we are able to optimize our risk such that it doesn't turn bad. That's number one. Number two, it gives us a lot of intelligence also. For example, as a distributor, if at all I'm an online distributor and I want to make my customer journey very simpler, at certain point of time, I will dilute certain guardrails that I should have, in customer onboarding, which at a later life cycle of, my relationship with the carrier will bite me in terms of, adverse claims ratios. So this intelligence come back to the distributor and I'm able to bring guardrails and I'm able to kind of curate the good risk for the carrier back. So these are a few of the use cases that I could identify.
Thank you for that. And I think with just a few minutes left, I would like to ask maybe a philosophical question here, because the title is Insurance by 2047. As a data scientist, sometimes I think my role is very important, but maybe you can humble me. In India, how important or not important is AI to reach this goal of insurance for all by 2047? If anyone has a reaction to that.
So it's a mixed answer, right? So the priority right now is to build products that make sense to the customer, to contextualize it, to vernacularize it, to simplify it, bring down the price, bring down the operating expenses. So AI is a large field, ML is a subset, and then there are many other subsets, are inputs into that larger problem, right? So you can't, so AI ML is not the end state, right? It's an input, it's a tool that you use to get to solve the problem. The problem, as I said, is simplifying products, simplifying underwriting, figuring out frauds, making claims processes seamless, making it like a second that it takes for you to say yes or no to a claim. So that's how I see it. AIML is a tool and not the financial.
So I see synthetic data, playing a great role. Obviously, I think they touched upon product innovation. Now, this is one of the cost-effective method of innovation, right? I don't need to go outside, collect data, do research, right? The cost and the time is huge. Sitting at a system, I can create a lot of models which can throw me so many product innovations, right? And obviously, accordingly, I'll price the product and go to the market, reach out to that respective segment to fill the requirement of insurance.
So again, I'm still into that stage of where I'm enjoying that contrast of US India every day. So again, what is really exciting me about the India story per se, I think again what it has done, as the previous speaker was also talking about, the keynote guy, about the UPI thing and everything that has happened. I am curious to see how India would. So India is certainly behind in the insurance. Like, look at who is sitting here: IBM, Marsh, Swiss. These are all US European company. Where is that Indian? These guys, they are also taking the product from you guys. So that is the first thing I want to see. Insurance company, or whether it's a product company that is coming out of India. So that would be one thing that I would be very curious to see how it comes out. And it does not need to follow a traditional path of just how it has matured, how it can leapfrog to just get ahead of the game. And that would be something, and based on AI, how it can disrupt that whole thing.
Am I audible? So like Roshan talked about, we are far behind from India perspective, right? Compared to the rest of the world. Our insurance, maybe it's about 3 to 4%, maybe, right? Overall in India. But the question was not related to insurance, right? It was more related to AI ML, right? From the technology standpoint, and I completely agree with the person who was talking just before us, the keynote speaker. He talked about the innovation part, right? We are a extremely innovative bunch. If we have to say that, India really, if it just look at all the deepfake related stuff that has already encroached our lives, right? That's on the negative side of things on certain areas, but that's the technology, right? The technology is already there and is being utilized in many ways. It's just for the business to utilize that technology and come up with that same, how do we leapfrog and get to the area by 2047? Where do we go to improve that penetration of insurance from 4% to maybe 40%? We never know, right?
Like you said, we are an innovative bunch, but we are working for others most of the time. And that's what the thing I'm talking about is that India story is how can we make it for India and that's something, anything that comes out of India for India is, again, I'm kind of hyperlooping this, but that's one of the essence. I said this to Hari earlier that hey, I want to see young minds, bright minds like you guys being into the as the regulators, because then you can push things way forward than it is today.
No, for sure. So great insights, and I think we ended on a really wonderful note. Thank you all for your comments. Thank you all for listening, and I think we're up for time. Thank you guys again.
Thank you so much, and we request you to stay back. We just have a small regular formality to do. Ma'am, if you could have you right back with us. And to do the honors, could I have the business head, EMS from Zaggle, Mr. Giridhar Krishnamurthy, to please join me right here. As we have a small token of appreciation from our corner, our gifting partner clinically. Let's welcome Mr. Giridhar Krishnamurthy, business head, EMS from Zaggle right here, one of our esteemed partners for this conclave. And a big round of applause to yet another power-packed, thought-provoking panel discussion. And post this, we request all the panelists to please stay with us for a couple of more minutes. We want you to be with us for this evening. And to our session chair for moderating that and keeping it interesting. Thank you so much. One more time, a huge round of applause to all the panelists and to the moderator. And request you to settle down and please do join us for the next few minutes right here. And now, ladies and gentlemen, moving on to the next panel discussion, yet another interesting topic that we're going to have. But before that, I assume that we need a little more energy in the house. Yeah, it's always nice and entertaining when we have some interaction going on. It should never be one way. Traffic, we need to have both the ways. So even though we're less in number, that doesn't stop us from interacting and having fun and making the most of the day that we have. So quickly, for those who missed out in the morning, we had a very fun game right in the beginning. It was called the collaboration pictogram, wherein we have to just put two words or two different things together. We could find the third perspective. So we're just going to continue with the game. Could we have my slides, please? So old school way, just put your hands up. Come on, it's a nice time to get it ready for the next bit of the sessions coming up. All you need to do is put these two pictures together and tell me what do we get. It's a brand.
Captain Morgan.
I love the enthusiasm, by the way, but yeah, that's also the right answer. Captain, and that's Ian Morgan, captain, the ex-former captain of England. The answer is Captain Morgan. Could we have a round of applause to him, please? Now that you know how to play this, let's move on quick. Next question. This should be an easy giveaway. Wow, I like the energy there. Johnny Walker, is that correct? Yes, it is. Round of applause one more time. This should be easy. Next one. Yeah, of course, Windows 10, we got the answer right away. Let's see if we can get this one. Yeah, this is what happens when you spend too much time on social media. That's right. YouTube is the right answer. And next. Who got that?
Positivity.
Positivity. Put that together. Positivity. And the answer, please. Yes, positivity is always the key, and we need that right now as we are segueing into the final few sessions of the day. So put your hands together as I take this opportunity in welcoming the next panelist and the moderator. Next, we explore blockchain and distributed ledger technology, revolutionizing data integrity and security in fintech. And the panel will be moderated by Mr. Sharat Chandra, founder, Empower Edge Ventures. And it also includes the panelists, Mr. Raktam Singh, Senior Industry Principal, Infosys Finacle. Could we have a round of applause? Come on, let's welcome them on stage with some energy in the house. First up, our moderator, session chair, Mr. Sharat Chandra, founder, Empower Edge Ventures. And joining him as the first panelist, we have Raktam Singh, Mr. Raktam Singh from Infosys Finacle, Senior Industry Principal. And we have Mr. Ravi Chandrasekharan, Senior Director, LTI Mindtree. We also have Ritu Verma, Head, Regulatory Compliance and Governance from Pay Global. Could we have a round of applause as we welcome Ms. Ritu Verma? And we have Aparajit Bhandarkar, Managing Partner, Verenium Next Gen Fund. A big cheer for Mr. Aparajit Bhandarkar, please. And let's also welcome, to complete the league of this particular panel discussion, we have Mr. Deval Singh, Managing Director, Asia Pacific, Altimaco. I hope I got that right. A huge round of applause for all the panelists and for the session chair. Sharat Chandra, sir, please take it forward.
Thank you. Thanks for the introduction. Good evening, everyone. So let me start today's conversation with an anecdote. I have had the unique privilege of being part of all three editions of Festival of Fintech, and I've been constant enough when it comes to talking about blockchain. So we have seen the evolution of blockchain when it comes to hype, skepticism, and finally adoption, what's happening in this year. So let me begin with this context. Let me begin today's conversation and put the first question to Raktim. Raktim, you have written two books, one on digital transformation and another one on Metaverse and Web3, and you have been part of multiple digital transformation projects with respect to banks and financial services. So what's your perspective, how this evolution has happened? How easy or difficult is it when it comes to integrating blockchain with existing systems? Your views on that?
Hello. Yeah, so the blockchain as such started in 1991. Frankly, to me, it was also a discovery that digital ledger, which Mr. Scott and all has done. And of course, it became famous in 2008 after the Bitcoin, and then we have seen. But then we are talking of some 30-odd years of this technology being there. And of course, this technology helps in mainly wherever you have the high value, low volume transactions. That is where it really helps. So, and of course, if there are too many parties, disparate parties are there. If you're using blockchain within your own company for your employees, that's not a good use case. So use case has to be something like high value, low volume, because otherwise it's difficult to get the cost-effective solution. And as I said, like if there are many parties are there which don't trust each other. So yeah, that is the, so like, or they don't know each other. I think that's a better word. So let's say in the trade, that is what is the one use case where we have seen, where exporter, importer, insurance guy, the carrier guy, so many parties are involved and sort of they're sitting across locations. So that is one thing. Apart from that, something on the your identity, so whenever you have done the KYC and stored that data, in the insurance, of course, before our session also people were talking, so that data gets stored. And something more on the digital money with the programmability, though I'll talk of that in the upcoming, in the next few minutes. So yeah.
Thanks, Raktim. Now coming to Ravi, before Mindtree, you were also part of Wipro's blockchain team. How do you see this evolution of adoption of this particular technology? And if you can maybe quote some examples from your recent experience.
Hello. Yeah. First of all, thanks inviting me in the Businessworld team and in the Sharat. Still, I'm practicing blockchain, but in the energy tech. That's a different scenario because the world is moving in terms of how the energy economy is changing. That's going to be changed the entire other set of action related to that. So I could see 4 buckets putting into a blockchain segments are. One is all about in terms of technology. It's all about the digital data registry, what we talked about or we saw in the morning, right? Digital infrastructure in terms of, we call it as digital identity verifiable credentials or KYC or for that matter, which could cover individual organization or devices for that matter. That's the first segment. I see that's a humongous and that's growth standpoint, which would cover across vertical, for example, even retail or retail chains. That's the first area. I could see next area is marketplace. Blockchain segmented in the marketplace is humongous. It's data-driven specifically, regardless to the business industry, but it's a very huge potential in the market in the provider standpoint. Specifically, I could see this happens across country to country level and the industry to industry level. That's another segment. Third is information exchange or trade exchange, where data-driven, I could see decision making in real time. because blockchain provides that kind of capability in real time, assurance and, the data integrity and standpoint. The fourth one is we are all given that payments and settlement in real time. So these are the four buckets I could see, but in where it is getting up is country level blockchains and then government, intergovernment or inter-organization blockchain infrastructure. Like, you are working on various projects. Another area is finance driven, fintech driven blockchain standpoint, particularly which is driving the industry, for example, supply chain markets and then trade finance, those segment of it, right? These are the industrial level blockchain infrastructure, digital infrastructure. Then it should come into the marketplace infrastructure, like, Agri, Mundi, those kind of market. Those are the area where I'm seeing it is waiting who will invest as an infrastructure, because I see blockchain as a digital infrastructure, but it is for it should be provided by some consortium or the facility, and I'm saying it might be used as a pay as you go in tomorrow's model, right? How do you bring the model into that? So these are the segments I see. We are nicely come up in some of the fintech space and in the logistics supply chain space, world level. What is picking up is carbon data, carbon registry, and carbon at a industry level. That might go into individual level also, but we have to wait and watch. So I hope I answered your question.
Yeah. Thanks, Ravi. In fact, I would pick 2 points from your insights. One about the payments piece, and I'll come back to Ritu on that. But coming back to the carbon markets, because now at Gift City we also have a carbon market, voluntary carbon markets committee, and even the government has a certain net zero goal to achieve by 2030. And this is where blockchain has a significant role to play when it comes to verifying those sustainable claims. In fact, RBI Innovation Hub also did a session with a leading institution on how they can use blockchain for verifying sustainability claims. Now, coming back to Ritu. Ritu, you have extensive payment and compliance experience. How do you see the adoption of blockchain technology, especially the central bank digital currency in cross-border segments? And what are the legal challenges and how they can be overcome? Ritu, you're not audible yet. You can.
Hello. Yeah. So I was saying, like, just we heard from you, sir, that blockchain existed since 1991. And it's just that of late we have started talking about it. We are discussing it, and this forum it has become more a topic which is being discussed in the field. So what I believe that there is a gap in terms of existence of the technology versus adoption of that technology, and hence acceptance by a larger ecosystem of blockchain, right? When we talk about CBDC, it's not so much acceptable. Like when you go and discuss this with multiple players, to what extent they do understand. If you talk about this in the traditional financial services ecosystem, to what extent it is acceptable, it is understood that is something which is yet to come. Which is evolving at a very faster pace, I would say. And hence, the infrastructure building around it, the regulatory landscape building around it is very crucial, critical, and awareness of about the same becomes very critical. Because if you look at the financial ecosystem altogether, what we are talking about is all sensitive information, right? Be it KYC, your payment data, transaction data, and not just that, right? When countries are transacting among themselves, so it is all sensitive data which is moving in and out, and people have access to that data via multiple means. So how this technology can be best used in a way to prevent any frauds, which we're discussing about some time back in few of the sessions, like FCC, right? It is one of the known areas, but can we utilize blockchain in financial crime compliance domain, and hence prevent fraud using the upcoming technology or this technology which exists from a very long time.
Thanks, Ritu. Coming back to Aparjit, as an investor, how do you see this technology, and what kind of white spaces do you see? I mean, does it really fit into your key investment theme or focus?
Typically,
Audible? Yeah.
Yeah. So typically, what are three types of, typically people pitch to us to make happen. A large set of people who pitch to us are the guys who are trying to do something in cryptocurrency. As a process from the beginning, 2010, 11, I thought this, yeah, use. So, this thing is a lot of, again, yeah, okay. A lot of things that we see are startups in the cryptocurrency space. That's something that we decided in the beginning that we won't do it because it's not because of Indian regulations, but I personally felt that it looked like a large Ponzi scheme. And that's my view. I've paid for it because at some point, one friend of mine told me to buy BTC at 400. So I have paid a cost for it, but that's a different story. The second is startups who come to pitch to us, which are largely consulting businesses. They advise people and get revenue based on. That's not the business typically VCs invest in. That's typically a partnership business which works well in a big four or sometimes in a large tech startup, tech company like Infosys, Finacle, etc. The third set of startups which are there, which might be investable, is if someone comes to us with a sort of exchange, sort of putting together all the property documents. We've not come and seen many of those startups who've put together where, say, you get the national registry, hope to create a national registry for property or something like that. We have not seen those till now. So we've not funded a single blockchain startup. But my little bit of understanding of this is the technology is expensive. There is no doubt that this is very expensive. It's like you are building 20 servers instead of one server to do the same job largely. So unless the benefits of putting data in 20 different places is significantly outweighs the cost of putting those 20 servers out there, the use of blockchain doesn't make economic sense for the society as a whole. So there are a few use cases where that matters, which Mr. Singh mentioned earlier, that where there are few transactions but high value, like property. But a lot of suggestions do happen where this technology is being sometimes even missold to corporates. There are government of Orissa has set up a 400 crore project, I heard from someone, to do blockchain. I don't know what they're doing in blockchain, but hopefully they're spending money judiciously. So my view is that a lot of money is being spent. I don't know whether some of it is judicious. So those are my few cents. I know it's slightly not mainstream, but that's my view.
Aparajit, since I know you, as a friend, you're known for your contrarian views. But again, coming back to, I will put another question to you on the sustainable finance. And this is where there's a lot of momentum building up on the voluntary carbon marketplaces and blockchain-based carbon credit marketplaces. Do you see this as an investable opportunity and something which startups can look up to in terms of building?
I actually don't know. The problem there is actually not that the underlying technology might be slightly useful, but people figure out how to fudge things and put things together. I mean, at the end, you could put 30 servers and say, someone has put one solar panel somewhere. There's no panel only. People will put some router somewhere and say there's a panel and solar electricity is made. So it's difficult to sort of, because people, as much as the technology is there will have to be verification and audits and checks. So you are doing the same process again, because I am happy to be corrected, because we have an expert in Ravi who is sort of doing some of these projects. But I would suspect that, someone will not install a solar panel and just put a node there and count the credits automatically. And it could happen. You're running a you're running a gas turbine plant and counting it at solar somewhere. You could do that, and there's no way blockchain can sort of solve for that.
because that's my view. Or you'll say I have taken out so much methane and captured something, no work is being done, but there's someone counting and putting it on the tech. So I don't know. So I'm a bit skeptical, but I'm happy to stand corrected, and I hope it works, because we have to capture a lot of carbon and reduce temperatures a bit. So yeah.
Ravi, would you like to chip in?
Can you guys hear me? Yeah. Thanks, really, but no, he really speaks out of his, the experience, right? I have a different thought process and experience I come out of. What I'm saying, it's a disclaimer that, this is not about what I'm working today, but at the same time, I'm exposed to. That's what I can say. In real sense, in India, we don't have a strong regulation. It's it's like I would put it, should have, must have, nice to have, good to have kind of a thing, right? Regulations are in place. Like, you start adopting, for example, we have a PV panel and there is a incentivization, and then there is a loan offering for individuals who wants to do PV. They can go and, but there is no mechanism for incentivizing them that you produce your own this thing, and excess you give it to the grid, because there is no digital infrastructure for that. Similarly, with a carbon standpoint, right? It is just come at the very top 10, 20 industry who are above, at the carbon limit, what they're supposed to. Say they are given target, right? Today, boss, you assimilate and come into. So either you do carbon offsetting in terms of, investing on green energy technologies, or otherwise move towards, forestation kind of other segment and all that stuff. So to say, there are technologies and it is adhered in other point of the world. It is green energy finance is another segment. It is totally talks about every step or every leg of your, carbon capture to reporting, KPI reporting standpoint. The technology is supporting, and it is in real world, it is happening, but it is not, maybe I'm not exposed to in India scenario, but across, some of the European countries, and, these are adhered and followed, in a meticulous manner. Okay. So in that basis only, the every fund being funded to that particular organization. Why? Because you talk about methane. So what we are trying to do is two things. One is methane abatement and carbon abatement, two components. And then it has been cut into 4 areas. Like one is the system, energy system management is all about your, I would say energy efficiency. The second segment is all about yours, low carbonization. Whatever the company, like oil company producing low carbons, it's a, how they reduce a carbon element, lead element in it, right? The third one is decarbonization. I put, this is the third point, right? Whichever I do, it should be. Fourth one is a green energy system. It's fully green energy system. So this is what happening, and it in every leg of it, we have monitoring, managing, data sharing to the ecosystem, and it's been captured. And there are 2-3 standards are there, gold, Vera standards. This been, predictable, and the data here, it is whatever been, deduplication cannot happen in the carbon credit standpoint. So there is a mechanism also available. It's all the path we have to follow, and who are doing it at the bigger industry level, they started, I can say they are, invested on it, and they are in the reporting standpoint today. But how did it evolve? We'll have to see that world, how it is getting evolved. That took some time, sorry.
Yeah. Okay, so for my answer will be, as such, blockchain, the only value you get it, that data what you store in the blockchain cannot be tampered with, cannot be fudged. Okay. So blockchain cannot be the answer for many other things which you rightly pointed it out. But I think the ecosystem with the smart contract, with the oracles, where you can find out whether that condition has happened or no with the smart contract, you can put down the system, and it can happen. And just for your part on the property thing, means last year that in Bangalore Tech Summit also, our minister also said that properties, how do we make sure it has to be from government side, that I agree. And even in today's session, there was a talk of on the same line that how do we store the property data in a secure way? And I think blockchain will be the answer. Having said that, I think one of my big complaint will be, as I said, like it started in 1991, but the blockchain has become too many words like gas fee, fork, mining. So any ordinary person get confused or maybe don't want to talk, like looks like some rocket science going on. And I think that is what has happened. And many of my friends, I told them about, unless we reach to the masses with the common language where they can really relate to it, it will not fly. It's already 30 years and maybe, somebody will talk of course, decentralized finance is there, but you will hear that DeFi, DAO, DApp, there are too many slangs. This need to get simplified. That is what, and I'll just tell you again, it's like a human problem. Before COVID, and okay, now there's a little deviation, but before COVID, I was reading and attending one summit by one of the top 3 analysts, and they said that time the cloud adoption was not there. And the biggest reason was that they're not able to train the staff. And I think when the COVID happens, there was a force by all forces. People learned, and now we are able to relate to the cloud, and people are doing. I'm hoping for the blockchain that should not happen. We should not wait for any natural calamity. But unless we simplify the things and put down, that will not get adopted by the masses. It will keep on be a rocket science. So yeah, that is.
So Rakim, picking from your statements, and I think since you spoke about something which was forced upon us, the cloud adoption by the pandemic. So, and let me link this to CBDC, the India Central Bank Digital Currency Project, where the transactions have come down from 10 lakh to 1 lakh per month. And though this is being mandated by the regulator, yet that option has not happened, right? So this is where I think not only simplification in terms of messaging communication is needed, but also the right use cases which the industry should adopt, and it should actually solve the pertinent pain problems in terms of payments or in terms of lending and others. Deval, I would like to come to you and get your views on, since you have been part of multiple CBDC pilots and projects. What's your view on how do we handle security? Because the more money gets digital, the associated risks of going online also get increased, right? So in terms of blockchain implementation and other fintech applications, how do we handle security and other aspects?
Okay. So first things, when people talk about security, people will say unnecessary kharcha, right? That is the first thing that comes to their mind. Then they say, do I need to do it? So why are banks doing it? Why are some of the people who are adopting it today are 2 people, okay? Where there is a regulation, okay? So there's a data privacy regulation, or there's a PCI regulation. And it's not only regulation, it's regulation which is backed by an audit, which means if you don't comply to it, you'll not get a license. So these are the people who are first adopting security. The second people who are adopting proper cryptographic security are the people who've been victims, okay? Ethereum, Coinbase, when did they adopt it? I mean, I'm part of one of those as well, where we're actually doing work for them. For one of these, I cannot name them. I mean, people say we cannot edit data, which is correct in a blockchain. But do you know we can add data in a blockchain? And 2 New York teenagers held an Ethereum platform to ransom, and they asked for 51% stake on the platform. And they had added data, so the entire thing had become very confusing. So when people get into a situation where they're either facing a loss, or where there's an auditor who's mandated them, or where there's a regulator who's mandated them, this is where people start thinking about security. When we talk, especially in our fintech world, I mean, I'll talk fintech and it will naturally curve towards CBDC, right? I mean, CBDC is at the end of the day, these are algorithms, right? But what does PCI mandate? PCI mandates that the encryption has to be secure, right? The entire algorithm needs to be encrypted. It needs to be secure. Why do they mandate it? Because they don't want any side attacks, any backdoor attacks, any of those channel relays. And then they want all these tokens, which are essentially generated, to be generated within a secure boundary. Because otherwise, what is CBDC, right? I mean, CBDC should technically give you the same experience as cash, right? It can be exchanged as a legal tender anywhere, which means you can go to a phone, You can go to an ATM, you can tap your phone, and 500 rupiah, 1000 rupiah, 2000 rupiah nikalna chahiye. Till that doesn't happen, there is no CBDC which is technically happening because, I mean, you use it at a POS and all that stuff. It's a variant of another UPI transaction, or it could be a variant for another such transaction. But your actual value is when the merchant accepts it, when you can withdraw cash out from an ATM, when a common retailer accepts it and it has the same value as the cash. Obviously, the vision is to go to there, right? And obviously, which is where a lot of countries are at a pilot stage to develop the right mechanism for CBDC, because at the end of the day, you have to block all these multiple backdoors, right? Because when you're creating accessibility, when you're creating openness, how do you create security in all these backdoors? Which is what, the work that a lot of the regulators, a lot of the consultants, a lot of us cybersecurity agencies are prodding in terms, and risk management professionals as well. How do you make it give the consumer confidence and the user a good experience? So this is where at least we see the entire adoption taking place. I would guess it's another couple of years before it kind of looks there. And, and the real base is what you need to see is these large crypto exchanges, right? If you've seen these large crypto exchanges, they're fairly invested in their security aspects in the last couple of years, right? And obviously Japan, for example, is one of the first countries to legalize crypto exchanges as well. Regulation has been passed 4 years ago. And you have proper securitized mandates which are audited by the Japanese central bank, where these parameters are being done. So it's an eventuality which is definitely going to happen, it is going to take place. And today what people are saying is that can I do a secure exchange of tokens or secure exchange of keys in a traceable, identifiable manner, which is completely fraud proof and proof of, and which prevents any attacks. So that's the biggest challenge, at least in the fintech world. And how do you adopt it at a pan-India level or a pan-country level is where actually the world is at. It'll be there in a couple of years before this is happening, but it is for sure happening in a very right manner. And we've seen some excellent pilots, in a true way happening. And then, and this is going on internationally, and whatever RBI has shared in its vision document, this should happen in the next 1.5 years in India as well. So yeah, we are not too far away from experiencing this.
Right. In fact, RBI is one of the recent hackathons. They have put privacy and security when it comes to offline CBDC payments as one of the key problem statements. Let me come to tokenization, because now tokenization is being hailed as the next big step when it comes to capital markets or tokenizing any asset which has value. Larry Fink says that this is going to be, every asset is going to be on chain. But this seems more auspicious, more audacious. And I'll put this to Aparajit, you, and get your views on.
So I wanted to add a little bit to CBDC, and I'm happy to stand corrected. I don't see a difference between CBDC and what Paytm does. It's like saying, I am running on a Maruti car. No, I need to have a 5-star Mercedes. And that's going to cost a lot more, but it's doing the same thing. It'll get you from place A to place B. I'll tell you what my thought on CBDC is. In 1971, Nixon moved out of gold standard. And moved to fiat currency. The US government prints currency. 2008, we found that they were printing a lot of currency, and someone said, this whole currency thing is not looking good to me. I want to create an alternative currency which has got limited circulation. It will be like digital gold. And then some people latched onto it and said, no, this US dollar currency is bad. We will go with this new currency, which will be our new gold, where everything will be linked. Now that currency, unfortunately, if you ask me, has been a miserable failure as a currency. If you want to buy a coffee with BTC, it is not possible. It's $30 to transact $1 worth of BTC. So it's not possible to use that currency to buy coffee or to buy a pair of jeans. So it's useless as a currency. Now, the central banks are feeling this FOMO that, these millennials and these people are basically using this blockchain technology. So they're saying, okay, you come here, I will give you the same blockchain with my currency on top. So then US dollar will be printed with a fiat currency, will be printed, and they're using blockchain. So now it is better. How is it better? The same fiat is being printed by the Fed. Fed is continuing to print. Fed's balance sheet has kept increasing over the last 10 years. Today, if you look at the US balance sheet, it's a triple B country masquerading as a triple A country. I mean, if you look at the US balance sheet and compare it to a Thailand or a Malaysia or a India, Malaysia, Thailand's balance sheet, country balance sheets look far better than a US balance sheet to debt to GDP ratio, to fiscal deficit ratio, to multiple ratios. The US, but that's the reserve currency. So now we are saying no, because the CBDC will come in, things will get better. It is complete hokum, in my view. This whole thing is a project where central banks are making themselves feel happy that I am also giving this boy the same medicine in a different bottle. And that's what's my view on CBDC.
So I'll try to clarify. So I think then this is not normal debate of the difference between UPI, what I can do from UPI, and from CBDC, what is coming. And you're right. So this is a normal thing because, and for the common man, like when you tell him that you can transfer mobile, he's saying, yeah, I'm already doing it. What's the big deal? The UPI is the way of doing the things. That is the thing. And I'll not go to the central bank digital currency, but let's say digital currency. And again, in UPI, as of now, no charges are there. The government has waived out all those charges. Now, whenever those charges comes up, somebody has to pay the bill. That is number one. Second is, I will say digital currency. And you said not central bank. Because with the digital currency, just think of it, you don't have any. And when you add the programmability of that, that is where the real power will come. And let me give example of that. As a parent, many times we may be giving some money to our kids so that they can spend, let's say, in the school. Now you wanted to make sure that they spend on healthy food. Today, of course, where they have put the money by the transaction remarks and all, you can find it out, but it is a little cumbersome. Now think of it, if there was and at the moment, let's think that digital currency is there is a wallet is there. And with the help of oracles, which I've talked of, though I said I don't like the slang, but can't help it. Now, if it can be matched that money can be only spent on the products which have been cataloged as healthy, he can spend only there. Or let's say 50% of that. That is where the power comes. So for the normal, our day-to-day transactions, yeah, sort of it's same. Some charges will come up. Now, the example which I gave, when parents are able to give money and making sure that it gets spent on the healthy food, you are guaranteed. Now, you just zoom it out, government giving money to anybody and making sure that that get spent for the schooling in that area, or for the woman to whatever, to do a computer course or something like that. How do you avoid leakages? Because still there is a way of they disbursing the money, and that money get used by something else, and with the transaction remark or something like that, you will realize that it was not used unless you go deep. Now that is where the power of digital currency will come, but adding with the programmability. If that part is not there, then it's sort of UPI. That I agree.
Just to add, I mean, I used to work for one of the largest currency printer in the world. Okay, the cost of printing, managing, handling currency is so high, and when we compare it with CBDC, it is a fractional of that entire cost. So what people are looking is at the unit economics, and there is somewhere that hope, because hopefully this unit economics will be better when you manage it digitally instead of managing it physically. So this is one of the reasons which is motivating the bankers or the central bankers. The other thing that is also motivating them is, you're partially right. If others can do it, why are we lagging behind, right? Which is also, they want to kind of play a catch-up game, but the primary perspective is to reduce the charges. Another thing why digital currency or a central bank digital currency is important is today any of the wallets don't have any sovereign guarantee. Today your cash has a sovereign guarantee. What is it, a wallet which will be absolved tomorrow? There's no, the biggest plus of this instrument is a sovereign guarantee. It'll be like encashable. It's like a legal tender. Your wallet is not a legal tender. Any of your PTMs, your phone pays, they're not legal tenders. And UPI is just a channel of facilitating that. I'm not debating what you're trying to say. I'm just adding on via central banks doing this.
I'll add a little point. Not that
I'm not, so let's, it's a point on fintech. If we start debating pros and cons of CBDC, I think we'll can keep talking till the cows come home, right? Doesn't make sense.
Aparajit, your closing remarks. Do you see this as an opportunity for maybe people or builders who are creating on-ramps for, let's say, tokenizing bonds, securities, because this is what the governor is saying, that the next step of CBDC project would be tokenizing bonds and securities. Do you see an opportunity there, or something which has a potential for startups to build an investable opportunity?
Actually, I have not thought on those lines, whether there is an opportunity to do that. But as far as CBDC was concerned, I had a few views. We can go into the merits separately, and that can be a little bit of conversation. But the truth is that I have not thought of this. I'm assuming that if Larry Fink is saying that these have to be tokenized, maybe he's obviously managing a few $1 trillion, so he knows a bit more than I do. So I'll just leave it at that.
Even Citi says that Citi has a Citi token service. They also tokenize a private equity fund. So again, maybe we can discuss this sometime later. Ritu, your closing views on the topic, and how do you see the future of this technology?
Like every technology comes up with its own set of challenges, like we were hearing, right? Earlier we had cash. Whenever we used to carry cash, we were always like, okay, thief may take it from us, and then we try to develop measures. Now we have blockchain. We have to build securities around it. That's part and parcel of life. But to my understanding, like the limited understanding which I have about blockchain, definitely it is trying to solve lot of problems. More talking from financial services standpoint, right? When we are talking about KYC, there is zero knowledge proof concept where you can do validation, share data with multiple parties. And in any financial ecosystem, there are multiple parties involved. Like as a fintech, we deal with banks, financial institutions, with the source to validate KYC, etc. Right? And hence we can use this technology in a better way to solve for a problem of KYC validation, sharing, etc. We have simplified contracts and contracts which can be leveraged using blockchain technology, right? And as sir mentioned, even in financial ecosystem, you can have contracts which are based on certain logics and principles. And your customer or a third party will only accept those contracts basis certain conditions, predefined conditions and criterias. So there are multiple use cases of technology within the ecosystem for good. It's just that we need to be more cognizant about the fact that what we are creating around it, and also protecting it via in terms of security and other measures as well.
Thanks, Ritu. Ravi, your closing views.
My point is, I categorize this as H1, H2, H3. H1 is 0 to 2 years and 2 to 4 years. But because of COVID and other scenario, which Horizon has gone along, but adoption state is big because after started, walking that life of blockchain, right? We understood industry blockchain has to catch up more. That gives more of regardless of the tech, energy, tech, fintech, whatever it is coming on the regulatory tech standpoint, those will come faster because adoption of blockchain of various segment will go. So I'm expecting data-driven exchanges, right? That should come so that he will start investing on it immediately because he can monetize it. So then he will say, boss, this is what we should do. So that's what I am going to take as my final comment on this.
Thank you.
Yeah. So, okay, I will go like that. The online commerce in India, for all the overall commerce, what happened, the online percentage is 10% around. Just think of it, of all the Amazons and everything we are. And ONDC's aim is that we should make it in some X number of year to 18 to 20%, because doubling itself will be. So I think that itself tell that what is the scope of there. And one of the skepticism is there that still, of course, UPI is there, but people are not ready to pay. And I think a gentleman rightly pointed out that wallet and all are not legal tenders. So, this legal tender will be a digital currency. And Some of people are afraid. I know many people who have two accounts, one account only I will link, and because money can go away. The whole idea will be that people who still prefer to keep into a wallet a legal tender. That is where the digital currency will come into picture. Do more online commerce. And then I said, whatever the trade type of transactions are there, or wherever the high value, low volume transaction, which is where is going to pay. Coming to tokenization, we have not touched upon it, but yeah, my thought is, of course, it has to happen. But before that, we have to put the proper guardrail. See why UPI and all have picked up in India. Of course, one is the demonetization and COVID. But apart from that, people had that belief that, yeah, it works. But though I know sometimes there are some problems, but people had that guardrails are put, and that's why it was able to take off. Now, for the tokenization, also that confidence has to go. And the earlier thing which I said, blockchain industry or the decentralized ledger industry has to come out with the common terms which common person can understand and relate to it. Too many words of which they are not able to relate, and then they get disenchanted, like what these guys are talking of. Okay, it's not for me. So that is where I see, that is where it will propel this industry. But I see a lot of value in this.
Thank you. Thanks, Raktim. And let me thank all the panelists for sharing their views. We are right bang on time. So with this, I will close today's conversation. But maybe you can have a couple of questions if the time permits. Open to questions if anyone has any. No questions, then maybe we can close the panel. Thank you, everyone.
Thank you, gentlemen. And thank you, ma'am, for being a part of this fantastic panel discussion. And quickly request you to stay back right here with us, as we have a small formality to complete. And to do this, could I have the Chief Business Officer, Mr. Prithvish Ray, to please join us right here? Could we have Mr. Prithvish Ray from Hyperface to please join us? Could we have a round of applause while I welcome the Chief Business Officer, Mr. Prithvish Ray from Hyperface? We have him here. All right, do we have Mr. Siddharth Agarwal, Founder and Managing Director at Mobicule Technologies? All right, okay. So Prithvish Ray, right? Yes. Round of applause. Can we have Mr. Prithvish Ray, Chief Business Officer from Hyperface? Thank you for joining with us on time to do the honors. Again, this is our giving partner, clinically gift hampers given to the panelists and to our session chair. Can we request all the panelists to please join us right here in the front for a group picture? Once again, taking this opportunity to thank the gentleman and the lady in the house. Thank you so much for your time and presence and for all those insights right here at the panel discussion. And a big shout out to the moderator as well. One more time, put your hands together, ladies and gentlemen. And now let's have some energy back in the house as we head towards the next, yet another keynote address. And this time it's going to be by this fantastic gentleman that we have in the house, Mr. Sumnesh Joshi, Deputy Director General, UIDAI, Joint Secretary level, Ministry of Communications, Government of India. It's an absolute pleasure and privilege to have him right here with us. With the biggest round of applause this evening, ladies and gentlemen, put your hands together for Mr. Sumnesh Joshi for his keynote address. Good evening. An absolute pleasure to have you right here with us, sir. All yours.
Very good evening to everyone. Full day session. You have heard by very eminent speakers. And I would like to add some of the thoughts that I have learned from my experience and what is going on in the ecosystem and what is expected in coming years. So, see, that we all know, last 22 years, there's a data explosion and, the growth, the entire world, it's 150,000 times data has grown last 22 years. Maybe other aspect you can see, maybe the mobile, internet, GDP, population, all are not such a scale, but data is generating every day, everywhere. Even here also data is generating by way of clicking the photo, CCTV, we are speaking, phones are hearing, so lots of data. So in this, and then in our country, if you see the digital ecosystem, we have 1.4 billion identity, bank account 1 billion, UPI, of course, drawing wonder, 13 billion transaction, more than 13 billion transaction in a month. Mobile connection, 1.2 billion, and affordable mobile is available. Connectivity, again, 1.2 billion mobiles, right? 900 million broadbands, and now Gram Panchayat, 200,000 Gram Panchayats are well connected with the OFCs, and 5G rollout is underway. So this kind of ecosystem is already there. And, already entities are innovating, and especially in the fintech industry, lots of products are coming, and still many startups are working that how they can give best service to the consumer. And we are reaping the benefit of the GEM Trinity, that Jan Dhan, Aadhaar, and mobile. So this is happening in the ecosystem, and as such, what we are thinking that if we just compare what we are seeing today and 10 years before, it's again, something dream-like that, oh, we never imagined that the shopkeeper or the street vendor or the vegetable person can take the 5 rupees or 10 rupees in the form of the QR code. But now it's happening, right? So this is the benefit of GEM Trinity now. What further, right? Because, technology is going, and advanced technology we are using. Now, what is DPI now? Everyone, maybe there was a session on the DPI also, so everyone know about DPIs, but AIML, and then IoT and the 5G. So now these new technology and many more. Now how we can innovate further to deliver many products that suits to different kind of customers, and we have to create a win-win situation. So entity will also earn something, and customer should be happy that yes, I am getting the best service, right? So how we can do it? And this, I'm not going to go into the details. All the DPIs available that one has to use, because all are ingredients. We can't say that only one ingredient can make service better. We have to use all these ingredients in a proper manner, just like we create a dish in ingredients. So if the chef has made a very good dish and tasty and savory, so like this, we have to create or innovate a product using all these ingredients, so that will serve the customer in a better fashion. And entities will grow and will contribute to the economy of our country. So I straight come to the IoT things, right? The Internet of Things. And maybe as such, IoT term is not as such a new, but why it is new, when the 5G network will come into the place, these devices will communicate directly with the 5G, right? This is how the game is going to change. But as on date, also, IoTs are working with the 4G, if internet is there. So one use case in the banking industry, that is smart ATM and branches. So IoT enabled ATM can provide real-time monitoring of the operational status, maintenance need, and alert. And suppose there's an impact sensor and someone try to stole the ATM altogether. We have heard those type of stories. So that impact sensor immediately alert will go to the concerned person, the police station. So maybe immediate action will be taken. And in the branches, there's CCTV that will act as an IoT sensor, but we have to use, again, coupled with the AI ML, that how many customers are coming and going, and their facial expression, you can find out they are sad, they are neutral, or they are happy, right? On a particular counter, how long they stayed. And so all these, analysis we can do, and we can further improve the services. And real-time data is also coming. So that also we can think that, yes, someone is monitoring. And what will happen in future? The machine will monitor all these things. It's not that someone is just looking at the cameras or continuously looking at the data and taking some decision. But it's all machine-to-machine communication. Machine will take the decision based on the training we have given to the machine. And further, the IoT use in the asset tracking and the management, because banks give loans, insurance, cover is there for various assets. So suppose for the vehicle, someone is given the loan and they want that where this car is going, right? Whether it is in tractor they have given to the farmer, whether actually it is being used for the farming or not. That's all factors using these IoT devices one can do and create more and more product. Maybe, of course, as a consent driven, and maybe you have to design your product that yes, they will allow that yes, you can put the sensor in my asset, right? So for example, the manufacturing industry, right? So all the wear and tear, right? So if those data is coming in the real time, so there's a win-win situation. The company is happy because, the machine will not get breakdown. Only it requires maintenance on the continuous basis based on the data coming through the IoT sensors. And insurance company is also happy that yes, no claim will come, machine is running for next 5 years, 10 years smoothly, right? So we have to, use these IoT sensors for different kind of, scenarios. We have to tailor-made, so whether it's a service or the manufacturing. And you can all the sensor, that location training, condition monitoring, many things we can do based on the sensors. Now, risk management, because it is one of the critical area in the BFSI sector. So, for example, in the digital vault and locker, etc., where people put the valuable documents also, and sometimes we heard the stories that maybe there's a fire or there's some moistures and some contamination in the locker itself, right? So those sensors can monitor the environmental condition in the storage facilities, and we can give yes, our digital lockers or the vaults are IoT enabled, so you can take the risk and you can there's no risk as such, so you can put your documents in the vault. And of course, the surveillance camera, IoT enabled security, that's real-time monitoring. Now, customer experience that I already explained, that analyze the consumer behavior, right? And wearable devices. Now, everyone is having the electronic gadget. So it's a mobile, now it's a form of the gadget. Maybe it's a watch or anything else in future. So those type of data will come. So that will continuously, how, and if it's linked with the banking application, so we can find out how you are investing or doing the expenditure, where are you going, which shop you are going more. And so all the data will come, and based on that, product can be designed. And insurance, I explained that all this tracking of the vehicles, etc. And again, using the IoT, they can see the behavior of the driver also, or how he is driving the vehicle, right? So depending on all these parameters, one can weigh and give the insurance premium. And maybe if someone is good, so maybe the discount will be given, on the insurance package. And all IoT data we can use for real-time risk assessment, claim management, and proactive customer service. Maybe, so sometimes when we think that I require a particular product or service, so now machines, because machines will have your own data, right? So even they can predict that, okay, you require a loan, right? And this is the best rate. Or maybe you are having the surplus money for the next 6 months, you can invest in a particular product and get good return. So all these things proactively, someone will come and actually I'm in need, and someone will come and say, boss, you require this, and I have completed all the formalities. And actually we are in a paperless, presence-less, cashless environment. So there's no need of form filling. It's just e-sign and that's it. So, and supply chain management, see, you can see, so bank can use this data for the cash flow management and to reduce the transaction cost. And in the IoT sensor, truck inventory level, shipment condition. So all, if related with the sensor, this data is very useful. So in the coming time, IoT devices will be used everywhere and the data will come. So of course, we have to ensure the security of the data and with respect to privacy also, we have to safeguard. And it is helping in the compliance and the regulatory requirement also. So that you can see, so for example, in the data center, you have to maintain a particular set of environment. So that, continuously real-time monitoring. So one can ensure that compliance and audit trail, proof of compliance, security protocol, and the data protection protocol, etc. So, and this, again, I'm repeating, see, agriculture and health and education. So in the social sector also, when we use these IoT sensors. So for example, banks, we can say that, okay, bank is not directly related with the farming, but bank is giving the loan to the farmers for some purpose, right? So if bank can take proactive steps to assist the farmers using the IoT devices to increase farming productivity. So the farmer will earn more, right? Then of course, if he will earn more, he will repay the loan, right? Or maybe he will save. And where he will save? He will save again in a financial product, the bank. So bank, can help using these technology. And as on date, also bank is doing these type of things. When they approach to the state government that, okay, yeah, I need your float, the entire 1,000 crore, but I will design your IT system free of cost. So similarly, for the individual also, if they can work and their business correspondents or the village level entrepreneur, from the banking perspective, they will help the agriculture farmers. So it will really help. Now, in the health insurance also, of course, from the wearable device, you are getting the data. So one can say that, okay, if you are wearing this device and I am allowed to crunch this data, I will give a best product, maybe on the less insurance premium, because I know the entire data of that particular person. But you can couple this with the environmental data also that is coming from the IoT devices, that what kind of geography or maybe pollution level is increasing, right? So all these factors one can take into account and tailor-made the packages. Okay, for example, in Delhi, right, for 3 months, there air pollution. So one can design those type of product. Okay, for 3 months, we are giving this type of insurance depending upon the individual parameters and the environmental parameters. So there's no, one can think, any innovation you can create, so much of the data is coming. And manufacturing, I have already explained, and environmental, and further there's the use of the environmental is that in the risk analysis also, because if the banking fraternity knows that, okay, this area is earthquake prone, or this area, the floods are coming more, in a particular months are coming. So all this data one can, analyze and, weigh the risk. But the caveat is when lots of data is getting generated, right? Of course, it's going to be stored somewhere, right? And someone will own the data also. So that we require data security as well as data privacy. So our Digital Personal Data Protection Act 2023 already been passed, and very soon it's going to be implemented when a date will be announced. So we have to ensure that the kind of architecture we are having to safeguard the data, because we own the data, is in compliance with the DP Act. And we should have a very responsible data collection and usage in this AI-driven digitization manner. See, whatever data you are collecting, it should not be garbage. Because when you use your data to train your AI/ML models, right? So again, the garbage in, garbage out. I always say that the kind of education you give to your child in a formative year, he will become a human according to input you have given. So in your AI/ML tool also, if you give the best input, the best output will come. Otherwise, if you are not giving the trusted data, validated data to train the machine, the output will not be good. So that you have to ensure. And lastly, Government of India is supporting, the entire ecosystem to grow. And they recently, 2 schemes have been announced by Ministry of Communication as a Telecom Technology Development Fund. That one is that from connectivity gaps to smart solutions, to design the 5G network for rural innovation, 5G intelligent villages, 10 villages they have selected. So we can create those innovation and uplift rural community by addressing agriculture, education, healthcare, governance, sustainability. So you can submit your proposal by 31st of July to Ministry of Communication. So funding will be given under the TDF. And similarly, another challenge with respect to security, I will give the example of the Aadhaar, because I worked in the Aadhaar and we collected the biometrics. So at the time of collecting the biometric, we are encrypting with a very high level encryption, right? And there's no, we have not had a single breach of, data breach from the UIDI server. It's a secure one. But people are talking about the quantum computing, that many papers are there, then the quantum computing, all this present, algorithm of the encryption, can be broke, and, so it is in a danger. So we have to think about something new, encryption method. So for that quantum encryption algorithm, again, proposals have been asked from the startups or academics or industries. So that can also be submitted to the Ministry of Communication for the funding. So lastly, I conclude that it's high time we have to innovate using all the DPI, IoT, and the 5G, right? And in the 5G, there's low latency and the high speed. So you can the product quality you can check. So just think about how we can reap the benefit of all these ingredients available in our ecosystem, and we have to ensure the data quality and validation. Whenever you are collecting the data, please ensure data is correctly entered. It's not that someone is writing my name in the Kannada and then someone is translating to the English. So my name Sumanesh becomes Sumanesh. So that's you have to ensure. So please use DPI like digital locker or the XML file available on the Aadhaar website or any other method where you are getting the correct and trusted data. And of course, emphasize on the AI first approach. And finally, again, security and the privacy that one has to ensure. So again, I will say that, yes, we have to serve the customers. Customer is the king. If customer is happy, you are happy, society is happy, and the nation will be happy. So thank you very much.
Thank you so much, sir. Absolute pleasure to have you with us. We request you to stay back. And quickly, could we have Dr. Anurag? Yes, he's right outside. And once again, calling upon the gentleman. And a huge round of applause for that keynote address, ladies and gentlemen. And yet another hamper for his time and presence right here from our gifting partners clinically. And a huge round of applause to him, please. Ladies and gentlemen, as we are inching closer to the evening, segueing to yet another brilliant power-packed panel discussion, and we'll do this quick. And this time it is about bridging innovation and investment, navigating the frontier of big data and fintech. Delving into the evolving landscape of financial technology, the discussion will dissect how emerging technologies such as AI, blockchain, and machine learning are reshaping the financial sector's data landscape. And this will be moderated by the gentleman who took over the stage sometime back, Mr. Sharat Chandra, founder, Empower Edge Ventures. Could we have him back on stage, please? With a huge round of applause one more time. The session chair, Mr. Sharat Chandra. And along with him, the panelists. First up, Mr. Shrikant Patil, Chief Executive Officer and Managing Director, DigiAlley. And also we have Mr. Bhushan Patil, founder and investor, Multiply Ventures. Mr. Vishnu Acharya, partner at Marshot.vc. Could we have a big round of applause? Come on, everybody, keep it coming. And we also have Tessa Thomas, Investments Lead, Corporate Development and Flipkart Ventures at Flipkart. Joining us from Bloom Ventures, an investor, Mr. Joseph Sebastian. We also have Ms. Anuradha Agrawal, General Partner at Dexter Ventures. Mr. Vivek Banka, founder at Gold Teller. And also joining and completing the league of this panel discussion, we have Mr. Shahan Sood, Senior Investment Manager at Javco Asia. A huge round of applause to the panelists right here and to the session chair, as we are all set for the panel discussion to kickstart.
Thank you. Thanks for the introduction. Good evening, everyone. So we have a very esteemed and long panel as well. So I would like to kickstart today's conversation by quoting some numbers from the recent BCG FinTech report, where the report highlighted that by 2030, the fintech market revenue could rise up to 1.2 trillion. And one of the key indicators of that report was embedded in finance will unlock close to $320 billion of worth of revenue worldwide. So with this particular context, I would like to kickstart today's conversation and would like to start with Bhushan, you first, and get your views on how do you see the current investment theme broadly playing out, given the fact that we are already moving into high interest rate environments where the cost of raising capital is going high, and there's a bigger push from investors on startups to move to profitability and do not chase growth at any cost. So your views on that, the entire investment climate with respect to fintech?
Yeah, can you hear me? Okay.
So just to talk, I can talk about VC perspective, I think, because everybody from different fraternity, I think they should definitely contribute, but what possibly investment fraternity is looking at. While I think last, maybe we are in a, I call it as a third era of fintech innovations. We had a BFSI, then we have digitization, where a lot of value created in migrating the traditional plays into digitization. And now is it time to kind of get into fundamentals. But at the same time, there's also opportunity of kind of looking at generational changes which are going to happen, which are, and we call it as more like an India first fintech innovations, which has just started happening. But talking about, I think, two points, what you just said. The first point is what investors are looking at today in the current fintechs, which are, I would say, from zero to, let's say, series A, B's kind of stages, is where, and there are different themes, right? Because fintech is a very vast topic, because there's B2B, B2C, cross-border, there's infra, so everything comes into, but I'll try to give a flavor of things. One definitely is profitability. One, and that's why this is important today is digital fintech industry is almost like 20 years old in India as of now, right? Almost like this, 25 years old for that matter. And now people are started asking, where is the money? And fundamentally, most of the fintechs thrive on a smaller take rates. And at the same time, digitization is playing an important role, but it's still in a single digit or some cases double digit, right? Insurtech, for example, it's still in single digit, etc. So fundamentally, I think that's first important thing. Second one is people are also looking for, do you have an embedded distribution in your innovation? Rather than, would I be taking my money to distribute what your innovation is, right? Is there a fundamentally, the product itself has enough network effect in it? And to some extent, people are finding solutions in either embedded finance or riding on some third-party strategy or going B2B2C kind of models. If you look at last 5 to 7 years, many fintechs are using B2B2C kind of channels, whereas anything before 2015 was B2C, spending lots of monies to kind of get to consumers. That's the second theme. Third theme, I think, definitely from a opportunity cross-border, it's coming big because especially the news, I would say, set of consumers are born global. Everybody today, for example, in this room will have something to be bought with credit card internationally. I think the fourth pocket, coming to the new little bit going further, where we are seeing larger opportunities, India first innovations. Now, when I say India first innovation, is basically if you ask like the entire any product of the BFSI industry and ask, will Gen Z or the next generation consume the product in the same way what, let's say, Gen Alpha or millennials consume? Most of the times the answer is no. Look at the insurance. Would Gen Z look at corporate to give them insurance, or would look at some basically going to some agent or a DSA to buy products like this? Possibly the answers are no. So what we are calling a generational shift kind of place, which is a large pocket where the India-led innovations would come into picture. How the fintech, every fintech product, starting from cross-border, escrow, B2B for that matter, the new age of family office, etc., how they're looking at fintech is going to be a larger opportunity is what I feel. I think the 3-4 pockets I just can talk about from an investment point of view.
Thanks, Bhushan. Thanks for your points. Coming to Vishnu, what are the white spaces do you see, and what are the areas of co-creation and innovation there?
Yeah, I think my co-panelists covered quite a lot of broad macro themes. So, in alignment with a lot of what he said, but let me pick up just a more specific India phenomenon, right? If you just think of infrastructure in India on top of which most fintech is built, I think that in itself has had tremendous pressure in terms of just sustenance, right? If you look at the last 10 years, I think India has scaled faster than any other country in the world in terms of digital transactions, whether that's on payments, whether that's maybe partly digital lending, insurance, and that puts pressure on systems, right? And what's more interesting is that India has had its own unique architecture when you think of UPI or account aggregator frameworks and the like. So I think as this is happening more and more, there's going to be an advent and a need for change. For example, your traditional Vision Plus, which is depended on by most banks, is not going to be as useful as credit on UPI picks up, right? On credit lines on UPI pickup. This is a micro example I'm giving in terms of how a lot of infra will need to go through change. And hence it's a very interesting and exciting time for founders to find those pockets of profit pools and then build for it. So while I think profitability is obviously very important, and also a far-fetched dream for a lot of people. I think it's still very doable because if you take a macro outlook now and see public markets, FS is still one of the largest contributors, right? And as this change happens over the next, say, 5-10 years, I think it's going to be entrepreneurs like the ones here and outside who are going to be building for that change. So generally speaking, I'm personally very excited about infrastructure, whether that's on payments, insurance, lending, and whether it's banks or other financial institutions. So yeah, a lot to see in the next 10 years.
Thanks. Let me come to Trisha now. From a Flipkart standpoint, what are the areas you see investment worthy? I mean, and given the fact that Flipkart is also into lending now in other aspects, insurance, what is the opportunity set for startups there?
It's a slightly interesting view for us, right? So we do a lot of stuff on the B2C fintech side. We do EMI, BNPL, we have a co-brand card that we've launched with Axis. But that's more on the B2C side. So we continue to remain very bullish on whatever we are doing on the B2C side on fintech. We've also been investors, to Vishnu's point, in the infra layer in Hyperface, which is the partner at the event today, in Finbox, because we fundamentally believe that infrastructure will continue to sort of be the pipes that help some of these fintechs, NBFCs sort of scale their businesses, right? So for me personally, I remain bullish across, I think, all the 4-5 pillars in fintech, be it in banking, which is how do you unlock very niche pockets within India that is new to credit customers? How do you sort of underwrite these customers better? In insurance, it could be how do you dynamically price some of these products? In wealth, for example, how do you leverage AI to make it more personalized in terms of how you're advising specific cohorts of customers, right? And even RegTech, you'll see all of these AI ML stacks that we've spoken about earlier in panels. How do you sort of get those to underwrite, risk mitigate, fraud detect, et cetera, better? So I think across the board, we remain very, very bullish on fintech, and it's a large part of where we are spending energies as Flipkart and more broadly as ventures as well.
Great. Let me come to
Joseph.
Joseph, right. I'm not able to get the name right. Yeah, Joseph, from Bloom, Bloom keeps on publishing great content, be it gaming or be it even climate, EVs and all. So from a Bloom standpoint, what are the pockets of opportunity you see with respect to, let's say, gaming for that matter? Gaming was a recent blueprint which came out a couple of days ago. What are views on that?
So from a fintech point of view, I think there'll be three things that we have learned sort of investing in a range of companies, slice settlement to now, right? That probably helps those who are looking to invest or looking to build here. One is that India is a fairly unique market. We celebrate our DPIs, but the flip side of DPIs are that the harsh reality that the incentives that revenue pools generate is somewhat subdued, right? If you give payments for 0 MDR on UPI, which Vishnu will talk a lot about if you want him to, then it'll stymie sort of innovation in payments. Similarly, the revenue pools sort of create innovation, and that is a challenge that founders should really think through while they're building in fintech, right? Because it's highly regulated. So that's the first thing. The second thing is a consumer behavior standpoint. India changes and it doesn't change. By that, what I mean is, we've got a new generation of investors who come into the market. You would expect an overwhelming number of them to, do goal-based investing, invest in mutual funds through very sort of safe means. But if you look at what they invest in, they sort of chase returns, go to the mutual funds that give you the highest returns with that risk. They go buy digital gold, right? Because that was the offline behavior. So it's the offline behavior that sort of moves online. And while in other geographies, what you see is when the economies mature, the basket of assets change, a lot of behavior changes. In India, the same thing happens, but it happens on an online channel. So India changes and it doesn't change. That's, one critical thing to really think about. It's almost like you can look at offline behavior and think, how can you make it more efficient by going online than trying to sort of get the customer to behave differently, right? That's number two. Number three is the the corollary of point number one I mentioned is that because we've got very thin margin pools in most of these businesses, you've got to sort of be more innovative in terms of distribution, and you've got to be more innovative in terms of thinking through what use cases you can look at, right? For example, I was just having this conversation, a few minutes before. In account aggregators, people still haven't figured out how to sort of make a profitable large entity, but you have to look at second order things. You can't think of like a fee income normal business. You kind of have to look at second order things where you're validating people's income, validating people's behavior using account aggregator, and using that as a hook for a product. Similarly, you need to do distribution differently. You need to have more phygital distribution, so on and so forth, right? So India is a very unique market. It doesn't follow the playbook of other economies that have gone through the growth curve, where the financial sector evolves in a certain way. We evolve substantially differently because of DPIs and consumer behavior being different.
Coming to Anuradha, you being an early stage investor, and since there's a lot, the regulatory arbitrage is kind of being squeezed by the regulator. So what kind of opportunities early stage founders look at when it comes to maybe building rails or putting the next billion users online when it comes to commerce in general or fintech in general?
Yeah, so first of all, on your point of investors demanding more profitability from founders, I think it's less about demanding profitability. It's more about not funding up in the air kind of ideas anymore. That's the shift we've seen in investor mindset. And same applies to fintech. And to your point of regulation, I think fintech is one area where no matter where you're operating, you cannot be insulated to regulatory changes. We've seen that across sectors, whether it is across subsegments, whether it is lending or investech. Recently, there's been a lot of heat on investech players trying to position themselves as gamification of investment, right? So I think the regulator is in his own way trying to do the best for the ecosystem, but it does impact a lot of startups. So if you're building in the fintech space, you need to be agile in the sense that regulatory changes are occupational hazard and you have to be prepared for that. At Dexter, the kind of models, the kind of subsegments that really excite us, one thing that I think we as an ecosystem in India still haven't been able to solve for is access. So access both on the consumer lending side as well as on the business lending side, right? So we recently invested in a startup which basically does anchor-based lending, ties up with large distributors and lends to small retailers. It's a very good technique to underwrite loans because these distributors have huge amount of data around the repayments, the schedule of how they purchase from the distributor and how they deploy that, etc. So I think any player trying to build in fintech needs to come up with these innovative models, either around customer acquisition or around underwriting or around like embedded finance, right? We were just talking to a player today, a founder who's trying to build personal lending for Bharat. But he's trying to do it by becoming an embedded player into popular apps that Bharat uses. Even in tier 2, tier 3 cities today, Zomato, and these Zepto, etc., it's still penetrating, but these apps which are popular in these pockets like Myntra or Amazon, how can you be present there when they need a prepaid card, let's say, right? So I think we are excited about those white spaces where the broad challenges are still not been able to, have still not been solved. And founders are trying to take a fresh approach to it rather than going the same way of we'll do Google ads, we'll do FB ads and we'll acquire users and then we'll sell them fintech products. Also, I think embedded finance solves the problem of intimidation that financial products create in the mind of user. Like if you'll approach a consumer and say that I want to send you a loan or you come across as a desperate player and you intimidate the consumer. And if you're present on an app that they already trust. So embedded finance, I think, solves for that challenge. So these are some areas that we are quite excited about.
So from now on, I'd like to focus on, the elephant in the room, the MSME credit finance gap. So it runs into billions. And this is where there's a lot of talk about using disruptive technologies, like say AI-led credit underwriting system. But there's also a lot of, I would say, heat from the regulator in terms of being rational with the AI-based credit models. And this is where I would like to put this question to Shahan and Vivek. What are your views on AI-led credit assessments when it comes to underwriting credit for MSMEs or the NPAs of credit models, right? I mean, there have been reports that the NPAs for AI-based credit underwriting has gone higher. So what are your views? I mean, is it a sustainable thing to do, or what can be done in a better way?
Yeah, my personal view is that the world that we are seeing right now is a slightly exaggerated situation where everything is very hunky-dory. And if you see the data points over the last 3 months, the debt levels in the country is going up. And I interact with a lot of founders as my customers in our financial planning app, plus the family office side. So at this stage, of course, the NPA levels are well under control. But my sense is over the next 2-3 years, there will be a period of time where there will be some credit events which could have a cascading impact. But the bubble will become bigger in my mind over the next 2-3 years because the corporate bond market is expanding very rapidly. With the advent of online bond platforms, SEBI has just released the regulations, and I think people are coming out. A lot of individuals are yet to invest rapidly in bonds, but with the involvement of these platforms, if the equity markets fall at some point of time or become depressed for even a few months, then you would see people flock to these corporate bonds. Unfortunately, there is very little literature on corporate bonds as to how it works. Equity literature is very freely available on media everywhere. But debt investments is something which is very difficult to find, and people have not witnessed. My own personal view is that debt is more riskier than equity. And we have seen in the past with Ireland FS and a lot of other credit events where people lose the entire capital. And my sense is over the next 2-3 years, until we reach this bursting of the bubble, MSME credit will expand a lot. I don't think the NPA situation is bad as of now, but I think the situation will worsen at some point of time. And from an individual perspective or retail perspective, it could be a very new world for people where they will experience big losses on that side. That's on the retail investor side, but on the MSME side, I think cost of capital will surely come down over the next few years as access to capital through individual sources become much stronger.
Right. Shahan, your views on AI-based credit assessments?
I think my panelists has summed it all. So as in, I think this is a long panel. Happy to answer any other question.
Okay, so let me put this in this way. So there's a lot of flight of capital from, let's say, savings to speculation. When I say savings to speculation, there's a dip in savings, but there are people who are flocking to online platforms, as Vivek rightly said, and making investments. So do you see there's an opportunity there as well for startups to help retail investors make the right decisions by using algorithms and other emerging technologies, the use of Gen AI and all?
So I think I'll start off by saying all the sort of key terms that you mentioned in this question. I think if an investor is going after a fad, they've missed the bus. Number two, in terms of retail investors taking financial decisions, I think today investors want convenience, and which is where the embedded play really works out in the India story, because yes, they want to invest, but they also want it gamified. Number three, in terms of guiding Gen Z, as you might call it, I think today's investors far more informed, far more research driven. They might not read a brokerage report in terms of which stock to buy, but I think a digital broker or say gamified sort of stockbroking apps are helping out. As far as investor capital being funneled into such startups, I think there's a clear gray area there as per SEBI. So I think many of the fund structures that are sitting here do have foreign capital, and I think that differs from fund to fund. I hope that answers.
Yes, thank you. Let me come back to MSME piece again, and this is where I will bring Shrikant in. So you have an MSME intelligence platform. How do you see adoption of these tools when it comes to offering credit to MSMEs?
So let me start with, one of the conversations was about we've solved for NPA, right? I mean, there are two types of problems any lender has to solve. One is the NPA problem, and the second is efficiency problem from the growth perspective, right? And most of the lenders are extremely fascinated, and this is the whole journey about public sector bank, private sector bank, NBFCs, and the FinTechs, right? So if you go from right to left, you see that the affinity for solving for NPA is much higher, and then it kind of goes, efficiency goes from right to left, right? That's the focus. But still, nobody is compromising on NPAs, right? And nobody is trying to say, hey, my business model, I'm okay with these NPA, I'll go ahead and do this, right? And I'm not talking about the personal finance, which is the subprime, the smaller 50,000 role. But in the SME segment, largely what you will see that there is a tremendous opportunity. And, just to put the context to the numbers, globally, there is around $10 trillion of gap in the SME, finance, access to finance, underserved or unserved SMEs. And in India, it could be at least $1 trillion, right? And whatever we do in terms of, the capabilities which banks, financial institutions do, we have to draw the line ahead to say, hey, I have solved the NPA problem, right? Which is fantastic. But can I convert it into an efficiency solution, which is also going to give me an opportunity to scale, not just say, hey, I'm very happy with NPA problem, and then most of the stuff is done manually. And, again, there is a trap. I can tell you that we have been, working with some of the SME lenders, even on the fintech side. The cost of just rejecting, so the business rule engine, assuming that 50-60% rejections happen through the business rule engine, the cost of that is 3,000 to 5,000 rupees just to reject. I'm talking about small medium enterprises, not the micro ones. And then when you go further to maybe 1:5 or 1:10 selection, which happens, so the companies which are selected or given loan draw the burden of that, and there's also human cost which comes out. So we need to really solve for efficiency at this stage for the SME lending scenario and growth coming out of that, because there is a huge opportunity which you need to convert. So now how do we solve this, right? I mean, we can't solve this by throwing more people at it, right? Creating more contact centers. We have to take leverage of technology. And, while it sounds, I just want to differentiate the AI, the Gen AI versus, the lot of noise about Gen AI versus the predictive AI. Predictive AI has been here for 25 years, right? I did 20 years ago, more than that, I did my engineering. And then that time I actually did, artificial neural network as one of my projects to predict how much electricity should be generated in one of the regions in India, because electricity could not be stored. So this is not new. Predictive AI is not new, and we should not be scared about it. But we really need to be differentiating between that. Hey, predictive AI can become a co-pilot or an assistant across the life cycle of an SME evaluation journey. Maybe it is in the lead management, where you don't need to put in a lot of effort to eliminate companies. You don't need, when you do credit assessments, you can be more accurate, more detailed about collecting a lot of non-financial alternate data and making decisions on those, because financial data has certain value. Beyond that, it may not help you in decision making. That's what our models say. And then also in portfolio management and collections. So there is tremendous opportunity in terms of building the predictive AI into this journey of lending. And that's the way to solve the problem, because, efficiency problem cannot be solved by just training people on data which they have not seen, and, thousands of parameters which machine can learn. Credit officers cannot learn that, right? That's the trend I see going forward.
Yeah, thanks, Shrikant. Bhushan, coming to you again, what are the opportunities you see, especially on the payment side, right? You spoke about the opportunities on the infrastructure side of the payments. Do you see opportunities on the B2B payment side and cross-border as well for startups?
I think payment, at least domestic, as I think you guys also said here, panelists, the margins are very less and they're getting lower and lower. In fact, most of all that's the whole kainat is saying कि इसको payment होना है, मतलब पैसा लगना नहीं चाहिए, right? So we are going towards almost like zero margin structure on payments, right? So that gives a little bit of a, I would say, challenge to the new founders to find monetization options. Whereas what we feel, there are 2-3 opportunities, again, coming from some payment background, both internationally, from my experience point of view, I think 2 opportunities definitely exist. One is cross-border, that most of us would have cross-border payments in some form, whether it's B2B, whether it's B2C. Every person is here possibly want to have a domain or email address, or if not a Google Drive extended. So there is a payment to be done, right? Or if some kid goes on vacation, something like that. So cross-border definitely is an interesting opportunity. It was always been there. Like, for example, even Indian diaspora, what we see outside. So India to India, rupee to rupee, rupee to multiple currencies, currency globalization. I think there was interesting opportunity. Well, in domestic, we still feel that there are pockets where monetization can be interesting. So payment embedded with, let's say, some kind of a monetization option from the use case itself, right? It could be distribution led, or it could be just, hey, because I can pay for certain, let's say I want to give an advance, right? So don't call it just pure payment. When we say I'm paying a deposit, it has attribution, right? So maybe on the deposit, I can make something different. If I'm paying for advance or to somebody, if I'm paying a deferred payment, if I'm doing a delayed payment, can there be embedded kind of additional monetization options? So I think those 2-3 opportunities exist, but already micro opportunities. Will we create $200 million companies out of it? Possibly not. But good 5-10 million, 20 million value companies can be created, is at least domestically. That's what we look at in payments as of now.
And what are your views on UPI on credit? Because it hasn't taken off the way it should. I mean, all would have expected, right?
So I think that's an interesting subject, and I have a very blunt, frank view on that, right? So most of the, I would say, government, I would say, or umbrella entities, NPCI and umbrella entities, these projects will become successful when somebody puts a distribution capital behind it. So for example, if wallet as an option came in, so Paytm spent a lot of money to kind of get consumers, and then wallet economy happened. Somebody on UPI, PhonePe, and let's say Google Pay, etc., started putting billions to get consumers and then make UPI successful. Just on standalone, it doesn't work out on its own, right? Etc. Not that NPCI didn't launch many other products, right? For example, we had RTGS, IMPS picked by banks, and they made it popular, right? So you need, I think, distribution capital behind these infrastructure components. Otherwise, it becomes very hard. Going back to, I think somebody says account aggregators. So I think, believe me, I think if this statement goes right, account aggregator will be successful when maybe aggregated as a private industry or banks spend at least $500 million or $1 billion, right? Somebody has to create that ecosystem to spend on it. And same thing with UPI on credit, right? I think the concept is very interesting. And embedded credit, I think last session was about how do we get embedded credit in even equipment, for that matter, equipment financing, etc. Interesting subjects. The question is, who is going to put that effort to get that data back to a bank on which bank will start lending? So bank will say, I support UPI credit, but tell me UPI transaction data, which is sitting with, let's say, with PhonePe and Google Pay, etc. Right? So I think that data, once that flywheel starts working, I think it's one is capital issue, and second one is awareness issue, literacy, right? Is a normal consumer here today going to say that, where do I go to? Let's say, for example, if I ask a question today, all of us possibly qualify UPI credit, but where do I go and avail it? There's no avenue immediately right now. RuPay card does it do it, but I don't know where to get a RuPay card. When you ask this question to 90% of population, 10% people know it. So I think democratization of that knowledge, where it is available, And that goes back to capital again. Some private player has to say that I'm doing, and then in fact, interesting startup we are looking, by the way, now, if somebody's doing UPI credit, interesting distribution models, would definitely be interesting to talk to them. Yeah.
Since you spoke about distribution and now let's ONDC is already being hailed as say UPI for e-commerce. I'll put this to Vishnu and maybe Tessa as well. What are the opportunities you see for startups, especially for bringing the next billion online, and how ONDC, especially in the context of credit, right, be it MSME credit or supplier credit, what are the pockets of opportunities there?
Sure. I'll maybe take up part of your last question and this one as well in terms of credit and opportunities. While I'm representing Marshall today, my full-time job is also to head strategy for Razorpay. So fair bit of perspectives on payments. Usually, at least on payments, there's three categories, right? There's either credit, there's convenience, or rewards and loyalty. I think UPI has taken the convenience factor. It cannot get any more easier, right? Like it's 1 or 2 clicks now. But there's still a lot to do on credit, right? Which is your second question. So I think generally speaking, when you think of payments unlock, beyond what's already happening, it is going to largely be driven by credit, whether that's on consumer side or on the business front. So on the consumer side, there's still a lot of unlock options, both online, offline, or now even omni-channel, where the next set of consumers kind of seek credit, whether it's for small or large transactions. And at the back, it needs a fair bit of complex stitching up, right? Whether that's between a brand and a bank, or just a bank or an NBFC, and then typically deploying it at the time of transaction for that unlock of a higher consumption. So I think generally, whether it's credit on UPI, credit card, credit line, or even generally thinking of more EMI options, I think all of those will drive the next few large unlocks on consumption as well as hence digital payments. And I think when you think of B2B, that complexity becomes 10x, right? Because usually in B2B, the business is sitting somewhere in the supply chain, and usually it's a 5 to 10 hop supply chain. And whether it's a retailer, distributor, super distributor, manufacturer, I think each one is using their own systems. And unlike retail, usually you pay later, right? You're already operating on payment terms. And typically to solve for those, whether by anchor-led financing, like someone mentioned, or through other models, I think there's a lot of innovation that can drive growth in that category of credit. So I think any founders building there, I think they'll find opportunity for sure.
Tessa, your views on ONDC and opportunities around credit?
Yeah, so coming to ONDC, I think we've seen some players sort of being built to sort of onboard sellers onto ONDC, right? There are a lot of early stage companies. We've seen a lot of action in the last couple of years. I think a meaningful part of transactions on ONDC, for example, still is with mobility, right? I think about 50-60% lies with mobility. So we're still, I think, yet to see the takeoff on the commerce side so far. But I think there is still space for a more consolidated solution on some of these channels. And to just talk in a little bit detail on that, right? There are players that are sort of helping with onboarding the sellers onto ONDC or any other commerce platforms. And then you see players who come up to sort of help with marketing spend across channels. And then there are also lending players that sort of help with financing B2B on across channels. So I think there is room for more consolidated solution across all of the legs that are involved in commerce. And I think when you're starting to look for those revenue pools, you'll also see some of those players expanding to more than one category. Because I think that's where it'll start to make sense, and then you'll start to see sizable outcomes. I think to get to a 3 to 10 million, it might still be possible to sort of find your niche and start building there. But to scale that from that 10 to a 50 to 100, you'll see, I think, players across the board in fintech sort of expanding categories that they're present in. And that'll continue on ONDC as well.
So continuing on the ONDC itself, if you look at account aggregator, right, the promise and the potential was quite high. But again, we all have witnessed the success of that model. So with ONDC, I mean, are we also moving into the same line, or what kind of incentive models can we build for the right stakeholders? Joseph, would you like to take that?
So my short answer is not every DPI can scale, right? I think UPI was an exception. A lot of things came together beautifully, whether it was demonetization, regulatory push, so on and so forth. And people didn't know what could be, banks didn't know what could be the negative impact of enabling a DPI. But they're much wiser when it comes to AAM, right? So that will have its own challenges in terms of scaling up. And look, I think the thought process that in economics, there's this thing called Say's law, right? Supply creates its own demand. If you just create supply, it's not necessary. That's not true. That's like sort of classical economics. So that the harsh reality is we have to look at problems where there's still sort of deep pools of demand and just trying to build on top of things where, because there's access and supply of these infrastructure, that's where the exciting problems are. I don't agree to that at all. And if you look at the hard problems, I think India has a lot was said about credit. India has a very lopsided credit market, right? If you look at our credit sort of expansion over time, most economies, the single biggest driver of credit creation is mortgages. India's to mortgage to GDP ratio is 10%, right? China has 18%. I think most of the OECD countries are above 50%. US is close to 100%, right? So our credit creation is not driven by securitized credit. Instead, it's by unsecured credit, right? And the hard problems to solve is to go solve for the underwriting of mortgages and the scaling up of mortgage distribution in a digital and effective way. And for that, a lot of regulatory changes might also need to happen. But that's one area, for example. The second I'd say is, reacting to your earlier question on wealth. I think India created access to financial investments before it created access to financial literacy, right? So the hard problem around literacy, how do you solve for that? What's the right way to build literacy into a lot of our financial flows, right? Into a lot of the sort of operational flows and a lot of fintech apps and so on and so forth. That might be interesting. How do you sort of engage on that? So I think there's a lot to be done on the hard problems, which is still underserved. And I'm not so excited about trying to ride the next wave because the new DPI is coming. I think you kind of have to wait. The harsh realities, the biggest beneficiaries of UPI was Walmart, Google, and very well capitalized Paytm, right? So will a really small startup be the best way to engage on a DPI is a question that I haven't fully answered to myself in the affirmative.
One last question on ONDC and open finance, because the next promise of ONDC is they're moving towards open finance, where insurance, mutual funds, and other players are also coming on board. So Anurag, coming to you, I mean, do you see opportunity for startups over there, and do you see that as an investment-worthy pocket?
Before I answer that question, two things I wanted to add. So he talked about financial literacy, and we were just today discussing how a lot of good fintech apps, if you go to the Google Play Store and you look at their ratings and reviews, surprisingly, we all use them, we all trust them, we know they're good quality, but still you'll find a lot of one-star ratings on those apps. And the primary reason, like he pointed out, financial literacy, educating consumers about how this works and what are the problems you can run into, are still missing. And money is such a personal, such a possessive issue for people that even a slight, if things go off just even slightly, people are very quick to voice their opinion on how bad their experience was. So completely resonate with that. On the ONDC piece, we've looked at multiple players in ONDC. Mostly everybody is fledgling startups. There are players who are trying to, like Tessa mentioned, trying to onboard sellers. One interesting player I met in this space told me that everybody's saying we are onboarding sellers. It's okay, you'll onboard sellers. They'll come to ONDC platform. But if they're not getting any transactions happening on ONDC, it's useless, it's worthless. So that particular startup is using his distribution channel to make sure that these people get hyperlocal transactions activated and they start seeing traction and ONDC becomes a platform of choice. But I have my reservations on the approach that he's taking, because a very small player putting so much dollars into distribution at this point, But what I'm trying to say is, I totally agree with Bhushan that for anything to fly off the ground, it needs big dollars behind it. Somebody's huge conviction to build distribution for that. ONDC as a protocol, as a is tremendously, potent. And at least I am extremely positive on it, and I believe that it's only time before it picks up. Like you mentioned rightly, multiple other things open up via ONDC. It's an open, but it's taking off in the next 1 year or 1.5 years or 2 years. It might take 4 years or 5 years, but whenever it picks up, I think it's going to create a revolution.
So we have close to 10 minutes left. We'll open this panel for Q&A. But before I do that, I will put one question on generative AI because it's impossible to conclude any conversation without including generative AI. So there's a lot of buzz and momentum about generative AI. The government is putting huge amount of money in creating same population scale DPI for AI. But do you see a tangible or immediate impact these generative AI startups can create in the fintech sector, especially in the areas of fraud prevention, fraud detection? Vivek, your views on that, and Shahan can come in.
One thing I feel, maybe not on the fraud, maybe I'm not very appropriate to comment on that, but generative AI on InvestTech, I think over the next 5-7 years, will create a big impact on the emotional aspects of it. So for example, right now, if you see someone who's managing money for individuals, they need a human in front of you, especially when markets fall or during bad periods of time. I think generative AI during such periods of time to give an experience closer to a human being is where it'll play a big part. Apart from that, I think in terms of mathematical numbers predicting how the markets will be, my personal belief is that there have been a lot of wizards who have tried to do that, but it's failed. So I don't think generative AI will be any different. But yeah, on the emotional aspects, I think it will play a big part in future where, let's say in a bank or in a InvestTech app, a relationship manager can today manage 100 accounts. In future, with the help of AI, they can manage 500,000 accounts. So that I think will be the big change where the human cost will come down because of this.
I think what will help is more in terms of RegTech, in terms of, because in today's times, all of us get so many calls, which are sort of spams. And regardless of how many times you sort of put them on the block list, they somehow figure a way to reach out to you. So that's a use case which impacts everybody, whether you're top 10%, 1%, as long as you have a mobile device, it'll impact you, right? So I think that's a clear-cut use case. We are seeing a lot of plays which are sort of embedding themselves in the banking infrastructure. And I think that's a use case there. I think retail finance has seen a lot of innovation, but what hasn't is wholesale banking. And we are seeing a lot of plays being built out there, and maybe we can talk about that in the next panel. So yeah. Thank you.
Thank you. So we have close to 8 minutes left, so open for Q&A. If anyone have any questions, please feel free to speak up. Any questions for the panel? If there are no questions, then maybe we can conclude with maybe 1 minute closing remarks from all of you, starting from Vivek.
So my personal belief is that next 5 years, because of account aggregator, and there are certain issues there, I think Joseph mentioned. I think over the next 2-3 years, a lot of these things will get sorted out. 2 big issues in account aggregator. One is the banking systems are not evolved to take on the load which is being put on them. Second is very simple thing like the narration of each transaction. Problem is each bank has different narrations for each expense transaction, etc. So it's very difficult to, the accuracy level of systems to accurately predict the expenses is 60-70% possibly lower to take the exact numbers. But I think these are initial troubles which will get sorted over the next 2-3 years. Over the next 5-10 years, the way all of us invest and borrow, I think will change drastically. And three things because of which it will happen. One is regulatory changes like account aggregator. Second is digitization. And third is the amount of money which is there in people's hands. Structurally, I think the government wants people to spend, which is very clear by the income tax regulations that have come in, where more money is being put in people's hands by the new tax regime. The old tax regime, I think, will be slowly staggered away. So I think very interesting times, next 5-10 years, but very difficult to predict. But yeah, change will be very significant. Thanks.
I wouldn't crystal gaze here, but what I would say is I represent a Japanese fund. Contrarian to investors which are looking for $1 billion outcome, we recognize that there's Bharat and there's India. And it's okay to have a $300 million outcome or a $500 million outcome. And if there are any entrepreneurs in the room, more than happy to chat post this. And we do early stage seed checks all the way to Series A. So happy to chat.
Love the plug he's made here. I'll reiterate my point once again. A lot of access that needs to be solved. AI, ML, any kind of cutting edge technology is just a tool in our hands. How do we solve for the broader problem statements? Using them depends upon us. One quick example, using account aggregator framework, you get so much data. In collections, at least you can determine whether there is a problem of willingness to pay or capability to pay. And you can channelize your collection efforts accordingly. But all those things, again, give you tools to solve problems. Humans are not going anywhere. Technology cannot replace us in the near term. And we just need to use them, put them to the right use.
Yeah, I think a couple of things, right? One, I think I mentioned a lot of the critical pieces around how I think of the Indian market. But I think just in terms of being able to say in AA, there's still potential, right? And these things do tend to have a slow ramp up when there's not, the incentive pools are not deep. But I think the unlock will happen when real innovation comes into the ecosystem. And for real innovation to come in, you need to make the barrier of licensing to get into AA sufficiently low so that you don't need to go get an RI. I mean, you could do it with PFRD license earlier. Now you need an RI license. So I think opening up the field to innovative ideas will require a rethink from a regulatory standpoint in terms of who can come in. And I think one example the other day, I met a company and really thinking of the second order things that AA can unlock and was saying, look, there are these matrimonial websites. Everyone will put their salary as higher than it actually is. So what if you could use AA to do like a little verified badge? That's a uniquely Indian and good solution. And things like that, I think will likely to emerge out of AA. That's what, and I think the easy things are not there, or it'll be taken by the large players. So you've got to look at either second order things, or you have to go after solving the hard problems in the Indian ecosystem, whether that's mortgages, whether that's financial literacy, things like that. And I think that's what is exciting about this, next phase, right? We are on the top of credit cycle. Everything looks good because we're on the top of that cycle. Even the RBI recognized that, and that's why the weights on unsecured has changed, right? And you can lend and everybody's NPA is low. Numbers are all looking great, but good times don't last forever. And so then you kind of have to think of counter-cyclically, when the cycle goes down, what makes sense? If you're on collections tech, if you're on things like that, that's probably what's interesting, right? At the peak of optimism is when you need to start becoming a pessimist.
I think I might have seen that company as well on days. No, but I think fintech obviously has seen a lot of action in the last couple of years, and you've seen some stellar companies sort of come out of the last cycle in fintech, right? I think I'm more excited about the unsexy problems in fintech. And that could mean, to Joseph's point, on the collection side, on the regulatory compliance side, or on the underwriting stack, people doing that differently. So I think that's what we remain more bullish on going forward. And similar to what Shan said, if there are any founders in the group, happy to sort of speak after. Thank you.
I think we have a minute left, so all I'm going to say is I hope the next few fintech IPOs work out. That's about it. But on a serious note, I think while everyone here has actually said regulations have maybe dampened innovation in some sense, I actually believe from a long-term perspective, they've helped. And we'll see the next wave of growth stage fintech companies, not the early stage ones, the growth ones who've actually done a good job in adopting these, who will then sort of build very resilient businesses over the next 5-10 years. And maybe 5 years out, as the folks sit on these chairs, they'll actually look back and say, hey, maybe that was not such a bad call. So looking forward to some of that happening.
Yeah. So quickly, I think one interesting thing about fintech itself, right? Everybody needs money. Everybody wants money. So the opportunity is immense, and it is not going to go away. It might change the form from note to a digital currency or something, but it's everybody's problem or likelihood. So the opportunities are immense. Second, I would touch upon this entire goal of economy, right? What like we call it as Amrut Kal of 2047. Economy go from 3 to 30 trillion dollars. Even if it goes to 10, these are opportunities which people do not get, right? If you look at last 78 years of 8 years of Indian, maybe after independence, this kind of shifts. They don't get a pocket of opportunity when trillions of dollars go 3x, right? And I think touching upon very at a micro level, a lot of this would happen through credit. And I think some of the panelists here definitely said, so credit definitely is going to be a very interesting opportunity across the board in various forms. Second thing I also feel is this entire format changes, right? No, most of the people who are here, most of our kids are not going to go to bank. They are not going to have products the way we have consumed. So there is also a shift which is going to happen. So I think if you look at a lot of these large opportunities, decadal opportunities or millennial opportunities, whatever it is going to be, I think India will offer that pocket to kind of innovate and build new things. And I think if you align with certain policies, etc., it's far and much easier, where the regulators are also going to be more friendly to you versus coming behind if you're going to go a little sideways, right? So that's my couple of points connecting the economy.
So I'll go with what Anuradha said. You know, one of the points was about customer focus, and we really need to make sure that any solutions we are bringing to the market are solving certain type of problems. They are scalable, they are efficiently, you know, there is a business case. So every time we kind of talk to some of the lenders, we basically say, hey, you know, this is the business case, this is the amount of money you'll save, this is the kind of NP you will do. So one thing is very, very important. The second part, I would say that, you know, all of us know that while internet was created and we talk about a lot of DPI, one layer is missing. I don't know who. Can somebody find out? Can somebody tell me what layer is missing in internet? That the trust layer is missing. That, you know, anybody who I connect or any company which I connect to, I cannot simply trust that, right? So that is something we need to solve for. And, you know, it can be, I mean, we don't need blockchain to solve it. You know, by having the right level of intelligence about those companies, we will be able to solve that, right? So the idea is bringing all of these together. And the third one, which is very important, is the regulation. We should not ignore. Today, one of the challenges fintechs are facing, I keep bringing it. I mean, we spent a lot of time in Singapore, but in India, if there is a way for which engaging fintech, and RBI is doing a lot about it, but engaging fintech in a format with fintech know in advance that, you know, hey, this is working, this is not working. So these are the three things I would say would really help us scale up to the next level.
Thanks, Shrikant. In fact, you rightly pointed about the regulatory piece, right? And hopefully the SROs, the self-regulatory organizations, will provide that platform for fintechs to engage with regulators in a more formal and constructive way. So with this, I will conclude today's conversation. Thank you, everyone, and all the panelists for sharing the insights. Thank you.
Thank you so much. It's really not easy to have this panel discussion at this very hour, given that we had a very early morning start. They deserve a huge round of applause, everybody. Thank you so much. And quickly, I would like to call upon the founder and managing director of Mobicule Technologies. Could we have Mr. Siddharth Agarwal to join us? Round of applause. Let's welcome Mr. Siddharth Agarwal. Also, we bring out our gifting partners gift hamper from Clinically to be given away to all the panelists and our session chair. And post this, we request all the panelists to please stick around and be with us right here in the room. The editorial colleagues will take you outside for a video bite. So request everybody to please stay back with us for a couple of more minutes. Right. Quickly, could we have all the panelists to join us at the center for a group picture? All right, once again, requesting everybody to put your hands together for that fantastic panelist and the session chair, the previous panel discussion. And now we segue into the final bit, the last panel discussion of the day. Do we have some energy left? Yes? That's not promising at all. Could I get a big cheer? Do we still have some energy in the house? Could we have everybody put your hands together for yourself for being out here even this late? Come on, everybody, clap it out loud. Clap it out loud one more time. Right here at the 4th edition of Festival of Fintech. Let's segue into the final panel discussion. And to moderate this and to be the session chair, let me have this pleasure in inviting Mr. Prithvi Sinha, Director, Payments Transformation, PwC India, to please join us. And this is going to be about data-driven innovations in payment solutions, unleashing the potential of big data analytics. And the panelists include, first up, we're going to have Mr. Vishal Bhatia, Chief Digital Officer from Canara Bank. He's on his way. Hope he makes it on time. And we also have Mr. Rishabh Sinha, Head Legal Flowbiz, joining us virtually. And also Mr. Koinur Biswas, Head Consumer Business Bharat Pay, Ms. Tanya Nayak, Head Online Payments, Rural by Pine Labs, and also Mr. Aditya Soni, Founder and Chief Executive Officer, Check. And we also have Swastik Nigam, Mr. Swastik Nigam, Founder and Chief Executive Officer at Wine Vista. Could we have a huge round of applause as we welcome them on stage for the final panel discussion? The session chair, one more time, Mr. Prithvi Sinha, Director, Payments Transformation, PwC India. Come on, everybody, put your hands together one more time. And this time it's going to be about data-driven innovations in payment solutions, unleashing the potential of big data and analytics. Over to you, gentlemen and Dean.
Hi, good evening, everyone. The panel is the last for the day, and I am assuming a lot of you are mentally exhausted. We'll try to make it as exciting as possible as the payment space is. To start with, as you can see, our topic is data-driven innovations in the payment space. So we have seen that, financial institutions are using data as an enabler for their business. Data is the new oil, the quantum of data which financial institutions are using, the kind of channels they're using. A lot of it is traditional, social media, alternate data. But payments data adds to this pool, and it helps you with that, again, that added data set to do your analytics and to, for that financial institution to do the cross-selling, customize their products, benchmarking. Also, data, as we have seen, is, in terms of alternate data, if I can say, is that on the credit piece as well, it's directly the credit risk is directly proportional. The credit risk of a consumer is directly proportional to the need for alternative data, right? So we have companies, a large company who used payments as a hook to acquire new customers, right? They use payments data to first sell to the ETB, then payments product to sell to the ETB, then they move to the NTB space, sold their payment products, and with the help of that, they started cross-selling with the help of the payments data, cross-selling the core banking products to the NTB customers as well. We have a recent financial service company also launching a credit underwriting model. It was a 3-dimensional model. Again, so it has again, data insight like credit bureau, also a lot of the sentiments or the confidence from the customer using various social media channels, using various handles, and basis that to see what kind of other transaction data, like you are doing a bill payments using BBPS, which also helps to see what kind of what kind of transactions the customer is doing. So yes, over to my panelists here. Just to start with, Kohinoor, what is your point of view on the topic which we are discussing today?
Hi, everyone. Thanks for having me here. So I think if I kind of look at our business, as in we at BharatPe being one of the main offline aggregators, a large part of our business model is actually based on data, right? So the critical information that we have access to is that for a small merchant, what is his daily transaction level, right? How much business he is doing. And these are businesses who are not getting access to organized finance, right? So that is the important information that we are today leveraging and lending to these businesses, right? So that is like a bread and butter for us, right? But having said that, there are other aspects also that we have to look at in terms of data, and not just how it's driving business, but also in the sense how it can stop leakages in the system, right? So today we are leveraging a huge amount of data to identify frauds, right? Fraud both in terms of at the transaction level, but also in terms of fraudulent merchants who are being set up, right? How we can quickly detect before transactions happen on them, right? We're doing a lot of analytics on that. We are also doing a lot of analytics in terms of how we can leverage AI to do the merchant verification, right? The shop verification, the image sorting, a lot of things that we are doing on that side. Now, while all these aspects are important, we also have to be cognizant of the fact that with the new DPDP guideline coming in, we also have to be very careful of how we take care of this data, because we are either a data fiduciary or a data processor, right? And in our business, we are both. So we have to be very careful on those controls that we are putting in, right? So I think there is tremendous room to grow the businesses with the use of data, as long as we build our solutions in a compliant and regulatory governed way, right?
Thank you. Tanya?
So I'll talk firstly purely from the perspective of payments. And if you think about why we are in the business of payments and why do merchants choose us, I think it would be due to 2 reasons. One reason is that we obviously give the merchants the best checkout experience. We give the merchants the best success rate. And second is that we enable consumers to come to the merchants so that they can obviously spend more and grow their sales. And I think for both of these to be extremely successful, data is a very big enabler for us. Now, payments by itself is highly regulated. And therefore, I would think that even within the realm of regulations, there is a lot that we can do just with the available data as a payments company. So for example, and I'll talk both from the perspective of offline and online, but most importantly, if I'm able to identify a customer at checkout and I'm able to tell the customer, prompt him of the various payment options that he would prefer to pay with. And the options could relate even to a buy now, pay later option. It could relate to a UPI checkout option, whatever be the case. But I have the intelligence to actually prompt him to go to the right type of payment option. That in itself is one part of the success rate puzzle solved. Second, in terms of bringing in more sales, for instance, that can only happen if I have enough data to tell my merchant as to where this customer is likely to shop more. And that's possible because I have so many touch points today, ranging from multiple merchants transacting in a grocery store to an electronics store to a jewelry store. And that intelligence, if I can bring both to the offline and online world, it's very, very powerful for the merchant to also use and start to prompt him for the exact kind of products that we know he would want to buy. So for us to really differentiate within payments, it's an extremely important enabler, and it helps us both in terms of improving success rates, improving authentication, for example, with the whole tokenization regime. How am I able to provide more intelligent data so that the issuer can authenticate better, faster, can even eliminate certain types of authentication, which is more tedious for the user. So I think all of that goes a really long way, and it obviously enables us to provide a really seamless experience to merchants. And I think that differentiates us thanks to the data that we use.
Right. Thank you, Tanya.
Thank you. Good evening, everyone. I would sort of take a stab at this more at an industry level rather than at a company level. The payments industry has been using data for donkey's years. There has actually, what has just happened is that the quality of data has continuously improved and the quantum of data has continuously improved. I think one free advice that I can give that in this world of massive data pools, please do not lose common sense while making decisions. A lot of time when you start hammering data too much, it starts giving you and telling you what you want to listen. I think that's the one piece of assessment that I've seen over the last 20 years of working within the industry. Coming to the topic in specifically as to how will it drive innovation and an explosion. I look at it from three facets. One is there is massive opportunity of earning consumer trust with the right usage of data. That has been one of the biggest limitations of both the payment and financial industry for many, many years. I think how you use data, I think to me, this is going to be one of the biggest use case. Second is core consumer experience enhancement. I think one of the panelists in the earlier panel discussion was talking about the fact that they still continue to get 50 phone calls about asset products which they do not want. To me, even in payments, I would want to use data in terms of what Tanya just alluded to, that our ability on checkout, for example, to seamlessly offer the product that you believe the consumer has the most priority to use. To me, that's the second side. And third, to me, is security and regulatory. Make sure that you use, just an example, correct. When we have a lot of data, then we have a lot of information, and then we push our people to give you a lot of insights. Okay, that's just the general flow. And then somebody will come and tell you that, you know what, this is the massive drop rate which is happening here. And then you start innovating and then start questioning, can I just completely take off this stuff? Correct. Like the whole idea of could we take away the CVV, mandatory CVV entry actually came from the fact that we as an industry saw a lot of drop off, and then Visa and Master came out with solutions where you could do a non-CVV based transaction. Right? That's right usage of data. You identify what are your customer pain points and then go and inject solutions on that. So to me, that builds trust, security, and obviously it is regulatory compliant. I would want to use, and all of the 3 points that I've said, I don't think would have been any different 10 years before. I think just the quality and the output that you can give to your consumers to fundamentally enhance the consumer experience is the big opportunity today.
Yeah, thank you. Swastik.
Thanks. I'm Swastik. I'm the founder of Investor. We are a cross-border financial services firm. We do cross-border payments and offshore investing. I think we have quite a few specialists who have mentioned already. So I'm going to start with actually a founder's journey briefly, right? When there is no data on the 0 to 1 scale. because you start with an intuition of, hey, there's a problem to be solved. And when you're trying to solve the problem, you're not really worrying about the data, you're just trying to acquire customers. And as you mature, you recognize, hey, where are all these bottlenecks, right? Whether you're acquiring customers, whether you continue to engage them, how do you grow revenue pool? How do you, start moving profit pools towards you from whatever the default behavior otherwise was? And that's when the data really starts becoming oil, right? Where we see it then is that at every phase of whether we are acquiring these customers, and that improves the quality of our onboarding when we're thinking about fraud mitigation. And then you have to start compounding the issue because we're not purely in a domestic environment. We're trying to verify a merchant who is doing transactions across borders. And as well as we also service freelancers who are individuals. So we've got to then start building systems for mitigating fraud. And then of course that does need to be extremely sophisticated, because as soon as money moves from one regulatory regime to another, it's been lost, right? Like some of the VCs were looking for great ideas in the last panel. A great idea is to actually invest into fraudsters, because the TAM of that industry is 10 billion plus a year, right? If you could invest in fraudsters, that is. And then for us, the way we look at payments is we're analyzing it at every juncture, all the way to the volumes that we're doing, to a place where that original intuition's now a real-time, data point in terms of live for your sales teams to recognize who you've onboarded, but how well they really did get activated. And that changes the model of how you're acquiring these customers as well. Are you able to retain them? And then there's another issue over there, that is your product not good enough? Why are they not coming back to you at times? Is there an alternative that they're using as well? Or was it possibly a fraudulent issue? And that's where data can't answer those questions. You still need to find ways, you still need to innovate to try to find something else over there. And then, of course, we're also trying to run OKRs, which are investors, which all of us aspire to, right? Reaching higher volume as well. And are you absolutely sure that the new volume that you're going to reach is going to be as honest as possible, right? These are all questions we need to grapple with. So data definitely helps us solve for a lot of these things. But I want to also mention about the things that it doesn't help us solve. And that's where we need to continue innovating and seeing how we can do it. So the way we've come to as a structure is finding and ensuring that every team is able to create a data pool for itself, whether that sits and pulls out information straight from our backend systems which sit on AWS, but someone who is unsophisticated can go and create a new report which is very specific to their job, and ensuring that all of these specific parts in the value chain, all these specific levers that we're trying to use are being addressed well. So it's a slightly different answer, but I wanted to give this perspective as a founder of how you think from a 0 to 1 journey of creating a place where you have only intuition to having real life data as well.
Thank you. Thank you. That was interesting. Rishabh, you are there online, right? You've joined virtually? Oh, you're here. Hi, Rishabh. What's your point of view on the topic?
Hey, hi. Hi, everyone. Sorry, first of all, I couldn't make it to the venue. Some exigencies. Can you hear me well?
1 second, Rishabh. Not able to hear you. 1 minute.
Hello.
I think there's some audio problem. Yeah, Rishabh, can you speak, please?
Yeah. Can you hear me?
Yeah. We can hear you. Loud and clear.
Wonderful.
Yeah.
So first off, sorry for being on a large screen behind all of you instead of on a nice chair next to you. Due to some last minute exigencies, I wasn't able to come to the venue. Heard a lot of very interesting insights from the other panelists. I come here wearing a slightly different hat. I work with a company called Flowbiz, which has had some forays into payments in the past couple of years, but we are primarily an invoicing, billing, accounting software provider for MSMEs. And the kind of data that we get is very transaction level data, purchases, sales, what kind of products are moving. And those kind of data points allow us to build some pretty interesting payment products. So for instance, the last payment product that we had built was a product called Smart Collect, which was solving one of the big collection problems that a lot of MSMEs tend to face. So with software, we were already going about 40% of the way, which was, giving more and more reminders through WhatsApp and, various other means. But if you are able to not just send payment links, but also do reconciliation for some of these businesses, that made a huge difference. So in terms of, how we used our, data points that we internally got, was that when we got a first level of data, which was mostly, like I mentioned, transaction data, then couple that with payments data, we started to see some very interesting relationships between various, merchants, users, and, who they are doing business with, what kind of business are they doing, is it GST business, non-GST business? And then those kind of data points help us to build things like, embedded finance products. So for instance, if somebody is able to do, let's say, 100 rupees worth of business in a month with a particular with a particular merchant, then we were able to build, specific credit products just for that lane, just for those kind of specific use cases where underwriting those kind of businesses and those kind of transactions was a lot simpler, revolving credit kind of facilities. But overall, the other hat that I wear apart from, working is a legal hat. And generally for the payments industry, there is a large problem around, what the new Data Protection Act is going to do to the data pools that most, payment companies have these days. And over there, we are looking at some new vistas and new ways of, how data is being collected. So like in 2017, when, for instance, the GST regime came about, there was a whole huge change in how businesses approached, indirect taxes, how they looked at input credits. Similarly, I think data earlier, which was, sort of like a Wild West in many parts of the world, in terms of, you could gather whatever you wanted and use it the way you pretty much that you liked. There has been a huge change over there. And although there's still a lot of clarity that is yet to come, but things like, a consent and purpose limitation, a general requirement that minimum amount of data needs to be collected, all of these things will sort of bring out new kind of challenges in terms of what kind of data payment companies can collect, how can they use this across different data pools, and what was the purpose for which this data was given. And in general, there will be a lot of requirement for various teams to understand that, how these data pools can interact. So, yeah.
Thanks, Rishabh. So to add to it, since you mentioned embedded finance, and in the last panel also, I think one of the panelists was talking about embedded finance. Just to add a point here, obviously we are talking about how data is helping improve the end consumer more from a retail side. Also, one of the case studies, what I had seen was this was a B2B use case where the financial institution wanted to embed commercial credit card. So, which is again, commercial credit card is an alternate form of, commercial lending. Usually you give working capital lending, you're underwriting the entity and giving a commercial credit card. So they wanted to embed it into an insurance use case. And today they were seeing how to underwrite hospitals and see, what could be the alternate, underwriting ways to give commercial credit card and against the receivables. So what they did is that it's a B2B use case. Insurance companies, so insurance companies were anyway paying to hospitals, right? Hospitals raise those claims and it flows to the insurance companies. They do the analysis and they come back and they pay out. And there's a good 60 to 90 days gap when the world hospital is out of money. So they had access. So the bank embedded their commercial credit card into a platform, and they were having access to the insurance data, and they could see that this is how much the hospitals will end up receiving after that time period. And they could give that temporary credit in the form of a commercial credit card. So that is how hospitals could get access to credit as well. Thanks, Rishabh. Hi, Vishal. So just we were discussing, what is your first, a point of view on the topic, which we are, on the, how data-driven innovations help in the payment space.
It's helping a lot in the topic is relevant, both the data-driven accompanied with AI and ML. That is helping us to leverage customers in the banking, both rural and urban customers, across all the set of customers who don't have credit need, who are not having the credit history itself, how we are able to serve them easily. Plus, set of customers across retail, agri, MSME customers. And this is helping us in going to the areas to provide the digital solutions to the merchants who have not driven. See, what we see in the urban area is different than what we see in the semi-urban and rural. They are, other than QR, they are not used to many solutions. So, but what we are doing in the bank is we do a lot of digital mailer to enable a lot of semi-urban and rural areas. So the solution what we give to IIT, the same solution we are giving to the normal school. How we do it? We have taken a PIN code of our branches. 900, we have 10,000 plus branches. So we through AIML model 900 PIN code, we have taken 2 to 3 kilometer area. And we are able to identify all the school, universities, hospitals, and we are demoing to them the digital solutions other than the QR, what will help them in collection and payment. And that is helping us to bring all the schools and universities which collects manually as of now to collect through this system, because there are multiple advantages. One is all cash collection is happening by the bank. It's a white label solution. It's available in 2 days for them. All the return settlement is taken care. They don't have to worry. They don't have to come to the branch to do reconciliation or cash collection. And many schools are happy to collaborate with us. Every day we get 50 additional schools or universities to participate in this. And the same solution we are implementing in many other merchants and want their life to be easy. End of the day, their life to be easy. Then this is a very relevant topic which is helping us a lot. And हमारे लिए फायदा ये है बैंक के लिए CASA is built up, customers are happy, the stickiness is there, engagement is there, and it helps us a lot.
Thank you, Vishal. So, question for you, Kohinoor, is that so fintechs are nowadays, we were discussing as well that how fintechs are leveraging data to look at new opportunities, how it can impact their business, their bottom line. So for Bharat Pay or for you, what do you think that how alternate data can be leveraged for you? I mean, for your thought or what Bharat Pay is doing.
Yeah. So I think we also kind of talk about alternate data as in anything which is not probably traditional. But I mean, today, if you look at it, I mean, the way I look at alternate data is data which probably is useful, the data elements which are useful purely from a collinearity perspective, right? You may not be able to logically establish a cause and effect, but you do see a trend, right? So these variables become useful when you're building a model, right? But now, if I look at it from lending perspective, right? You would have heard of models which would predict a customer's credit worthiness by looking at whether they're setting an alarm in the morning or not, right? Whether they're calling their home or not, right? So these, I would probably classify these as alternate data because may not have a direct correlation with the actual PD, actual default risk, but does have a correlate, right? So there are a lot of these elements that are there which are being used today. Of course, whenever we do this, we have to be careful that at the end of the day, lending only has two important facets. One is ability to pay, where we try to establish whether the customer has enough means to pay back the loan, and the other is intent to pay. Traditionally, we have been trying to look at bureau, but now we are looking at all these things, right? What additionally we are also trying to do now is that by looking at the payment behavior, trying to understand whether the customer has an intent to pay back or not. Most of the times we leverage payment in the sense that how much spend that customer is doing. So from that, we extrapolate that what would probably be his capability, right? Now, the long-term aim of any analytical solution is to move from being a probabilistic to a deterministic model, right? So when we were trying to determine, looking at a customer's bureau, what his income is, or looking at his payment pattern, what his income is, probably when now with account aggregators coming in, we are getting a more deterministic answer by looking at the actual account statements, right? So yeah, we are using a lot of these things, and probably these will keep evolving as we go. And ideal state for us is that whenever a customer is at a checkout place, I would get to understand whether the customer is looking for a debit or a credit solution, a long-term credit or a short-term credit solution, looking for a discount or a cashback or a reward, and then appropriately in real time giving that solution. Maybe we are still a couple of steps behind. Maybe one day. Yeah.
Yeah, I mean, for example, a simple example that a consumer is doing a lot of transactions or visiting a travel app. So, I mean, go and offer a travel credit card or give a BNPL at the point of sale, or something like that. So next question to you, Tanya. You're heading online payments and you're enabling online payments for offline merchants. So, and you've done a lot of payment, pay by points. So, on the loyalty piece as well. So what do you think, how you have leveraged, again, data to enable online payments for your offline merchants?
So maybe just some context about what Pine Labs does. I mean, we're today present in over 1 million merchant touchpoints. Again, just reiterating what I said earlier, these merchants are present across a plethora of MCC codes, ranging from a grocery to electronics to healthcare, hospitals, hotels. We have over 5 million transactions that happen on us every single day. And that gives us immense consumer insights on, for every merchant, at every merchant category, what they're spending on, where they're spending, when they're spending, who's like what competitors they're spending on. Of course, we don't share all of that, but suffice to say that it enabled us to create a pretty robust data processing platform for online as well. Now, reason why Plural was also born, incidentally, was because during the pandemic, we saw almost 50% of our merchants who are in the offline business wanting to create an online presence and go online. And this isn't just the large format retailers like a Chroma, Reliance, who were just sort of, starting. I would say they already had a presence, but they were now starting to build out. But even the mid-market retailers, the small regional electronic stores. And the reason why they wanted a company like Pine Labs to actually help them go online was because that data and the same payment experience that we gave them was only possible through us. So to give you a very simple example, today when you go to a Chroma offline and you want to say buy an Apple iPhone, that iPhone is of course available on a certain bank offer, and it's available at a cashback with a certain ROI subvention coming in from the bank. It is us who has actually orchestrated this transaction across all the multiple parties. Now, that is possible because A, we have each of these integrations available. B, we're also able to use what we have with our existing brands. For example, how do I ensure that Chroma tomorrow doesn't get into trouble with the brand when that same iPhone is used by a user hundreds of times on, on the store or online? Now, that can only happen if I am unifying customer profiles across multiple channels. And that's really what we brought to the table. So now, for example, if a Chroma works with me both in the online and offline world, I can enable a single customer profile, which means that that same user can only buy the iPhone once, and he cannot game the system by buying it multiple times. So there's a reason why customers and merchants would then choose us, because A, we would have the best offer, but B, we would not allow the merchant to burn. We would not allow the brand to burn. Interestingly, we're the only company who also validates IMEIs and serial numbers, so that, even for the brand, there is a lot of comfort that this isn't, let's say, going into an export zone or an export category, and we're able to identify when an iPhone is unbricked, for example. So for us, data has been immensely helpful, both in terms of creating a value proposition for our merchants who then suddenly wanted to also get an online presence, but had the same experience that an offline store had to an online. The second was obviously parity of offers that we could bring across the table. And the third was the risk management that we brought in, because we knew the customer from the offline business as well. So that's how, we've tried to leverage it, and it's been good so far.
Thank you, Tanya. So I'll just shift from the business side to the legal side. So Rishabh, we have been advising startups. We are talking about how how businesses are leveraging data. So where do you see the intersection of the big data, how companies are leveraging it with the DPDP Act?
Thanks, Prithvish. So first of all, can you hear me?
Sure, you're not able to hear you.
I think. Can you hear me right now?
No, not yet. Yeah, Rishabh, we are just doing a sound check. Yeah.
Sure.
Yeah, we can hear you, I think. Yeah.
Okay. Can you hear me now?
Yeah, we can hear you. Thank you.
Okay, great. So like I mentioned in my opening comments, there's going to be a sea change in how businesses will have to approach big data generally compared to the regime that existed already right now. There are three key changes in terms of the substance of the DPDP Act, which we are coming to see right now. First, being consent and purpose limitation, which is earlier there was a lot more leeway available to companies in terms of what kind of data they can collect and for what purpose they can collect. Although the RBI did have specific regulations in certain situations about the kind of data that you can collect, but now with the DPDP Act in play and sector specific and regulator also coming in the form of a data protection council, the kind of things that you could legitimately now collect data for is likely to get regulated a lot further. As and when the acts get notified, a lot of sector-specific regulations are expected. So say, for instance, for payments companies or generally, if we talk about fintech companies or banks who have multiple financial products out there, some of whom are, say, for instance, in relation to investment, some of whom are payment products, others are, credit products. What you absolutely need from a to be able to enable that transaction, at least the read of the law today seems to be that you should be able to get only that much. While these kind of restrictions used to exist in some form or the other in some places earlier, most of the time, for a lot of us lawyers, it used to be mostly, seen as a joke in the sense that everything could be done through a tick mark consent box. So even the standards at which consent is being looked at in this legislation is very different. There's a lot on the data processor in terms of what kind of consent can be taken and how it can be taken. So that changes a lot in terms of even how product journeys are being constructed, how data is being collected. This will have an impact on a lot of those things. Purpose limitation, similarly, some time ago, there were a lot of, before the RBI started to stop some of these things, a lot of credit companies would be taking all kinds of data, including, contact data, location data, a lot of these things. So while the RBI stopped it for credit companies, but there is nothing as such for let's say somebody else like a a wealth tech fintech which is offering for example mutual funds. They could still perhaps get a lot of this extra data. So with this kind of legislation in place, what kind of data you can collect also tends to get limited. Coupled with this is the general principle that overall data needs to be minimized, the kind of data that you're picking up. So I think there's going to be a lot more lawyering around, justifications for each of these kinds of data. So I think definitely for a lot of people also, the days of collect whatever you can have definitely gone past. And there will need to be a lot more work that is put in to justify that. Let's say, for instance, a credit company wants to pick up location data, why they want to do it. And
You're not
then,
able to hear.
sorry, can you hear me right now?
Yeah, I can hear you. Yeah.
Yeah. So say, for instance, if a credit company wants to say that they want to collect, location data, they'll have to give specific reasons, why they are doing it. So, what this brings me to generally is that although in the beginning this might look like a huge difficulty and inconvenience, overall, I think what the Data Protection Act over time, as the regulator and all the players tend to mature, it gives us an interesting opportunity that data collection can finally happen with a lot more trust in the system. If fintech players, for instance, are able to figure out and build appropriate practices, including around data collection, security, and how it is processed. Sorry?
Not able to hear you.
Yeah, so I'm saying that if fintech companies, really sorry, this is not yeah. Yeah, so if fintech companies are able to create the right processes, they can operate in a sphere of a lot of enhanced trust uh, through this kind of data protection regime. Partnerships can be a lot easily and done in a lot better way. Today, for instance, in case of co-branded credit cards or a lot of fintech financial institution partnerships, regulators have this question of what is happening with the data, where is it going, who is using it. So I think this legislation kind of brings out this hope that there is an opportunity of creating this enhanced trust so long as the processes and systems are in place. Thank you. Did you get any of that?
Yeah. We heard till enhanced trust. Yes.
That's the keyword, yeah.
Yeah. I think that was the important keyword. Okay. Thanks, Rishabh. So Aditya, at Check, you are enabling easier credit management. You have this feature called Pay Together, which can you can pay multiple bills in a single transaction on the reward points as well. So how do you think how you've leveraged data for easier credit management and better customer engagement?
So Pay Together is fairly a logical and an obvious solution. In India, you have only finite number of repayment cycles by most banks, and they are mostly congregated between the 29th to the 5th of the month, which is where the maximum amount of repayments happen. So, and if a customer is multi-carded, there is a good premium customer is not trying to pay always on the last day. So it's just very logical for them to be given the option, just come and just do one single transaction. Think about this like an e-commerce transaction and we'll take care of the rest. Because it is so simple to understand, now over the course of the last 15 months, more than 10 to 15% of our consumers use that product automatically. That one drives massive wallet share for us, and second drives stickiness. How we use data, like for us, we are actually, if our data is inaccurate, we're dead as a company. We can't show you the wrong bill and then you end up messing it up. Today our payout success rate is 99.4% over the 5 million transactions that we've done. And the challenge about that is that still the 0.5% of transactions payout failure that happen, they are actually human beings, where they trusted us to make sure that the bill will reach or the payment will reach on time. And when that does not happen, there is a financial problem that they have. Not only has the money not reached, I can still return it back, but it can translate into an interest, it can translate into penalty, and then people will feel that their bureau score is getting messed up. So for us, accuracy of data and using that data for execution of transactions is extremely important. I think the second layer of data that we're going to be using immensely and just started is that we've started with credit and writing. We started with consumer loans and credit lines. And we're sort of back to asking fundamental questions. The gentleman talked about the fact that credit is all about understanding ability and intent to pay. That's what we were all taught 20 years, 25 years before. I think to me, the guy who will be able to win this is somebody who will be able to understand what lies between ability and intent, and there isn't a lot in between. For example, you have a consumer who has 3 credit cards, 1 personal loan. When you're pulling up a bureau report, the 2 cards are active, the personal loan is active, but the customer has had a flag of settlement on the card the 6 months before. Okay. But the customer has been using 3 cards and a personal loan for the last 2-3 years. Now, whether the guy had an ability issue or an intent issue is now, today we plane that as a red flag, a civil bad, not interested, correct? But when you start asking if the guy had an intent issue, then why he or she did not defraud on all 3 cards? Why did the customer continues to pay the personal loan? And that is where, to me, the next level of solving the gray via these kind of data will be the play to win. Unluckily, a lot of data today, especially underwriting data, is about judging consumers. Doesn't allow the quality of banking system and banking update that we've had for years. A bank messing up does not get reported to the bureau, and just try and solve a problem with the bureau. The bureau will go and talk to the bank. You will never, most likely, you will lose the hope, and you'll say, okay, just pay me the money. I'll pay the money and just clear my account, correct? So to me, the gray is right there. That will fundamentally get solved via credit, via data. The other part of data underwriting, which is the advantage that we have at Check, is that say when today we're opening credit line or loan products, if today I can see I have a consumer who has been on my platform for the last 6 months, has made, let's say, 20 transactions or 15 transactions, have credit cards which are worth 4-5 lakh rupees line. If I continue to just trust conventional data wisdom, that I have to figure out his salary, I have to go to an AA and figure out whether he's salaried or self-employed, or whether what he's declaring is right or not. Once I'm able to do KYC and I use just bureau as a red flag, if I can't underwrite data on my own, I think I am just messing it up. So for us, we're not very excited about data which is available publicly. We're more excited about the fact that how we're going to be synthesizing the data that we have and translate it into decision-making results so that we know that we're putting our money where our mouth is.
Thanks, Aditya. So yeah, trust signal is the third dimension, other than the liabilities, diabetes data dimension or credit bureau. Trust signal is probably the third dimension. So, Astik, you at Vinvesta, you are enabling cross-border payments in multiple currencies. I think 37 currencies. So, how do you think that you have leveraged data again in enabling cross-border payments for businesses, freelancers, individuals?
Yeah, I think one core thing is that you've got some intuitions, right? And you start with the intuition that, for example, almost all customers or the single biggest use case will probably be dollar payments. And then the market whacks you a little bit every now and then and tells you, hey, there's actually a reasonably large, GBP INR conversion flow or a euro ones. And so what we did in our product was we wouldn't open it by default for everyone, but you would need to request a new additional currency. And those requests started telling us, okay, there is actually a flow in this corridor, which otherwise didn't exist. So I say that's one way for us to figure out, and how that actually helps us fuel as well is a lot in changing our marketing strategy, our communications about whether it's an inbound marketing strategy, an outbound one. How do we think of a partnership model or a B2B model as well? Which are the corridors then we start looking more at? How do we then go ahead and build our vendor lines, right? Like additional payment providers in the back end who will be able to provide us new verticals as well. A common refrain is that, hey, my customers want to be paying through cards, and that's why I can't pay you. I don't want to use what you are. And when we capture this little insight, whether it's in a call and conversion, or whether it's actually that a customer had already done a payment, but then we lost and we didn't see him coming back, that was because, okay, maybe his end client, the sender of the money, is finding it inconvenient to send to a bank account as compared to swiping his card, or because that guy gets credit card points. So that results in us changing, again, this into a model of, do you really know the true fees that you'll end up paying if you do card collections, right? And that helps us drive our value proposition of transparency, and the three core pillars for us are helping reduce this cost, making it transparent. Why is it that you don't get the Forex rate that you would see on Google when the money really hits your bank, right? And finally, why does it often take forever and you don't have clarity on when the money will really hit your bank, right? You could travel to the US and back quicker than sometimes the sender sent you money, right? So all of these insights, we find a way that we are looking at these small product changes which fuel our marketing. But then also on the flip side, I'm very wary of data paralysis, right? See, we could all very quickly pick up anecdotes of where it's worked for us. But very often, are you sure there is an insight inside here? Or is it just Occam's razor, right? Are you trying to find malice where it's technically stupidity at times, right? Or it's just a factor which is not worth your attention? Because the one resource we have to safeguard, especially as a young firm, is our time. And we don't want our team going out on these random, searches saying data is telling me something where it possibly isn't as well.
Thank you. Thank you. So the last question to you, Vishal, is that while you have answered what you are doing as a bank, how you're helping your 10 crore plus customers, and how is it helping the bank as well. So, and you have, invested in a data analytics center in Bangalore as well. What do you think additionally, as a bank, what is it that banks can do as well? And overall at a generic level, what banks can do? Yeah.
So we are blessed to have 10 crore customers, and every year 1 crore plus customers adds to the platform. The main focus is activation, acquiring, and digital partnership to increase the digital business. What we see on the rural part, still many customers are coming to the branches. 5 lakh customers every day come to our branches still. Rural or Bharat is, and we are helping them where as a bank, what we are doing is we build a model. I'll tell multiple areas which are there. We have divided customer segmentation across all these 10 crore customers. We have built more than 100 plus AML models to be able to give these customers sales, marketing, customer service, complaints, frauds, and what cross-selling we can do. And these all have been propagated to the branches and the call center. On the fraud area, especially, I will tell, because that is the main area which is there. We are working with RBI Innovation Hub and IIT Kanpur. We have built a model with more than 90% accuracy on mule account. Because whatever we do, there's a still huge number of mule accounts which are happening. So that we have built a model which we can propagate to other banks as well. Secondly, on the fraud, we are able to predict as a default which customers will become default. Because we have the history of the data with the patterns. And that is helping us to build our collection system more stronger. Plus, what collection person should do which way customer will be able to collect or get the money easily. That is what you're doing. On increasing your digital business, based on the customer segmentation we have, we know these set of customers with the DPI infrastructure, which is there with the bank, we are able to go to all our merchants, made small, large, that we can give you multiple facilities. See, these set of customers have a lot of payments to be done, collection and payment both. So we are giving the API connected banking to them, where from their ERP solution, whichever is the ERP, they can connect and do the payment within few minutes. Secondly, all the collection, we take care of them. We are giving them the payment gateway. Many of these institutes don't have a payment gateway solution yet. Many of the institutes don't have website itself. So we are building the payment gateway solution for them. We are building the API integration with them to make the collection and payment easily for them. There are a lot of customers who are still not in the credit itself. With this data, we are able to do out of 10 crore customers that many people have with the reference and the branches, 50 crore women, that is what we are targeting, to give them self-help group loans, which are not in credit yet. We want to give a low ticket size to them, where our branch person goes to their home, 20 women together, within 30 minutes, we do the KYC through Aadhaar PAN and disburse the loan immediately within 30 minutes to them, because we want them to be in the credit history. In addition, many farmers, they want credit. They have agricultural land and all that. So we are working with the state government to have their land become digitized. So MP, Tamil Nadu, Bangalore are the one we are working with them to digitize that, and on their land we can give the loan to them. In BMTC, all the POS where the ticket booking happens, we have made a reusable solutions where we can deploy within few weeks, because we want all of them to use banking as a solution and all. And all the merchants, they want to partner with bank, because it's not only the solution, it's a lot of other facilities which they get, which helps them on the credit or the limit or the deposit or whatever they want. Bank is the only one which can provide with them. And we have worked with many fintech partners, both on the POS as well as on the payment gateway, to build the solution to them. And that is what we will do it. And we want maximum on the digital, these customers should come, but only we want to be caution on the fraud. We don't want these hard-earned money to be losing. So that's why we put a lot of control and cautious approach on the minimum fraud and able to give best service to our customers and bring them in the digital journey.
Thank you, Vishal. So yeah, the time is running out, so I think we'll have to close the panel. So I think we had a fair share of ideas coming from, if you see also the profile, we have fintechs, non-banks, banks, from the business side, from the legal side, also good representation. So I believe that we have been able to answer a lot of queries. Sorry, I think time is out. We'll not be able to take questions from the audience. Thank you so much. Have a lovely evening.
Thank you so much once again to the entire panelists and to our session chair. And I quickly request Ms. Devika Kundu Gupta, our AGM conference production from BW Businessworld, to do the honors. Could we have you on stage, ma'am? And if you could have all the panelists in the session chair, we have a small gratification that we would love to give it from our end for your time and presence and for all those insights shared. And with our gifting partner, clinically, we have a hamper for you. And could we have everybody put your hands together one more time for this fantastic panelist? And what a day of complete insights, a productive day it has been. And we segue into the fourth edition of BW Businessworld Festival of Fintech Awards ceremony just on the other side. So we request everybody to stay back as we segue into the awards ceremony in just a bit. And a big shout out to Mr. Rishabh for joining us virtually. Absolute pleasure. And if you could have the panelists in the session chair to join us for a group picture up in the front, please. And one more time, we can join hands, put your hands together for the fantastic panel discussion that we just happened to witness. And now, ladies and gentlemen, is the moment we've been waiting for as we head towards the BW Fintech Awards. And we would request everybody to stay with us as we take this opportunity to honor the exceptional contributions and achievements in the fintech sector. So, ladies and gentlemen, once again, welcome you all for all those who have joined in with us right here this evening for the highlight of the BW Fintech Awards. As we gather this evening to honor and recognize the exemplary individuals and organizations that have made exceptional contribution to the field of fintech, we take this night. Tonight, we celebrate innovation, compassion, and excellence. These awards not only acknowledge outstanding achievements, but also serve as an inspiration to push the boundaries of what is possible in the fintech world. Today's award ceremony is being streamed live all across, just like we had the entire conclave all across BW Businessworld's platform, including our social media channels and on www.businessworld.in. And do join us in the celebration with the hashtag BW Best of Fintech. Before we segue in with the awards and the categories and the winners, we would like to take this opportunity to thank our esteemed partners. Of course, this conclave would not be possible without the power of partnership. A big shout out to our partners, associate partner, BharatPay, Hyperface Technologies, CAMS, PhonePay, FinTech partner, NetraScan, Spend Management partner, Zaggle, Knowledge partner, SCOMI Solutions, Lanyard partner, Refin, Real Estate partner, Shobha, Community partner, Indian Financial Forum, and gifting partner, Clinically. And I request the team, if you could have the AV of our partners.
दुनिया को भीड़ में जो नहीं दिखते हमें नजर आते हैं। कल को रोशन करने वाली चिंगारी पत्थर में छिपे हीरे नजर आते हैं। हमें अन्ना कॉफी वाले के हुनर में अन्ना कॉफी हाउस नजर आता है। किराने वाले गुप्ता जी के अपनेपन में हमें गुप्ता सुपरमार्केट नजर आता है। और सोनिया ब्यूटी पार्लर की कस्टमर सर्विस में सोनिया सैलून दिखता है। छह बाय छह की दुकान में सलीम के सपनों का साइज नजर आता है। सोनू ऑटो वर्ल्ड में सोनू की बड़ी सोच दिखती है। दुनिया को जो छोटी छोटी दुकानें दिखती हैं, हमें उनमें छिपे बड़े बड़े अरमान दिखते हैं। क्योंकि हमें है यकीन इनके हुनर पे, इनके हौसलों पे, इनके जुनून पे और इनकी न्यू एज सोच पे। हमें है यकीन इन सब पे। है यकीन भारत पे।
Fostering the digital India drive further, UPI has envisioned a platform to help citizens digitally unlock and share their financial asset information that lie in silos across multiple financial institutions. Account Aggregator Platform. The Account Aggregator Platform is a highly secure, consent-based, real-time framework to aggregate and provide consolidated financial asset information. Account Aggregator works on a mechanism through which a user's financial asset information is collated from multiple financial information providers or FIPs, and with the consent of the customer, it is encrypted and securely sent in near real time without storing to the financial information user or FIU. The customer has complete control on see the data from and share it with. CAMS FinServe, a subsidiary of CAMS, a regulated intermediary with experience of over 2 decades of serving financial institutions and customers. CAMS FinServe will facilitate encrypted and machine-readable data from the source to the recipient, a foundational change to the way in which financial asset-related information is shared among financial institutions, lenders, and FinTechs, removing all the bottlenecks associated with physical exchange of paper-based information. Banks and NBFCs can be less wary with lending, since they have access to an updated and authentic data of the borrower. Wealth management platforms can get a holistic view of the customer's financial asset information, which will facilitate financial planning in a unique way. CAMS FinServe will empower individuals and help shape their financial well-being with their own financial asset information. Unlock the power of financial asset information. CAMS FinServe. Financial institutions can join the account aggregator ecosystem with ready-to-use integrations. Customers can register to derive full potential of their financial asset information. Visit camsfinserve.com today.
Over the last few years, the financial landscape across the country has undergone a dramatic transformation marked by rapid and path-breaking developments. In such an ever-evolving domain of payments, CAMSPay brilliantly shines as an unmatched beacon of reliability in the BFSI sector across India. With security being the foundation, CAMSPay employs advanced encryption and multi-tiered safeguards for ironclad transactions, elevating the everyday into the exceptional. CAMSPay amplifies the journey by collaborating with top banks and leveraging the platform of NPCI while ensuring compliance with RBI and PCI DSS standards. At the forefront of innovation and convenience, CAMSPay reigns as the market titan in the realms of recurring payments, digital payment services, authentication, BBPS, and payout services. Success is the new normal. CAMSPay systems achieve faster payment transactions while providing users a smart link for smarter payment collection and high transaction success rates. Swift and seamless. Facilitating rapid payment settlements, CAMSPay's meticulous services empower businesses with expedited financial transactions. Umbrella of services, single provider. CAMSPay's intuitive innovation paves the path for its users with easier onboarding, customizable UI/UX. Easy integration using agile APIs and SDKs, and intuitive one dashboard for easy analysis and intricate reporting. Drawing upon CAM's extensive domain expertise, CAMSPay is redefining the entire payment experience through technological advancements and meeting industry standards in focused categories. Discover the future of payments with CAMSPay, a payment business unit of CAMS.
In today's digital age, managing credit card benefits should be seamless for both banks and end customers. However, it's often costly and challenging for you as a bank, while your customers struggle with navigating benefits across platforms. Introducing Smart Engage by Hyperphase, the game-changing tool for program and portfolio management. Envision a unified backend for benefits and campaign management that allows you to automate everything from computation to delivery. Seamlessly integrate with multiple partners eliminating complexities. Delight customers with real-time calculation and instant delivery of rewards. Design and automate offers to highly targeted customer cohorts. Drive engagement with hyper-personalized offers and intelligent nudges through various channels. Track campaign performance and portfolio metrics with an insightful dashboard. Offer your customers sleek, engaging interface to maximize their card benefits. Drive superior business metrics while optimizing costs and delight your customers. The future of credit card portfolio and campaign management is here. Experience the transformative power of Smart Engage by Hyperphase.
Leading fintech company in India. Stormy Solutions, an innovative analytics software company in the fintech space. Our service offerings. Bank Statement Analyzer. Analyze prospective borrowers' bank statements to assess the creditworthiness and eligibility for loan. Financial Statement Analyzer. Perform 360-degree analysis of financial statement of borrowers. IDR Analyzer gives you the visibility of your borrower's financial know-how. GSDR Analyzer analyzes the raw data of your GST server and gives insights on the various sale and purchase transactions to the lender. Digital lending software. Platform originate loans and is powered by Stormy APIs for determining loan eligibility using analysis across financial statements. Credit monitoring. Highly flexible and scalable software enabling a lender to analyze large volumes of data as per requirements. Stormy, a leading fintech company in India, get in touch to know more.
All right, with that, request everybody to put your hands together for our partners right here at this conclave. And also a big shout out to our event partners, Joy Travels Private Limited, Fandom, Bingley Coffee, The Thick Shake, Factory, Realty Plus, Exchange for Media, IWM Buzz, Impact, and Pitch. With this, ladies and gentlemen, we move on to the main spotlight moment of the night. That's the awards. And before we segue into that, we would like to thank our jury members who painstakingly reviewed numerous nominations. The winners who emerged from a pool of exceptional contenders embody the true spirit of fintech industry. And now I request the team to show our audience, the lovely people right here gathered up, a glimpse of the jury meet. Could we have the AV, please?
I had the privilege of being part of the jury of the fourth edition of the Businessworld Fintech Summit. 81 presentations were made in front of us by different participants with different types of solutions. Some were in insurance, some were in credit lending, some were in investments, and some had social outreach as well. It was very difficult to make a specific choice on who was better than the other because each one brought in on board a solution which was unique in itself and was solving some social and business problems. But we made some choices. We had to, and we have come out with certain winners in certain categories. I hope you all appreciate these winners, join hands in encouraging them so that they come out with better solutions and become successful.
Being a jury for the Businessworld Festival of Fintech was an enriching experience. There were more than 75 nominations across lending, insurance, and payments. I wish the very best to all the nominees and look forward to seeing you all on. Thank you.
I just wanted to say I had an absolute amazing time judging the Fintech Awards for Businessworld. It's lovely to see the really amazing things the founders are building out there and what a vibrant fintech ecosystem that India has currently.
First-time jury member with the Businessworld Fintech Festival. I must commend the team headed by Devika for being super efficient in managing that many entries. There was good quality entries, and it was a pleasure to meet all the other jury members as well. And thank you for having me there. And here's wishing the team all the success in the eventual event as well.
All right, could we have a big cheer for the jury members and for all the nominations right here? Well, we're all set for the fourth edition of BW Businessworld Festival of Fintechs Award ceremony. We need to get the energy right. Are we ready? That's not promising at all. Are we ready? I know we had an early start. We've been on from 10 in the morning, but I'm sure the energy is high, the enthusiasm is high, because this is the fourth edition of the awards. We need to hear it. And for those who don't know about the history of this, with the fourth edition, it started during the pandemic. It was a virtual one, but for 3 years now, it's been happening in Namma City, Bengaluru. For that, can we hear a big cheer? Come on, everybody, put your hands together. Welcome you all to the evening. How many of you joined in right here, right now with us? You were not a part of the morning session. You just joined in only for the awards. It's all right. We won't hold it against you. Just want to understand the audience. Yeah, and now hands are coming up. Quickly, could I request everybody in the house to stand up? Let's set this right. Let's get the evening started. We need the energy in the house. Could I request everybody to stand up for a second, please? Yes. So very simple bit. We're a fraternity, we're a unit, we're a family right here and celebrating the fourth edition of the Festival of Fintech. So very simple. I'm just going to give you a countdown. Say 3, 2, 1. At the count of 1, I want all of you to sit down together as quick, as swift, as fast as possible, like a unit. Tak karke. The last one, the slow motion one, will be the one who will start the entertainment bit before we get into the award ceremony. Right? Only the last one. So you know what to do. You got to be quick, fast, and swift. So make sure, I know we've got the smartest minds in the house. You will sit when I'm traveling between 3 and 2. No. Only at the count of 1, not before, not after. Team, are we ready? Are we ready? Very simple. I want all of you to sit down together as a gesture, symbolically telling that we are one. Only at the count of 1, not before, not after. The last one or the first one before the count will do some entertainment bit for us right here. Your call. Let's do this. At the count of, ready? I want everyone to sit down. Make sure you have a chair right behind you. Yeah, that's very important. As quick, as swift, as fast as possible. Come on, everybody, at the count of 3, 2, 2. Well, good that we're done with all the serious stuff in the morning. Now it's going to be the fun bit. Now I'm going to hold all of you. We'll do the dancing bit probably later on when the bar opens. But now that I have your attention, 3, 2, 1.5. 3, 2, 1. And come on, put your hands together, ladies and gentlemen. Welcome you all to the fourth edition the BW Businessworld Festival of Fintech Awards ceremony. And now, just like the morning session, I would like to have the gentleman, absolute pleasure and privilege in inviting him for the opening awards ceremony remarks. We have the man himself, Dr. Anurag Batra, Editor-in-Chief, BW Businessworld and founder, Exchange for Media, to join us right here on stage with a huge round of applause. Good evening, sir. All yours.
Good evening. First of all, we do a lot of events at Businessworld in various domains. At Exchange for Media, we do another 100. And I end up going to other people's events, like I'm early morning in Lucknow, in the evening I'm in Gorakhpur. I don't have a plane yet. I'll borrow from one of the fintech billionaires later. But I meet a lot of anchors, meaning they're at the event. And I can tell you, Amar is among the best I've seen. Right, Devika? Please give him a big round of applause. He did an exercise in the morning to be able to get the attention. I thought it was extraordinary. And he's full of energy. He's very, very business-like. So give Amar a big round of applause. He's done a fab job. It's my privilege and honor to be able to stand here and open the 4th edition of the BW Businessworld Fintech Awards. Businessworld is not just a magazine. It's the 44th year of the magazine, 10 plus years. We've had the good pleasure of owning and running it. And we're a 360-degree platform almost on our site. Every day we have stories that get us a lot of traffic, but more importantly, they make an impact. We are not in the business of magazines, websites, events, custom initiatives. We're in the business of content and audiences. The fintech domain is a very important domain for us. If India is going to transform itself from what it has done in the last 10, 15 years, fintech will lead the way. Bangalore is the capital of fintech. Look at the number of startups and the companies in fintech domain that are headquartered in Bangalore for the right reasons. And I hope all of you own boats, because these rains are, so all the winners get one boat each. Devika arranged boats for them. But on a serious note, Bangalore is the fintech capital of the world for talent, for environment, and just the collaborative opportunities that Bangalore offers. To be specific about the awards, first of all, our gratitude to Mr. S. Ravi, who's the former chairman of the Bombay Stock Exchange. He's the chairman of the Tourism Finance Corporation of India. And he's the partner at Ravi Ranjan and Associates. Ravi Rajan and Associates. It's a large CA firm. And really, he's been our jury chair for 4 years, Devika. He's been our, so there is a certain amount of continuity in what we do. I know there are other jury members who are here. There is a certain gentleman who's here for the 4th year. Kalpana ji is for the 1st year. So first of all, my gratitude to all the jury members, because the Businessworld Awards are only about the jury and the jury process. The way it is run is transparent, honest, robust, and data-driven. I just want to also take this opportunity. Everyone knows Devika. I don't have to introduce. Devika works with a lot of passion and really independent, with a lot of independence. So please give Devika a big round of applause. She's Neeraj is a colleague of Devika. You may have engaged with him, met him. He works on the award entries. Mr. Soumyaji Sen Gupta was a senior colleague on the business side. Prashant, who is our head of events, and for this event is traveling to Bangalore. Normally doesn't travel everywhere, but Devika wanted him, and so he's Sarvotama, who's our head of distribution. My editorial colleagues, Krishnendra Joshi, Rohit Chintapalli, you must have met him in the day. Mr. C.S. Rajaraman, and all other business world colleagues back in Delhi and Bombay. This year, the entries came from all parts of the country, which does show that fintech is growing in every region, in every subcategory, subdomain. There is super specialization that is happening in fintech. Also, the entries were so competitive that this year we are giving a gold, silver, bronze. So many entries were there to be judged. And, the jury felt that some of those entries were also very competitive and good. So 2 of the jury members are here. They have chosen gold, silver, and bronze. And I just want to say that the jury panel of 10 members, except Ravi sir. Ravi sir didn't stay for a long time. He just set the agenda. but the rest 10 jury members stayed for the whole day, looked at the entries. So please give our jury members a big round of applause. All the best. We do a lot of things for commercial things. We have 180, 90 colleagues. We don't sell awards at Businessworld. And I do mention that I met Mr. Malhotra's son. I know your name, but and I met him when he was very, very young, relatively very, very young, younger than me. And I've known his dad for a while. I just met him. So I may not know any of the winners, but hopefully after the awards. So this is an awards process that is honest, that is done by credible media brand. And most importantly, you have personally interfaced to be able to experience the process. So these are honest awards. I think that's the most important things in awards. I'll leave it at that because of my exchange for media experience. I know how awards are run by other people, and that's their karma, right? But we don't sell awards. I'll not take, because all media companies should grow. Life is about abundance. The fintech domain will grow. The last thing I want to say before I get off the stage is that in the morning I talked about 3 things, and these are my favorite things. One is Devika was telling me I was a little low energy in the morning. I'm okay now. I slept for 1.5 hours in the day, which I rarely do. Sleep is the most important thing to be able to do whatever you want to do. So don't compromise on sleep. Sleep 8 hours. Come what may. Don't take very early morning flights. Tomorrow I'm taking a 6 a.m. flight, but normally I don't take. I tell my colleagues, don't take a very early flight. Take a 10, 11 a.m. flight. Otherwise you'll have to get up at 4 a.m. You sleep at 12. So I do recommend this book by Matthew Walker called Why We Sleep, or his YouTube video. Second is sustainability. I was in a conversation with Saurabh, and really how most fintech companies are also looking at sustainability while providing solutions. So the climate change is a real thing. And last, as I said, that all awards are about personal recognition, company recognition, and getting it for the right reason is fine. But in a world which is becoming very me, do watch out for other people. And I talked about this young Israeli in 2013 who left the base camp of Everest and was about to reach the Mount Everest. And he would have been the youngest Israeli to climb the Mount Everest. He saw one of his friends dead somewhere between the base camp and Mount Everest. He also saw another friend on the verge of dying. So instead of climbing up the Mount Everest, he chose to bring his friend down and saved his life. So do seek those kind of awards also while you win the right fintech awards. And I'm sure you do. I'm not talking down to you. I am one of you. I'm saying this to myself. Do things for others. Automatically good things will come to you. Blessings will come to you. God bless you, and look forward to celebrating your stories, your work in a special issue of Businessworld on fintech that we bring out and on our digital platforms. God bless you. Keep continuing to do the good work that you do and make an impact. Thank you.
Thank you, sir, for those kind words and kickstarting the evening right here. A big round of applause to the gentlemen, please, everybody. And now, ladies and gentlemen, it's time to say sound, lights, camera, action. And today's award ceremony is being streamed live across all BW Businessworld platforms, including our social media channels and on www.businessworld.in. And do join us in the celebration of the evening by sharing the hashtag BW Best of Fintech. And before we start with the award ceremony, I would request all the winners, once we have you on stage, request you to exit and please join us on the left side of the stage for a quick picture. And at the end, we will have a group picture. So we want all the winners to please stay back with us till the very end. And we will announce the recipients of these esteemed awards, and we will also applaud their dedication, unwavering commitment, and groundbreaking work, and their tireless efforts have transformed lives and shaped the future of fintech. And we want every single individual right here, nominees, winner, audience, participants, supporters, to stay with us till the very end. Could we have a word? Yes? Yes, with a huge round of applause. If yes, then give me a big sound. And before we have the first category and nominations and the winners announced right here on stage, as the gentleman rightly said, Dr. Anurag Batrasa said, that Bangalore is the capital of fintech. And it is the most diversified city in the country. Yes or no? The most colorful, the most vibrant? Yes or no? And how many non-Bangaloreans in the house? Okay. So we are the traffic. And how many Bangaloreans in the house? Superb. Just want to understand the demographic idea. How many South Indians in the house? Give me a shout out. Give me a shout out. Let's not do the school way. South Indians in the house. Anybody from Tamil Nadu? Vanakkam nalla irukingla? Superb. Anybody from Andhra Pradesh / Telangana? Bagunara. Anybody from Hyderabad? Especially anybody from Hyderabad? I think Hyderabad is the most amazing, in fact, the sexiest city in the country. That's why it's shared by 2 states also. Anybody from Kerala, God's own country? Oh, we used to be more, but now all of us are in Dubai, no? And anybody from Karnataka, Bangalore, Namma Karnataka, Namaskara, Hegidira. And anybody from up north? All the lovely people from up north. See, it doesn't matter. See, for us South Indians, Karnataka, Kerala, Andhra Pradesh, Tamil Nadu is South. Anything above is North India. Even Goa, Mumbai is North India for us. So salam, namaste, sat sri akal. It doesn't matter where we come from, right here under this roof. We are one fraternity, one family, and that's what we are here to celebrate for that. Put your hands together, ladies and gentlemen, right here at the 4th edition of Festival of Fintech in Namma beautiful city, Bangalore. And without further ado, let us commence this amazing occasion and to celebrate the remarkable achievement of the recipient of the annual BW Fintech Awards. And to present this, first I would like to call and trouble the gentleman one more time. Could we have Dr. Anurag Batra, Editor-in-Chief, BW Businessworld and founder, Exchange for Media. And along with him, we would like to have Mr. Sharat Chandra, the founder, Empower Edge Ventures, to please join me on stage with a huge round of applause. So let's kickstart the award ceremony right here. First, it's going to be for the companies. And let's have the first category come up on the screen. It's for Customer Experience Solution of the Year. And this is Bronze League. And the winner is the Bronze League goes to India Shelter Finance Corporation. And could we have Mr. R. Sudhakara, Deputy Vice President and Zone Head, to please join us. Come on, let's put our hands together, everybody. Congratulations, sir. And moving on. The next category coming up on your screen. And before I announce the next category, we also request all the winners to join us on stage and to join us on the left side for a group picture. And also, it would be such a sin if we let them go without saying anything, correct? And as the first winner, so if I can just trouble you to join me on stage one more time, and if you could share your words, how you feel, and everything that you've gone through to be right here with us.
It's a surprise and unexpected. So we are happy to representing this award in FinTech. So India Shelter is very excited to get this. Thank you. Thank you, Businessworld.
Thank you so much. And moving on with the next category that we just happen to see right on the screen, that is the Customer Experience Solution of the Year. And in Bronze League, it goes to Shicommer's Market Services. And could we have Sir Sanjeev Vishwanathan, founder and non-executive chairman, to please join us with a huge round of applause. A big cheer for Shicom Market Services. And so we request you to share a few words, if you could please.
The lovely award. Thank you, Businessworld. And without a customer, without their experiences, and without the people who deliver these experiences, this award means nothing. So this goes out to all the people that serve those customers, the team She-Commerce, and the customers who gave us an opportunity to do this. Thank you.
While we celebrate the Bronze League and the winners who just spoke to us, we move on to the next bit. And this time it is in the same company category. Put your hands together. Customer Experience Solution of the Year. And this time it is Silver League. And the winner, Design Solution. We have Mr. Jeevan Singh, the Customer Success Head. And so we request you to share a few words, please, right at the center.
I thank this people to recognize the efforts that we have put from his minds, and with like we were discussing about artificial intelligence. So using the artificial intelligence, we are able to like enhance the customer experience for fintechs, and this is a great opportunity for us that we have been recognized. So thank you.
Right, thank you so much for sharing that with us.
How many of you do yoga? Right? They say clapping is very good for heart muscles, right? So just for being selfish, clap for yourself. Second, clapping is karmic. Someday you'll be on the stage and you'll need the applause. So build your karmic bank, so to say.
And third, adding on, it's a good warm-up for a cocktail dinner as well. So come on, let's keep it coming. A round of applause while we move on to the next category, and that is Digital Card of the Year, and in the Silver League. And the winner in the silver category. Your hands together for Neofinity. And could we have Mr. Ryan Malhotra, CEO and founder, to join us on stage? One more time, join hands, everybody. Neofinity, silver winner, Digital Card of the Year. And we request you to share a few words, please.
Hello, hello, hello. Yeah, works. So the name is Ryan Malhotra. I lead the FinTech and Payments vertical for Neo Group, and I'm Mr. Malhotra's son, as AB just called it out. And it's very special because, as he said, I have accompanied my dad in all so many events that Businessworld has done, and today I'm getting an award from him. And even today, he works with the same zeal. I mean, we met outside, and he had his notes, and he's just done an event. He's going to Lucknow tomorrow, so he still does this with the zeal he has. But as business leaders, we get to we're very fortunate. We get to work on problems for a lot of people. We get to also take the glory for a lot of people who work with us. So this is a shout out to the Neofinity team, the team that works with me. It's also a shout out to Neo Group, Varun and Nitin, who've invested in us and who've trusted in us. And just to tell you what product has won, just so that you know how impartial or what does it take for us to win an award. I'll just show them what is the digital card of the year. Ani, can you? So this is the digital card of the year. This is what we have created, and that is why we have won. So it's a card on your phone, and yeah, it was a very exhaustive process. Thank you so much for this honor, and yeah, looking forward to going at it.
Thank you so much, and thank you for sharing that with us as well. Congratulations. One more time, huge round of applause, ladies and gentlemen. And moving forward, this time the category is Financial Inclusion FinTech Company of the Year. And let's have a look at the winner in the bronze category. Financial Inclusion FinTech Company of the Year. And the winner in the bronze league goes to Spice Money. Could we have the gentleman, Mr. Harsh Mittal, Chief Product and Technology Officer? Congratulations to Spice Money, and sir, we request you to share a few words, please.
Financial inclusion, we serve a lot of underserved customers across the India. And so this award goes to my team and all the people who work tirelessly to serve the mission. Thanks a lot.
Thank you so much, and congratulations to the entire team of Spice Money. And now moving forward, in the same category, the Financial Inclusion FinTech Company of the Year. And let's have a look at the winner. Financial Inclusion FinTech Company of the Year, again in the bronze category. And this time it goes to Gaskala, to M1 Exchange. And could we have Mr. Roy Matthew Korean, the Chief Business Officer, to join us?
Thank you, Businessworld. This award means a lot. And we are a 7-year young fintech company, which is licensed by Reserve Bank of India. And we have made small step and with a miles to go. And we have done our bit to 30,000 MSME suppliers to finance themselves and then to add a bit to the economy of India. Thank you. Thank you for this award. Thank you.
Thank you so much. Absolute pleasure to have you right here with us this evening. And congratulations to the team. And now, ladies and gentlemen, moving on in the same category, that is Financial Inclusion FinTech Company of the Year. Let's have a look at the next winner in the bronze league again. In the same category, that's Financial Inclusion FinTech Company of the Year. Again, in the bronze league. This time it goes to PB Partners. And we have the gentleman, Mr. Parminder Singh, Associate Vice President, Brand and Marketing. Congratulations, Sergi, and we request you to share a few words.
Thanks, Businessworld, for this award. It means a lot to us. We all know that how Policy Bazaar has transformed the whole insurance space in the sense that we are a mission-driven company where we want to ensure that every family hogi insure is this is how we see. On a similar lines, we started PB Partners in June 2021. We just completed our 3rd anniversary. And I'm super proud on the journey we had that PB Partner is again a mission-driven company in the sense that now we want to take insurance to the tier 2 and tier 3 cities, which is so much underserved as if now. So if you look at our journey, we have now 2.25 registered partners with us. This award is a testimonial of their trust, which they have shown into us. Thank you so much. Thanks.
Thank you and congratulations to the entire team. And ladies and gentlemen, now moving on. In the same category, but we move to the Silver League. Let's have the category on the screen. Financial Inclusion Fintech Company of the Year. One more time. And this time it is the winner of the Silver League. And it goes to Moneybox Finance. A huge round of applause. Let's welcome Mr. Praveen Gupta, Chief Impact Officer.
Thank you, Businessworld, for the award. We are an impact finance company and we are just a 4-year-old company. We have a dream to eradicate poverty from India. And we've just started, we just started 4 years back with a single customer. Today, we have 75,000 customers. And so in single line, we are, छोटे लोगों का छोटे शहर में छोटा लोन. तो हमारे लोन से लोग अपने कमाई को डबल करते हैं. And that's how we work. Thank you so much.
Thank you so much. And now, ladies and gentlemen, it's time to head towards the Gold League. Let's have a look at the category one more time. It's the same Financial Inclusion Fintech Company of the Year. This time, let's have a look at the winner of the Gold League. And it goes to Bharat Pay. An absolute pleasure to have the gentleman, Mr. Kohinoor Biswas, Head Consumer Business, to please join us on stage. With a big round of applause, let's welcome Mr. Kohinoor Biswas. Come on, ladies and gentlemen, once again, put your hands together. The winner in the Gold League, Bharat Pay, Financial Inclusion Fintech Company of the Year.
Kohinoor had to just step out for a call, so I'm taking on his behalf. I'm Suhail. Thank you, Businessworld and the jury, for the award. This will further inspire us to enable more MSMEs into the financial inclusion space. Thank you so much.
Thank you so much for joining with us, and congratulations to the entire team of Bharat Pay. And now moving forward, ladies and gentlemen, again in the same category, we have another winner in the Gold League, and that's Financial Inclusion Fintech Company of the Year. Let's have a look at the winner. And the winner in the Gold League, put your hands together. We've got Invoice Mart, a picture, and let's welcome Mr. Sri Raghunath, Chief Technology Officer.
Many thanks to the Businessworld team, the partners of the Festival of Fintech, and from all of the Invoice Mart's staff, Invoice Mart's MSMEs. We serve close to 40,000 MSMEs, providing MSME receivables discounting services. So from all of us, hearty thanks to Business World team. Hearty, want to thank the Business World team for giving us this award.
Thank you so much. Absolute pleasure to have you right here with us, and congratulations to the entire team. And with this, thank you, Sharat Chandra sir, for doing the honors. We request you to sit back and enjoy the rest of the evening. And Anurag Batra sir, we want you to stay back with us. Sorry for the trouble, but bear with us for a couple of more minutes. And to join him right here to be in the presentation party, could we have Ms. Kalpana Ajayan, Regional Head South Asia, Women's World Banking, to please join us right here for the next set of presentation. With a huge round of applause, ladies and gentlemen, Ms. Kalpana Ajayan. And with her joining the presentation party, ladies and gentlemen, it's time to move on to the next category. Let's have a look at it right here on the screen. As for the FinTech Innovation of the Year, let's have a look at the winner in the Bronze League, and it goes to BFIS. BFISE. Could we have the winner, the team, the representative, the gentleman, Shobit Goyal, Mr. Shobit Goyal, Founder and Chief Executive Officer. A big round of applause.
Thank you so much, Business World. The point is, it's been 1 year that we are in the business, and this is our first award, so it's very special for sure. And this goes to my entire team and the 52 strong clients that we have in 1 year. Thank you so much, everyone.
Thank you so much for joining us this evening, and congratulations to the team. And now we move forward with the same category, FinTech Innovation of the Year. And this time, in the Silver League, and the winner is Orpheus. A big shout out that we have the Vice President Products, Mr. Vinay Satyanarayana, to join us. The winner in the Silver League, FinTech Innovation of the Year.
Thank you, Business World, and for an amazing event, and special thanks to jury with a lot of patience in hearing every company, giving everyone an opportunity to present their case. We are a teenage company, unlike the young startups that are there. We are a 15, 16-year-old company that's been trying to do a lot of things in BFSI. I'd like to thank the entire industry here for giving us an opportunity, and many companies like us to give an opportunity for them to grow and groom and make them as partners in solving their problem statements. Thank you, everyone.
Thank you. An absolute pleasure to have you right here with us this evening, sir. And now, ladies and gentlemen, moving on to the next category, we have the FinTech Product of the Year. And in the Silver League, the winner, put your hands together. Let's welcome Different Solutions. And we also have the Managing Director, Mr. Raja Devnath, to join us. Clap, 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 clap. Let's go with the beat. Let's pump the music. And ladies and gentlemen, join us. Put your hands together one more time. Mr. Raja and Mr. Raja Devnathan team, a huge round of applause. The winners, the FinTech Product of the Year and Silver League, Different Solutions.
Hi, this is Akshat. First of all, thank you to the Business World team for this prestigious award. Uh, this is dedicated to the entire VFin team. Just to give you a brief, we are a full stack technology player in the supply chain financing space with multiple solutions across the entire customer journey. In short, we work with multiple set of lenders, NBFCs, fintechs across the country, as well as outside the countries as well. Thank you so much.
Thank you and congratulations. And now, ladies and gentlemen, moving forward in the same category, that is FinTech Product of the Year. Let's have a look at the next winner. Once again, in the Silver League. This time it goes to cash-free payments. And to join us from cash-free payments, could we have Mr. Shobhit Jain, Associate Director Strategy, to join us on stage? We can welcome him with a round of applause, everybody. Come on, put your hands together. Yes, absolutely.
Thank you, Business World and the jury for the award. And this award goes out to the cash-free payments engineers, right, for constantly innovating and actually bringing the best-in-class products to the market. So thank you so much and have a good evening.
Thank you and congratulations, the entire team. And now, ladies and gentlemen, let's have a look at the category coming up next. I will continue at FinTech Product of the Year. And once again, in the Silver League. And this time it goes to Investor. We have Mr. Swastik Nigam, founder and CEO, to please join us on stage. A big cheer, a big shout out. Put your hands together. FinTech Product of the Year, Silver League winner.
Thank you very much, Business World. I was just telling that this is the third consecutive year that we won an award for a product that we have built. So thank you very much for that. This goes out to the team that has been diligently working on this for the last many years. Early this year, we launched a one-of-a-kind product which didn't exist before. So, you know, to continue honoring the team, if you have cross-border payments, please check us out, and we'd love to be able to serve you as well. Thank you.
Thank you. Congratulations on a hat trick, everybody. That deserves a huge applause. And moving forward, let's have a look at the category coming up next. Well, it's InsurTech of the Year. And the winner in the Bronze League goes to Insurance Deco. And we request the zonal head south, Mr. Bhagyaraj, to join us on stage. Clap, 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 clap.
Good evening, everybody. Thank you, entire team of Business World. I think this award is a big pat on our back, the work what we do, and not only it will take us to many more miles, but also bring smiles on all our customers. This award I dedicate to all our lakhs of partners who are taking insurance to local corner of the country, and which is real Bharat. Thank you so much.
Thank you. An absolute pleasure to have you right here with us. And moving forward, once again, in the same category, let's have a look at the Silver League winner coming up on your screen. Silver League winner goes to Bharat Shaw. And could we have the gentleman, Mr. Anuj Parekh, co-founder and CEO, to join us on stage. Once again, a bigger round of applause for Bharat Shah.
Thank you to Businessworld for this wonderful recognition. Already the heart was thumping when the name was announced. So means a lot for the entire team who've done such a fabulous work to get recognized. So for everyone in the room, Bharat Shore, we are an infra as a service insurtech, and we enable group insurance and embedded insurance for the ecosystem partners. Our mission is to drive insurance for all by 2047 to support the government's vision. Thank you all.
Thank you so much. Absolute pleasure to have you right here. Congratulations to the entire team. And also, sincere request to all the winners and nominees and everybody right here to please stay back till the very end, and especially the winners, as we have a group picture that's about to be clicked. So please do stay with us till the very end. And now with this, let's move on to the next category right here coming up on the screen. And once again, it's InsurTech of the Year. And again, in the Silver League, it goes to Perfius. Could we have Mr. Prasad Krishnamurthy, the Vice President Products, to please join us? Clap, 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 clap. Go, go, go.
Thank you, Businessworld, and thanks to all the judges who saw the value in the product that we have done. One of the innovations that we are trying to do is to control healthcare costs by using data and analytics. And thank you for the recognition. This goes out to all my team. Thank you.
Thank you, gentlemen. And now we move on to the next category of the awards. And this time, it is Lending Platform of the Year. And in the Silver League, the winner is Bharat Pay. And could we have the gentleman from Bharat Pay, Mr. Kohinoor Biswas, Head Consumer Business, and also could we have Mr. Suhail N, Senior Director. I think we have the gentleman from Bharat Pay receiving on behalf. But we can always put our hands together and convey the wishes for the Silver League winners when it comes to Lending Platform of the Year. One more time. Zordar Taliyan for Bharat Pay.
Thank you once again, Businessworld and the jury for this award. So we've enabled digital loans for about 1 million merchants so far, and our endeavor is to grow this. And this again would help us fuel towards our endeavor to enable credit for the MSMEs that we are working towards. Thank you.
Thank you once again. And now, ladies and gentlemen, all eyes on the screen for the category coming up next. And once again, it's Lending Platform of the Year. And the Silver League winner, Knight FinTech. So we have Mr. Kushal Rastogi, founder and CEO, along with Ms. Vaibavi Kamath, branding and PR, founders office, to join us right here. Let's cheer them. A big shout out. Put your hands together for the Silver League winners, Lending Platform of the Year, Knight FinTech.
Good evening, everyone. And good evening, everyone. Thank you, Businessworld. And a special thanks to all the jury members. The jury day was very special to us because that coincided with our 5th anniversary. This award goes to our strong team of 300 Knights and all the customers, like over 70 customers that we are serving. Just to summarize, so Knight FinTech, we are a new age banking infrastructure company transforming lending. Our cutting edge solutions for co-lending has already enabled over 100 partnerships. We've been working with over 15 banks and 45 plus NBFCs and currently managing about 20,000 crores in assets. And kudos to our team for the wonderful product that we have created and kind of serving the need for the priority sector lending as well as the financial inclusion. Thank you so much. Really appreciate the award and the recognition.
Thank you, and congratulations to the entire team. Let's quickly move on to the Silver League of the same category coming up next. Yet another Silver League winner, Lending Platform of the Year. And this time, it goes to M-Pocket. We have Mr. Jayant Verma, Director, Head of Product, to join us on stage. Clap, 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 clap. Bigger cheer.
Very good evening, everyone. On behalf of the entire M-Pocket team, I thank you, Businessworld, and our esteemed jury for this recognition and this award. In serving the underserved through credit enablement, we have come some way, but I believe we have a long way ahead to go. So cheers to that and cheers to everyone. Thank you.
Thank you. Congratulations to M-Pocket. And now, witnessing the next winner in the Silver League of the same category, coming up on your screen. Lending Platform of the Year. Once again, the winner in the Silver League goes to CEO. We have Mr. Venkatesh M., Vice President, Capital Markets, to join us right here on stage with a huge round of applause.
Thank you, Businessworld, for this award and recognizing us. So this award goes to all the customers. We are into BNPL space and we are serving almost 9 million plus customers. So this award definitely goes to the customers who trusted us and all the Axio team and my partners. Thank you.
Thank you and congratulations. And we would also like to thank Ms. Kalpana Jain, ma'am. Thank you so much for doing the honors. Please sit back and enjoy the rest of the evening. And Dr. Anurag Batra, sir, you will stay with us for quite some time. It's like we're in the city of Bangalore and we're the city of RCB. So no matter we win or we lose, we have the statement that stays with us. Isala Cup Namde. So till we give away all the presentations, we want you to be with us. A huge round of applause to him. And now let's have a look at the next category coming up. And again, it's Lending Platform of the Year, but now it's for the Gold League. Ladies and gentlemen, put your hands together for the winner. 5. And could we have Mr. Abir Sen Gupta, the Deputy VP, to join us on stage, please? A big cheer for Mr. Abir Sen Gupta, Deputy VP. Bigger round of applause.
Thank you, Businessworld, and the entire jury member on behalf of Five. We were sitting there, we were discussing that this location, Bangalore, has given birth to so many fintechs, right? And it is really, we are really thankful for Businessworld, like, organizing this kind of conclave. So here, this kind of conclave, we can come to know that how many, fintechs are working, in which segment they're working, and how they are striving. Like this kind of awards will help, not only help, it will also motivate Five to do more, to strive more for their, customers. And this award goes to entire Five population, those who are working day in and day out, tirelessly for the betterment of the customers. Thank you. Thank you.
Thank you. And congratulations to the entire team. And now, before we segue into the next winner, to join the gentleman right here on stage and to be a part of the presentation party, could we have the director at STPI, Mr. Subodh Sachin, to please join me on stage and be a part of the rest of the evening? Well, we have a lot more awards to be given away. A huge round of applause, ladies and gentlemen. And now, with the two fine gentlemen right here on stage, let's have a look at the winner of the next category. And once again, Lending Platform of the Year and in the Gold League goes to Rupee. Could we have Mr. Mayank Tate, Chief Financial Officer, to please join us on stage with a huge round of applause. Everybody join hands. Let's make some noise. Picture. Big smiles all around and a bigger cheer all around. Put your hands together.
Thank you for the award. Just to introduce Rupi, we are a 100% paperless digital lending platform. We enable customers, our channel partners and lenders to generate loans and do the disbursements. Cheers to all the Rupi team members.
Congratulations to the team. And now moving forward, let's have a look at the category coming up next. Well, it's Open Banking Solutions of the Year. And the winner in the Silver League goes to CAMS FinServe. And could we have the Chief Executive Officer, Mr. Tejinder Pal Singh, to join us on stage? Well, a call out for the team. A big cheer for the gentlemen joining on stage as well. From CAMS FinServe. the winner of the Silver League in the category of Open Banking Solution of the Year.
Yeah, so first of all, thank you to Businessworld. This prestigious and reputed award will really motivate us to do better. And I want to acknowledge, first of all, my parent company, CAMS, for committing itself to the account aggregator space. Since morning, I've been here since 10 o'clock. I'm the first set of people to sit here. The word AA was possibly uttered hundreds of times. And every time it was spoken, I felt, boss, this is the thing. This is going to be the future. And this country, which has created UPI, created amazing digital solution, and this city, Bangalore, which is the heart of that, and account aggregator being seen as the next big thing, it really motivates us and commits us. And the award really goes to the complete team of CampFinServe, which is committed to this. And we have a bunch of young people working day in, day out with about 100 plus live clients. This is just the beginning of a huge success story. And thank you everyone for your time. Thanks.
Thank you. Thank you so much, sir. The gentleman rightly said he was actually the first one to join us right here this morning.
I want to say two things. And, I do go to social events sometimes in Delhi. When I'm in Delhi, which is only 10 days in a month. That time, then everyone in the office has a good time. And I'm away. And I like that. And people say, oh, you're the guy who gives awards. And, I feel good about it. And there was this gentleman who said it is his first award. He's just completed a year. I can tell you companies that you're seeing in this room, I can see in many of our domains companies that won our first award or their first award, as in it was a first edition, it was in some cases their first award, have gone on to become the category leaders in huge companies. So the companies that you're seeing in the room today will continue to grow, and I'm sure all of you will grow. Some of you will grow more than others and become absolutely synonymous with the domains that you're working. Second is the objective of a media product. See, an award is also an editorial product for us. We discover new work. Both the jury members were talking to me about the kind of work they saw. They were telling. So it's an editorial product for us. And the job of an editorial product is to discover new leaders. I think we don't do awards just for the award's sake. We track companies and so on and so forth. So I just did want to mention this. And I want to end by saying, I remember 2 years back at the Lalit, we had our CFO Excellence Award. There was a gentleman, he came in, he got the award, and then he took the mic. And for the next 15 minutes, he made everyone cry. He cried. And he said, I won this award 3 years back. That is how I got promotion. And because of this award, I said, you're giving us too much credit. But the fact is, he won it through an honest process. Bharat Pay is involved. Maybe they want to sponsor the initiative. But the jury member there, you can ask them, there would be no, they were. So I do want to say that really we are very proud of the way how we do our awards, how we editorially carry forward, and the fact we discover new companies and growing and emerging companies. So just want to make that point. And congratulations. I'm sure you'll call us to your IPO and do issue some shares to me, Devika Soumyajit, just before the IPO at a discounted price. That's my request to you.
A big round of applause to the gentleman and the entire team. Come on, put your hands together one more time. All right, moving forward quickly with the next category coming up on the screen. Payment Solution of the Year. And in the Bronze League, it goes to Plural by Pine Labs. And request the lovely lady who's a part of the Power Pact panel, Ms. Tanya Naik, head online payment, to join us with a big round of applause. Everyone. Clap, 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 clap.
Good evening, everyone. Thank you, Businessworld and the jury, for giving us this award. Many of you would know Pine Labs as the point of sale white terminal that you see everywhere in every store. We, however, are an incubated startup within a large organization, and we were born post the pandemic with the sole aim of taking our offline merchants online. So we're just a 3-year-old company, and I'm so glad to get this because it's a testament to the fact that we're doing something right. This award goes to the 100 employees who trusted us in this endeavor, and thank you for doing what you do. And have a good evening, everyone.
Thank you and congratulations to the team. Moving forward, let's have a look at the category coming up next. And this time around, it's Rec Tech of the Year. And in the Bronze League, it goes to Care Edge. And could we have the head of technology, Suju Pillai, to please join us? Mr. Suju Pillai in the house. A huge round of applause to Care Edge.
Thank you, everyone. And thanks for the jury and Businessworld for selecting us for this nomination award. And we are Care Analytics One. We are into credit risk analytics. And the major work we are working with the banks in India, Sri Lanka, and Nepal and Bhutan. Thank you.
Thank you, sir. And now let's have a look at the category coming up on the screen. And this time around, Sustainable Financial Solution of the Year. And in the Gold League, the winner, put your hands together, Credit Fair. And could we have the co-founder and chief business officer, Mr. C.A. Vikas Agarwal. The winner of the Gold League and Sustainable Financial Solution of the Year, Credit Fair, one more time.
Thank you, Businessworld, for this award. This award goes to our team, our partners, lending partners, merchants. We are into rooftop solar financing. We have financed 5,000 rooftop solar till now. Even Prime Minister is our brand ambassador, we can say. And now we have plan of 1 lakh solarization of rooftop in next one year. Thank you for it.
Congratulations to the entire team of Credit Fair. And now before we announce the next category, we need to have some energy in the house. Come on, the winners deserve it all and we need the biggest cheer, biggest round of applause. Before that, a quick warm-up. Could I have everybody put your 2 hands up in the air? Very simple. 2 hands up in the air. The Bangalore weather is quite pleasant and it always puts us down. No, it does not. Up in the air, up in the air. And when I ask you to clap, just go according to the beat and clap once. Clap. 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 And make some noise for the 4th edition of the awards. Come on, everybody. That's more like it. And with the same energy, let's have a look at the category coming up on the screen. Use of AI in FinTech of the Year. And put your hands together for the winner in the Silver League, Anur Cloud Technologies. And could we have Mr. Srinivasan Varadarajan, co-founder and chief product and technology officer, right onto the stage. And with a lovely lady, the team member, a big cheer for them. We just practiced something 30 seconds back. Come on, clap it out loud. Clap, 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 clap.
Thanks, Businessworld, for this award. And I dedicate this award to all my
30 team members. We have just started inclusion of AI in our customer communication portal. And we are a 7-year-old company, and we do roughly around 50% of life insurance, and especially the private life insurance. And with this, we aim to honor the next 50% also. So that's right.
The use of AI in fintech, the Silver League winners, Anush Technologies. And now, ladies and gentlemen, let's have a look at the category coming up next. Wealth Tech of the Year. And in the Bronze League, the winner is Octonome Technology. Octonome Tech, could we have the founder and CEO, Mr. Rahul Ghosh, to please join us? Clap, cheer, clap, cheer, clap, cheer.
Good evening, ladies and gentlemen. Dr. Anurag was saying that identifying new leaders, we are very humbled and honored that you felt we were worthy of this award. It just reiterates our mission. Octonome Tech runs in the B2C side a platform called Hedged. Hedged is India's first hedge-style investing and trading platform. If you look at every report that comes out there, every report says that people lose money when it comes to short-term trading and short-term investing. And we realize that the most players are looking to help people make more money. So if majority of people are losing money, what happens to the gentleman or the lady losing? We focused on the people who were losing, which we believed was majority of the population. This just reaffirms our mission of saving $100 billion worth of losses, both in India and abroad over the next decade. Thank you so much. Please enjoy your evening.
Ladies and gentlemen, bring us together the Octonome Tech, Wealth Tech of the Year, Bronze League winners. And moving forward, let's have a look at the category coming up next. Well, this time around, it's Blockchain Technology of the Year. And in the Silver League, the winners, Simplify Softtech India. And could we have the founder and CEO, Mr. Vishwanath Akela, to join us? Clap, 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 clap. Go, go, go. We got sure.
Hi, everyone. Thanks for the quick snacks. So that again brought the Josh in. And thank you very much, BW, as well as the jury, who felt that we have done the needful impact. So simplify, not that we are bad at spellings, I and F interchanged. So we wanted to make the way finances are simplified. And we are using the blockchain to enable lending, as well as the cross-border digital transactions, make it much more secure. So that's what we are. So thanks again. And this award, definitely, we would like to get one more time in the next year. And thanks to the team who has really worked hard on the products. And we are globally present now in multiple countries, in the Southeast Asia with the maximum impact. So, we look forward for expanding our territories with this encouragement. Thank you very much and have a great evening.
Thank you and congratulations to the entire team for Simplify. With this, moving on to the next bit and the category coming up on your screen. And it's Cryptocurrency Brand of the Year. And in the Bronze League, the winner is PI42. And could we have Mr. Avinash Shekhar, co-founder and Chief Executive Officer, to join us? Cryptocurrency Brand of the Year.
So, first of all, thanks, Businessworld. We are less than 6 months old company. We launched in February. So, really privileged to be here. Personally, I discovered Bitcoin in 2017, and I think it's a technology which is the technology in our lifetimes. What we are enabling is to enable customers to participate in crypto and Bitcoin in a compliant and tax efficient way. So that's what we are doing. Thanks to my team. We have like around 50-member team. So hopefully we'll win next year also, and hopefully gold. Thanks.
Congratulations to the entire team. And now moving on in the same category, but it's for the Silver League coming up on the screen. Cryptocurrency Brand of the Year. And in the Silver League, the winner is CoinDCX. Could we have the Senior Manager, Mr. Harshit Malia, to please join us? A big cheer, come on everybody, make some noise for CoinDCX, Silver League winner, the category of Cryptocurrency Brand of the Year.
Hello, good evening, everyone. First of all, thanks to Businessworld for the recognition and award. I'm Harshit, part of the founders office team at CoinDCX. We're a crypto exchange, one of the India's largest exchange right now, and the company is about 6 years old. We've got over 1.15 million customers and about 500 odd employees. So grateful and glad to accept this reward on behalf of everyone. And the last 6 years it's been a tough regulatory environment as well to grow. So this award really means a lot to the whole team. So thank you.
Thank you and congratulations to the entire team. Now, quickly, let's have a look at the category coming up. And here we are, Fintech Brand of the Year. And in the Bronze League, it goes to Revfin. And let's have the business head of mobility, Mr. Purushad Goyal.
Thank you, Businessworld, for this award. It goes out to Sameer, the founder. Unfortunately, he couldn't join. We are a Delhi-based company, and we are here to receive the award. And thank you so much. I think Revfin has impacted 6 million lives in the bottom of the pyramid, financing electrical vehicles across two-wheelers, three-wheelers. And we've covered close to 1 billion zero-emission kilometers. So that's a big milestone for Revfin. So thank you. You know, I told him that 2 degrees that exist, BTech in beer drinking and MBA in movie watching. I did both of them. So if you have, I'll tell you which colleges.
Or you can see my LinkedIn.
Sure, I'll follow you on LinkedIn also.
Congratulations to the entire team of RevFin out there. Come on, big cheer for the winners so far. Come on, everybody. And thank you, Subodh Sachin sir, for presenting this set of awards. Okay, I'll let them finish the conversation. Gentlemen, okay, we're waiting for you. Okay, I like it when I get ignored, huh? All right, can we give them a big shout out so that they concentrate right here? I think we should just shout out saying like, hello, right? 3, 2, 1, say. Yeah, we were trying to get your attention for the past 30 seconds. And thank you, sir. Oh, then please continue. Please continue. I'll give the mic to. Can we have a big shout out to Mr. Subodh Sachin, sir? Thank you so much for doing the honors. Enjoy the rest of the evening. And we request Dr. Anurag Batra, sir, to stay back, but we'll give you company as I would take this opportunity inviting the Associate Vice President, Sales and Partnerships, BW Businessworld. Could we have Mr. Somyajit Sengupta to please join us and be a part of the next set of awards? With a huge round of applause, let's welcome him on stage, please. And quickly, let's have a look at the category coming up next. Fintech Brand of the Year in the Bronze League. It goes to Zaggle Prepaid Ocean Services. And could we have Mr. Giridhar Krishnamurthy, Business Head EMS, to join us? Let's welcome him. Clap, 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 clap. Cheer, 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 cheer.
Uh, thanks, Businessworld, for this recognition. We're just looking at the photo gallery. Last year, same date, or rather one day here and there. We were here picking up an award. I think that's just says us that we are doing something right, we're winning award 2 years continuously. Thanks, Businessworld, once again. Thank you.
Thank you and congratulations to the entire team. They've been quite supportive and very interactive. They're right there at the back. They're kiosks. You can visit them as well. So big shout out for the entire team. Moving forward, let's have a look at the category coming up next. Once again, Fintech Brand of the Year in the Simulong Silver League. And the winner is Vibe. And a big shout out. Let's welcome the Deputy VP, Mr. Abir Sengupta.
Thanks a lot, BW. Akshay could not come, so sorry about it. But I thank BW and the whole team. To you guys. Have a good evening.
Thank you and congratulations. And now let's have a look at the winner in the Gold League of Fintech Brand of the Year coming up on your screen. Moving forward in the same category, Fintech Brand of the Year. In the Gold League, it goes to VFin Solutions. Let's welcome the Managing Director, Mr. Raja Devnath, on stage, please. The gentleman dressed to perfection, love his attire. And I'm sure all eyes on those fantastic fancy shoes. Big round of applause.
Last year we were here, we won 3 awards, and as my colleague just mentioned earlier, we are a supply chain finance tech company. We provide the backbone on which most lenders in India run their supply chain finance business. We are also, last year's award was very lucky for us because we actually went out and we got ourselves listed last year. So we are one of the very few fintech companies or tech companies you will see around. We did not raise any VC money, but we went directly and got ourselves listed and had a great run on the stock exchange in the last 12 months. Thanks, everyone.
Thank you. That deserves a huge round of applause. Thank you so much for sharing that with us. That is Wefin Solutions. And now, ladies and gentlemen, the same category, we have yet another Gold League winner coming up on your screen. Make some noise, the FinTech Brand of the Year, the Gold League winner. And this time around, it goes to Artivatic AI, AV. The team of AV, we have the CEO, Mr. Like Singh and team. Ladies and gentlemen, could we have a bigger applause presenting to you live and loud FinTech Brand of the Year in the Gold League, AV.
Hello, good evening, everyone. Thank you, Businessworld, for this award to Artivatic. This goes to entire team of Artivatic. We are enabling insurance and health tech solutions to enable the right insurance products to the customer access. We have enabled more than 5 to 6 million of the customer who touch base as of now. We keep continuing to innovating the solutions for the future as well. Thank you, everyone. Thank you.
Congratulations to the team and moving forward. Next category coming up on your screen. And it is FinTech Startup of the Year. And we want everyone to put your hands together. In the Bronze League, we have Rupee. And inviting the Chief Financial Officer, Mr. Mayank Tate, to join us right here with a team member. Clap, 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 clap. The night is young, so are we. Come on, we need more energy in the house. Ladies and gentlemen, this is the 4th edition of the Festival of Fintech Awards ceremony right here in Bangalore. Let's have some more energy in the house. You cheer.
Thanks, Businessworld, for this award. And this award goes to the tech team and the product team at Rupee and all those customers and 3,500 partners that are helping us build the business.
Thank you, thank you. And love the way the gentleman was looking at me and thanking when he was giving the thank you note. But congratulations to the entire team out there. And now moving forward, let's have the next category come up on the screen. And it's again the FinTech Startup of the Year. And in the Silver League, the winner is NPST. And could we have the Chief Product Officer, Mr. Pavan Kumar, join us on stage? I like the energy. You can continue that. Clap, cheer.
Thanks, Businessworld and Zuri. So it's a privilege to be here and represent NPST. So NPST is a fintech, and it has been serving almost a decade for many large-scale banks, fintechs, and rural banks and RRBs. So NPST vision is to be part of the financial value chain. So we have been at B2B, B2C, and all the banks as well. So this award is dedicated to all the NPSTians and many more to come from Businessworld. Thank you.
All right, a big cheer for all the NPSTians. FinTech Startup of the Year, the Silver League winner. Moving forward, in the same category, we have yet another winner, in the Silver League on the screen. Once again, FinTech Startup of the Year. Silver winner goes to GetVantage. Founder and CEO, could we have Mr. Bhavik Vasa to join us on stage while we join our hands and make some noise? Everybody, a big round of applause. Clap, 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 clap. We're almost coming to the end of this award ceremony. In the last leg of awards.
Thank you. You're very kind, sir. You're very kind. Everybody says thank you to BW, but we have to really thank the man behind Businessworld. Dr. Batra has always been this cheerleader for us from the sidelines, giving us that passion and energy. We forget that he himself is an entrepreneur, and I keep reminding myself whenever I meet that he's really built this business and this platform that we all get literally from scratch. So thank you for being an inspiration, Dr. Batra, always. I'm not going to say much more than the fact that sleepless nights and lots of coffees absolutely pay off. At GetVantage, we are on a very simple passion. We say we don't have a mission or a vision. We just have a passion. And we really want to provide a lot of capital to every small business and entrepreneur and business out there. So as an embedded finance player, just out there to really, really drive this dream of a Viksit Bharat together with all of you all. Thank you so much. Thank you again.
Thank you so much. And congratulations to the entire team out there. And that also concludes the category of companies. And now we head towards the individual people award. Can we have a big cheer for the category that's coming up next? Ladies and gentlemen, once again, put your hands together. FinTech Leader of the Year on your screen. As we've concluded the company category, here we are presenting to you, live and loud, the people. FinTech Leader of the Year. And in the Bronze League, it goes to Yuvraj A. Thakur. Could we have the Managing Director, Mr. Yuvraj, to join us right here from Stockbox? Once again, the first winner to join us right here, and it is the People category FinTech Leader of the Year in the Bronze League. From Stockbox, we have the Managing Director, Mr. Yuvraj A. Thakur.
Thank you so much for the BW team for this amazing award. I stand on the shoulders of giants. My team, without my team and my family, this would not be possible. We're all driven by one simple motivation at Stockbox. It is to make sure that there are high quality services available to Aam Aadmi that were previously reserved for just the ultra HNIs and the uber HNIs. So here's to the rest of us. Thank you.
Thank you and congratulations. And now we move forward. Have a look at the category coming up next. And once again, it is FinTech Leader of the Year. And again, in the Bronze League, this time the winner is Mr. Sabarno Bagchi, COO, Balance Hero India.